Good morning and welcome to India Market Open right here on NDTV Profit. With me, I'm Neeraj Shah, with me is Alex. And if you have been a bull thus far, Alex, you don't have any reason to complain.
Absolutely not. And yesterday, it was lift-off. We'll talk about that. Lift-off around the midpoint of the session or just after that, right?
Yeah, I mean, so the last few days we've been talking about how the small caps have been outperforming the large caps. Not a grumble really, but hey, we could do with a bit of large cap action. And yesterday the large caps or the FIs came in and said, okay, we are coming to your rescue. We are coming out and buying the large caps to ensure that the Nifty does this. And such a brilliant move. So that was really heartening.
It's like that guy that comes late to the party and then changes the music entirely and everybody starts dancing.
Yeah, from a ball dance to Bhangra, if you will.
There you go. But let's talk about what happened overnight as well, just to set the context. Of course, Indian cues perhaps are going to be more in focus, but let's talk about what happened. Wall Street ended mixed after that weak economic data, and we'll come to that in just a bit. Take a look at the snapshot of what happened, though. You had the Dow that gained about 0.6%, the S&P 500 up about 0.4%, and the Nasdaq down about 0.2%. What is the data that we spoke about? US retail sales growth has slowed quite sharply in April. And there's quite a lot of stop and start in that economy right now because of those tariffs coming into play. There were some elements of supplies that were brought forward, inventories would have been kept, and so the data you'll have to take with a pinch of salt. Retail sales rose 0.1% in April versus an upwardly revised 1.7% in March, and customers had front-loaded car purchases ahead of tariffs, and that apparently is what has affected the data. Core retail sales have fallen 0.2% after gaining 0.5% in March. And those core retail sales, by the way, exclude auto, petrol, building materials and food services. So all of that is something to bear in mind. Meanwhile, producer price index for final demand has dropped 0.5% in April. And this is the first monthly fall in the PPI since 2023. Because of this data, the bond yields have fallen overnight, with the 10-year Treasury now at 4.43%. Remember, the previous close was 4.455%. So it's actually dropped by about 12 basis points. And this is important from the perspective of the US government and the US economy as well. Lower bond yields are what the administration wants. Oil prices have also been in focus. They are very close to that $65 per barrel mark, but they have fallen about 2.5% overnight. And that's because President Trump said that the US is getting very close to a nuclear deal with Iran. In fact, his quote, if we can pull up that quote plate, he said, and I quote, "We're getting close to maybe doing a deal without having to do this. There are two steps to doing this. There is a very, very nice step and there is a violent step. But I don't want to do it the second way," unquote. There's no way that I can sound like Donald Trump, but can you imagine him saying that?
Good for you.
Yeah, so, and let's also then talk about Japan and what's happened this morning, because you had the Q1 GDP number that came through, and it was a disappointment because it has contracted by 0.7% on an annualized basis, not sequentially, 0.7% on an annualized basis. Economists had expected a 0.2% contraction, so it was more than expected. The lower growth is attributed to weak external demand as exports have fallen. Asian equities have opened mixed. In Japan, the Nikkei 225 was down about 0.4% last I checked. But yeah, there you go. So it's more or less staying around that same level. But Neeraj, I think nothing too much dramatic has changed, I think, from earlier in the week. So the focus will be on what happened here in India, right?
Yeah, no, just one small thing, and before we go to Rahul Chadda, and we'll talk to him about it, because it's a great guest to have startup when India has done so well. But just this piece wherein Jerome Powell is coming out and saying that, I mean, I think, and we'll put out his quote, by the way, but I think the long and short of what Jerome Powell had to say, to my mind, is that there is uncertainty out there. And then I think that is something to got to keep an eye out for.
And it's difficult to adjust monetary policy when there is so much uncertainty with regard to trade as well as the macroeconomy. Let's pull up that quote and see what exactly he said, and we'll pull that up for you. Okay, so we'll come back to that at some point. But Rahul Chadda is joining us this morning, founder and chief investment officer of Shikhara Investment Management. Thanks so much, Rahul. The last time, the imagery that you gave us about wearing gold and and talking to your friends is still stuck with me, at least. And since then, gold prices have come off. But let's talk about other things before we get to that commodity. What do you make of what Jerome Powell has said about the latest data that is coming through? Signs of a little bit of a slowdown in the US?
Yeah. So again, what's happened is, let's first rewind and see what's happened from April 9th. April 9th was when markets globally touched a low. Uncertainty about tariffs, particularly reciprocal tariffs, was fairly high. Look, we have strong leaders everywhere, and that's where sometimes fears come to everybody's mind, that do egos kind of a dominant pragmatism. Thankfully, both US and China realized that there was a big damage to the global economy, notwithstanding the damage to the two individual economies, and that's where both the sides kind of went removed these reciprocal tariffs. So which is positive, and which is where we've seen this rally, which is the risk on rally, which happened in last 30 days. For India, we've seen names go up anywhere between 10 to 20%. I think markets here take a breather. Because if you look at earnings for some sectors like banks have been good, but broadly earnings been subdued. And so it is a market which is going to look for direction here over the next couple of months in terms of what happens to the interest rates, etc.
Uh, Rahul, good evening to you. And I'm trying to understand, because Shikra invests across multiple geographies, right? Yesterday, we saw the first bout of some serious buying, concerted buying by global investors or foreign investors into the Indian markets, which probably gave the leg up to the Nifty the way it did. Any sense of, or what is your preference of where you would want to put in your incremental buck to work? Would it be in India? Would it be other markets? How would you split it up?
Yeah. So, Dheeraj, clearly, I think, like as we discussed, the worst case of tariffs has not played out. So that's a big relief for markets. And that's where investors are allocating outside US. Our point was US needs to go through a couple of years of this breather as it corrects the huge trade deficit, as it corrects the huge fiscal deficit. And we're going to see a kind of a near stagflationary scenario in US where inflation remains sticky, though the last print was lower than expected. But look, tariffs are going to play in the US economy. So growth is going to slow down, because what are tariffs? Tariffs are basically consumption tax, and consumption is 70% of US GDP. So US will go through a stagflationary setup. But while this is happening to US, rest of the world, India is seeing a 5-year low inflation. You look at the numbers, rest in ASEAN, you look at the Swiss inflation is nearly 0%. What it means is, in coming quarters, we will see central banks outside US who are going to be cutting rates, and growth accelerates over there. And that's where you're going to see capital flow out of US. And I think that is what we are seeing in recent weeks towards emerging markets. So April was a month where EM saw flows. Look, people were taken aback by what happened last week, but thankfully the conflict was limited to a limited period of time, and there is a ceasefire, and hopefully this kind of lasts here. But the Indian story is a structural story, and I think dips are going to be bought into in this story.
Okay. Rahul, then you already briefly mentioned about where we are at with regard to Indian equity markets. But I'm just wondering what you thought of the earnings scorecard that we've gotten. We've got most of the companies that have put out their numbers. So with FY25 now more or less in our rearview mirror and looking forward, where would you see incremental improvement in earnings, and what is your base case assumption for earnings growth in FY26?
Yeah. So the hope here is the government kind of given tax cuts, some of the benefits from the 8-pay commission, which may come in the back half of this year, benefits of the interest rate cuts kind of play through in terms of consumption improving. And as consumption improves, businesses will get confidence to increase the capex. So that's where that virtuous cycle kind of comes through. We've seen banks come with reasonable numbers, though the credit offtake was slower than expected. But look, it's really a question of economy, which kind of somewhere bottomed in the fourth quarter of this year, and then is improving gradually.
Okay. Rahul, one last question. There is, and I'm going to use that in the trade setup today, but there's a note from Mahesh Nandurkar of Jefferies today, wherein he's saying that The valuations are now at 23 times demanding for sure, but if the flows picture, which is turned the way it has, all eyes should be there and the flows could actually take the indices materially higher. Now, I heard your previous answer wherein you have expressed concerns, but is this probably going to be the template that all the sane investors will naturally keep an eye out for valuations, and therefore investing lock, stock, barrel might be difficult in India, but flows may well ensure that the markets actually go much higher despite the valuations?
So, Neeraj, what's going to happen over there is, look, large part of these flows may be concentrated in the large caps. And look, there is still value in large caps, whether it's large cap financials, where some of the large cap industries like L&T or Reliance, etc. So some of these names have kind of unreasonable valuations. And I think you can make a case for 15-20% upside over next 15 months here. Mid caps need to go through a period of kind of a time correction. When large caps are moving up, it's unlikely you'll have a significant price corrections. They're going to be individual stories which will kind of outgrow rest of the market in terms of earnings, and I think those names would be rewarded.
Rahul, thanks so much for joining us this morning. Absolute pleasure as always to speak to you.
Thanks for having me.
All right, let's talk about yesterday's session. We've spoken already about ballroom dancing and Bhangra, but let's take you through the numbers. Foreign institution investors were perhaps that late guest to the party. They've bought about 5,400 crore rupees on a net basis in trade yesterday, and domestic institutions selling about 1,668 crore or thereabouts. The markets achieved blast off in the midday, and there was a pivot that you can see very clearly on the screen. The Nifty 50 shrugged off that lackluster start to end 1.6% higher. In fact, it reclaimed that 25,000 mark quite comfortably so, cooling off just a tad bit from the high point of 25,116 or thereabouts. Private banks were the big performers, and Nifty Bank in fact gained over 1% after a dreary start. In fact, pull up both the Nifty Bank as well as the Nifty IT charts, and you will see the lift off at approximately the same time. Nifty IT also gaining about 1.2% or thereabouts. The defense stocks remained in focus with the index up another 2.6%, and all sectors ended in the green. The VIX cooled off just a tad bit further, ended 1% lower at 17 or thereabouts, and the broader markets underperformed after consistently beating the benchmark this week. Nifty mid-cap index gained about 0.7%, the small cap index up as much as 0.75% or thereabouts. Neeraj.
Yeah, well, today, Alex, for the trade setup, I'm standing on the shoulders of two very eminent gentlemen who track markets very closely. So fundamental and technical.
Okay.
Now, the fundamental part first, and which is what we were asking Shikhra Investment as well. Mahesh Nandurkar has come out with a note wherein he's saying that the valuation for India is unfavorable and flows are now the brightest spot. He says the MSCI India PE at 23 times implies that valuations have become demanding. Naturally, so you would agree, you can't not agree with this, but especially in the context of the FY25 to 27 EPS CAGR expectation at about 11 to 12%, with the usual downside risk. I love that line, usual downside risk. But he says that the flows, domestic and foreign, outlook remains the key positive. This would be conducive for the potential equity supply, which in turn can cap the upside. Now, viewers, this is a nuance, right? That the markets go up, suddenly the barrage of OFSs, maybe promoter stake sales we're seeing with Wendt coming in, or new IPOs coming in, and that probably caps the upside in some fashion. They add Ambuja and BEL to the model portfolio, trimming Shriram Finance and Coal India. But that's an aside. I mean, the stocks is an aside, really. What I'm trying to effectively say via what Nandurkar is saying is that valuations are now demanding. You're probably in that zone wherein there is a bit of extreme greed being seen, and the markets could correct at any point of time. They would ask me what are levels. We're not experts really, but I'm using Lawrence Blanco's note today to talk about levels. So Lawrence Blanco says that the Nifty breakout above the 200 DMA suggests an upside target of 26,333, a level that effectively revisits the highs of 2024. We might hit all-time highs if Blanco is to be believed. He, of course, speaks about how we should hold some support levels. Also speaks on mid-caps and small caps, says that the NSE mid-cap index cleared the resistance provided by its 200-day moving average, which supports an upside target of 60,300. the small cap index is still below the 200 DMA and needs more work before it can claim leadership credentials. So effectively, if indeed the current price action were to continue, Alex, Lawrence Palanco no less says that the Nifty may hit all-time highs in the current leg.
So just a quick question to what you were saying in terms of what is lined up ahead, and the first note that you talk about, Mr. Nandurkar's note, about the flows determining the likely move ahead. Would that lead to an inference that perhaps value investors are going to find it a little difficult to really, and the style will shift, of course.
Yeah, well, 100% Alex. I feel for those value investors who rightly so, in their own wisdom, were waiting for the tide or the valuations to correct a bit more at about the 22,000 levels, right? Just realistically speaking, they haven't gotten a chance because I think once the market started making a move, it just moved. Then these worries of India-Pakistan came in, and those were taken out in a matter of 3-4 days, right? Yeah. Difficult to act.
So 10% for the benchmark in just a month, more for the mid-cap index, and thereabouts for the small-cap index. So across the board, a move of something like double-digit in a month.
And now if the FI buying were to really pick up, which we've seen the first sign of yesterday, realistically speaking, we've seen some instances of it, but yesterday was a big buying, right? Yeah. Then the Nifty will move in a hurry and people don't get a chance. Yeah. So that's the slightly sad part. But hey, you know what? The winners, Alex, everybody is an SIP investor, the Indian retail investor.
100%. So, and irrespective of what style you invest in. If you're investing in a diversified fund, likely you will make money. And if you're investing in passive, which should be a part of your portfolio, just look at it that way. If the index is moving up 10%, you moved up 10%. That's how it is.
Yeah. When we hit, the last thing, Alex, when we hit 26,300, we should get somebody in our team to do a small math of how much would an SIP investor have gained from the time that the Nifty slipped from 26,200 to the revisiting of the time. It'll be a great study.
I have a lot of fun doing this. So I will do it. I would love to do it. All right, let's talk about stocks. And the first one, unfortunately, is going to turn my smile upside down, perhaps some of you as well, because IndusInd Bank, the troubles just don't seem to be going away for this bank. There's an internal audit department that has reviewed the bank's microfinance business and found that there was a 674 crore amount that was incorrectly recorded as interest over the course of 3 quarters of FY25. It's almost unthinkable for a bank the size of IndusInd Bank to have this kind of a problem. That amount was fully reversed by the 10th of January 2025. But that's not all. In fact, there was another 595 crore rupees in unsubstantiated balances, is what they're called. And those were found in other assets or the other assets account. And those balances were adjusted against the other liabilities in January. So all of that was reversed. But to think that these accounting issues are being seen in a frontline bank is a big problem. In fact, a couple of brokerages have come through and talked about it. Investec has downgraded to sell from a hold. It has cut its target price to 650 from 700. The stock is trading above that at 780. And it says that the core operating profitability may be structurally impaired. The leadership vacuum does not help the situation. It says stay cautious amid stay cautious amid heightened uncertainty, is what they've said. Morgan Stanley, on the other hand, has maintained an equal weight rating with a target price of 755, which is also incidentally lower than the current market price. It says that the inflated MFI or microfinance interest income, 900 crore rupees annualized hit to the FY25 earnings. It sees significant downside to FY25, 26 and 27 earnings estimates following the above disclosure, which we've just discussed. This year, FY26 and 27 earnings estimates are at risk of a 15 to 20% downgrade. This is very significant, and you should expect there to be a reaction in trade today. The second one, I'm not sure if there's going to be a significant reaction in the stock price. There shouldn't be, considering that Bharti Airtel is seeing a stake sale, yes, of about 8,568 crore rupees from the promoter Singtel rather. And in fact, it owns stake, as you know, through Pastel Limited. It's set to offload about 4.76 crore shares, which in the larger scheme of things is not a very large stake sale. The floor price of that block deal is set at 1,800 rupees per share, and that's a 3.6% discount to the previous close. This is unlikely to move the needle too much, but bear in mind that the foreign promoter is selling a bit of stake. JP Morgan is set to be the broker to that deal. Allied Blenders, the third stock that I will talk about, and this is a very strong set of numbers. The revenues increased by as much as 20%. On strong volumes, and it's continued its expansion in the super premium to luxury portfolio. The EBITDA has come in quite considerably higher at 136 crore rupees. That was aided by a very sharp improvement in the margin performance. The margin has come in at 14.8% compared with 7.8% in the comparable quarter, and the net profit has come in at 78.6 crore rupees compared with a loss in the comparable quarter of 2.4 crore rupees. So expect the stock. It has already reacted positively yesterday in trade, 4% higher. Let's see how it starts the day today. Neeraj.
Alex, so, it's a mix of good and bad when it comes to Alex's list, and I would reckon the same holds true for my list as well. While Lawrence Blanco is very confident on upsides, there are some results which have been mixed. So PB Fintech is interesting, and the reason I call it interesting is because of this. The revenues were up 17%, the profit after tax 139%, but the core new business premium growth was at 21%, which was sharply lower. Q4 has seen an inline adjusted EBITDA. If you adjust it for the one-offs, I think the adjusted EBITDA is in line. And Morgan Stanley, in its note, has maintained an underweight on steep valuations. Their target price is 1130, which is way lower. But the point is, they are saying that there is a moderating new business premium growth in FY26 as well, which is likely to lower enthusiasm. The base for FY26, which is the FY25 number, is very high, and therefore on that high base, that growth will taper off, and therefore they don't believe that the valuations, the enthusiasm will be very high on PB Fintech. Plus, they believe that the valuations are fairly steep as well. So the reported revenue and PAT number looks very solid. Maybe the stock reacts to that, or maybe the stock kind of comes off because of the adjustments and the valuation. So a bit of a tricky piece here, bear that in mind. No such tricky piece in Inox India though. Revenues up 34%, margins at 22.1 versus 19.2. And in this business, I don't think it's really easy to really up EBITDA margins. I think the management has shifted tracks a little bit on the business, new machinery, etc. All of that is paying off. Net profit therefore up 48%. At 65.5 crores versus 44 crores. Now, I would reckon the stock has done well in the recent times, but keep an eye out. This could be one name that could actually do well in the session today. So Inox India is the second one on my list. I'm coupling it up with an Abbott India, and there are more, by the way, but I'm using Abbott India because here too, I think the numbers looked okay. Revenues were up 11%, but the margin performance pretty solid, 26.7 versus 22.9, and the profit after tax up 27% or 28% at 367 versus 287 crores. So pretty good going. In fact, since Varsha is here, and I think she's joining in to talk about Newland and Bikaji, and she tracks pharma very, very closely. Varsha, I don't know if you had a chance to look at Abbott India numbers at all. If you have, then maybe mention about Abbott, but if not, I would love to know about Newland in particular, because it's had a woeful FY25 Varsha, while a lot of other CDMO companies have done so well. Newland, I think, quarter after quarter is disappointed. So why has that been the case? And of course, couple that up with Bikaji.
Yeah, first on the Abbott India, Neeraj. So the revenue growth that you're seeing is due to the strong demand when it comes to, their gastrointestinal and anti-infective medications. And the margin expansion that you're seeing is led by decrease in cost of raw material. Though I don't have much of information on the Abbott because of no press release. But now on the Newland Labs, if you see, So Neeraj, these numbers were actually expected because FY25 was to be a consolidation year as per the management. Now the significant drop that you're seeing in the revenue is because of the lower CMS, that is custom manufacturing services segment, which was 46% last year versus 34% this year. Now this is down because of a decline in the development segment because of the lumpiness of the CDMO business that every company has, and Newland Labs is actually going through this lumpy business. Now the EBITDA margin impact that you're seeing is due to the negative operating leverage and of course because of lower CMS business. After a year of consolidation with 5% year-on-year decline, which is slightly below management guidance, top line growth is expected to be bounced back in FY26. Now what will be the levers in FY26 is bempedoic acid. Now yesterday Blue Jet also talked about this bempedoic acid supply. Now because the global market is expected to increase at a CAGR of 23% from FY25 to 33, and the market is expected to driven by increasing cardiovascular disease and the growing demand for effective cholesterol management solutions. Now also a company is launching new when it comes to new niche molecules in the specialty API segment as well, and the EBITDA will increase on the back of increased CMS business in FY26. Now coming to Bikaji, again weak set of numbers. Gross margin dipped significantly. Now if you see what has impacted profitability, the staff cost decreased 58% year on year, finance cost has doubled year on year, and depreciation is up 58% while other expenses is up 15%. On the balance sheet position, the current borrowings went up 42%, current lease liabilities went up 44%. On the operational metrics, if I were to talk about, you have volumes which grew 9% year on year, and the focus markets have grown 39%. On the segments, your ethnic snacks delivered a growth of almost 12%. Western snacks grew a mere like 22% year on year, and the packet sweets declined 1.4%. On the key updates, company to further invest 15 crore in arm Bikaji Foods Retail and to sell entire stake up to 50% in Bikaji Mega Food Park.
Okay. All right. Thanks so much, Varsha, for laying that out for us. And a point noted on Newland as well. So Varsha pointing out that it was expected, but let's take a look at the watch list for today. There are several stocks that we may not have been able to add, and we'll be addressing, of course, but these are stocks that you should keep on your radar. Allied Blenders up front, I spoke about this, strong volumes has led to a good performance, and there was margin expansion, significant margin expansion in the quarter, so watch out for this in trade. RVNL has gotten a 116 crore order. Biocon has gotten approval for Rivaroxaban. I said that right the first time, incredible. PB Fintech, the revenue and PAT have beaten estimates. Godfrey Phillips is also in focus. The revenue has grown as much as 70%, but if I remember correctly, there is a contraction in the margins during the quarter, so watch out for that as well. Abbott India, we just spoke about it. The PAT growth has been led by a margin expansion, looks good, and a couple more. Livis Life, you have the EBITDA and the PAT that have risen over 40%, and finally Crompton Greaves, Jefferies is seeing a 48% upside.
Okay. Some thumbs downs, and well, IndusInd, I would call it the accident of the day. More accounting discrepancies have emerged. This will correct. We already spoke about Newland and Bikaji, but reiterating that simply because the numbers have looked weak. I know Varsha mentioned that in Newland's case, this was expected, but I would suspect that the stock may see a further reaction. Keep in mind though, in Newland's case, the price action yesterday was a bit of a testimony to the kind of numbers that they might come out with, because the stock was down and out in the session in yesterday's trade. 5% lower, 1 month about 6%, but yesterday's move was sharp. Implied open as we speak in the green, so we follow up yesterday's stupendous price action on the Nifty with some more upsides. Are we on the way to all-time highs, as Lawrence Balanco has said? Well, let's wait and watch if our own experts are going to recommend some long positions on the Nifty today. We'll try and do all of those conversations on the other side of this break. Stay tuned.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay
Welcome back. You're watching India Market Open, and the signs are positive for a strong start to the end of the trading week for the benchmark Nifty 50. 100 plus points is the implied open. And let's see if that continues through the day and whether we get any positive surprises like we saw yesterday and whether those flows continue to remain strong. Now, one of the segments of the Indian equity markets has looked particularly strong this week, and that's the defense pack. And in trade yesterday as well, you saw the entire pack gain about 2.6%. Look at that. Just in a month, it's gained about 19%. As much as 11% gained in this week alone. And there are a few stocks that have been gaining close to double digits on a daily basis. Take a look at that, 14.6% for the defense pack as a whole. Now, Jefferies has come out with a note. It is highlighted strong Q4 performance for the Indian defense firms, fueled by indigenization and global demand. Anushi is joining in to talk about the key details and whether there are any upgrades in the list or what they prefer. Anushi, what stands out in this note?
Hey, morning Alex. So as you've mentioned, we've seen about a 19% of an up move in the defense sector alone, and this is also a lot of sentimental moves that we are seeing after the Operation Sindoor, how the domestic companies in the defense space are now stepping up the indigenization focus and procuring more equipment needed for the defense needs of the India. But interesting note coming in from Jefferies. Now they have talked about this defense indigenization focus, and they've compared and given a scenario from how FY14 onwards to FY24 on FY25 onwards. We've seen a big shift coming in here, with most of these defense companies' revenue seeing an increase in the double digits. In fact, we are looking at even the recent India-Pakistan tensions did see that PM Modi has lauded Made in India equipment, which points to further domestic manufacturing focus. Even in the 2020, the earlier updates that have come out, government has increased their budget allocations for the last 10 years. We've also seen how the focus has been on increased FDIs also for this sector. So there have been a lot of moves from the government side as well. So India focus to building up its global image on defense continues over here. But even on the micro side of the things, in terms of how the earnings have shaped up, most of the Q4 earnings that we have seen results so far have been strong so far. Even if we look at HAL, the expectation was for a higher downtick because of the execution delays that were there, but it was a better than expected growth that we've seen in the revenue. The balance sheet of some of these companies have been improving, so that is on a watch out for. Global defense thematic adds to the upside from order book visibility of these domestic companies is what Jefferies has to say. HAL, Data Patterns being their top picks over here, followed by Bharat Electronics. Bharat Electronics having a crucial role in the Operation Sindoor that we are looking at. The note believes that HAL, Data Patterns and BEL could see further order book backed by double-digit EPS CAGR growth in the medium term, along with healthy ROE and ROC ratios going forward. So it's a mix of both the macro stand of view on how the government stand of point how Indian defense companies need to spend up, and also on the micro side how the earnings are faring better than expected.
Anushri, thanks so much for getting us those details. Keep HAL and BEL as well as Data Patterns on your radar. We're joined in the studio by Kush Bora, who's the founder of kushbora.com, of course. And Kush, this morning, Neeraj and I were talking about the fact that yesterday at the start, it seemed like ballroom dancing was taking place, and then Bhangra started around noon. I'm wondering what you were doing at that time.
A bit of jive between the Nifty and the Bank Nifty, right?
Okay.
So, no, I think this is quite positive. Like we spoke yesterday during the closing show. Do I believe that after this kind of stellar move, is the rally done or anything? No, I think we're just getting started. 25,000 came a lot sooner than what a lot of us had expected, including me, because I thought with the weekly expiry setup, we might consolidate for a day or two, and then the move might come today, perhaps tomorrow. But then that's the way markets behave when there is liquidity, a flush. So I think on the whole, fairly constructive, but this breakout above 25,000, I think supports have shifted higher to 24,800 zones, and as long as those are now protected, I think these up moves could continue. The pace perhaps might reduce a bit because we've had a very good run considering from where we started the week to where we are now, even in terms of news flow and price action. As far as momentum is concerned, let's look at some very interesting data. And I'm comparing Nifty 500 stocks with where they were in September of 2024, which was the peak for most of the indices, to where they are now. So when you compare momentum and strength, you typically do that with RSI, right? So in September 2024, at the peak, about 311 stocks were above 50 RSI, right? Right now, that number is 431. Above 60, that number in September was 168. Now that number is 232, which is already suggesting that the momentum is back, again, in numbers. But what's heartening is that what you typically consider overheating territories, which is 70 and 80, the number of stocks above 70 back in September 2024 were 62, and right now is just 51, which means even though the momentum's there, we've not even hit overheated territories. Now that's for the broad market, when you compare Nifty 500. When you look at the technical and the derivative setup, be it PCR or be it the current RSI for the Nifty, we are not even close to overheated territories, and we've already run up so much. So I think there is a lot of room on the upside. As far as resistance levels go, immediate resistance comes close to the 25,300 mark. Support, as I said, is close to the 24,800 mark.
Okay. And so Kush, would it be prudent to trade the index right now versus stocks? Usually we've been saying that it is a very bottom-up market and don't trade the indices as much as you do specific stocks. Can the reverse hold true right now, or would stocks still be preferred? And if so, what are the stocks?
So, you could trade both right now. And the reason I say that is because when you typically see a trader, they already have their preferences. I mean, we could form a view, but a trader who trades Nifty and Bank Nifty will continue to do so, irrespective of whatever happens, in the market. But this is such a beautiful setup that, yes, this mid segment of the market, like we spoke, on Monday, is doing very well. So you're getting opportunities there as well. But thankfully, the Nifty and the Bank Nifty are also giving you that opportunity. While, yes, there is, further upside on the Nifty left, I think Bank Nifty is the one that you need to start focusing on from a positive trade perspective. It's had consolidation, sector rotation kept it under check for about a week or 10 days, but now it's back with the bang. HDFC, SBI, after a brief hiatus, have started to run up. ICICI just goes from strength to strength, hasn't really seen a meaningful dip or a correction. So if you want to play the Bank Nifty, it will not be a bad idea to play via the option trade as well.
Before we get to that, actually, so we'll lay that out, Kush, but before we get to that, let's talk about a couple of your stock picks. and you have to buy recommendations today. Let's talk about that first, and then we'll go into the index strategy.
Sure. So on the buy side, I've got, as you rightly said, two long calls. One is on Windsor Machines, and the other one is on Lumax Auto. We've seen a good run up. Windsor has given a very clear breakout above the 355 mark. Volumes in the last 3 days have already picked up. So this is one stock that you can consider for targets of 375, 390, with 347 being your stop loss. Lumax Auto has been something that we've recommended in the past as well, and now it's starting to see traction. It didn't fall as much, mind you. There was correction, but it was consolidating when the market was seeing sharp declines in that 500 to about 580 band. Now it's seen a good run up on a weekly basis. Also, there is very good accumulation on Lumax Auto. So on the upside, 645, 670 are your targets. 595 is a stop loss. So Windsor Machine and Lumax Auto Tech.
Okay, let's talk about what you were saying on the Bank Nifty now, the strategy that you're employing, and of course yesterday was the weekly expiry for the what an eventful expiry, right? So how do you start the new week?
Spare a thought for the call writers, right? Who perhaps wrote those 24,800 calls, and even 25,000, for that matter, they were taken to the cleaners, right? So, but that's how option writing goes. So I'm sure, so those who've been doing it for a while, or at least doing professionally, they knew the risks involved. But as I said, spare a thought. I think there are more opportunities on the Bank Nifty, because after having corrected, you're seeing a good rebound. So 56,000, 56,600, I think are the next immediate levels to watch for on the upside. So as far as an option strategy goes, if you want to play via a simple naked option, then 55,500 is the call that you can enter into. 750, 900 are your targets. 650 is where you place that stop loss. I think the price at close was close to about 600. So Bank Nifty is still the preferred index to go with.
Okay, so watch out for that strategy in trade, and also the stock picks that Kush has spoken about. We will ask him about more. But first, let's talk about arguably the biggest corporate story this morning, and it continues to be IndusInd Bank. We've spoken about it in the weeks leading up to today. But let's talk about the latest development. Vishwanath Nair, our editor of Banking and Economy, joining in to tell you about why this is such an alarming update. Vishy?
Good morning, Alex. So a couple of things that the bank has found recently as part of an internal investigation. The first one is about 674 crore worth of incorrect interest income that was booked in the microfinance division. This happened during the first 3 quarters of FY25. So now, of course, the conversation is that in January of 2025, the bank has actually adjusted these amounts, as we're supposed to take comfort from that. The second important announcement that came out as part of the same disclosure was that the internal investigation also found about 595 crore worth of unsubstantiated balances in the other assets accounts of the bank, which was again set off in January against balances in the other liabilities division. And the bank is saying that this was done because there was a whistleblower letter, and on the basis of that whistleblower letter, the internal investigation was conducted, and that's how the bank found out these issues. The internal investigation has also assigned the accountability in these issues, and that the board is now working on implementing appropriate action against the people who are accountable for these balance issues. Now, remember, these two are additional issues on top of what the bank had disclosed earlier in March about a problem with the derivatives accounting, which led to about a 1,960 crore worth of hit on IndusInd Bank's balance sheet for FY25. The result of that is that the CEO and the deputy CEO both have resigned with immediate effect. Currently, the bank is being run by a committee of executives. 2 executives put together are currently managing the daily affairs, and the bank is on the lookout for a new CEO. Of course, it points to clear gaps in the way that the bank's internal controls were working and how its accounting was being executed internally. And we have with us Abhijit Devanji, founder of Neostrat Advisors, joining us on the phone line this morning. Mr. Devanji, just tell us about, does trust then now become a collateral damage in this entire scenario?
Yeah, I think trust has become the collateral damage right from the time the derivatives issue was identified. And successive revelations, whistleblower letters, etc., coming through actually reinforce that. And that is the sad part. What is really should be happening is, rather than dripping some of these news, a collated single disclosure to say that we have done a detailed review. Many agencies have done reviews. The board has been appointed. I think the board should have waited and said, here is a comprehensive list of problems that we have identified out of our various reports. Disclose the root cause of some of them, and then say that this is the comprehensive measures that you are putting in place to correct the situation. That's the way to kind of belly a trust deficit. The other thing is, a trigger being a whistleblower complaint also tells you that internal controls over financial reporting need to be looked at more aggressively. An internal audit, etc., should have tested that well. The auditors should have tested that well. So there are many lines of defense which seem to have been vitiated here. So I think the overall confidence in numbers may be impacted.
Mr. Devanji, I'm also taking a little bit of umbrage on the kind of language that they're using. First is incorrect interest income is a term that they've used in the disclosures. Then they've said unsubstantiated balances. For a bank of IndusInd Bank's size, with the immense resources and the kind of accounting prowess that a bank is expected to have, how are you looking at this language? Because it seems like it was put out in a hurry.
No, this is clearly language meant for public disclosure. I'm sure there is more to it. And at times like these, I think it would have been better to come, as I just said, in terms of the root cause of why this happened, how this got discovered, and what are the remedial measures. If you put out something like that on a more comprehensive basis, that would help. So just saying that, there is an incorrect interest, but I think going to the root cause, because incorrect could be many things. It could be a systemic error. As simple as that, where interest income has been calculated incorrectly. It could have been incorrect tagging of NPLs, for example, where interest income ought not to be accrued, but yet it was being accrued, or any such reason. So mostly systemic as far as interest income is concerned. As far as suspense accounts are concerned, or the other assets, other liabilities are concerned, I think that's a minefield, and that needs even better explanation, because in a bank, as most bankers as well as accounting people in banks would know, that the other assets, other liabilities are actually critical balancing figures of any bank's balance sheet. So ultimately, suspense accounts sit there, ultimately unreconciled accounts sit there. And simply saying that we wanted to adjust one against the other may or may not be the right answer. And at least deserves a clarification. So you actually come out as to what was the root cause of these other assets, other liabilities misstatements, and what is the corrective action, because you never know. It could hit P&L, it could hit asset balances, it could hit anywhere. And I think at least in times like these, when confidence is lost, disclosure and appropriate disclosure is the best remedy. There will be a dip in our eyes, for sure.
It seems incorrect is probably the wrong word if it's been going on for 3 quarters. I mean, one would say that that's the definition of overseeing and probably overlooking a problem. Anyway, the last question I wanted to ask you is with regard to the current situation at the bank. There's a board. There is obviously RBI scrutiny. They've not yet found a new CEO candidate yet. But tough questions and tough situations for these group of people who are currently managing the bank, right?
Oh, absolutely. I think it's an uphill task for the people who are doing it, and kudos to them. And I always keep saying it. We have a wartime chairman in Sunil Mehta, and I'm sure he's on top of things. He's dealt with similar banks in the past. And yes, the oversight team is there. The new operating team is there, but actually getting to the root cause of what's happened on an operational basis needs a thorough review. We've had so many agencies there. I think collating some of those reports, putting it together and finding out where the larger picture has been missed, and coming out with a comprehensive plan to rectify that, I think would be an expectation, and it is an uphill task.
All right, Mr. Devanji, thank you so much for taking time out in the morning and talking to us. So, Alex, what Mr. Devanji is saying is that there needs to be a root cause analysis and a comprehensive report rather than this drip piece of information. I tend to agree with him on that.
No doubt. And a lot of investors that have held faith will also be very agreeable to that. Let's find out how it starts in trade. We'll know soon enough. But in the meanwhile, let me go across to Kush in studio, just to give you a sense of how to approach this tactically. I know that you've spoken about a few banks, Kush, that you should consider trading in. Do you stay very clear from IndusInd Bank, considering everything that we've heard?
Oh yeah, miles. I mean, don't even touch it with a barge pole kind of a scenario now, because this is, even without going to the charts, this is like a breach of trust second time over when everything seemed to be falling in place. Now, as far as the levels go, there was this recovery attempt, and the stock did manage to cross above some of the near-term averages. But if you see the last 3 to 4 sessions, those gains were given away already, and I think now we know why. The volumes were also picking up on the way down. So I think when you've got a lot of other options, good clean ones, even from a price action and a momentum perspective, you wouldn't want to play something like an IndusInd Bank. Whatever level it opens at, if you have a position, it's a good idea to perhaps now exit and switch to some of the other names. If you prefer large cap, then ICICI and HDFC are the banks to go. Among the relatively smaller names, you've got PNB and Canara Bank that you could look into.
Okay. We've spoken about the defense pack, Kush, and what a run it's had, right? The entire pack, and particularly some of these shipbuilders, Garden Reach shipbuilders, for example. I know that Neeraj and Harsh were talking about it on the YouTube live in the midpoint. And by the way, in case you want to listen to a great conversation, you should tune in to Bulls, Bears, and Banter. I hope I got the name right. But having said that,
you did.
I did. But let's talk about whether or not you should get off that defense train if you manage to get on early enough based on the kind of price trajectory you've had.
So the simple answer is book partially, hold the rest of the quantity. And the reason I say that is because if we remember what these stocks did, prior to the last 12 months, when we saw correction and consolidation, levels didn't matter, right? Overheated levels didn't matter. I think even on fundamentals, valuations didn't matter. I mean, they just had they just started their own course and just, kept on moving higher. If that were to be repeated this time around, you don't want to miss out on gains. And that's why the best way to play, momentum, especially as strong as this, is via trailing stop losses and partial profit booking. So yes, some of these names are starting to inch closer to overheated territories with the kind of moves that you've seen in the last 3 sessions. The volumes have also picked up, by the way. And that's why I remain constructive. Continue to hold, depending on at what levels you bought. It's not a bad idea to book 25, maybe 50% of the profit, but these are not something that you want to let go of entirely in your portfolio. Maybe as and when you see a profit booking dip, you could consider re-entering these stocks, once again.
Okay. Now, just one more thing to keep in mind is the kind of moves that IT has been making, right? Kush Bora, one last question before we hit that break. You've given 2 mid-cap, small-cap names as trades, but the large cap and the mid-cap IT pack has had a phenomenal move, and metals is the other which has had a phenomenal move. So give us the one top bet from both of these sectors or both of these themes. One IT name which is looking very good, one metal name which is looking very good.
You've made my life easy. You've made my life very easy with that final question. Coforge from the IT space, large caps I don't go by. If I had to pick one, it'll be HCL Tech, and I've maintained that for some time now. But if I were to still pick one, it'll be Coforge from the IT space, and from the metal space, Nalco is looking good. The others have had a good run, like Tata Steel and JSW Steel, and might see some profit taking. But Nalco from the metal space is looking good even now.
Okay. Now, just a few days back, Neeraj managed to go to Omaha, and one of the lucky few who witnessed the last AGM, perhaps, of the great man, Warren Buffett. And in that context, I decided that I would like to speak to Mr. Ramesh Damani, who is a long-time follower and a student of Mr. Warren Buffett's philosophy and manner of investing. And I discussed with him whether or not the Indian investor can learn to invest like Buffett. And here's a small piece of that conversation that plays out this evening. Listen in.
Sometimes it pays heed to take some money off the table and sell those winners and wait for a better investment opportunity in maybe other stocks or maybe in the same stock but at a different time. So occasionally the market will take and overvalue these stocks. And as an analyst, it is your job to be true to yourself and not say, oh, because I picked a 30x, I won't ever sell it. At least I have not reached the state to buy that businesses that I can hold those 5 businesses forever. Not that there aren't businesses like that, but it takes a huge amount of intellectual rigor to figure them out. So if you do a bit more loose, elastic analysis, maybe one way, if it doesn't work, obviously you want to get out of that. If your thesis is wrong, the faster you get out of it, the better. The other thesis, if you think the bull market is ending, because typically, Alex, when a bull market ends, all stocks will be down 30, 50, 70%. So might as well lighten up at that point. So that's what I use for myself.
Last bit of advice that you would give to somebody listening in that is at the start of their investing career, trying to build an investment portfolio of stocks, what would you tell them?
It's very simple, actually. India is a young country. A lot of investors are young in India. So you want to first save more than you spend. That's the first thing out there. And secondly, what you save, you want to put in appreciating assets rather than depreciating assets, because that's what will go up. So if you go out and spend on a car or a phone, you'll feel nice, but it'll depreciate down in value. But if you buy a common stock or something that can appreciate, you'll probably make better gains out there. So start young, invest in appreciating assets, and what Buffett has taught us so vividly is learn how to compound money. Compounding is a magic that people need to understand, that Buffett has taught us, that if you double your money every 3 years, I think in 12 years you'll have 16x your money. There's one Warren Buffett quote which I don't remember exactly, but what he said is if you want to get from the middle class to the money class, all you need is 30 years, a bull market, and the ability to compound money, and you'll get there. You can start with almost any amount of money, Alex, and which is the point I always tell investors. You can start with almost any amount of money. If you do it successfully for a 30-year period, which is your professional life, 30 years you would have 1000x the money that you started off with. 1000x the money.
Wow.
Do that on a computer spreadsheet and see for yourself. You double your money every 3 years. What happens in 30 years? It is extraordinary, and that path is open to everybody. It's the path is already laid out by Warren Buffett, and we just have to climb that path.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market mover.
All right, back with India Market Open right here on NDTV Profit. About 15 minutes from Market Open, let's try and focus on specific pockets and specific stocks that we've told you all through the 1 hour with our fundamental guest for the day, Dharmesh Kant, Head of Equity Research at Chola Securities. Dharmesh, thank you so much for talking to us this morning. Really appreciate you agreeing at such a short notice, but it's an important day with a clutch of names out there, Dharmesh, which deserve a look at. Now, we spoke about IndusInd Bank in detail, so I'll not talk about that. I'll start with PB Fintech. What did you make of those numbers? Because when we looked at the numbers, Dharmesh, the reported numbers, top line, bottom line, look very good, but the adjusted EBITDA is in line, and Morgan Stanley seems to believe that the valuations plus the lower growth in FY26 make it a sell in their book. What do you guys think about it?
Yeah, good morning, Neeraj. Thank you so much. See, I mean, that's the view of the Morgan Stanley, where the only thesis where they may be, citing is slowdown in the growth compared to the valuation. Otherwise, there is nothing wrong in the numbers. My own sense is that with a company like PB Fintech, it will always enjoy a premium valuation. They have been the first movers in the entire space. And the trajectory is likely to be up because the businesses will come. I mean, still the penetration of most of its products is not to that extent. And there's a healthy growth of around 12 to 15% is easily achievable. So I doubt whether, I mean, if today there is a Celtic happening on this company because of this particular report, it's a good opportunity to buy it.
Shifting focus to another, and we're just about hitting those pre-market rates, so keep one eye on that. But Dharmesh, very good morning to you. Alex here. I want to know what you thought about Allied Blenders, because the numbers look particularly good, and seemingly that premiumization play that they're working towards has worked in this quarter with a significant improvement in the margins. Volumes have also done reasonably well. What do you think?
Yeah, good morning, Alex. I mean, it's quite strange, and we're happy to know that all these companies are doing very well. I mean, yesterday Tilak Industries also came out with a very decent set of volume growth, and their products have been gaining market traction faster than this. So two theses works out here. One is the disposable income has gone up in the hands of the people, and their per capita income is also seeing a rising trend. With this comes the quality of life and everything. So I'm not advocating that alcoholic beverages are the way forward, but this is the way. I mean, companies have been doing well. To my mind, if I have to pick one shot, it would be Tilak Industries in the entire basket, just because of one factor, that is the valuation comfort. I mean, it's trading at 1/3 of the valuation multiple of most of its peer. With equal ROE and a good growth traction, it's a complete turnaround with balance sheet cleaning and the profitability and cash flows in there. So that stands out, and maybe this morning Allied Blenders is likely to do well. With this, Radico Khaitan can be another company if you are playing a basket of it.
What numbers? And Allied Blenders traversed all the way from 300 to 470 to come back all the way to 300, and now is starting to circle back again. The last 5 or 6 days, or maybe 10 days, it's had this very sharp up move. Look at that. That shows you, right? This very, very sharp up move that has happened in the last 1 week. Kush Bora, I mean, do you book profits here? It's starting off 5% higher, so maybe not today because it might be on a circuit, but are there some stress points at high levels?
So 5 sessions, 306 all the way up until 420, 426 that the pre-open is indicating. So yes, an extremely sharp run up on this. On the upside, I think there's an immediate resistance at 440. So I think it's a good idea to book partially and hold the rest for 440 and higher levels.
But just viewers, keep in mind that fundamentally when you look at it and the valuations and the kind of growth that the alcohol beverage market is showing, and particularly they being strong in the Andhra Pradesh region as well, where the things have just started, it's an interesting mix, but let's wait and watch. Okay, the other set of stocks which have come out with good numbers. I don't know if you look at these names, Dharmesh, not often do we talk about it, but Inox India, I would suspect might have a good number. Abbott India, good reaction to its numbers. Abbott India hasn't had a bad quarter either, maybe. Any thoughts?
Neeraj, unfortunately, I have not.
Okay, let's leave it out. Never mind. The other thing is wind installations. Since we're on the topic of Inox Group, it's a different sister concern, of course. Not a sister concern, but different group, different parts of the business. But Inox Wind Energy, Suzlon, Dharmesh, yesterday were very active. Wind installations are looking very solid. Do you like these businesses?
Yeah, Neeraj, as far as renewable energy is concerned, it's a very promising space. But instead of wind, we are more focused on the solar part because that's where the traction is coming. Almost 200 gigawatt of solar capacities will come. With compared to that, wind is only 30-40 gigawatts. So plus, the logistic issue of wind with the kind of blade you need for per megawatt kind of a generation. There are too many issues out there. I don't think wind is going to catch up that fast as the solar is. Renewable energy will catch up, and there, to my mind, Waaree Energy stands quite tall. I mean, it's the biggest solar PV module manufacturer in India. Almost 21% of domestic consumption is provided by that. Exports 44% market share is there. They have been phenomenal. If you look at 2021 numbers, 50 odd crores of profit to 1928 crores of profit this year, and the growth is expected to be 35-40% with operating leverage playing out from 2 gigawatt to 13.2 gigawatt kind of a company. So that is where the focus is. Renewable energy is definitely a promising space, but we like solar part more than the wind for obvious reasons.
Just about 9:04 and quite a few rates coming in, a lot of reactions coming through as well. Allied, we already spoke about, it's up about 5%, or at least it was. It's come off a little bit. So let's see, a lot of chop and churn at the start. But anything standing out to you, Kush, at this point? Any reactions that you would focus on before I go back to Dharmesh on another stock?
So I'd wait for the rates to settle, Alex, but I think a couple of stocks that I have on my radar. One is Techno Electric, something that we discussed in the closing show, and Varroc Engineering. These are two stocks that have been doing well. Even yesterday's session, they did well. I think from a momentum play also, I think there could be some more further upside on these names. So these are the names that I'll have on my radar, in the pre-open session, and from about 9:15 to about 9:45, see what they do.
Okay. Okay, let's talk about Crompton Greaves, because I was going to ask Dharmesh about it. Before we do, let's go to Harsh to find out what Jefferies is saying about this. It's maintained a buy rating on Crompton with a target price of 485, and that implies a 46% upside potential. Quite a substantial gain is being seen by Jefferies on that. Harsh, why are they saying that?
Well, they're assessing the Q4 numbers, Alex, and they're seeing strong traction. What they're starting off by saying is that the 2.0 strategy, which was announced at the end of FY24, seems to be working now. And they've broken it up quite nicely. Firstly, they're talking about how the stock has dipped 13%, which gives an opportunity to investors. The stock now trades at 32 times price to earnings, and it's at around a 12% discount to the 5-year average. And the last 5 years haven't been great, and that's why that kind of stands out for me. In terms of EBITDA margins, the number has come in at 12.8%, which is a 240 basis point expansion on a year-on-year basis. So you're seeing that strong expansion on EBITDA. FY25, the EBITDA is up 24% YOY. E-commerce is driving growth, especially in appliances. The electric consumer durables, which is the ECD business, is actually leading growth. Currently, the ECD sales grew around 11%, but EBIT grew 20%. So that's where some bit of profitability is coming from. The mix improvement with regard to lighting, the mix improvement is what is aiding margins as well as overall numbers. New launches in street, flood, industrial and indoor commercial, all of those are aiding the B2B lighting business as well. And in terms of Butterfly, which is the other vertical, you're seeing a turnaround there. Price hikes, cost optimization is driving up margins in Butterfly. Mixer, grinder, cooker, wet grinders, all of those have clocked double-digit growth. Sales to grow in mid-teens is what they're estimating. 14% sales growth is what they are penciling in for FY25 to 28 with regard to Butterfly. Company is also expected to foray in rooftop panels. This is around a 20 to 25,000 crore addressable market, so large market there. Therefore, they're estimating an EPS CAGR of 18%, FY25 to 28. The risk reward therefore looking favorable. They're valuing this at 40 times, which is a 10% premium to 5-year average. Unseasonal rains is one of the risks, but outside outside of that, demand slowdown, slower traction, and delay in butterfly synergies, all of those could well be risks. So keep your eye out on this one.
Yeah, butterfly Gandhamati, of course, is what is being referred to here. But I want to get Dharmesh's view on Crompton. Dharmesh, the numbers looked pretty decent. PAT growth of 22.5%, margin expansion as well. What did you make of the numbers, and would you be buying? Do you also see a 40+% upside?
Yeah, let's see. Butterfly Gandhimati is, I mean, maybe the game changer for it, because last 5 years or even 7 years, the company was doing nothing. They were consistently losing market share to other players. And the other players have gone very strong with their dealer network, the type of push they are getting with their products is pretty strong for them. And in fact, if you look at the consumer point of view, it's just because of Butterfly Gandhimati, they have got this number. Otherwise, people are not any longer looking at Crompton Leaves. So, but this can give a leash of life to it. It's more of a tactical play. Valuation-wise, it has corrected quite a bit, and if they are able to do 14-15% kind of a number, definitely there can be some upside expected, seeing the type of price damage which has already happened. But it's more of a tactical play than more of a wealth creator or more of a fundamental investment play for 2-3 years. I think there are better options in the market which have grown far ahead of this company. So, to my mind, from a trading perspective, one can take a chance here for at least see one more quarter. Then a fair assessment can be taken on the consistency of this call. Otherwise, I would give it a skip.
All right, earnings reactions, quite a few, because we're winding down towards the end of the earnings season, as you know. But PN Gadgil is one that you should watch out for. It's not the best set of numbers, particularly in terms of the mix that they have managed in the quarter, and we'll speak to the management in a bit. But Kush, on the charts, what would you make of this?
Well, I think the opening suggesting, a bit of a downtick. I think 535 is the level to watch for on the downside. I mean, you were seeing some sort of a reaction yesterday as well, where, the stock did not participate in the entire market rally and closed just marginally higher. I think on the downside, there is some congestion near the 530, 535 zone. If that is held, then I think the stock could go into a sideways consolidation. If not, you could see further downsides. In any case, I wouldn't go out and buy it just yet, because that breakout hasn't really sustained, that came about. So for now, it's a wait and watch. If it holds 535, then perhaps some consolidation on the cards.
Okay. By the way, yet another day wherein the open seems to suggest that the broader markets will outperform the benchmarks. Nifty small cap is 0.5% higher, wherein the Nifty is just about flat. Nifty IT2 flat, so no big changes there. IndusInd coupled with Newland are the key losers on the liquid names. Newland Labs, after having a slam dunk yesterday, is down another 7% on the pre-open session. And look at what's happened in the last 6 months. I think the stock has declined from maybe 15,000 odd all the way to 11,000. This is when everything else in CDMO is actually doing well. So there is a serious problem out there. On the upside, Zentech continues to rise and shine, 5% higher for that one. Keynes, a result reaction, which we didn't speak about, but that one is doing okay. And Anox India, amongst others, doing okay too. 3 minutes left. Dharmesh Kant, Keynes Technologies. If you track that one, any thoughts there? And if not Keynes, any other EMS player that you may like?
Nearly all the EMS players are doing pretty well, and particularly if you are looking from the defense perspective. So I think Cyient DLM looks pretty good out there. DCX System is another company which we have tracked closely. It was beaten down, but the order book stands very tall. Last year they ended up with 1,600 crores of order book. This time they are sitting on 3,400 crores of order book. And March is normally a very good quarter for them. Management is expecting quite a lot of flows. So I would prefer these two rather than Keynes, just because of the valuation multiples which they are sitting on. But having said that, EMS is the thing for FY26. I mean, this sector per se will do very well in this current year.
By the way, something which is a pride of the nation as well, but Zentech is on a roll up 5%, something which would make everybody proud. We spoke to Ashok Atluri, the MD at Zentech, wherein he shared an instance when there was a scuffle in the offices of Zentech during the India-Pakistan tussle. And why was this scuffle? Because people were fighting for who will support the Indian armed forces from the front. That's quite something, right? Listen into that small instance.
Our guys are there supporting the armed forces at the place of action. So the general feeling in Zen was, this was the moment we have been built for. And we were completely all out, saying what can we do at this point in time to support the Indian armed forces to win the war. And I think that commitment is much more than the the orders that we are getting, the thing that I could see that when companies that are not having that high agency, that factor of that patriotism, will actually, when the war comes, they want to back out, which is kind of strange, So we are, I mean, this is the time we really put your heart and soul in supporting the government. So I think we, as a company, it also kind of proved to us that, these guys were actually fighting with each other to go to the fronts. So, I think we are very, very lucky in that way that company is, completely committed by heart and soul to ensure that India wins every war, not only now, but in the future also.
Words that give you the goosebumps. On that note, Dharmesh, thank you so much for joining us this morning and for giving us views on those stocks. But Kush, very quickly, what is your top pick at this juncture?
Just a quick word, what's sentiment from Zentech? Fabulous. You've got to give it to them. From the ideas perspective, I think I'll go with what we discussed earlier, which is Windsor machines. The stock seems to be opening higher, about 2% or so, but I think there is further momentum on the upside, that the stock could gain. So as we've discussed, as far as targets go, 375, 390, maybe you could push the stop loss a little higher, close to the 350 mark. So Windsor machines on your radar from a long perspective.
Keep in mind, viewers, noted investor Madhu Kela is a large investor in Windsor machines. So keep an eye. Doesn't mean that the stock will do well, but just laying it out. But 6 minutes, what we'll do is, since Kush was so impressed with Zentech's view, people are impressed with the Zentech move. We'll ask Kush about upside levels on Zentech after the market check. But here's how the markets are starting off this morning. Well, on expected lines based on the pre-open session, but not quite what the implied open was suggesting. So that's the bit of the unexpected thing, but 0.25% lower. IT is down as well. Wonder what mid caps and small caps are doing. After a stupendous move yesterday, a bit of a consolidation. Mid caps 0.33%, small caps 0.5%. This baby, 5 days on a trot now, is doing well. The hero of the current week is what's happening to the small cap space. Let's get the heat map up on the screen and show you what's moving and what's not on the large caps. Airtel, the block deal by Singtel, that making that stock in focus. I suspect that this will not last too much. IndusInd Bank, rightfully so, down 1.7%. There's pain in SBI as well. A little bit of Infi, HCL Tech Mahindra, so IT showing that slight skittish move, and Mahindra slightly lower. But a fair degree of red, very little green. What's doing well? Eicher maybe, Coal India, Finserv, Maruti. I don't have too much to talk about, but for the fact that Airtel is down and IndusInd Bank is down, just keep an eye out for IndusInd Bank. It's just 1.5% right now. Looking at the kind of skeletons tumbling from the closet, never know. There could be more in store. So keep the eye out on that stock. On the flip side, Alex, maybe just Eicher worth talking about. Nothing too much otherwise.
Yeah, it's a quiet start, but I just want to point out that yesterday was a quiet start as well. Wonder whether you'll have any fireworks at some point in the middle of the session. But let's also pull up the sectoral heat map to give you a sense of what's moving and what's not. Yesterday, remember, midway through the session, you saw the banks take off, you saw IT take off. At the start today, you have the defense pack once again that is ruling the roost. It's more than gains of 11% at this juncture, heading towards 12%, maybe more for the week as a whole. Consumer durables is doing okay. Not too much else that is moving sharply at this point on a sectoral basis. On the downside, let's look at that. Infra is down about 1/3%, IT about 0.2%, so no big movers per se. But let's look at individual stocks because that's where the action is this morning. And let's pull up something like an Allied Blenders. Let's pull up PB Fintech on the back of earnings. Quite a few stocks reacting to earnings. So first, let's look at Allied Blenders. It's up about 3%. Strong Q4 volumes, improvement in margins as well during the quarter. Let's see if that sustains. It started, remember, in the pre-open session at 5% high. It's cooled off just a tad bit from that point. PB Fintech, this is something that Neeraj was talking about earlier. It has beaten estimates. It's up about 2.5% or thereabouts. And it has beaten both PAT as well as revenue estimates. Godfrey Phillips, very strong revenue growth. However, the margin picture was not very good because it saw a contraction in the margins. That stock is down about 3%, perhaps reacting to that EBITDA performance, which maybe the street has not liked too much. Abbott India, strong set of numbers for this pharmaceutical company. The PAT number is looking strong. It's up quite considerably. But Alive is Life, despite a decent set of numbers, EBITDA and PAT rising as much as 40% or thereabouts, is not having a very good start. JSW Energy, decent set of numbers. PAT growth has beaten the consensus on the back of an other income element in that P&L statement. But more important perhaps is the capacity addition target, which it has raised upwards for 2030. It is now seeing that it's going to set up 30 gigawatts versus the earlier plan of 20 gigawatts, which is quite substantial. Biocon has gotten approval for a drug. Let's see what's happening there. It's up about a percent or thereabouts, not doing too much in trade. Let's see if that holds or it gets built on. RVNL usually reacts to order wins, and it is reacting just a tad bit today, up about a percent. Not the biggest order, 116 crore or thereabouts is what it has gotten. A couple more stocks. Crompton, we spoke about this on the back of a decent set of numbers, in fact a very decent set of numbers. Dharmesh was speaking about it in terms of the implications that the acquisition of Butterfly Gandhimathi has had for this company. Jefferies is seeing a 48% upside for this particular stock, up about 4% in trade today as well. Couple more stocks. Newland Laboratories, it is a bit of a downer for this company. Very weak set of numbers. Varsha, our researcher who tracks this stock closely, said that this was anticipated, the underperformance on the bottom line front. However, the stock was quite a big winner in trade yesterday. It's losing quite a bit of the ground that it made up. And finally, Bikaji Foods on the back of not the best Q4, down about a percent or so. So quite a few stocks, Neeraj, reacting to earnings and updates, but not too many big movers.
The two names actually though at the top of the pile, Alex, are SKF and Keynes. So SKF, the numbers reaction 8% higher. Keynes Tech up about 5%, so that is done okay. So clearly Dharmesh Kant got it right on PB Fintech, because that stock is actually done well on open. So never mind Morgan Stanley's skepticism around the valuations. PB Fintech has started off well on the reported numbers, which is actually a pretty good sign as well. So that's to be kept in mind. And just before we get to Manishi Ray Chaudhary in, final question with Kush Bora. Kush, quick opening thoughts. Can't let you go without a word on Zen Technologies.
Well, I would say, despite against what the SGX Nifty was suggesting, or GIFT Nifty was suggesting, we've had a soft start, but I wouldn't hold it against the market. We've had a very strong run yesterday, and even now 25,000 put is adding, some open interest. So I think there's a 25,000 straddle at play for the weekend with a premium of about 300, 350 odd rupees. So this is par for the course, at the moment. Nothing to be too disturbed about. As far as Zentech goes, the circuit did open for a brief while. I think it's open again even now, but you wouldn't want to sell it on the upside. 1850 and 1925 are levels to watch for. So you might want to book partially if at all, but hold it with a trailing stop loss near the 1725 mark. That's a better strategy to play.
Kush Bora, thank you so much. Lovely talking to you today. Much appreciate your time. Have a great weekend. Just before I get to Manishi though, just want to mark HCL Info. It's up 10% yet again today. So 20% when they made the announcement that HCL Group is joining with Foxconn for that semiconductor plant. 20% the next day, 10% today. In the last 5 days, I mean, it doesn't add up to 50%, maybe slightly more than that, or maybe slightly less than that, but effectively has done phenomenally well in the last 3 days. Don't know if it has a material financial benefit because of the HCL Group's participation in that semiconductor plant, but the street seems to believe so.
And Went as well is losing another 3% today. It was in focus yesterday. You were pointing that out in the morning.
Yeah, but good subscription to that thing, but nevertheless, down another 3%, so for sure. Much higher than that price that they had set it out. But Manishi Ray Chaudhary, CEO of Emmer Capital, with us on the show. Manishi, great having you. Thanks for taking the time out. How are you viewing this price action, Manishi? I'm compelled to ask this to you because, I mean, we've seen the FIs come out and buy very strongly in trade yesterday. Some notes, including CLSA's Lawrence Balanco, saying this sets the stage for the Nifty hitting all-time highs. Are you as constructive?
Eventually it will. I don't think it'll happen in the near term. I think the FII enthusiasm about India and in general about the whole of Asia stems from the caution about the developed markets, particularly the United States. I mean, we have seen even U.S. bonds selling out, U.S. bond yields hitting that 4.5 to 4.55%. And I think what we're seeing in Asia is kind of an offshoot of that, increased risk perception about the United States, and therefore money moving in the direction of emerging markets, which is exactly the opposite of what was happening in the second half of 2024 and in the first few months of 2025. It's good that we have also seen at the same time, some fundamental changes. We have seen at least some baby steps taken towards resolution of the trade war. We have seen discussions between US and China. We have seen a trade agreement between India and the United Kingdom, and possibly a few more coming, from the United States as well. So, I think things are fundamentally and flow-wise beginning to look better. And when one looks at India in the context of Asia, there are quite a few tailwinds, but the most important of them are the potential rise, potential revival in consumer spending and government spending on infrastructure, and the downward trajectory in interest rates. Now, the RBI is clearly on a rate reduction path, as most of the central banks in Asia would have to be to protect their domestic growth. So when you put all this together, things are looking good. The only problem is earnings estimates are not really still keeping pace with it. I mean, during this quarterly result season, Indian earnings estimates have come down, not much, by about 2 to 3%. So that is something we have to be mindful of.
Hi, Manishi. Morning. Alex here. I'm just wondering then, at this point, so you're saying that you're not anticipating all-time highs in the very near term. So what, according to you, will drive markets at this point? Will it primarily be flows that determines the near to medium term move, not just for the Indian equity markets, but quite a few markets globally?
Right. So I think in the near term, I mean, if you look at the next 1 or 2 months or so, India would possibly move in line with what the other Asian markets would be doing, particularly the larger markets in North Asia. So I don't really expect any significant outperformance from India in the near term, partly because of the premium valuations that the market is trading at. India always trades at a premium, and it should. But the valuation premium at about 55% compared to Asia ex-Japan is significantly higher than the long-term average of 40%. So, coming back to your original question, that what would drive the Indian markets, I think it would be a combination of flows and slightly better outlook about, the growth outcome that could happen, as a consequence of consumer spending rising. And, as I said, even the infrastructure spending on the part of the government coming back after, we have seen a lull in that in 2024.
Okay, Manishi, some I wouldn't call it an offshoot, but some smaller pockets wherein the data coming out seems to be pretty strong. So we all know about defense, and last few days we've spoken only about defense. But suddenly this morning I got data that wind installations, for example, in India in the month of April were over 1,000 megawatts or 1 gigawatts, right? Relative to maybe 250 megawatts in April last year. So that bucket seems to be really turning the corner. There is some serious shipments happening from CDMO companies out of India as well. And that bucket seems to be doing well. So have you picked up data points around specific pockets which really interest you?
So, some of these points that you mentioned, particularly CDMO, generic manufacturing, and, green energy, I think these would be the mainstay of not just Indian markets, but of many Asian economies which have a degree of competence there. China is the first market that springs to my mind as far as green energy, particularly solar energy, is concerned. They have most of the IPs, the intellectual property in this area, and they're also a giant manufacturer. In case of India, I think wind energy is possibly bigger than solar though much of solar equipment is still imported from China, it'll continue to be in the foreseeable time horizon. But I think some of these pockets, like defense, like green energy, like contract manufacturing of pharmaceuticals, they would continue to gain precedence over others. I would also focus on some of the EMS companies, the electronic manufacturing. The valuations are not cheap over there, but I think if we are likely to go through this, what's called the China plus one scenario and the diversification of supply chains globally, then some of those electronic manufacturing companies would also be something that investors should look at.
Manishi, I'm wondering, and often we talk to you about equity, but do you see any interest in your peers as well, foreign institutional investors? Do you see opportunities in fixed income in India, and do you see flows into the debt markets in India go up, especially in a scenario where US bond yields now overnight have moved lower and maybe directionally could move further down over the course of the next coming months?
See, right now, Indian bond yields are coming down, the US bond yields are going up, right? So that attractiveness for the Indian corporate and government bonds, they're relatively lower than what they used to be, if you look at late 24 or even earlier. We're seeing more enthusiasm for the Southeast Asian bonds. Particularly, I would point out Indonesia, Philippines, Malaysia, where, I think that bond yield differential is still significant. Obviously, Indian bond yields or Indian bonds in general, they are a lot safer. The credit ratings are higher. The Southeast Asian bonds are more volatile. So to that extent, there's always enthusiasm, a degree of attraction for Indian fixed income paper, which is, I think, also reflected in what Reliance Industries did. Almost, I think, about 2.9 billion raised through overseas bond issuances. But if I look at the most recent trend, I think the conversations with the foreign institutions are more about the Southeast Asian government and corporate bonds.
Got it. All right. Manishi, thanks so much for joining us this morning. Pleasure speaking with you.
Thank you. Thank you very much.
We have to slip in a very quick break, but we've got several corporate conversations lined up, as well as a conversation with Ravi Menon of Macquarie Capital. Do stay tuned. Lots more coming up.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest
Well, let's get hang of some earnings. Global Health is the company in focus. The company reported Q4 earnings yesterday. Average revenue per bed saw a growth of just 0.9%, but we saw the net profit impacted due to higher tax implications. To talk more about this, we have the management with us, Mr. Naresh Trehan, Chairman and MD of Global Health, and Mr. Pankaj Sahni, Group CEO of Global Health, with us on the show. Gentlemen, thank you so much for taking the time out and joining us. I have a couple of macro questions as well, but let me start, Dr. Trehan, by asking you about what did you make of the quarter and the year? Did it live up to the expectations, or could it have been slightly better, especially in the operational metrics?
So first of all, let me give you the preamble that what Vedanta means. Vedanta actually means that we are practicing medicine at the highest end of anywhere in the world, and we are delivering that quality of care consistently. And so much so, not only with the care, but also with affordability and compassion, that for 6th year in a row, it's been recognized by Newsweek International, which does a survey of 28 countries, that we are the best private hospital in India. And not only that, we are ranked as one of the first 150 hospitals of the world. So that's been very gratifying and satisfying. Also, the fact that there has been a good growth. We have added 219 beds. We have announced that Noida which is under construction, will open in end of Q1 or early Q2 of 25-26, and also that we have taken a lease on a 110-bed hospital in Ranchi, which will be operational also around the same time. We have also got land for new projects. Mumbai we announced already. Then we now have acquired Guwahati for a 500-bed hospital in Guwahati, and also that we are working on other few projects, so that the growth that we expect in the coming two years or so is beyond 1,000 beds that we hope to add. So today, we have onboarded 119 doctors. So there has been a good movement, very positive movement for the year for us, very satisfying. And I will leave the numbers. Mr. Pankaj Sania, Group CEO, will walk you through the numbers so that you can understand how in tandem everything is happening: growth, quality, and financials.
Pankaj, you want to step in there and just a follow up and add on to that is just what you would do maybe for the next 1 or 2 years, because from March 22 to March 25, right, give or take 3 years, you've kind of, if not doubled the EBITDA, but increased the EBITDA by 70-80%. The numbers maybe about 150% growth on the top line as well. Is this the growth rate that you envisage will continue?
Sure. Thank you very much. So first of all, we are very happy with the performance that we've seen not only this quarter, but also over the course of the year. As Dr. Trehan mentioned, significant achievements in signing up projects in Mumbai, Guwahati, Ranchi, as well as in Delhi and Pitampura. But beyond that, we see that if you look at our financial performance, we've got about a 12% growth in volumes. That translates to about a 12% growth in our top line as well. We've got very strong growth on EBITDA, both for the quarter as well as for the year. And since we did have a merger with our Lucknow unit subsidiary, 100% subsidiary, and our main company, Global Health, that is why you see some impact of the stamp duties and other merger-related expenses on PAT. But if you discount for those, you actually see very healthy growth in our PAT numbers as well. So overall, I think we're very happy with where we've closed out the financial year. As we move forward, we continue to maintain our focus on delivering value-based growth across volume-driven growth, not only with our Noida and Ranchi facilities coming on board, but across the existing hospitals as well. Of course, our Patna unit continues to do exceptionally well. That now in its 3rd year of operations, growing very well, adding in beds as well. You see our occupancies have increased with our bed capacity increasing. But more than this, the real focus for us has always been to consistently drive high quality, volume-based growth across all the areas where we operate. And that you see evident in a lot of our units as we move forward. We've been very conservative on tariff increases. We do have some ARPOB growth. A lot of that is also the complexity of the work that we do. So I would say overall, quite happy with the performance. Of course, like with any organization, there are always improvements that can be made, and we are working very closely on all of those, not only in terms of operational efficiency, but also in terms of adding in additional clinical talent in both the newer as well as the mature units.
Pankaj, good morning. Hiral this side. I want to talk to you about the international business. Still a small portion right now at around 6% to your contribution. What's the strategy in terms of increasing this? Because that is a focus area. The capex that you're looking at in terms of the international markets as well, and what's the kind of ARPOB that you're expecting from these locations?
Yeah, so as far as our international business goes, mostly international business are restricted to our Gurgaon facility. With Noida coming on board, we do expect that also to be relevant for international business. But Lucknow, Patna, Indore, Ranchi don't really get much international business. So if you look at our international business share as a percentage of our Gurgaon unit, it's much closer to 10 to 12%. But when you consolidate it, it comes in at about 6%. We continue to feel that this is an important channel, but this is not the only channel. We have very, very strong domestic brand, domestic realizations, and domestic growth. So we are not dependent on international business for success. We do believe it's an important channel, and we'll continue to focus on that. And as Delhi, Mumbai, and our Noida and Gurgaon facilities are focus areas for international destinations for travel, those will continue to be the focus areas for us for international. As far as our capex plans, we have plans to go to about 6,000 beds over the course of the next couple of years, and we've detailed out approximately 4,000 crores of capex, and that will include our new hospitals in Guwahati, Mumbai, Delhi, as well as maintenance capex for the existing hospitals. And of course, as Dr. Tren mentioned, our newest facility, which will come on board in the next few months, will be our Noida facility, which will be, I guess, the bulk of the capex for this coming financial year.
Right. Dr. Trehan, one question I have for you is from a strategy perspective. Now, yes, we have seen compression that comes in from a margin point of view, but that's on the back of the operations that have picked up. What is your strategy going to be in terms of getting on a positive end growth in terms of margins? Because the kind of new bed additions and expansion that we are seeing does tell you that there could probably be some challenges on the operations side going ahead. So what's the aspect on that front? And secondly, in terms of the fundraise that already happened, what's the capex funding plan from here on?
So you will see our philosophy has always been to create facilities which are the highest end of care that you can offer anywhere in the world at an affordable price. So we have traditionally always never the highest priced facility, although we have the highest quality facility. We have successfully taken 5 hospitals to operations, and there has not been any major challenge because we actually incubate a lot of our talent in-house over a period of time, make them world experts, and then some of them will go to our newer facilities. So our acquisition of talent has not been a major challenge for us. Yes, of course, the training processes and all that are constant, which we are doing, like I'm sure other people are also. But the basic tenet is to create that quality where it is needed. Because if you look at our footprint, it is mainly in North India right now, although in Mumbai we are building right now. And there will be other places we'll be announcing soon. But the strategy is to keep that quality, stay at the top of the pile always. And like I said earlier, that we have been recognized by Newsweek International from a 28 country survey. So I think that if you have the best quality comparable to anybody in the US, UK, any other place in Europe, right in your home in India, then that is the accomplishment which we set out to do, and we have been able to do it successfully year after year. So we have one eye on technology, one eye on our talent, which is also of the highest level. And then the third is the cost to the patient, because we are very cost conscious to the patient.
Sure.
So we will continue with that philosophy. There are, like we said, 4,000 beds to be added in the next 4 to 5 years. The capex that we have estimated will be about 4,000 crores. We have a generation of significantly, so that at least we maintain our ratio of 50% our own investment and 50% debt. We do not exceed more than 50% debt. But if you look at it today, we are actually carrying a lot of cash on our balance sheet, and we don't have any significant debt. So basically, we have a long runway where we can go and invest and build out all the places. Like I said, the essentiality is that these are places which should need our services. and we have many planned which we can't explain right now because we will announce them as they are signed. And also the fact that if you look at it, we are already servicing around 500 million people in the India heartland already.
Sure. Okay.
And our now foray into Northeast will only add many more people who will get served at this quality.
A conversation soon, Dr. Trehan and Pankaj, on the changing face of healthcare and the landscape, and particularly your role within that. Today we have paucity of time, so we'll have to wrap it up here, but look forward to a slightly extended conversation sometime in between the quarterly results. But thank you.
I think it's an important point that you have raised, and we should spend time on it so that the perspective of what we want to do in India, walking into the future for the people of our country, I think is a very important one, and you're most welcome to take our time for that anytime.
Between now and 15th of June, sir. But thank you so much, both of you, for taking the time out, sir.
Okay.
Thank you.
Cheers. Bye-bye. All right. By the way, just a quick mention. That's, of course, global health down about 3% today. A quick mention. PB Fintech, they are saying that there's a bit of a miss that they've done, and likely on FY26 also the commentary is looking weak. So maybe PB Fintech comes off from the highs of the day. But JSW Energy is the stock in focus. Let's get Sharad Mahindra in on the conversation on the numbers and the outlook ahead. That stock is up 0.5%. Mr. Mahindra, good having you. Thanks for taking the time out. How do you view the quarter gone by?
See, quarter has been, in two ways we see this quarter. Quarter has been phenomenal for us for the reasons. One is, of course, in terms of the revenue, in terms of the margins. But apart from that, some few big actions which going forward are going to be a key differentiator in our performance is a very large return accretive acquisition of KSK, which is now JSW Mahanadi, which we have acquired on 6th of March. So this is one, and which has in fact demonstrated in just 25 days of operations what we have been able to turn around this asset, what it has performed for maybe 340 days, what we did in 25 days. That gives us a lot of confidence that this is going to be a big differentiator. Addition to that, the acquisition of O2 Power, which we had announced earlier, we have completed on 9th of April. So these two are major drivers going forward, which will play a significant growth, both on our revenue, on our margins, whether it is at EBITDA level or at PAT level. So these are the key differentiators. I see that quarter two has been very instrumental. In addition to that, when we talk of generation in quarter four for us, we have seen a growth of 24%. Generation growth, and the key drivers to this have been that RE portfolio growth has been 34%, but out of which 67% growth quarter on quarter has been because of the wind capacities which we have added during the year. Despite not reaching the wind season, peak wind season, it has to start now. Despite that, there has been a 67% increase. And also the generation growth has been led by the acquisition of KSK 25 days, which we have got, plus our JSW Utkal unit in Odisha, which was operating with one unit of 350 megawatt. We have been successful in commissioning the second unit in March, and Utkal plant has stabilized. So these two drivers in thermal space and the RE capacity additions have been the major drivers for quarter four in terms of generation growth of 24%. Maybe the demand growth was under 4% in the country.
So operational performance, Mr. Mahindra, with the RE additions, are there upsides possible to the operational performance?
We see upside, as I told you, and the upside drivers are, as I told you, the three. One is that KSK Unit 2 of JSW Utkal, and the wind capacity, which has not witnessed the peak season.
Get your point, sir. Now, how do you see the Mahanadi contribution for FY26 and 27? Does it contribute significantly in FY26 and into FY27, or will you milk it enough in FY26 itself?
See, two things. I tell you, there are certain steps, majority of things which we will be able to get the benefit for maybe at least 10 to 11 months of the year. Some of the actions which we have implemented after acquiring the asset and started operating on 6th, our full team is in place, which we were ready with. We have taken certain actions in a span of only 15 days. which is bringing in significant operational efficiencies. And in addition to that, this plant has run for only 67.4% PLF full year. And in 25 days, we ran this plant with a PLF of 77% and a deemed PLF of 99%. And one of the big opportunity which was there as compared to what it was not being done during this EIRP process was the merchant capacity of almost 90 megawatt. And it is a very low fuel cost plant because it is very, very close to the coal mine that we are selling this entire untied capacity, which was not so, almost negligible sales were there in the merchant market. We have already started from 1st of April. So, and in addition to that, lot of operational efficiencies. When we as an IPP are running the plant as a company and the RP is running, there is a difference. Lot of improvements we have already implemented and a very close monitoring is being done. So, as you said, maybe a large portion of the benefits we are going to get in the current year only.
Okay. And last question, macro one, Mr. Mahendra, interest rate cuts likely on the anvil. How do they impact your capex plans and interest costs?
Yes. Very right, this thing. If you see that we have announced our strategy 3.0, reaching 30 gigawatt by 2030, in which we have said that FY26 to FY30, a capex of maybe 130,000 crores is what we have announced. And with this downslide which we are seeing in the interest and with the inflation numbers which have again come, we are certain that there will be definitely softening in the interest, which is going to be beneficial not only for us but for in general for maybe capex intensive industries, which is going to be there, and the liquidity availability improving definitely will augur well for the industry and also for us.
Okay, Mr. Mahendra, we'll leave it at that. Thank you so much for taking the time out and being with us. Really appreciate your time. We need to slip into a very quick break. On the other side, joined by the management of Bikaji Foods.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest
Welcome back to India Market Open. Let's quickly pull up Bikaji Foods. Yet another weak quarter is what you've seen. The margins have dipped significantly. The stock is seeing some cuts of around 1.4% right now. Some recovery from the lows that we started off. But let's welcome in Rishabh Jain, CFO at Bikaji Foods, and Manoj Verma, COO at Bikaji Foods. Welcome to the show, gentlemen. In fact, Rishabh, let me come to you first. Overall, if you see in terms of the quarter, there has been weakness. Yes, input cost pressures have sustained this time around as well. How long do you see this trend continuing from here on?
So thank you very much for joining us. Despite this the tough year, then you will see the inflationary pressure in edible oil and few pulses. But yeah, you will see a third quarter where our gross margin dipped to 26-27%. To this quarter, we've done a significant improvement compared to last quarter, and we've seen a major uptick in gross margin and EBITDA compared to last quarter. And overall, this year at a year level, we've done a significantly good job in posting good numbers from a profitability lens.
Right, but Rishabh, clearly, I mean, yes, there has been a slight bit of an improvement from the third quarter, but costs have been increasing. With that, if you have to look at the kind of margin pressure that you're seeing, and the kind of revenue growth that is coming in as well, it's a question about value-led or volume-led. What would your view be on that front?
So next year, like this year, FY 25-26, we see that we have done a reasonable good investment in building capacity in last 3-4 years, and currently we are at close to 48-49% utilization, and we see a significant upper room in utilizing the capacity in next 3-4 years. So we see so overall volume also we want to grow volume at 12-13% volume, and price growth will be 3-4%. So that's the target what we are taking in this year.
Okay. Manoj, taking what Rishabh is saying into consideration, what's the expansion plan from an operations perspective? Because clearly the region where you're looking to expand to, the number of touch points that you want to hit in terms of FY26 is also a large number. Taking all of that into consideration, there could be some bit of pressure that could be coming in on the back of higher operational costs.
So first of all, let me tell you, that the targets what we took for ourselves in terms of both our direct reach, which is controlled coverage, and also the indirect reach, which is reported by the Nielsen, we have moved northwards and we are ahead of our plans in that stuff. So in spite of all adversities in terms of the cost pressures, the targets or the mission what we were on did not get derailed, and we are well on track. As we speak, our reach is now upwards of 12 lakh outlets, so which is a great achievement and a upwards movement. And also our direct coverage, what we had called out of the target, what teams were carrying was of reaching directly to 3 lakh plus outlets. So we have ended the year at 3.11 lakh outlets. That's what it is. Going forward, this being in a FMCG space, getting distribution will always be a task and targets irrespective of wherever we reach. So this year again, what we are taking a target of adding 50,000 outlets in our direct coverage, and also should add up about 50 to 60,000 more outlets.
Right. But Manoj, sorry to interrupt you here, but taking all of this into consideration, you're seeing that the balance sheet is kind of worsening. Borrowings have increased. If you talk about the current borrowings, the lease liabilities and the non-current lease liabilities, all up in that range of 40 to 70%. So you're seeing aggressive revenue recognition that is happening, though the operating profits are really not converting to cash because the receivables are rising faster than your sales. Rishabh, how would you have to put this? Because this is becoming a challenge from an investor perspective.
So from receivables and inventory lens, so we are largely in control. So you see in receivables, we have improved in overall number of days compared to last year. Inventory, of course, like we are opening many plants and depots every place in multiple places. So inventories has increased by 1 or 2 days, but yeah, it's in control largely. And you will see that we acquired 2 companies in this year. One is Ariba and one is THF. So and they're mainly largely doing all the things on rentals. They are retail chain rentals. So that's why ROI has increased as from asset lens. But yeah, from because the standalone lens, everything is in control.
Rishabh, Manoj, stay with us. We are going to just quickly slip into a short break and come back to you. Stay tuned.
That's huge. That is a biggie. It's out of there.
गोल्ड प्लस क्लियर ग्लास, कार हो या नियर, सब कुछ दिखे क्लियर.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Welcome back to India Market Open. We have the management of Bikaji who's still with us. Rishabh, I would want to clarify on the previous point that we were discussing about the balance sheet details. In terms of the receivables, why are they rising faster than sales? Are you seeing a problem in terms of what's coming in from the market, or are you seeing dumping that's happening as well? Because that's a very common practice when you talk about consumption or FMCG as a sector.
So from receivable lens, that's largely same what was last year. Like last year, our receivable was close to 103 crore rupees, and this year is 100 crore rupees. In fact, we improved in terms of receivables. If you see a balance sheet.
But what's the reason for this large a receivable number as compared to the kind of revenue recognition that's happening? Where is that miss?
No, it was not miss. In fact, we improved on receivables compared to last year. You'll say we improved by 1 or 2 days.
Okay, got it. So 2 days of improvement coming in terms of receivables is what Rishabh is saying. But thank you, Rishabh. Thank you, Manoj, so much for joining us on the show and sharing the view. So that's the management of Bikaji as we speak. But moving on, you have PNG Jewelers. That's one of the stocks that is in focus. In fact, Jewelers have seen a good run as well on the back of the way gold prices have been panning out. Saurabh Gadgil, CMD at PNG Jewelers, joins in. The stock is trading under pressure with cuts of around 4.5% coming in there. Saurabh, good morning and welcome to the show. Clearly, in terms of the revenue growth, slightly slower than what the street was estimating. Your margins have also remained flat this time around. In fact, we did speak ahead of Akshaya Tritiya where the expectation was a good pickup, and the concern was that because gold prices are increasing, it could probably dent volumes overall. What has led to this kind of a performance this time around, and what's the kind of change that you're seeing from a consumption perspective into the first quarter of FY26?
Yeah, good morning. So Q4 has been a good quarter for us in terms of, like you mentioned, top line growth has increased by more than 5% Q4 compared to the last year's Q4. Margins have gone up substantially. EBITDA has gone up by almost 20% Q4 over Q4. EBITDA margin, if you look at it, has gone by 90 basis point upward. So there has been improvement, like we have spoken on all the fronts. PAT has gone up by almost 13%, and PAT margins have gone up by 30 basis point. So it has been a good quarter in spite of high prices. We have seen good conversions. Our conversion ratio stands at more than 92.3%. Footfalls have increased by almost 40%. So whatever we had committed in terms of the fourth quarter, the company has been able to achieve that and is able to demonstrate good numbers in spite of the high prices and seeing a little slowdown in the market. Also, when we talk of Gudi Padwa, which was during the last week of March, we had a sale of around 135 crores, which was the highest single day sale for us for any Gudi Padwa till date. So all in all, we are happy with the company's performance for the Q4.
What's the difference, Saurabh? Good morning, Neeraj here. What's the mix between revenue versus, or other volume versus value for you?
So our same store growth has been up around 26%. If you look at volumes, the volume growth would have been around 3 to 4%. In value, for the year, our value growth has been 26%.
Okay. So one of the trends that some of your other peers have said that companies have seen more sales of bullions and coins because of rising gold prices. Has then been the case for you as well?
Bullion share has gone up, but it's not. It's still in the range of 30% is bullion and 70% still remains jewelry.
Okay. Apart from this, if you have to look at, in terms of the bullion part of it as well, what Neeraj was alluding to, because of that, what is the kind of earnings growth that you're seeing from making charges? Because that becomes a key component as well.
The bullion has no making charges, so the making the
no for the non-bullion segment.
So that is what we're saying, that if you look at the entire year, we have been able to grow both EBITDA and PAT by upwards of 30%. So it really demonstrates our ability to be able to sell jewelry. And Q4 has been special because this was a quarter where we didn't have any discounts and offers going on. It was a post-Diwali quarter. So that is why we've been able to still see a growth in EBITDA in terms of even in high prices, because the ticket value has gone down. The average ticket value, which was upwards of 85,000, has come to 77,000. But number of footfalls have risen by 40%, and that has led to a rise in sales for us, and also a rise in EBITDA and PAT.
Okay. Saurabh, what are you sensing with regards to demand? I would presume that this is the marriage quarter. I would suspect that the demand would have been high in volume terms. So could it be that volumes in quarter one, at least, maybe not ahead, so give me a sense of what could lie ahead too, but at least in quarter one, could the volumes be much higher than the 4% number that you spoke about for quarter four?
April and May, till May, the prices had been high, so we had seen a volume growth in single digits only. So I think volume for the quarter, at the best, would be high singles or 10%. Value growth has been substantial. Like for Akshaya Tritiya, we clocked almost 170 crore single day sale, which was the highest sale in history for us. So value growth would be in the range of 30% plus. But volume, I think, would be in the single digit, primarily because of the high gold prices where people budgets are under constraint. But what is aiding also is the high number of people moving from unorganized to organized. And that's why we're seeing the more ticket values remaining constant or little dip, but number of customers increasing.
No, which is fine. Saurabh, so then therefore my question is this. If gold prices are not moving up from where they are right now, for an average of FY26, if the volume growth isn't quite there, then could the volume plus value growth combined, which is that overall sales growth, be a bit tepid relative to what you've done in FY25?
The FY25, we had a year-on-year growth of around, revenue of 26%. I think we should be looking at upwards of 26 to 30% for this financial year also. So, value growth.
Saurabh, sorry, but how? I'm trying to understand how. Because if value growth doesn't happen, if gold prices don't really inch up from where they are right now, and therefore the value growth YOY isn't quite there, you expect volume growth to be mid-teens or high teens, or maybe higher?
See, if prices remain stable and if there's an indication that there's prices could see a bullishness from here, we would see a rise in volumes also. Even today, when you look at the investment demand, which was primarily fueled by the high rising prices, once prices stabilize, the demand will move back to jewelry. So I think jewelry volume growth would be maybe 15-16%, and I'm expecting around 12% value growth. So all in all, put together, value growth should be in the range of 27 to 30% is what we are projecting, and I think that's quite doable. We have also been doing that for the last 3-4 years. So I don't think that should be a cause of major concern. The sentiments for industry remain strong. There has not been any selling pressure in terms of the high prices. People are entering the market. Wedding season is looking strong. And I think the Indian growth story, the consumption story is here to stay.
One quick clarification before we let you go. You've stopped selling bullion to B2B segment, and that has had an impact of almost 486 crores. You stopped selling in October 24, and it's down 94% because of this discontinuity. What would this mean, and why this discontinuation with regards to B2B segment?
See, pre-IPO, we had this B2B segment where we used to sell bullion to suppliers or to market. This was almost at a very, very low margin or zero margin business. So during the IPO, one of the commitment was to stop this B2B sale, which we have done first of October. So that is why the growth has been a little volume growth, which would have been higher by 500 crores, has been lower, but the margins have gone up because this was almost a no margin business for us. And that is why as a company, we had stopped this entire practice of doing B2B. So now we only have 3 categories: retail, franchisee, and e-com.
Thank you so much for getting us that clarification as well. So that's the management of PN Jewellers. Thank you, Saurabh, for joining in. Neeraj, very interesting over here as well, taking into consideration the commentary that's coming in from a gold price perspective and the kind of volume growth or value growth, the top line that he's planning to achieve as well. In that range of 25 to 30% in this kind of a market where the sentiment in terms of equity markets is also slightly turning positive.
Yeah.
And when you correlate it with what's happening with gold, I think it's going to be something that we will have to keep a watch out for in terms of what jewelers do.
Yeah, could be very, very interesting times for sure. So certainly a sector to watch. But a stock to watch is PB Fintech, is in focus after the company announced the quarterly numbers, yes. But the management during their earnings call have said that they are seeing a slowdown in the first half of FY26. Harsh Johnson with those details. Harsh, actually the Morgan Stanley note said that the valuations are also tough and growth might slow down in FY26. The management kind of reiterating the slowdown point that MS put out.
Well, they've reiterated it, but what they are suggesting and what the management seems to be saying is they're only saying that savings products is where the drag seems to be. So 21% growth in the core insurance business is what they've seen this year. Their average has been around 40-odd%. And basically what they're saying is that H2 FY25, there was a drag with regard to core business, especially when you're looking at the Jan to March quarter. 2 out of those 3 months, even the industry has seen a shrink in terms of, it's seen a degrowth. And therefore, that is also reflecting on the numbers of PB Fintech. So that's the first piece. What they're also saying is that outside of savings, the growth remains quite solid. 35 to 45% is what they've done roughly across products, and what they've usually also done over the last 5 years across products. So that remains intact. They're seeing drag in savings spill over into H1 FY26. You are right there. And therefore, that may be a bit of a concern, if at all.
Okay. Harsh, just wondering what happens next, because in PB Fintech's case, there is also this whole thing of making those investments, you know, in that allied businesses or alternate businesses, whether through the book or otherwise, you know, personal basis. Any commentary thereof? I mean, now it's been discussed for 3-4 quarters. It's not new news, but was there some commentary thereof?
No, not at this point. I'll probably go back and relook at this. But more importantly, Neeraj, the way I look at this is they've given FY27 guidance of 1,000 crore profit after tax. A large part of the investment within the hospitals business, healthcare business, has already been built in to the stock price over the last maybe 3 to 4 months. And therefore nothing new per se coming through. What you want to really look out for is whether they can do that 1,000 crore. Very, very likely, because they've done 300 crore plus in this year alone. But out of that 300 crore, you've seen a large chunk of that come from other income. Other income has been 400 crore. And other income is the interest on the cash balances that they have, which is nearly 5,000 crore of cash balances that PB Fintech currently has. In fact, over 5,000 crore. And therefore, you want to wait and watch as to how core income starts to impact profitability, which it has in Q4. You want to see whether that can continue in FY26 on the base, and they can achieve that 1,000 crore PAT.
Thank you, Harsh, for getting us the details. So that's PB Fintech. A slowdown in terms of the first half of FY26 is what you're looking at. In fact, it's at the day's lowest levels as well. Few other names that are in focus right now. Smart moves in a Cochin shipyard, Garden Reach, both these counters. If you just pull up a 5-day chart as well, you'll see the kind of moves that you're seeing. 11 to 12% up move on Cochin as well, and Garden Reach as well. RITES, RVNL, both these counters also, I think one of them does have an order win and stock up almost 10 to 11%. Titagar, so that entire railway part of the business is also buzzing in trade as we speak. So that's with regards to few of the gainers from the broader markets. What's losing in today's session? Again, a Pricol is under pressure. Newland Laboratories, Neeraj was highlighting, 5.5% is the kind of cuts that you're already seeing on the back of earnings on this one. Alivus also reported numbers, 5.5% downtick coming in terms of Alivus as well. But Neeraj, anything in terms of the railways side of the business, because good moves coming in today's session?
Yeah, I mean, the last few days they've been active, so that's the interesting piece, but difficult to really call out there. Yesterday we had somebody who was talking about booking some profits out of the railway stocks, so that's to be kept in mind for sure. But you know, I'm interested in talking to the next management, and that's Allied Blenders. And just before we get in the CEO, let's get in Mahima to do the setup for what went right with Allied Blenders this time. Mahima.
Right, so it's been a strong quarter for the company in terms of Q4 FY25, and there has been a continued expansion in their super premium segment to luxury portfolio as well. Margins have improved due to the kind of backward integration that the management has adopted. In terms of the overall numbers, revenue was up 20%, EBITDA stood at 136 odd crores, net profit at 78 crores versus that of loss of 2.4 crore. The company has also declared a dividend of 3.6 rupees. Now, in terms of the overall volume growth, that stood at almost 21 odd %. Segmental performance, of course, prestige and above category has been driven by high consumer demand. The company has also come out and said that this India-UK FTA will benefit Allied and Blenders, and this is because it is one of the largest exporters of bulk scotch, and this company will set to benefit from a lower import duty. Plus, this will also benefit the super premium to luxury portfolio by making these products more accessible. In terms of one more announcement, the company has also announced a QIP of roughly 1,000 odd crores. So the important question here will be how that funds will be put to use. And lastly, they've also announced a capacity addition at company's existing plant, which is situated in Punjab, for approximately 29 odd crores. So it will be a key thing to watch out for as to what this expansion means for the company and what kind of revenue growth will come in from the expansion, as well as how the company will put in the QIP proceeds to use. So this is the overall view of how Q4 is panned out, and multiple announcements followed by the Q4 earnings.
Thanks a lot for that, Mahima. In fact, let's get in the management to talk about the numbers and the outlook ahead. We have very strong growth, right? Alok Gupta, Managing Director of Allied Blenders and Distillers, joins us right now on the show. Alok, great talking to you. Thank you for speaking with us today. And congrats on a very strong quarter. What led to this?
Thank you very much for having me on the show. Primarily, it's been focused on driving the P&A, and the numbers reflect in terms of growth. There has been a big focus on getting our costs down post our working capital reset. We have seen almost a 700 basis point expansion in our gross margins, largely on account of better buying, operational efficiencies, and maybe softer commodity cycle, and a trend that we expect to continue. There is better operational efficiency, reduction in interest costs. So eventually it reflects in better brand contribution, followed by better EBITDA, and therefore a better PAT. So I think it's been a sort of a hard-working program, making sure that we get our portfolio right, we sell in more profitable markets.
Okay. I'll come to the portfolio segregation in just a moment, but I'm presuming that the spillover of what's happened will continue to FY26. You would expect strong growth ahead. How would you just differentiate that kind of growth and what's happened in Q4 between volume and value?
So the way we look at FY26, we expect volume to be at least at double-digit growth, but the value growth will be significantly higher than the volume growth on back of continuous P&A, and especially the portfolio that we built into our super premium and luxury segment. So that's really what the focus is. Continue to maintain a single-digit growth on a mass premium segment, but with sharp focus on gross margin, and drive the volume and the value growth through the P&A segment, also with the super luxury and the super premium and the luxury segment that we built.
Alok, when we met in Omaha, you mentioned this point. I just wanted to bring that out. That at some point of time, if you all of your listed peers, etc., which are large companies effectively, move into more and more premium products, would defining the nature and the quality of growth by volumes be a fallacy? Because you might see lower volumes by nature of the fact that the pricing of that product is high, but it still results in growth for you, right?
It does, and I think it's a point that we discussed briefly in Omaha. For us at ABD, since the super premium and luxury segment is a new entry for us, the headroom is 100%. So when we look at our number, our performance, our barometer is now shifted to NSV growth, followed by volume growth, because the impact that the super premium luxury segment will have on the NSV growth is substantial.
Alok,
whether the industry will follow this trend or not, it's not for me to say, but that's how we are looking at our performance.
Right. Alok, good morning. Hiral on this side. So with all of that said and done from here on, taking your premium portfolio acceleration into consideration, which, yes, will improve margins going ahead, plus you have your capex programs which are in place for backward integration as well. So from here on, what's that addition that you could see in terms of margins? What's the target that you're looking at? I mean, would you talk about mid-teens or higher teens in the next 2 to 3 years? And secondly, the benefit that you would see in terms of volumes on the back of the India-UK FTA, because you do import bulk scotch. Now, in terms of the imports, what's the margin profile currently? And if volumes increase, how margin accretive would it be?
So I think there are three important things that will happen between this year and the next financial year. First is margin expansion on back of better P&A. Second is margin expansion on back of the capex program that are coming alive, which is our PET plant in Telangana, the malt plant in Telangana, and the ENA plant that is already running at 100% capacity in Maharashtra. We see about 200 to 300 basis point expansion in our margins. So we've exited the year, let's say, at an average of 12+%. So our immediate target is to be at industry parity of 15% plus. And on back of our current margin and what will come off capex, we should be landing at industry parity. The super premium and luxury segment or a portfolio that we're building out, we have so far not baked into our guidance. It's a little early days for us. We're confident of the portfolio we've built, but hopefully 2 quarters down the line, we'll be in a better position to talk about it. As far as the UK-India FTA is concerned, it's a welcome news. We are the largest exporter in terms of an Indian company. We expect on back of this duty reduction, another 200 basis point impact on our margins. So over the next 2 years, as our capex program comes in, as the P&A improves, the FTA benefit comes in, we should see a significant increase from the current 12% margin that we reported in FY25.
Okay, Alok, a quick one in terms of, the coming 2 to 3 years. You have reduced your debt, which in turn has, actually given you a lot of free cash because your interest costs have reduced drastically. Right. Now, taking that into consideration, you're seeing a lot of strategic acquisitions that the company has been making as well. From here on, along with the capex plans that you already have, any acquisitions that could be on the cards? And if so, in what segment would you be looking to make acquisitions?
The capex program that we've announced in FY25, the only item that we will add to that is our third distillery that will get us to 100% captive ENA. Which hopefully we should be able to talk about soon. From the acquisition perspective, especially in the brand space, we are quite happy where we are. We already have 6 super premium and luxury brand. We will add a few more. The work is on. So until something really attractive comes along the way, I think for the next 2 years, I do not see any further brand acquisition. But definitely, we will add one more large distillery to our portfolio.
Okay. Alok, non-India. Now, let's talk about it because we've seen Indian liquor being recognized on the global stage meaningfully. Duty-frees, we see some very premium Indian brands out there too. You've expanded to export markets per se, right? To 23 countries from 14? So what are the plans there? Give us some color.
So our internal theme is India and beyond. When we talk about our growth narrative, it is not just growth out of India, but growth in global market. And for us, we have expanded the footprint from 14 to 23 countries. We broadly see 3 growth hacks. The first is in terms of our existing markets with Indian diaspora. We've been very strong in UAE, but we are also finding additional markets of Indian diaspora, especially also in the Western countries. We've just shipped Officer's Choice to USA as an example. Second thing is to build a scalable network in Africa, which we see as to be a very, very large opportunity for us. And thirdly, on back of the super premium and luxury portfolio, to build some of the more evolved markets of the West and also get into the duty-free channel. So all that work will keep us busy in this financial year. So we are extremely optimistic about our international revenue, which, as we all know, has a better margin profile, lower working capital ask. So I think not only it will add to our growth, but it will also give us a better return in terms of capital employed.
Got it. So, Alok, let's kind of lay all of this now into numbers. You are confident on global markets. There is the India-UK FTA, which presumably helps you on the bottom line. You yourself are talking about increasing penetration, higher sales, etc. What does this mean in terms of growth for you for FY26 or FY27, or if you want to take a 3-year guess about what your numbers could look like? Let's say top line, let's say if you improve operational metrics, then margins. How does it all fit in?
So I think top line, we should look at mid double-digit growth year on year. In terms of our EBITDA margins, we should see on back of our capex program and existing EBITDA to get to industry parity of 15%. The other initiative of FTA, super premium and luxury segment, we have not baked in, but it should lead to a further expansion of at least 300 basis points. So I think by FY27, this is where we should target to land up.
So, Alok, double digit is a very nuanced term, right? From 10 to 99. So, when you say mid double digits, what is that number looking like?
Are you talking? Is this a reference to our value growth, NSV growth?
No, I'm just so whichever metric which lends you to explain to a retail investor about what is your top line growth gonna look like.
Top line growth, we should look at let's say 15% plus. In terms of value terms, EBITDA should grow from 12% to industry parity of 15%, if not more. I think that's the two numbers I can leave with you right now.
So that's with regards to Allied Blenders outlook looking pretty strong from here on. Thank you, Alok, so much for joining us on the show and sharing the views. Interesting moves in terms of alcohol companies as well, because though you're seeing 2% kind of cuts on this one, if you pull up the other names like a Radico Khaitan, or for that matter, a UBL, United Spirits, there was some bit of an impact that you did see during the announcement of the India-UK FTA. Right now as well, you're seeing some bit of cuts coming in on Radico, but United Spirits, which is seeing gains of around 0.3%. But moving on to a macro picture, let's head across to Neeraj to actually bring down for us as to what Jefferies' India strategy is indicating in terms of what could be on the cards. Neeraj, over to you.
Actually, Hiral, I'm going to break it up into a fundamental view and a technical view, right? The fundamental view by Mahesh Nandurkar of Jefferies and the technical view by Lawrence Balanco of CLSA. And here's what Mahesh says. Can we start? Maybe we start with the fundamental and try and talk what Mahesh Nandurkar had to say. So he says that the valuations currently are unfavorable, but flows are now the brightest spot for India. And therefore, all eyes will be on how flows work out. He's of course saying that the MSCI India PE at 23 times hints that valuations have become demanding. And you got to agree with this. He of course mentions about how the FY25 to 27 EPS CAGR estimates, expectations are about 11 to 12% with the usual downside risk, and therefore 23 times multiples is not cheap. So I think it's a valid point. He of course also mentions about how flows both domestic and foreign, the outlook remains the key positive, and therefore that may well take the markets even higher. They've made some changes. They're saying, of course, that the flows will be conducive to the potential equity supply, which can cap the upsides. Effectively, more IPOs, more FPOs, promoter stake sales, all of that. The changes that they've made to the portfolio, they've added Ambuja and BEL to the model portfolio. They've trimmed positions in Shriram Finance and Coal India. Now, if Mahesh is sounding slightly cautious, Lawrence Balanco is sounding anything but. He says Nifty has been resilient as the index has maintained the breakout above the 200-day moving average. I presume this is with regards to yesterday's breakout move. And he goes on to say that this breakout suggests an upside target of 26,333, which is a level that effectively revisits the highs of 2024. So if Nifty holds on to some supports, these levels are possible. The Nifty 50 DMA remains the critical support to maintain the bullish bias. On mid caps and small caps, he says the NSE mid cap index has cleared the resistance given by the 200-day moving average, with supports an upside target of 6,300. On the small caps, the test and rebound of the 50-day moving average is positive, with supports an upside target of 19,520, but that the breakout above this thing will add further credibility, but it needs to do more work to gain the leadership position. I think that's the point that Lawrence Balanco is saying. So clearly seemingly very constructive on large caps, maybe even mid caps, not as much on the small caps, Hiral.
Right, and that is an interesting take that's coming in from a fundamental and a technical perspective from Jefferies. Thank you, Neeraj, for getting us the details, but completely out of time. With that, it's a wrap on this edition of India Market Open. Up next is Ask Profit with Alex and Mahima. Be ready to tune in and get your queries solved.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew. With me is Mahima Vajrajani, and we'll take you through the next 1 hour of trade. And we're looking at a little bit of a consolidation in the benchmark Nifty 50 at this juncture. A soft start, if you can call it that. In fact, the indications were that we would start about 100 points in the green. That did not pan out, and we've been shuttling within a very narrow range, as you can see on the screen. But do remember that you saw a takeoff at around 12:30 yesterday, and we went to the high point of the day very, very quickly. 25,000 was breached. At this juncture, we're holding just above that 25,000 mark, and so sentimentally, you would want to look at that 25,000 mark be held in trade. Once again, you have the broader markets that are outperforming, as they have done over the course of the week so far, barring yesterday. But you have the mid-cap index that's gaining about 0.7%. The small-cap index is up about close to 1%, about 0.9% at this point. And so the market breadth is not going to be too bad. It's probably going to be a decent amount. And in fact, that is true. It is favoring the advances at this point. But let's look at some of the sectoral performers, because you're not seeing too many big moves sectorally either. You see that, of course, I should have said that apart from defense, you're not seeing too many big moves, because the defense pack once again up as much as 5%, and several stocks, including Zentech, doing particularly well in trade today. On the other end of the spectrum, you have IT, which was an outperformer in trade yesterday, gaining 1.2%, down about 0.9% in trade today. Pharma down about 0.5% or thereabouts. So not too much to speak of on the sectoral front. Very quickly, let's also look at the contributors on the Nifty 50, just to round things off and tell you what's happening. And that should tell you that on the downside, you have Bharti Airtel. There's a block, of course, to talk about. And Singtel is selling stake, and that's having a bearing on the stock price. Bharat Electronics, right on top of the list, contributing the most. HDFC Bank, ICICI Bank as well in the top contributors. Now, before we get to anything else, let's talk about an exclusive story that has been picked up by my colleague Aishwarya. The Department of Telecom is likely to clear Amazon Kuiper for satellite internet rollout. Kuiper may use a trial launch strategy similar to what you saw with Jio Fiber. And Aishwarya has this report telling you what this update is all about.
Well, satellite communication has been the buzzword lately, with Starlink applying for a license as well as it getting a letter of intent issued by the Department of Telecom. Following in line on that path is Amazon Kuiper. What we're learning from our sources is that the Department of Telecom is likely to issue Amazon Kuiper a letter of intent followed by Starlink very, very soon. Now, Amazon will be bringing, just like Starlink and Airtel and Bharti Enterprises, OneWeb, high-speed satellite communication services to the Indian market, and this will, of course, mark their debut. Amazon Kuiper also has the second biggest capacity in terms of their satellite constellation network, which is about 3,200 satellites in the low Earth orbit that will provide high-speed satellite internet services in various markets, including India. Now, Kuiper, let's talk a little bit about their Earth stations and what their devices will look like when that will be operational. Kuiper is likely to be fully operational in the next 18 to 24 months, is what people familiar with the matter have told us. They're also considering trial packages during their introductory or launch period, just like JioFiber did initially introduce us with free devices. And also they may be considering or assessing different heavy discounts on these packages when they do start their services in India. Like I mentioned earlier, the company plans to launch over 3,200 satellites, making it the second largest capacity. Starlink has about 6,000, over 6,000 satellites, and that makes it a SATCOM company with the largest fleet of satellite constellations there is globally. So that's what Amazon Kuiper's devices and ground network will look like. They're also finalizing over 7 locations in India to build their ground stations or Earth stations, also called as gateways. In India is what, and they've also identified certain locations. This is what we've learned from our sources so far as Amazon Kuiper's India debut is concerned.
All right, Aishwarya, thank you so much for breaking that down for us. It's a very interesting update, and we'll have to wait and watch out for as to how the execution takes place exactly. All right, with that, let's also welcome in our guest for the day, Jatin Gedia, Technical Research Analyst at Mirae Asset, joining us now, and Astha Jain, Senior Research Analyst at Hem Securities, joining us now. Welcome to both of you, and a very good morning to both of you. My first question is from Suraj, who's writing in from Kerala. He's holding 1,000-odd shares of Kalyan Jewellers, bought at 630 a piece, and wants to know whether he should hold or sell at the moment, sitting on a loss of 74,000 odd rupees. Asa, good morning. I'll come to you first. Kalyan Jewellers, what's the view like? Q4 was decentish, not very good, not very bad, but the overall growth was led by rising gold prices. What's the outlook like?
Yes, hi. Good morning to all of you. See, talking about this counter, in fact, the strategy of the company is always to expand its footprint. So, in fact, they are working in that direction also. And definitely the impact of gold prices can be seen here. So overall, I believe that the kind of future strategies this company is looking after, we are basically thinking that the stock is such which can remain invested in, and hence recommending a hold on this counter. And I don't think that losses should be booked at the current level, so one can remain invested in. However, upside price target which we are giving is limited to only 580 to 590 at the current levels.
All right, so that's the view on Kalyan Jewellers. Speaking of jewellers, another jewelry stock is not having the best morning, and that is PN Gadgil. It posted its numbers. It's down about 4%, 4.4% or thereabouts. Not the best quarter. If I remember correctly, the value growth is not. Value growth is there. Volume growth is not there, right?
Volume growth is not there, and the thing is that they are seeing more sales in terms of their bullions. So they're not getting the share of making charges that they generally get in jewelry, which is why numbers are getting impacted. And this shall continue if gold price continue to rise. People will go ahead and buy bullions because investors are always looking for getting more in terms of gold and not spend on making charges.
Yeah, well, let us know what you think about that. Are you going to go out and look at jewelry? Of course, if you have a wedding to attend to, or if it's your wedding, then you don't really have a choice. Let's talk about that another day, though. We've got Dheeraj on the phone line, who's calling us from Hyderabad. Hi, Dheeraj. Good morning. Thanks so much for calling in. How can we help you today?
Good morning, sir. My query is regarding Adani Green. So I bought 450 shares of Adani Green at 996 rupees just now, today.
Okay.
I have seen a fresh breakout in the chart.
Right.
I'm expecting good returns in next 1 or 2 months. So is it the right call, or should I enter at lower levels is my query, sir.
Okay. And so considering that you have bought it based on your understanding of the charts, what are the levels that you had in mind for Adani Green for the next 2 months?
Around 1100, sir. 1060 to 1100, sir.
Okay, all right. Jatin, very good morning to you. How would you read the charts, and do you see these levels playing out?
Yeah, good morning, Alex. We believe that Adani Green has formed an inverted head and shoulders pattern. Now, this is a trend reversal pattern because it has formed at the bottom. I think now the trend has reversed from negative to positive. On the upside, the pattern targets are placed around 1100 to 1150. So I think the trader has got in at very good levels. I think he should continue to hold for a couple of months. He should place a stop loss of 930 for this trading position, and he should continue to hold it for a couple of months. 1150 to 1200 is the target area.
With regards to where Adani Green stands, and stand disclaimer, Adani Green is also a part of the Adani group of companies, and NDTV Profit also a part of Adani group of companies. All right, the next question is from Naveen, who's holding VLS Finance, comparatively a very small company, 800 crores of market cap, 200 odd shares bought at 401 average price. He's saying that he's sitting on a loss of 30,000 odd rupees right now, almost 30,000 odd rupees, and wants to know whether he should continue to hold or sell. Jatin, I'll again come to you on this one. What are the charts indicating for VLS Finance?
See, the trend is actually negative. We believe that this pullback that we have seen from the levels of 220 to 260 odd levels should be considered as an exit opportunity, because the overall weekly chart structure is still negative, and I'm expecting this stock to slip down towards 220 odd levels again. So at this point of time, this pullback should be considered as an exit opportunity.
Sell is the view coming in on VLS Finance as far as the charts are concerned. All right, the next caller, Jacob, is calling in all the way from UAE. Jacob, a very good morning to you. How can we help you?
A very good morning to you. I just wanted to know regarding one stock, Larsen & Toubro.
Okay.
I already have 10 shares of Larsen & Toubro at the price of 3,300.
Okay.
So I wanted to accumulate more of this one.
Okay.
And I wanted to know what should be the target price. So I don't wanted to buy at the price of 3,600, which is going on.
Right.
So I wanted to know whether the price may be coming down to 3,600. That's what.
Okay. Jacob, just wanted to understand what was the thinking behind buying L&T, one thing, and you are looking at this investment from a longer term perspective?
Correct. I'm looking for a 5 to 10 years investment. I was looking for the L&T because it has a multiple type of infrastructure development. They are coming into data center. They are coming into different entities, which is they're into a futuristic business. That's what.
Okay, got your point, Jacob. I'll take this up with Astha quickly. Astha, your view on L&T. Overall, great set of numbers in terms of Q4. Order book also strong in compared to what they'd guided. They've done better in terms of revenue as well as order inflows. What's the view like from a longer term perspective, let's say 5 years down the line? And what are the levels to enter into this particular counter to average out? Because Jacob's buying price is 3,300 right now.
Right. So first of all, I wanted to say that whatever buying the viewer or the investor has done, continue with it with a price target of 3,800 to 4,000 at the initial level. Now, here the point comes why? Because first of all, they have a strong order pipeline, and with the acquisition of IntelliSoft, they are able to develop their software skills also. And we know that this company has shown very strong guidance, and in fact, they are retaining their guidance which they have given earlier. So the kind of results this company has posted on the back of the strong guidance which they have given, and the kind of acquisitions now they are doing in their different segments or fields, I think this is well placed to move till the level of 4,000. Where to enter is the major point here. So I believe that accumulation can be done at around 3550 to 3570 odd levels in case if it comes to those levels.
Yeah. Okay. So there was a question from Rohit, which I want to take next, and that has to do with either Indian Hotel or EIH Hotel, which is, by the way, it posts its results today, if I remember correctly, EIH. So watch out for that. And we've seen a few hotel companies, Asta, that posted decent set of numbers in the quarter gone by. I'm just wondering whether, and I think that you normally suggest holding off on making fresh investments in a company just before earnings. So I guess you'll advise to hold off on that. But why don't I ask you about the overall investment in hospitality? Where would you suggest that you deploy? And Rohit wants to know, he's writing from Muscat, Oman.
So, in fact, Indian hotels and EI, both these counters are looking good to me. Yes, for Indian hotels, we can say that it is facing some sort of turmoil, basically due to not so very great numbers which this company has posted in their quarterly earnings as well as yearly earnings. But regarding EIH Hotel, we are still positive on this counter. So, in the short term, we believe that EIH Hotel is well poised to move towards upward level of around 420 to 430. So, we believe that EIH is better placed in the short term. However, in the long term, in fact, Indian Hotel will also deliver on the expected line. Looking after the overall hotel industry, I think these counters will now start showing very good performances, because now I think whatever concerns were there regarding geopolitical, etc., I think that is now been completely not there or disappeared. So overall, this industry is looking great to me. And the EIH Hotel in the short term is looking better than Indian Hotel, but both these counters are good for long term as well.
Okay, all right. So that's the view on the hospitality space and specifically on EIH. Paramjeet is calling us from Himachal Pradesh. Paramjeet, namaskar. How can we help you today?
Namaskar. I'm having Mindra Lifespace 5,000 shares at the rate of 310.
Okay.
Want to know long term as well as short term.
कब लिया था ये शेयर आपने?
2 months back.
Okay. And did you buy it based on the fundamentals, or did you see the price and say कि it is a good value to buy it?
It was in my watch list from last 3 years.
Okay, okay. So then what drew you to this company? Why did you decide to finally buy it? The reason I'm asking, Paramjeet, is because you bought it at a very attractive level.
Market capital is less than 10% of its total value of assets.
There you go. I'm glad that you said that. Asta, he's clearly been watching this stock for a while, and he's finally decided to pull the trigger when he's looking at the market capitalization, which is a great way to do it, right? If you see that the assets that a company is holding is much more than the market capitalization, that indicates, at least on the first level, that there is value to be had. So what's your view on Mahindra Lifespace?
So Mahindra Lifespace is looking good to us, because what we have seen that there is a pre-sale speed, and in fact the kind of project pipeline this company is having, it is very, very strong, very, very robust. In fact, now they are moving towards Pune, Bangalore, these regions. So I think the strategy is working great for them. Overall, I'm pretty much positive on this counter, recommending a hold with a price target of 370.
Okay, so that's the view with regards to where Mahindra Life Spaces stands. The next question is on Afcon's infra. Sanjeev from Singapore is writing in. He's holding 1,000 odd shares at an average price of 475 and wants to know the long-term prospects of Afcon infrastructure. It's a fairly newly listed company, Asta, so I'll come to you on this one if you've had the chance to go through and have a view on Afcon's infra.
Yes, it was in fact, the IPO came into October, and we have released a note on that. So my view on at that time is that we were very much, neutral on this counter, and we have not given a subscribe rating. There were reasons behind it. First of all, I believe that this counter was fully priced when the valuation part is coming. So that was not giving comfort to me, and we have seen that still now this company is not able to move above its issue price. Issue price was 463. So they have a strong, track record of executing large projects, and the financial performance was also very good. But the kind of valuation this was coming at, I think it was coming at a price to earning valuation of around 38. And that was really very high. And that is also very high at the present moment of a time. So I think let's wait for some more quarters to come, and maybe the good results can increase the EPS and reduce price to earning multiple and can give the valuation comfort. But right now, valuations are heavy, I think, in this counter, and that's why it is not working great.
I'm glad that our viewers are listening so carefully. Because Satyan has pointed out, rightly so, one of our viewers, that EIH Associated Hotels posts its results today and not EIH. Thanks so much, Satyan, for clarifying that for us. I'm going to go to the next caller. Kunal is calling us from Chennai and asking about Tata Steel, I believe. Kunal, good morning. You've bought at levels of 107 rather, good price. What did you see in the stock that you liked?
Hi, good morning. So I think it was the brand, to be very honest, and there was a split that happened which reduced the share price as well. So I actually looked into the technicals and fundamentals of the company and seemed very strong. My query is with regard to 10 or 15 year, period, and I'd like to, in fact, increase quantity in this if possible. So wanted to have that outlook, please.
Okay, I understand. Thanks so much for your question. And Kunal, kudos to you for having studied the company as you have. Well, it's a very long-term view that you're seeking. I'm not sure if Asta is going to have a view for 10 to 15 years, but at least for the foreseeable future, Asta, considering that the company has made certain statements about its overseas operations, its operations in India are in reasonably good fettle. There are certain measures that have been taken by the government to protect domestic steel manufacturers, and global factors are now proving to be a bit of a tailwind, considering that China is coming back onto the spectrum. That is always good for metal counters. All of those things working in favor of Tata Steel. Would you say that you can add more?
Yes, one can add more. Now, in fact, they are doing certain, reorganization programs also, and they are doing various things which is giving comfort to us. In fact, what we have listened in the management commentary that the impact of the tariff is also not very high there in their India and the European operations. So that is also giving comfort to us. So in the long term, it is a good bet in the metal space. We are positive on this counter, recommending a hold with a price target of 180 to 190 at the current levels.
Okay, so that's the view with regards to where Tata Steel stands. Our next question is from Tejas, who is writing in from Nagpur, and he's asking about Vent India holding 10 shares at 10,500 rupees. And now that the OFS has come with massive discount, should this be a red flag, is his question. Looking for a fundamental view on this one, Asta, I'll come to you. If you've had the time to look at what has happened and what are the developments, what's the outlook like in terms of Vent India, and should the person continue to hold?
So it is into the abrasives, and what was disappointing is that they have shown degrowth in their Q4 earnings. In fact, if I talk about their full year of FY25 earnings or profit after tax, it was lower than FY24. Now, with the weak earnings, what is the major disheartening in this whole thing is that their valuations are on a very higher side. They are quoting price to earning multiple of around 52 or 53, which seems to be high in the light of the fact that the earnings are quite disappointing. Although industry price to earning multiple is same, that is 53, 54, but we don't find so much valuation is justified at this point of a time when the earnings are not supportive. So looking after all the factors, we are not very much comfortable with this counter. I recommending partially exiting from this counter and hold the partial quantity. Maybe the quarter, the next quarter, maybe that can provide some sort of comfort. So in just that hope, recommending partial exiting from this counter.
Partial exit from this counter. And it's interesting because almost 37.5% stake, full promoter is trying to sell everything via OFS. And yesterday, up till yesterday, it was subscribed for 2.5 times on the base and around 2 times with green shoe options for the OFS specifically. So that's the update with regards to where Vent India stands. All right, the next question, Narendra is calling in from Hyderabad. Narendra, very good morning to you. How can we help you?
Yeah, good morning, everyone. This is Narendra. So actually, I have 5 lakhs. I want to investment in defense stocks. Can you tell me, can you suggest 2 stocks which is a better performing for one year long-term position?
Okay, I got your query, Narendra, and I believe you have 5 lakhs to invest in right now.
Yes.
And you want to invest the entire 5 lakhs in defense sector only?
Yes.
Okay. All right. Okay, I'll take this up with Asta then. Asta, he has 5 lakh rupees to invest in right now and he wants to know 2 defense stocks to invest in. Just an extension of that question I'd like to ask, should he invest entire 5 lakhs in defense counters only or should he diversify into 4 or 5 different stocks?
I think 50% into defense and 50% into the sectors like IT, which is looking good to us at this moment of a time. So there are other sectors also. So not entire amount we recommend to put into one space, that is defense. Maybe 50% or maybe 40-60 can also work. That is 40% in defense and remaining 60% in some in the IT and some in the real estate sector, because we believe that in the falling interest rate scenario, these sectors looks to be very, very attractive. Automobile, real estate, and IT is working great right now, as we have seen on the back of a strong earnings and on the back of reduced concerns regarding the tariff war. So this is what my recommendation is. Don't put entire amount. Now in the defense space, Zentech is really good, looking good to us. However, they will be posting their results on 17th, that is tomorrow only. So wait till the results come, but we are positive on this counter along with HAL, BEL. And in the shipping space, it is Cochin Shipyard, which we are liking at this point of time.
Asta, I'm so sorry. I was actually trying to pull up the details on Vent. We spoke about it, right? Vent India, and so the German entity Vent GmbH is selling its 37.5% stake. 37.5% is held by Carborundum, which is part of the Murugappa group. So the question that I have is that materially, apart from the fact that there is a complete exit by the foreign promoter and joint venture partner, does anything materially change on the ground for the company? Its operations remain, and so what I'm asking is that if it was trading at 10,000 plus just last week, would you not say that the multiples suddenly move very much in favor and you should consider looking at it at least at certain levels once the dust settles?
Yes, but not at present point of a time, because when the results are not supportive, although this company has a long history, it was established in 1980 and they are leaders in super abrasives. So one of the market leaders, I can say, but results were really disappointing. And this is not about the quarterly results. In fact, their full FY24 earnings, the profit was lower. 25 earnings profit was lower than FY24. So somewhat I believe that this stock can fall more on that basis, and hence right now there is no logic in investing in this counter. Hence I recommended partially exiting from this counter.
Exit the counter is the view coming in from Asta on Vent India. All right, the next question is from Harshit, who has 50,000 to invest in right now and wants to know whether he should invest in BEL, Cochin Shipyard or Great Eastern Shipping. His holding period is from a 7 to 10 days perspective. So Jatin, I'll come to you quickly. Any of these charts looking attractive enough to invest 50,000 rupees right now?
See, all of these counters have run up quite a bit in the last 1 week, or we can say last 5 trading sessions. So it's not a great trading opportunity at this point of time. So I think he'll buy it at the highs, and thereafter we can see some consolidation next week. So I think as of now the opportunity is gone from these counters which he has suggested. But wait for an opportunity at dip. If I have to give levels for one of the stocks that technically still has a certain amount of up move is Bharat Electronics. So I am expecting 380 to 395 odd levels in the case of BEL. However, considering it has run up quite a bit, I would suggest to wait for a dip towards 354, 350 odd levels, and then only get into this stock, but not at current levels.
With regards to where chart stands for all of these defense companies. All right, the next caller, Govind Kumar, is calling in from Hyderabad. Govind, a very good morning to you. How can we help you?
Yeah, very good morning, madam. Very good morning, Adhik sir, and all of you.
Good morning,
Thank you for recording Kori take up of. Madam, actually, I have purchased GMR and Power Urban for 8 months or 9 months back, madam.
Okay.
At the time of just now reaching my level, actually.
Okay.
Can I hold some time at least for 15 to 20% return for at least 1 to 2 years, 1 year, madam? What is the fundamental view, madam? Because of I have checked in scanner, the debt concern is more actually. And GMR and Power Urban, and then company share percentage also very low, madam, actually.
Okay.
Is it safe side for long-term investment, madam, for GMR and Power Urban?
Okay. Okay, thank you so much for asking that question, Govind. I think you've done your research very well, but I'll take an opinion from Astha on this one. Astha, what he's saying is that debt is a concern for the company right now. Do you think that it's a good counter to remain invested in for the next 1 year?
At least for next few days, because on 19th we will be, we will be having the results of this company. So at least wait till 19th, let the results come. Yes, the debt, in fact, they have done some settlement also few days back. So yes, something is going on that part, but more clarity will come once the results get announced. So better be in a way, wait and watch mode, at least till 19th May. And then again, he can ask his query here.
Okay. So come back to us when the results are out, and we'll get you another view on the stocks that you've asked about, GMR Power. We've got Ajay who's calling us from Ambala. Hi Ajay, good morning. And you're asking about a stock in focus. Crompton is doing particularly well in trade today.
Yeah, good morning sir, good morning ma'am. Ma'am, मैंने business point of view से 3 day back Crompton दिया था 3,000 shares. मैम आपका मैं व्यू जानना चाहता हूँ, क्या मुझे इसको होल्ड करना चाहिए? अभी राइट नाउ 346 के आसपास चल रहा है. बस ये क्वेश्चन पूछना था मैम.
आप मैम आस्था मैम से सवाल कर रहे हैं ना?
हाँ जी सर. लास्ट टाइम मिनी से बात हुई थी आपसे 3 दिन पहले, तो उन्होंने मुझे बताया था कि होल्ड करना चाहिए तो रिजल्ट पॉइंट ऑफ व्यू से मैंने भी होल्ड रखा हुआ है. तो वही पूछना है कि इनको रखूं कि लॉन्ग टर्म में कि बेच सकते हैं इसमें.
Ji, all right. So Astha, you've heard the question. He's addressed it directly to you. So take it away.
Yes, one can remain invested in this counter. First of all, there is a great sigh of relief because now I think it has come above its cost price. So definitely, and the kind of results that came into, that has supported this kind of a move which we are seeing in the stock prices right now. They have delivered very strongly in the financial front. So hence, we are positive on this counter. Remain invested in this counter. Keep a price target of around 365 to 370 at the current level. I'm not giving higher price target. But yes, 365 to 370 can be the target which can be maintained on this counter.
All right. So that's the view with regards to where Crompton stands. And of course, even brokerages have come out and hiked the target prices for this counter today.
48% upside.
Absolutely. And we're seeing that kind of moves in the counter as well. The stock is up 5%, and it has maintained that kind of trajectory throughout the trade today. All right, the next question is from Satyan, who wants a view on DCX. For a fresh long is his question. Jatin, for DCX, do you think that DCX system, do you think that this is the right time to make an entry? And what is the kind of stop loss and the resistance levels and the support levels that you're observing on the charts?
See, in the case of DCX India, I think 380 is the resistance level, but recently the stock has run up from around 280 odd levels to 340. So I think if he currently holds it, then continue to hold. But if he wants to make a fresh entry, then the risk reward is not favorable at current levels. 310 is the level around which we have the 40 hour moving average. So wait for a dip towards 310 odd levels to make a fresh entry. Otherwise, continue to hold with the trailing stop loss placed at 328.
All right, Jatin, thanks so much for that view and indeed for joining us this morning. Asta as well, thanks so much for taking the time. Pleasure having you on the show as always. We're not ending Ask Profit. We'll be back on the other side with a couple of more experts to take you through your questions. So I'd encourage you to stay tuned. We'll be back before you know it.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Well, yet another earnings conversation. Let me bring on board the Managing Director and CEO of LIC Housing Finance. We have Mr. Tribhuvan Adhikari joining us. Good morning, Mr. Adhikari. This is Harsh here. I want to quickly, sir, first start off by understanding how margins are going to evolve in this extremely volatile repo rate environment. Just take us through what has happened in Q4. What happens if there is no rate cut going forward, and what happens if there is? What action on the yield side, and how does that impact margins and spreads?
Well, yes, right now the margin scenario is pretty volatile. Yes, we've had 2 rate cuts in February and in April. Anticipating another one in the June MPC. Going forward, of course, we'll have to look what the signals direct us to. If I talk of Q4 last year, as far as liquidity was concerned, especially towards the latter end of February and March, there was a lot of liquidity crunch in the market, and as a result, it impacted our borrowings in the sense we could not get funds at the rates we were anticipating. So there was a lot of competition for the funds, and cost of borrowing did go up. From the lending perspective, the rates were constant last year. Yes, we did take a call in the month of February. We increased our PLR by 10 basis points because the cost of borrowing did go up. Subsequently, after the rate cuts in April, we've taken a 25 basis cut across the board in the PLR. Going forward, very difficult to say what it is going to be because yes, rate cuts are impending. Repo rates would come down. From the borrowing front, 55% of my borrowings are at a fixed rate, 45% are repo rate linked. So any downsizing in the repo rate would impact 45% of my borrowing book. The remaining 55% is fixed. So situation is volatile, very difficult to predict what it would be. Would like to wait for the first quarter to really come out with a guidance or an indication as to where we would end up in the current year. On a personal front, I feel the rates we are right now at 2.72. The NIMs are at 2.72 for the company. I believe we would be in that range more or less. Right? We'll have to be very, I would say, aggressive in ensuring that we get good borrowing rates, good borrowing rates, yes, from the banks as well as the open market through NCDs. And as regards our lending rates, we would have to take a call based on how our borrowing rates are impacted.
Okay, sir.
We've already taken, yeah.
Okay, sir. Sir, let me try and break this up a little bit better. Let me first start off. So you've given us a 55-45 split on fixed versus floating on your borrowing side, which is on your liability side. How does your asset side shape up in terms of fixed versus floating?
Asset is 99% floating.
Correct. So then likely shouldn't margins contract versus the 2.7% you've done this year?
Well, the indications do point to that. Right? But if I am able to manage my borrowing so that the impact of the rate cuts are compensated by lower borrowing costs, I believe I could make up for the lower lending rates through lower borrowing costs. So I feel at the most probably guidance, of course it will be very early to give a guidance right now, but anywhere between 2.6 to 2.8 is the guidance I would like to give.
Point taken. And sir, what are you doing on the yields front? Prior to the rate cuts, you had given us commentary suggesting that you intended to hike your yields by around 10 basis points thereabouts. Is that intent still there, or does that change?
No, I don't think. See, we are in a very competitive market, right? Basically, I would not be sort of overshooting myself. Our main competitors are banks, because if you look at the HFC space and the NBFC space, most of them are into the affordable segment. We, as the biggest housing finance company, we are more into the IHL, or the individual home loan segment. 85% of my book is in the individual housing loan segment, basically dealing with prime borrowers. So as far as the lending rates are concerned, I don't think I have too much of scope in my hands to keep them where they are, or on the other hand, to increase them is a definite no. I would have to stay aligned to the market conditions and see where my competitors are sort of placing their lending rates. But one thing we definitely need to do this year, and we've done it last year with some amount of success, is we need to diversify our lending. We need to move a little bit away from the individual home loan segment, which is a very competitive segment where the margins are not great, to the more margin accretive segments like I would say the construction finance or the project finance loan book, to the LRD and the LAP book. So that is what we've been trying to do. Last year, we've had some progress. Our project loans have grown by almost 47%, 47.5% to be precise. My LAP and the LRD book has almost grown by 20% as compared to a 5% growth in my IHL book, which makes up a major component of my lending book. So the focus this year, without losing sight of the individual housing loan, which is our bread and butter, we would like to diversify into these more margin accretive segments of NHI, NHC, what we call the LRDL and LAB book, as well as the project finance book.
All right, so earnings conversation taking you through what the results were for that NBFC. And it's not doing too much in trade, just about 0.2% lower or 0.33% lower, but it's recovered from the low point of the day. Watch out for LIC Housing, which has gained about 5% this week. But let's take the next question with our experts. We've got Sneha Poddar, Assistant Vice President Research Analyst at MOFSL, Motilal Oswal, and Amit Bhuttani, who's Derivative and Tech Research Analyst at Nirmal Bang. Thank you so much to the both of you for joining in, and pleasure as always having you on the program. The first question is on Tata Motors, and Gokul has got a question. He's bought 171 shares at a price of 990. He's been holding it for 10 months and it's now trading around 730. He's wondering whether it's a good idea to hold or sell. Sneha, the issue is that it's gone through a bit of an uncertain period. But some of that is settling down. Some of those headwinds are now turning into tailwinds. Would you say that you should hold on based on the fundamentals?
Yeah, very good morning. So as you rightly said, there were a couple of headwinds because Tata Motors has got good exposure to US, Europe and China market, and because of the ongoing trade war and geopolitical tensions, the demand had got impacted. But with Tata Motors resuming its supply to US post the bilateral deal that is likely to take place between India and US, so some headwinds are settling down. Even US and China has settled down on sat down on the negotiation table and actually worked out on a deal. So the headwinds are getting settled down. I believe there's a decent price to stay invested or make a fresh entry. You can, from a long-term perspective, actually look at 1,000+ kind of levels because these are very attractive valuations to accumulate the stock from a long-term perspective, and especially given the kind of the portfolio that they have built on the EV side, that's a very promising portfolio, and thus I would recommend to not exit at these levels and hold on to ride on the gains.
Okay, so that's the view with regards to where Tata Motors stand. Our next question is from Tejpal, who's calling us from Hyderabad. Tejpal, a very good morning to you. How can we help you?
Good morning, panel, and I wish you both a happy weekend.
Wishing you the same.
Wish you the same, Tejpal.
I want to have a long-term view on the Standard Glass Lining. It's a Hyderabad company.
Right.
They had a recent IPO. We have only 2-3 quarter results, but I plan to get invested in this company.
Okay. Okay, and
I want to know the entry levels.
Sorry, go ahead with the query.
I want to know the entry levels.
You want to know the entry levels. Okay. All right, got your point, Tejpal. I'm not sure if we have enough data on the chart, so I'll take this up with Sneha. Sneha, Standard Glass, do you have the view on this particular counter, and what's the view like? Should you enter at the current levels?
Okay, we do not have a view on this company, but I can just share, from the industry perspective. Basically, this company provides the glasses to the equipments which is used in the chemical and the pharma space. So it's a very promising space to be in, wherein there's a very limited competition. So from that perspective, and given that the capex cycle is now expected to resume in the chemicals and pharma after a long pause over last few years, so probably the company can do well. But yeah, we do not cover the stock as such, so won't be able to give a proper view on it.
Amit, very good morning to you, and coming to you for this. Standard Glass was in the news because of a joint venture.
Because of a new strategic partnership with Japan's AGI Group, and that's a 20-year licensing in terms of assembling market glass line shell and tube heat exchange in India. And this is important because India currently lies on graphite heat exchangers, and Standard Lining is one of the important companies that provides that. The overall market size opportunity globally is $2 billion, and Indian market is also estimated at around 2,000 odd crores. So, and company has already received 150 orders for this particular product. So that's why it's a big win.
So which is why Tejpal is asking about this. So unfortunately, we can't give you a view on the fundamentals, but I'm just wondering, Amit, if you have a view on the technicals, do you have enough data?
Yeah, hi, good morning. So if we look at the overall setup, the data is very much less, but on the entry front and on the confirmation front, we are seeing that the 172 level is a breakout zone for this counter. The stability above 172 is very much important for the next leg of buying in this counter. So once any stability comes above 172 level, then the new long positions can be initiated for the upside towards the 210, 215 levels.
Raj Kothari has got the next question. He's asking why Muthoot Finance has been under pressure. Should we hold it for a short-term perspective? He's not really given us a buy price, but the stock is down about 0.8%. If we can pull up the weekly chart just to reinforce this, it is down after its results, and it's down about 8% or thereabouts. The problems that this entity is facing is with regard to its microfinance loan book, and that has been a bit of a problem for the rest of the sector as well. But Sneha, on the fundamentals, would you suggest holding on, or is this something that you should take money off the table here?
See, I would suggest to hold on because what we believe is that probably the issues that the microfinance loan side is facing, that is likely to peak out probably by next quarter. So from a long-term perspective, one can actually hold on because overall the gold loan demand outlook is pretty strong, and the NIMs that the company is recording quarter after quarter is quite stable. So from that perspective, we can hold on. The microfinance, anyways, the issues, the headwinds are peaking out, and with the rate cut, with the RBI continuously cutting the rate, so that will ultimately lead to improvement in the overall demand going ahead.
All right. Ankitesh Ojha from New Delhi is asking this next question about Zomato, which is now called Eternal Limited. He's sitting on a profit of 24,000 rupees, so congratulations for that. He's acquired 378 shares, and he's wondering if he should exit or stay invested. This is not really a company that people invest in for the short term, at least fundamentally so, right? So, Sneha, on the fundamentals, if you're betting on a stock, a lot of people have spoken about this amidst this competition of who's going to deliver fastest and burning of cash. Some people are saying that maybe we've seen the peak of cash burn, but would you say that you should hold on to Eternal?
Oh yes, we should definitely hold on to it because everyone knew that the company has front-loaded its investment into dark store expansion, and thus the profitability has got delayed by almost a year. But having said that, the Blinkit's GOV growth was pretty strong in Q4. It was more than 100%. And with the food delivery business continue to deliver the stable GOV growth. So overall, the things are as per the expected lines, and anyways, we are expecting the break even for the Blinkit to happen in FY27 start or FY26 end. So the long-term opportunity is very compelling for the overall quick commerce space, and though the competition has heated up, but what we believe is that Eternal, with the market leading position, will definitely stand to benefit because it has the upper hand in terms of expansion, and the balance sheet is pretty strong to support that expansion. So one should hold on to the stock from the long-term perspective.
In fact, just to support that, it's sitting on a 16,000 crore odd rupees cash to support that kind of expansion. All right, the next question is from Nalini, who's writing in from Mumbai. She says she's a senior citizen and she wants to buy L&T Finance. She wants to know if this is a good entry point and what could be the target for next 3 to 4 months. Amit, I'll come to you on this one. What are the charts indicating for L&T Finance?
I think we should wait for any new long position in this counter. The stock is approaching near its breakout zone of 180 level. Once the breakout of 180 gets approached, then we can create new long positions for if the period of 3 to 4 months is there, then we can expect the target upside towards the 225, 230 levels. But 180 breakout is very much important in this stock.
All right. The next question that I'm going to take is from Vipul. I'm just going to pull that up. And he's asking about R System International. If we can pull up that counter. And he's bought at levels of 435. He's asking whether he should book losses and switch to another company because he's incurring losses of about 7,500 thereabouts. So, Amit, on the charts, what's your view?
I'm not seeing very much upside in this counter. There will be a sideways momentum in this counter. It can be switched to another counter like Ambuja Cement is looking positive, NBCC is looking positive at this point of time, and we can expect 10 to 15% value on an immediate basis in both these counters.
Okay, all right. We've got a caller, Murli, who's calling us from Bengaluru, asking about Ajax Engineering. Thanks so much, Murli, for calling us. How can we help you today?
Thank you very much, sir, for taking up my query. And I bought 200 shares of Ajax Engineering immediately after listing around 650 rupees.
Right.
Today it's quoting around 700 and odd. But I see, from my view, I see a bright future for this company considering the pedigree of 30 years old.
Oh, right.
Compared to other industries peers, it's relatively cheaper. Can I hold and add more pending results for the quarter now?
Okay. It's under a little bit of pressure today, but you're still in the green, I see. So you've got a long-term view, Murli, on this stock. Let me try and get you a view on the fundamentals from Sneha. Sneha, Ajax Engineering, any view here?
No, we do not have a view on the stock.
Okay, no problem. Amit, I'm going to try and get a technical view from you if you can. Ajax Engineering, bought at levels of 650. What's the view?
Currently, data is very much limited, but as per the data, whichever is possible, the support for the stock is at 660 level. If the position is on the long front, we should hold with the 660 support. If that level gets broken out, then we will see fresh short supply in this counter. Currently, the breakout for the upside level will be 730. Once the counter gets settled above 730 level, then again buying momentum will be witnessed.
Okay, so that's the view with regards to where technical stands for Ajax Engineering. The next question is from Santosh, who's writing in from Chennai. He's recently bought Rajratan Global Wire, 47 shares at 424 a piece for 1 year time period, and wants to know if he can accumulate more at the current levels. Amit, a slightly longer view is required on this particular counter from a 1 year perspective. Should he add more and average out at the current levels?
Yes, more position can be created at this point of time because a major whatever negative need to be happen is already done, and I'm expecting not much of a selling from this point of time. Currently, the support for the stock on the downside is at 340 level. We should create new long position and can accumulate at this point of time with the support of 340 will be the stricter stop loss at this point of time. On the upside, I'm expecting the movement for the stock to be towards the 650 to 700 levels.
Krishna's called us from Kerala asking about Tata Motors. Krishna, apology, we're really running short of time. We've already discussed Tata Motors on the program, and Sneha believes that it's a hold on the fundamentals. You bought at levels of 700, which is actually a very good level to have bought it. NMDC, okay, no, we've got another caller. Rudra is calling us from Goa. Rudra, it's not the first time you're calling us, if I'm not mistaken. How can we help you today?
I had bought Ramakrishna Forgings about 2 months back for 710.
Okay.
And today I'm sitting in a loss of almost 18,000.
Right.
In this, just in 2 months. So the price has come down by more than 100 rupees per share. I was wondering, is it worth holding on for long, or should I exit it?
Okay. All right.
By long, I mean at least a year I can hold.
At least a year, and if not more, right? So, but you bought it based on the fundamentals, is that right?
Yeah, that time it was doing well, and I believe there was some issue about their inventory management, because of which suddenly it took a nosedive.
Okay. Okay. Let me take your question to Sneha on the fundamentals. Sneha, Ramakrishna Forging, what levels of 710, so it's given up a little bit of ground. Would you hold based on the fundamentals?
We can hold on to the stock from a 1 year perspective because with the revival in the capex program that is expected, and given that the company has exposure to diversified sectors right from automotive to railways to farm equipment. So it's a well diversified portfolio that they enjoy. Currently, automobiles and railways, these segments were witnessing a very moderate kind of growth, but now it's expected that from in another 2-3 months time, it should the growth should start reviving. So we can give it a time and hold on to it. Probably, if he wants, he can average it at this level, and that will at least leave a room for the upside.
Okay. Okay, NMDC Steel is the name of the counter, and Mr. Venkat Ramanan wants to know about this. Water levels of 46.43 and accumulating for a period of 8 months. What should you do if you want to hold for another 1 year? Amit, on the charts rather, would you hold?
Overall metal space is looking positive and expecting more buying to be approached in overall metal counters. So long position can be holded at this point of time, and long position can also be accumulated at this point of time with the support on the downside towards the 34, and the stock is having breakout at 42 levels. Once the 42 level gets a clearance, then we might expect the stock to move up towards the 48 to 52 levels.
Okay, so that's with regards to where NMDC stands. The next question is on NTPC Green. Nitesh Kapoor has bought 300 odd shares at 97 and wants to know whether he should add more at the current levels. Sneha, I'll quickly come to you on this one. What are the fundamentals saying for NTPC Green?
We are positive on the company, given that the government has a huge impetus on the overall renewable energy side, and the company enjoys a very strong portfolio. We would recommend to hold on to it. Valuations a little on the higher side, but then given that the view is from the long-term perspective, one can actually continue to hold on to it.
That's the view with regards to where NTPC Green stands. But with that, Sneha and Amit, thank you so much for joining us. We're completely out of time on this edition of Ask Profit.
Thank you.
All right. As I said, we're completely out of time on this edition of Ask Profit. We'll see you on Monday. But stay tuned to NDTV Profit, because KYC, that is Know Your Company, will be right back on the other side of this break.
That's huge. That is a biggie. It's out of
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company.
Hello and welcome. You're watching KYC. I'm Harsh Saita, and today we're going to try and analyze Patel Engineering the best we can. Now, in terms of what it does, I will get to, but what I want to know about Patel Engineering, firstly, an inward-looking company, domestic-facing, and builds infrastructure projects in India, and therefore it's interesting because very, very delinked from everything happening with regard to tariffs at this point. And also, you'll have some bit of larger focus with regard to domestic infra in this year versus last year, given that, of course, there was elections last year as well. So you might see that pipeline get stronger in FY26, and that's why this one may be interesting. But what's happened in the last couple of financial years is the book to bill has come down. My question, therefore, is winning orders the concern? They seem to be saying that whatever orders that they bid for, they tend to win around 20% of those orders. Why then is the book to bill coming down? The book to bill is still very healthy, right? So nothing to be concerned from an absolute number perspective. But the fact that it's not growing is the concern. The other piece around book to bill is also the fact that they will have, as Anushi reminds me, they will have pumped storage as a big opportunity over the next year or two. So something again to keep in mind, how large is that opportunity and what's the likelihood of that translating to very solid order increases. So book to bill is the one key piece. The second one is there's been a sharp increase in both receivables as well as inventory. I want to know what is causing this increase and whether this can actually get reversed in the current year, because this is the increase which has happened. It's more than doubled from 200 crore to over 500 crore just in FY25. So is this a temporary phenomena, and if the receivables were to get paid off in FY26, what are they going to be used for? Because it will be a large chunk of cash flow which will come, over 300 crore for a 3,500 odd crore market cap company. So something I want to again understand. Then the third piece is with regard to the capex plan. What is the pipeline with regard to capex and what's the outlook on debt? Because debt is half of the market cap currently, and I'm talking rough numbers here. So roughly half of the market cap is the debt number. Of course, there is the upside possibility of the debt going down as a result of receivables getting paid. But if that were not to be paid, and if there is a capex plan in the pipeline, what's the outlook with regard to debt? Because it's not looking too good with regard to how the debt picture is shaping up. Now, opportunities for bidding in FY26, we spoke about pumped storage, but outside of that, what's the opportunity size like? Will they continue to do 20% in terms of wins versus whatever they bid for? And last off, how is competition shaping up? Is that at all a concern? And is margins therefore going to be a drag? Because we've seen the book to bill shrink, and therefore I want to understand whether competition is one of those concerns or not. So we'll try and dive into each of these points when we speak with the management. But first off, I want to try and talk about the company. Let me first start off. It's an age-old company, frankly. So it incorporated, founded in 1949, and it boasts the capability of doing large-scale projects, especially building of dams, and not too many companies can do such large-scale projects, and therefore this one becomes important in that sense. It's headquartered in Mumbai. It's a key player in civil engineering construction segment, and it's completed over 350 projects in that segment. It constructs heavy civil engineering works, dams, bridges, roads, industrial structures, piling works, tunnels, all of those, and therefore deals with a fairly large range in terms of what it can do. It has 48 ongoing projects currently across 15 states, and just in terms of it has an international presence, but it's not so large in terms of the international presence, largely domestic, at least at this point. Now let's talk about the segment wise, because this is where it starts to get interesting and important. Look at hydroelectric. 66% is hydroelectric. Irrigation is just 23%. Tunnel work is just 8%, roads is just 2%, and then there is others. So a large chunk of it coming from these two, nearly 90% is just from hydroelectric and irrigation. So that's where the focus area is of the company. Now, in terms of client-wise order book, now this again very key. Central and state is 95% of the order book, and therefore you will always see some level of inefficiency in the balance sheet or in the P&L when it comes to these projects, because it's central and state government, and therefore you will see inefficiencies here, and that's why you're likely seeing some of the concerns that I've highlighted around cash flow, etc. Likely is because of this reason. But that's how it is with regard to Patel Engineering. Let's look at the key metrics that we'll try and break down and talk about, and we'll have Anushi Vakharia just joining me in a minute or so. But let's look at the metrics. We'll start off with the income statement. We'll try and highlight how the income statement has shaped up over the last 3 years. We'll look at the order book, we'll look at the balance sheet, cash flow, thereafter the shareholding, the return ratio, street cred, and last off we'll try to cover valuations. So that's how we'll kind of go through and analyze this one. Let's start off with the income statement. Good morning, Anushi. Take us through the income statement. Tell us how it's shaped up.
Right, Harsh. So it's an interesting piece that we are looking at in terms of where the income statement is. Now FY25 just come out with their results. What we are looking at is a 12% of a growth for FY25. Again, the guidance given was for 10%. The management expects this 12% growth to continue for FY26. While if you talk about the margins, majorly have remained in the 14 to 15% of a range that we are looking at. So the question here would be, would there be further improvement in the margins that we are seeing, or would they sustain at the current levels that are there? It's net profit in the 3-year period that is interesting, seeing about a 56% of a CAGR growth, while 3-year revenue CAGR that we are looking at is in the range of 15%. So these are the key operational metrics that we are looking for the income statement. But let's also talk about the order book positioning that is there. You know, you started off with how the order book to bill ratio has come down. 5 times was kind of the book to bill ratio that we had seen for FY23, which went down to around 3 times that we are looking at. So your 20,000 crore of an order book in FY23 came down to the size of 15,000 crore of what we are seeing. Of course, we are excluding the L1 contracts over here, but this is the overall picture that we are seeing. 3-year growth of around 0.5%, while 5-year growth is of around 7%. Interesting would be the years of FY27 and FY26, wherein there is a lot of more opportunity in the pump storage projects that the company anticipates. So how the order inflow shape up is something that we should be keeping a track of. So Harsh, overall on the order book size and the income statement, that's what the picture that we are building on. But let's talk about the balance sheet, right?
Yeah, the balance sheet, and this is an interesting one. I want to first look at how the equity and debt numbers in the balance sheet are lining up. Look at the equity share capital, it's at around 3,800 crore. Mind you, they've done 2 equity raises. One is a rights issue and the other is a QIP. The QIP has happened at 55.5 rupees per share, and there were of course a bunch of institutions which participated in that, and that happened in FY25. So you're seeing some bit of impact on the equity share capital as a result of that. The other piece is with regard to borrowing. Now the borrowing number has come down, and that's a big plus, right? From 1,900 crore, the borrowing number has come down to 1,600 crore, but it still does not lend comfort. And let me try and elaborate as to why. One, you're looking at a borrowing number which is still reflecting a debt to equity of nearly 2 times, or rather 1:2 times. Your equity is to debt is 2:1, at least at this point, nearly 2:1, right? So that's the first big piece. The second big piece is that your debt to market cap also, your market cap is also 3,500 odd crore. So debt to market cap also is 1:2. So your market cap is twice that, twice your debt level. So your debt level doesn't look too good. The third piece is with regard to interest cost to operating profit. Your interest cost is roughly 300 odd crore. Your operating profit is currently sitting at 750 odd crore. So 350 crore versus 750 crore odd, which is again 1:2. So you're looking at all these ratios where if a small compression were to happen in operating profit, you will see a large squeeze on your profitability because your interest cost will remain as is. And that's where a possible concern could arise. Last off, your debt to EBITDA, your cumulative debt to your EBITDA is 2:1. So it would take maybe 2 to 3 years of EBITDA to actually pay off your debt. But of course, your interest cost is so very, very high that it's going to take far longer. Your cash flows currently are around 350 crore. Your cumulative debt is around 1600 crore. Your cash flow from operations, pure play, it will take us 4 to 5 years to fully pay off that debt. So which is where the possible concern is. Cash flows this year, of course, were a bit of a challenge, and I'll talk about cash flow in just a bit. It's clearly a thumbs down, because you look at your FY24 number, you look at your FY25 number, 360 crore cash flow from operations versus nearly 700 crore. No concern per se from a fundamental perspective, but please understand that your receivables going up and inventory going up is not healthy. So we'll have to understand whether this is actually going to continue to weigh down on cash flow from operations even going forward, or whether this is some temporary phenomena which will unwind very, very quickly in the next year. So we'll have to wait and watch for that. But even otherwise, when you're looking at your debt plus your cash flow, it's not looking like a very pretty picture overall. So something to keep in mind both from a balance sheet and a cash flow perspective. Anushi, you want to go ahead with return ratios?
Yeah, just before I go ahead with the return ratios, you talked about cash flows, you've given a clear picture. The interesting point would be to point out about the receivables also. You've seen a spike in the last 1-2 years or so. Yeah. So the question would be, a lot of dependency on the government side of the project. So how is that the key reason as to why we are seeing the spike in the receivables is something that we should be focusing on. But quickly walking through the return ratio numbers that we are seeing in the past 2 years, we've seen ROE coming down from the levels of 10% to 7%, but ROC mainly in the range of 14 to 15% of a number that we are looking at. So almost a neutral kind of a stance that we are building for the return ratios that we are seeing. So that's as to where the return ratios is panning out. So again, Harsh, what about the shareholding pattern now? Even this one is an interesting one. We've seen a pickup in the FII's number, but the other parameters.
Yeah, and understandable, because you had a QIP as well in the last year. So it's likely that domestic institutions did pick up. But two things which stand out for me. One is your number of shareholders have gone up dramatically. FY23 end, there were 1.2 lakh shareholders. Currently, you're sitting at 4.5 lakh shareholders. In just 2 years, the number of shareholders has gone up, which is never a good sign. The second thing is with regard to your promoter holding. In FY22 end, your promoter holding was at 55%. Currently at 36%. So your promoters seem to be in some form or shape, directly or indirectly diluting. They may not be selling stake. They may be doing it through a rights issue, which they may not be subscribing fully to, or a QIP, but they are diluting at this point. So you want to see as to whether that dilution continues or not. That's on the shareholding. But you want to take us through street cred?
Yeah, just it's not been a great year or the last 6 months for the business in terms of where the stock performance is concerned. In the 6 months, we've seen about a 20% of a downtick in terms of where the stock price is concerned. Last 1 year, about 25%. But in the last 3 years, the returns have been fairly better. We're looking at more than 100% of a growth. So net, it's not been a great year for the business in terms of where the stock price is concerned, right?
Yes, absolutely not. But the 3-year returns are fairly decent.
Yeah.
The 3-year returns, it's a doubler, which is a 24% return if you're holding the stock from FY22, from at the end of FY22, which is not bad at all, Anushi. So frankly, it's a bit mixed, and therefore we'll give this one a neutral. Last of valuations, you want to take that as well?
Fairly in line valuations that we are seeing as compared to their peers. Now, while if you are just looking at the trailing P, now that trades at around 15 times, HG Infra, J Kumar Infra in the same picture, around 14 times of a multiple that we are looking at. So, not much of a variation that we are seeing as compared to where the other peers are in the similar space, right?
Yeah, absolutely. Therefore, let's try and sum it up. Let's try and look at all of our parameters and how the rating stacks up for this one. Income statement, desiring more for sure, just about a 10% growth. Order book also seen a bit of a contraction, but could future visibility be better is really the question. Balance sheet, the debt levels still continue to be elevated. Can that change? Also, there is a cash flow concern this year from a receivables perspective. If that were to change, you could well see your balance sheet also improve. So a couple of those metrics are interlinked, and therefore you might want to keep your eye out on that. Return ratios at this point just below mid-teens. Shareholding, whether now the promoter, which continues to hold 36%, which is decently healthy. I'm not saying it's bad in any form, but I'm saying there's been a dilution from the 55% level. Street cred, 3 years good, near term there's been pressure, and valuations largely in line with how the street, how other companies in the space are placed. So that's how it stacks up with regard to our KYC ratings. Let's quickly go across to Rahul Agarwal, who's the CFO at Patel Engineering. Rahul, first off, welcome. Good morning. I want to first start off by asking you, how has FY25 played out for you, and what's the outlook and visibility for FY26, especially from a growth perspective and a book-to-bill perspective? How do you look at it? What's the opportunity looking like?
So FY25 has been a good year in terms of revenue. We have grown around 12%. So we have pushed all projects and during the year and got good revenues and execution at all places. FY26 is in terms of revenue maybe a bit flattish, considering that the FY25 order inflow was sluggish due to election year. But the order inflow in FY26 and 27 looks good. So what we expect is 10 to 12,000 crores of new orders coming in this year and maybe next year also. So FY27 onwards, we see a good growth coming in terms of revenue.
Agarwal, this is Anushi joining in. Firstly, the important aspect I want to consider is the cash flows. Now, what we've seen across the sector in the construction space, there has been a spike in the receivables that we are looking at. So this is especially due to the factor being state government. So because of which we are seeing this kind of a pickup in the receivables that you're seeing. Want to get your sense on what has led to this increase in receivables that we are seeing. What's the outlook in terms of the projects that are there tied up with the state government? Just want to get your perspective on all these parameters.
So, see, our revenues have gone up drastically in Q4, which has gone up by 20%. So there was some working capital, money blocked in there. So that's only a temporary thing. So we expect the cash flows coming up in FY26. So yeah, we should be back.
Rahul, your book-to-bill is still quite large. So why the flat revenue growth guidance for FY26?
See, we are primarily into hydropower segment, 66% from the hydropower segment, which is a window of project cycle of around 5 years. Then irrigation segment is around 3 years. And so what we have done, if you've seen last year, our book-to-bill ratio was around 4 in the previous year, and we brought it down to 3 by improving the execution cycle in this year. So continuing the same book-to-bill ratio with 15,000 crore order book, we should be doing around a similar number. Although we are L1 and we have got some projects post March 25, around 2,500 is what we have added till now. So total to order book, including that, will go to 17,500. But yeah, this new orders will take some time to mobilize because 6 to 8 months goes in mobilization. So that revenues will start kicking in the next year.
Point taken. And Rahul, with regard to this receivables, this large chunk of receivables which haven't come through in Q4, you're expecting that to come when? Q1, Q2, or maybe thereafter?
See, so overall, there is not much increase in the receivable cycle. If you see my net working capital days is still somewhere around 110. So that has not increased drastically from the last year. But yeah, the revenues are also going up. So it should be in the similar range. But what we expect is next year onwards, cash flow should be better.
So, Mr. Agarwal, considering this 15,000 crore of an order book that you have, for this year, how much will be executed? And just want to get a sense, like there has been, you've cited out more opportunities in the pump storage space. So with the new inflows coming in, would this be at better margins that we are seeing? Just give us a picture on firstly the kind of execution that there is, and would this be with better margins? So would this 14 to 15% of a mix that we are seeing in EBITDA margins, would that likely to sustain or see an improvement?
The EBITDA margin would remain in similar range. What we expect is with the growing revenues, the interest costs may not go up, and so there could be a spike in the bottom line accordingly.
Okay, Rahul. So Rahul, how large is the opportunity therefore? What would your pipeline with regard to orders which you are going to bid for be like for FY26, FY27? What component of that is going to be pumped storage?
So, see, the opportunity is huge. There is almost 30 gigawatt of work expected to come in for pump storage and also for hydro power, similar sizes there. It is about pick and choose what projects we'll choose. So we'll not bid obviously for everything. So we are looking to bid around 50 or 1,000 crores. So, and that's why we are targeting around 10,000 crore order inflow.
Okay, so since we are seeing almost a flattish kind of a growth in terms of what you've guided for FY26, for FY27, can you provide us an outline in terms of what could the growth be, considering that you're seeing a huge pipeline in terms of new order inflows?
Yeah, so that would be between 10 to 15%.
Okay, 10 to 15% with a 14 to 15% of odd margins that we are looking at, right?
Right, around 14%, correct.
Okay, and coming to the debt picture now the focus also has remained on the debt side of the business. We've seen a reduction from the last fiscal onwards. Where do you see the debt number standing at by end of FY26?
So we are not anticipating major increase in the debt. So there would be some working capital borrowing, but we'll probably pay some term debt also. So we should be around similar range.
Understood. What would that number be, sir? Because your revenue is largely going to be flat. Would you still require more working capital is what I'm trying to understand.
So working capital may be needed only if the new order inflows are there for mobilization.
Sure.
We expect the debt to be at similar levels what we have today.
Okay, point taken. And with regard to how you're viewing the book to bill at this point, it's come off sharply from those elevated levels. Where does the book to bill go, and how large or how many projects are you going to bid for in the next year, and what's your success rate at this point like, and what's the anticipation with regard to success rate?
Success rate is generally around between 18 to 20%. So yeah, we are expecting to get around 10,000 with a bidding of around 50,000 crores.
Okay.
So that is what we expect. And book to bill, because we are primarily into hydro PSP, which the project size will be for a cycle of 4 to 5 years. So the book to bill average will remain between 3.5 to 4.
Okay, so 3 to 4 times is what we are seeing for the book to bill that is there. Just want to get your sense on these capex plans that you have now, considering more order inflows for the business, more opportunities in the hydroelectric space. What is the kind of capex that you project for FY26?
So annually, our capex is between 150 to 200 crores. That may remain.
Okay, so that is the kind of. Can you repeat the number that you said?
150 to 200.
150 to 200 crore is a number for the capex that we are looking at. In terms of the segment which is this, now segment mix, we are seeing about 66% odd or so of the mix from the hydropower segment. Would that sustain as a number as well going forward, or would we look at a higher percentage in terms of where the segmental revenues are concerned, contribution is concerned?
See, in terms of hydropower, PSP, irrigation and tunneling, these cover 90% of our order book. So that should continue.
And sir, you do around 350 crore of free cash flow every year. So just broadly speaking, I'm just adding profit after tax and depreciation at this point to try and arrive at that number broadly. I know I'm not taking receivables, payables into account because you suggested that working capital will largely remain as is, or you'll borrow to fund that. What do you do with the balance? You're going to do 100 to around 150 odd crores of capex. What do you do with the balance 200?
The capex would generally be funded through client advances. So And whatever cash flow we generate, we will try to put in back in the business itself because there are a lot of opportunities coming in.
Target return ratio, Rahul, that you're looking at, an ROE, ROC.
So ROC is around 14-15 right now. So that continue, and ROE would improve because we expect the profits to go up as the revenues go up.
Point taken. Thank you so much, Rahul, for joining us this morning and giving us this perspective. Completely out of time, so we're going to have to let you go. Thank you.
Thank you.
Anyway, so that's how kind of we sum this up. Patel Engineering on KYC. With that, from Anushi, myself, everyone puts the show together. Thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Watching Markets at 12 at NDTV Profit. I am Mahima Vachhajani and we have an interesting lineup for you today on this show. The first conversation that we're going to have is with the management of Datamatics. We're joined by Rahul Kandoya, Vice Chairman and CEO of Datamatics, joining us now. The stock is seeing the heat today. It's down by about 6.5%. But in terms of the overall earnings, revenue was up 17%, EBIT was up 22%, margins improved to 11% from that 10.5%, and net profit was down 40%, but there was an adjusted exceptional loss, but adjusted profit was overall up 12%. To discuss as to how the overall quarter has been like and how FY25 has fared, and of course what the future holds for the company, let's get in Rahul and ask him a few questions on this. Rahul, a very good afternoon to you. My first question to you is your sense of how the company has performed. did it match up to your expectations, and how overall FY25 has fared?
So I think it was a little shy of our expectations. We had talked about roughly a 4% organic growth. We ended up at about a 3% organic growth and then inorganic of about 8%. We made these acquisitions. The profitability came down a little bit because of a large customer who's chosen to go to their captive. This is the spike. We typically have a spike in Q4. That spike, unfortunately, was much lower this year because the customer chose to do it in the captive. This was rather unexpected, actually. We didn't expect that to happen. And then we, of course, increased our effort on sales and marketing and postponement. So in terms of the bottom line, I think we could have been better off by about 250 to 300 basis points. Otherwise, in terms of revenue, we are, of course, because of the deferment of some of these metro projects, also the revenue is slightly shy. As I said, we talked about 4%, we turned up at about 3% organic. So a little shy of our expectations.
Okay. And in terms of the overall outlook for FY26, do you think that things are expected to improve in FY26? Because there's a lot of things happening, right? You also have the overall consolidation and integration of TNQ Tech, which will strengthen your overall presence in Europe as well. That will have a proper play out in FY26. What's the outlook like? What's the kind of growth that you're penciling in terms of FY26 top line as well as bottom line?
So we're still looking at a conservative growth, about 4 or 5%. The reason is that the tariff wars are still unclear. We have seen several customers slow down or put some projects on hold. We are waiting for those to kick off. So some of those projects some of them were pretty large ones as well. So they are on hold as of now. Hopefully with a few news items that are coming out around some agreement with China, some agreement with Saudi and Qatar. Even India seems to be falling into some sort of agreement. I don't know the details. But if the tariff war battle ends or reduces, then we will see unlocking of those projects that are on hold right now.
Okay. Okay. And how much of a revenue potential will that bring on the table?
Well, so it depends on that. So we're still looking at a 4-5% growth. Let's see how this unfolds. It's hard to predict right now.
Okay, understood. And in terms of the geographical breakup for the company, just was trying to understand because USA right now is 54%, UK is 15%. Just wanted to get a sense as to how tariffs overall might impact you if the bilateral agreement that takes place could slightly overall impact the company as well as Indian tariffs when it comes to IT services.
So in terms of tariffs on IT services, there's no impact. So far, we've not seen anything. I don't expect anything to come either. What's impacting is the customers we deal with. They are getting impacted. And because they are getting impacted, some of the projects are slowing down. And therefore, the velocity of the pipeline generation is a little softer than what we would expect. But I'm hoping that a lot of that dust settles in the next maybe 1 or 2 months. And hopefully then they should pick up.
Got it. Rahul, I also wanted to understand that when I was seeing your overall revenue by business mix, there has been a slowing down in terms of contribution from overall digital experiences, but digital operations revenue share is going up and overall digital technologies share has fairly remained stable or maybe going down a tad bit. Just wanted to understand the overall mix change that you are penciling in FY26 and then how does that overall impact your margins?
Yeah, so in terms of an organic performance, I expect this year to be better on digital experiences. The reason digital operations is growing is because of the acquisitions that we made, and therefore in ratio, it is larger. But digital technologies is still growing well. Out of these three, I would expect digital experiences to be the highest growth, then comes digital technologies, and then comes operations. In terms of organic growth, right now you're seeing a slight variation because of the acquisition that we made.
Okay, understood. And in terms of one observation that I had from your presentation was also that net cash and investments has been lower this particular financial year as compared to the past 3 years. Why is that? And what is the kind of outlook for FY26?
So net cash has gone down partly because we spent on the acquisitions. Also because there was, as we had cash, we had some minor investment income. That investment income went away, obviously, because we spent it on the acquisition. So therefore, you see a slight dip in the cash. This quarter was also a little tighter, therefore the net cash inflow you see in this quarter was a little lower than the earlier years. In Q3 particularly, we had a spike. That's because we did a little bit of a buyback of one of our subsidiary companies' shares, and that showed up in cash flows. So therefore, when you compare with Q3 to Q4, you see that difference.
Okay, understood. Even in terms of attrition rate, Rahul, that was around 12 odd percent, if I'm not wrong, in the last quarter, which has gone to almost 16% this quarter. Is that concerning right now for you? Because we're also seeing global firms that are seeing layoffs on a bigger scale. How are you reading that, and what's the outlook like in terms of where attrition stands in FY26?
Yeah, no, I'm not concerned about that. In fact, attrition is dropping right now because the reason you mentioned that there is layoffs going on globally, and we do see an element of softness. So I don't expect the attrition levels to go any higher.
Okay. And in terms of investment in newer technologies in AIs, you've been, shelling out around 400 to 500 million there. Just wanted to get a sense, is that figure going to be same in FY26 as well, or are you going to take a rigorous approach and invest more in AI technologies?
No, we'll keep that steady. Right now, the AI investment is critical because if you're not on the AI bandwagon, you'll miss out a huge wave that is happening. Right now, we've seen a lot of pilot projects and a few of them converting into live projects. So that's a good trend that we see, but a lot more pilots. Still, people are testing the waters, but a few of them have converted into live projects.
Okay.
So that momentum will continue.
Okay, understood. And in terms of the TNQ Tech acquisition, just wanted to get a sense there, because you did mention that FY26 will focus on consolidation and integration of TNQ Tech, and plus this will strengthen overall Datamatics presence in Europe as well. What are the kind of synergies that you're expecting in terms of FY26 flows, and do you think that I know that you've given the guidance of 4 to 5% growth, but do you think that it'll be better because this will strengthen your presence in Europe?
Europe is still a little bit in a soft situation economically. We're not seeing any major headwinds, but it's still soft. Although the presence helps, but that's not going to help in terms of the pipeline. The growth will come really from our pipeline generation, but larger physical presence in the continent makes a difference to many customers. And that gives you a local presence, and there, of course, Europeans working over there. It's not Indian, so they get that local feel.
Understood. All right, Rahul. Well, you've been very candid in giving all those answers. So thank you so much for that, and thank you so much for taking out the time and speaking with us at NDTV Profit.
Thank you very much.
All right, so that was the management of Datamatics indicating that they're expecting a 4 to 5% growth in FY26, considering the global scenario also into perspective. All right, let's take a quick look at how the markets are faring at present. Let's pull up the benchmarks as well as the broader markets. The Nifty 50, it's a fair day of consolidation in trade today. The Nifty 50 is down by about 0.3%, off from its day's lows, of course, but it's trading in a very tight range right now. Of course, it's slipped below that 25,000 mark right now, hovering around at 24,987 levels. So that's an interesting move to watch out for. Let's see if it can again it can again bounce back to that 25,000 levels for Nifty 50. Let's also pull up the mid cap 150 and the small cap 250. The broader markets are clearly outperforming the benchmarks. The mid cap 150 is up by 0.7 odd %, and the small cap 250 is up by about 1.3 odd %. Nifty Bank is seeing some pressure in trade today. It's down by about 0.13 odd %. In terms of the counters on the Nifty Bank, if we can pull up that, see what counters are doing well in trade today and what are putting pressure on the index. There's Canara Bank up 2.7%, BOB up 1%. But counters that are putting pressure, clearly IndusInd Bank down by about 2 odd %. And it's surprising because the street was expecting a further downtick, but probably the street has already penciled in the kind of things that have been happening with IndusInd. More issues emerging for IndusInd Bank. SBI also down by about 1.8 odd %. AU Small Finance also down by about 0.7 odd %. So that's with regards to where the Nifty Bank stands. Let's pull up the Nifty 50 and see the overall heat map as to what's dragging the index at present. There's Bharti Airtel putting pressure down by about 2.6 odd %, IndusInd Bank, HCL Tech, Shriram Finance, SBI, Grasim all down by about 1.5 to 2 odd %. But counters that are doing well, there's BEL which is up almost 5%, Adani Enterprises up 1%, NTPC up 1%, Bajaj Auto also up 1%. Let's pull up the sectoral heat map and see what sectors are outperforming and what sectors are languishing. There's Nifty Defense, of course, stealing the show completely. In terms of Nifty Realty, it's up 1.3 odd %, Nifty Energy up 0.8 odd %. There's followed by Nifty Media as well as Nifty Oil and Gas, but Nifty IT clearly under pressure, down by about 1 odd %. With that, let's also shift our focus to earnings, and we have Varsha joining in with more details on Newland Labs. It's in a focus on the back of its earnings, as I mentioned earlier, but let's take a look at what the key highlights were. Varsha, what are you picking up?
Yeah, thank you so much for that. So Newland Lab is actually under pressure. This is on the back of weak earnings that the company has posted. Let's see what are the key highlights. The significant drop in revenue that you are seeing is led by, drop in the revenue of their CMS segment, that is Custom Manufacturing Services segment, which was 34% to overall revenue this year versus 46% last year. Now this is down mainly due to decline in the development segment. EBITDA margin impact that you are seeing is due to negative operating leverage, and after a year of consolidation with 5% year-on-year decline, top line growth is expected to accelerate in FY26 due to a lot of launches that the company has been doing. Now the main reason, the growth driver for FY26 would be the global Bempopic asset, which is an API, and why? Because this market or this product is expected to increase at a CAGR growth of 23% from FY25 to 23. Now, the market is expected to be driven by increasing cardiovascular disease and also growing demand for effective cholesterol management solutions, and launches and approvals of niche molecules in the specialty API segment is expected to drive the revenue, and EBITDA increase is expected from the more profitable CMS segment, which the company will see in FY26.
Okay, so that's with regards to where Newland Laboratories stand. And Varsha, thank you so much for giving us all those highlights. But stay with us because other earnings are also in focus. There's Global Health, Vishnu Chem bought India as well. Just wanted to understand as to what's happened there and how has Q4 fared for these companies. Over to you, Varsha.
Yes, so starting with Global Health, if I were to mention the key highlights for the company, the revenue growth that you are seeing is driven by increase in patient volumes. But ARPOB, that is average revenue per occupied bed, which is actually very important for any hospital company, grew marginally. It's like only 0.9% year on year. Now the net profit impact, because if you see revenue was up 15% and net profit is down 20%, that impact is led by exceptional expense item of rupees 50 crore, and the higher tax also impacted overall net profit for the company. Next on the list is Vishnu Chemicals. If you see, revenue was up 31%, EBITDA was up only 0.8%, rather I would say flat EBITDA. Margins were at 16.3 versus 21%, but net profit growth of 40% that you are seeing is because of lower tax, which aided net profit, and the higher cost of raw material have actually impacted the EBITDA margin for the company. Next on the list is Abbott India. Overall, if you see good set of numbers, the revenue growth that you're seeing is driven by strong demand from its gastrointestinal and anti-infective medications, and the margin expansion that you're seeing is led by decrease in cost of raw materials.
All right, thank you so much for breaking that down for us, Varsha. In fact, we're seeing that moves on the stock as well. Let's pull up Abbott India and see what it's doing in trade today, and Global Health as well. There you go, Abbott at its day's lowest point, but the stock did see a significant up move in early trade today. Global Health down by about 4.4 odd %. All right, let's shift focus to the defense pack. Let's pull up the Nifty Defense and the counter as well. There you go. All counters in the green, led by Cochin Shipyard up 11%, Garden Reach up 11%, Mazicon up 8%, Unimec also up 7%, Paras Defense up 7%. So clearly, the counters in the entire defense pack are outliers in trade today. Now, Jefferies highlights strong Q4 FY25 performance for Indian defense firms fueled by indigenization and global demand. Anushi joins us with more details on that. Anushi?
So as you've mentioned, we've seen about a 19% of an up move in the defense sector alone, and this is also a lot of sentimental moves that we are seeing after the Operation Sindoor, how the domestic companies in the defense space are now stepping up the indigenization focus and procuring more equipment needed for the defense needs of the India. But interesting note coming in from Jefferies. Now they have talked about this defense indigenization focus, and they've compared and given a scenario from how FY14 onwards to FY25 onwards, we've seen a big shift coming in here with most of these defense companies' revenue seeing an increase in the double digits. In fact, we are looking at even the recent India-Pakistan tensions did see that PM Modi has lauded made in India equipment, which points to further domestic manufacturing focus. Even in the 2020, the earlier updates that have come out, government has increased their budget allocations for the last 10 years. We've also seen how the focus has been on increased FDIs also for this sector. So there have been a lot of moves from the government side as well. So India focus to building up its global image on defense continues over here. But even on the micro side of the things, in terms of how the earnings have shaped up, most of the Q4 earnings that we have seen results so far have been strong so far. Even if we look at HAL, the expectation was for a higher downtick because of the execution delays that were there, but it was a better than expected growth that we've seen in the revenue. The balance sheet of some of these companies have been improving, so that is on a watch out for. Global defense thematic adds to the upside from order book visibility of these domestic companies is what Jefferies has to say. HAL, Data Patterns being their top picks over here, followed by Bharat Electronics. Bharat Electronics having a crucial role in the Operation Sindoor that we are looking at. The note believes that HAL, Data Patterns and BEL could see further order book backed by double-digit EPS CAGR growth in the medium term, along with healthy ROE and ROC ratios going forward. So it's a mix of both the macro stand of view on how the government stand of point how Indian defense companies need to spend up, and also on the micro side how the earnings are faring better than expected.
Right, so earnings faring better than expected for defense companies in terms of micro defense companies, and I think the key takeaways from that were that good revenue growth, balance sheet getting strengthened, and India wants to explore and expand its global presence when it comes to defense manufacturing. So that's with regards to where the defense pack stands, and PB Fintech is the next counter in focus after the company announced its third quarterly earnings with top line better than expected. However, the management during their earnings con call said that they are seeing a slowdown in terms of first half of FY26. We have Harsh joining in with more details about the con call. Harsh?
Well, they've reiterated it, but what they are suggesting and what the management seems to be saying is they're only saying that savings products is where the drag seems to be. So 21% growth in the core insurance business is what they've seen this year. Their average has been around 40-odd%. And basically what they are saying is that H2 FY25, there was a drag with regard to core business, especially when you're looking at the Jan to March quarter. 2 out of those 3 months, even the industry has seen a shrink in terms of, they've seen a degrowth, and therefore that is also reflecting on the numbers of PB Fintech. So that's the first piece. What they're also saying is that outside of savings, the growth remains quite solid. 35 to 45% is what they've done roughly across products, and what they've usually also done over the last 5 years across products. So that remains intact. They're seeing drag in savings spill over into H1 FY26. You are right there. And therefore, that may be a bit of a concern, if at all.
Okay, interesting takeaways from that con call. In fact, the stock was up almost 4% in the early trade, and as and when the con call commentary came in, we saw the stock languishing. It's right now come down to around 0.5% higher, but at its day's almost low point. All right, let's also shift focus to telecom. Now, Department of Telecom is likely to clear Amazon Kuiper for satellite internet rollout. Kuiper may use trial launch strategy similar to JioFiber. Aishwarya joins us with more details on that. Aishwarya?
Well, satellite communication has been the buzzword lately, with Starlink applying for a license as well as it getting a letter of intent issued by the Department of Telecom. Following in line on that path is Amazon Kuiper. What we're learning from our sources is that the Department of Telecom is likely to issue Amazon Kuiper a letter of intent followed by Starlink very, very soon. Now, Amazon will be bringing, just like Starlink and Airtel and Bharti Enterprises, OneWeb, high-speed satellite communication services to the Indian market, and this will, of course, mark their debut. Amazon Kuiper also has the second biggest capacity in terms of their satellite constellation network, which is about 3,200 satellites in the low Earth orbit that will provide high-speed satellite internet services in various markets, including India. Now, Kuiper, let's talk a little bit about their Earth stations and what their devices will look like when that will be operational. Kuiper is likely to be fully operational in the next 18 to 24 months, is what people familiar with the matter have told us. They're also considering trial packages during their introductory or launch period, just like JioFiber did initially introduce us with free devices. And also they may be considering or assessing different heavy discounts on these packages when they do start their services in India. Like I mentioned earlier, the company plans to launch over 3,200 satellites, making it the second largest capacity. Starlink has about 6,000, over 6,000 satellites, and that makes it a SATCOM company with the largest fleet of satellite constellations there is globally. So that's what Amazon Kuiper's devices and ground network will look like. They're also finalizing over 7 locations in India to build their ground stations or earth stations, also called as gateways. In India is what, and they've also identified certain locations. This is what we've learned from our sources so far as Amazon Kuiper's India debut is concerned.
All right, that's an interesting update on Amazon Kuiper, and it'll be interesting to watch out for as to how the implementation of the entire project takes place. All right, shifting focus, here's an exclusive preview from our conversation with none other than Ramesh Damani. He shares valuable insights on the critical importance of timing your exit and offers thoughtful advice for young investors looking to navigate the markets wisely. Listen in.
Sometimes it pays heat to take some money off the table and sell those winners and wait for a better investment opportunity in maybe other stocks or maybe in the same stock but at a different time. So occasionally the market will take and overvalue these stocks. And as an analyst, it is your job to be true to yourself and not say, oh, because I picked a 30x, I won't ever sell it. At least I have not reached the state to buy that businesses that I can hold those 5 businesses forever. Not that there aren't businesses like that, but it takes a huge amount of intellectual rigor to figure them out. So if you do a bit more loose, elastic analysis, maybe one way, if it doesn't work, obviously you want to get out of that. If your thesis is wrong, the faster you get out of it, the better. The other thesis, if you think the bull market is ending, because typically, Alex, when a bull market ends, all stocks will be down 30, 50, 70%. So might as well lighten up at that point. So that's what I use for myself.
Last bit of advice that you would give to somebody listening in that is at the start of their investing career, trying to build an investment portfolio of stocks, what would you tell them?
It's very simple, actually. India is a young country. A lot of investors are young in India. So you want to first save more than you spend. That's the first thing out there. And secondly, what you save, you want to put in appreciating assets rather than depreciating assets, because that's what will go up. So if you go out and spend on a car or a phone, you'll feel nice, but it'll depreciate down in value. But if you buy a common stock or something that can appreciate, you'll probably make better gains out there. So start young, invest in appreciating assets, and what Buffett has taught us so vividly is learn how to compound money. Compounding is a magic that people need to understand, that Buffett has taught us, that if you double your money every 3 years, I think in 12 years you'll have 16x your money. There's one Warren Buffett quote which I don't remember exactly, but what he said is if you want to get from the middle class to the money class, all you need is 30 years, a bull market, and the ability to compound money, and you'll get there. You can start with almost any amount of money, Alex, and which is the point I always tell investors. You can start with almost any amount of money. If you do it successfully for a 30-year period, which is your professional life, 30 years you would have 1000x the money that you started off with. 1000x the money.
Wow.
Do that on a computer spreadsheet and see for yourself. You double your money every 3 years. What happens in 30 years? It is extraordinary. And that path is open to everybody. It's, the path is already laid out by Warren Buffett, and we just have to climb that path.
Okay, that's a very interesting takeaway and a very valuable takeaway from none other than Ramesh Damani. Let's also shift focus to the Alcobev space. Allied Blenders did come out with its earnings yesterday post market hours, and the stock had been buzzing since then, but right now it's trading at its day's low point, and this is probably because the markets are slightly turning negative. In terms of the earnings, overall it was a strong volume growth. Continued expansion was seen in super premium to luxury portfolio. Margins also improved on the back of their backward integration. In terms of operational metrics, volumes grew by 20% segmental performance, prestige and above category drove high consumer demand for the counter. The company also commented on the India-UK FTA and the impact on the same. They said that the company is one of the largest importers of bulk whiskey, and this will positively impact them because the overall lower import duty is expected to largely be margin accretive for them. Also, they will benefit in terms of super premium to luxury portfolio by making these products more accessible. In terms of some other updates, they also are set to raise a QIP of 1,000 odd crores, and that 1,000 odd crores will be put to use in terms of capacity expansion. The management also came out today and spoke to our channel, and they did give guidance of 15% plus growth in terms of revenue. EBITDA margins to be at 15% in 2 to 3 years down the line. Volume growth also expected to be in double digit when it comes to Allied Blenders. So good set of earnings overall, but the stock is seeing some pressure in day today, and right now trading at its day's low point. In terms of another pack that is in focus is the railway pack. Let's pull up some of these stocks. RVNL, in the last 5 days, we've seen a growth of 19% in this particular counter. The stock currently is trading almost 10% higher. RITES is another counter. In the last 5 days, it's seen a growth of 20 odd percent, currently trading at 9% higher. Let's pull up RITES, 10% higher, almost 11% higher there. Titaga is another counter which is in focus, up 22% in the past 5 days, and today it's gaining 13% in trade. IRCON saw a gain of around 22 odd percent in the last 5 days, and seeing around 7% of gains in trade today. So all of these railway counters are also in focus. In terms of overall volumes also, as compared to 30 days, today RVN is seeing 5x the volumes, RITES is seeing 9x the volumes, Titagar is seeing 5x of the volumes, and IRCON seeing 7 times the volumes of 30-day average. So that's with regards to where the railway pack stands. But with that, we're completely out of time on this edition of Markets at 12. But we will be right back on the other side. So stay tuned to NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company. Power.
Hello and welcome to Profit Buzzers. A very good afternoon to all the viewers. You're watching NDTV Profit. This is Hiral Datia, and with me is my colleague Varsha. Let's quickly take a look at what markets are doing at this hour after the kind of euphoric rally that we saw yesterday. There is profit booking that's coming in terms of today's session. You've seen the Sensex, which has fallen over 300 points, Nifty 50 as well, seeing cuts of nearly 75 points, 0.3% lower. We hit a high of 25,070 in terms of today's session, but now you're trading way below that as well. Overall, if you see in terms of Bank Nifty, let's quickly pull up that one on the screens along with the PSU banking space, because both of them had divergent trends in yesterday's session. Bank Nifty absolutely mirroring what the markets are doing right now. If we can have the PSU bank index and then the sectoral heat map, there you go, pretty much on the borderline. So there is some bit of strength that's building in terms of the PSU banking space vis-a-vis what's happening in the private banking sector so far. Overall, if you see in terms of the sectoral heat map as well, Nifty Realty is the top gaining sector in terms of today's session with gains of 1.3% coming in there, followed by media, energy and FMCG. The consumption pack is also looking very okay. Oil and gas, auto are up in trade. What's putting pressure? IT is interesting, 1% downtick coming in terms of Nifty. IT, metal index has also been trading under pressure. So metals is interesting because last 1 week has been absolutely strong with regards to the metal sector, seeing gains of nearly 10%. And now that profit booking scenario has started to come in as well. In fact, if I'm not mistaken, this was one of the best weeks in 4 years, for 3 or 4 years for the metal pack as well. Healthcare also seeing cuts of around 0.2%. Let's quickly look at the heat map in terms of Nifty 50, and then we'll look at the advanced decline ratio and the VIX. But in terms of Nifty heat map as well, clearly BEL 5.5% uptick coming in on that one. In fact, Monday is when the company will be reporting numbers as well, and defense as a pack has been on a strong footing. Apart from that, you have Tata Consumers, which is on a front row. You have NTPC, HUL, Bajaj Auto. What's losing? Bharti Airtel on the back of that block, which happens with Singtel, 2.5% downtick on that one. IndusInd Bank, we all know what the reason is in terms of IndusInd. In fact, Vishy and Harsh will be joining us shortly to decode that for us. HCL Tech, Shriram Finance, SBI are the ones which have been trading under pressure. Let's quickly pull up the advanced decline ratio as well and the VIX to understand where we are headed from here on. What are the trends that are being indicated? You still have almost 3 times the number of advances as per the decline. So there is that positivity that has continued in terms of markets in today's session. And if you talk about the VIX as well, we are receding. 2.4% is the downtick. We're inching again to that 15 mark, which is also a positive to see that kind of stability that could be coming in from a market's perspective as well. So that's the larger picture. But what's interesting is what's happening in the broader markets as well, Varsha, because clearly if you talk about benchmarks, there is some signals that you're getting. But what are your broader markets telling you right now?
So, Hiral, let me, speak about Nifty Midcap 150, which is in positive. It's up almost 0.7%. But let's see, who are the contributors when it comes to, Midcap 150. You have Cochin Shipyard, RVNL. Clearly, defense and railway stocks are actually buzzing in trade today. You have Cochin Shipyard, RVNL, Mazagon Dock, SKF, SJVN, who are the gainers when it comes to Nifty Midcap 150. On the losers side, though, you have Global Health on the back of Q4 numbers. You have JSW Infra on the back of block deal. You have ZF Commercial, Patanjali Foods and GSK Pharma, which are losers when it comes to Nifty Midcap 150. On the small cap 250 though, let's see what the gainers. all the small cap 250 is up almost 1.16%. On the gainer side, you have Titagarh Rail, again a railway sector, stock in the railway sector. You have Garden Reach, you have RITES, you have Ircon, buzzing in trade today. On the loser side, you have Godfrey Phillips. This is under pressure on the back of earnings. You have NCC, Saregama, SBFC Finance, which are on the loser side. So clearly, Hiral, some stocks are actually, so I would say mid cap 150 and small cap whole broader markets is buzzing on the back of, railways and defense stocks, which are buzzing, and of course on the back of earnings as well.
And that's an interesting point, because defense, we did have an NDTV exclusive as well, where there's a probability of the defense expenditure that could be going up, and there you go. Gains in that range of almost 5 to 12% is what you're seeing in terms of all the defense names as well. Railway also on the front footing, so whether it's making a comeback or not is anyone's guess. In fact, Zen Technologies will be reporting numbers as well. But moving on, IndusInd Bank, that's one of the banks that we've been talking about since the last one and a half month, and they've gone ahead and said that they've identified 2 more accounting issues in the internal audits. In fact, the audit department has found that almost 674 crores were incorrectly recorded as interest over 3 quarters of fiscal 2025. Vishwanath Nair joins us to give us more details and perspective. Vishy, over to you. 2.5% downtick coming in there. And this is something which is really alarming, with a bank that also coming out and saying and talking about the irregularities.
There are 2 new accounting discrepancies that have been found at IndusInd Bank, and this is of course after an internal audit department confirmed such things. According to the disclosure that the bank made last evening, these reports were submitted on the 8th of May, and that is how the bank has come to know about these problems. Essentially, the microfinance division was undergoing an internal audit already. That is something that the bank had disclosed last month. On the basis of that investigation, it has been found that 674 crore worth of money was accounted for as an incorrect interest income of the bank over 3 quarters of FY25, the first 3 quarters. According to the bank, that amount has already been set off in January. The second important disclosure was with regard to some concerns in the other assets and other liabilities accounts of the balance sheet. There again, 595 crore worth of unsubstantiated claims, that's what the bank is saying in its disclosure, were found, and these were also adjusted in January already. Now, remember that both these accounting issues were before when the bank came and disclosed its derivatives issue in March, when it said that about 1,960 odd crore worth of financial hit will hit the bank's balance sheet. This is coming across as a series of lapses, problems with internal controls at IndusInd Bank, and that's why it's important to note that the board has also said that it is assigning accountability on people who are responsible for these lapses, and that the board will take appropriate action against them.
Thank you, Vishy, for getting us the details. In fact, let's quickly look at what brokerages are making out of it as well, because it's a pretty mixed reaction that has come in. Let's look at Investec. They've gone ahead and downgraded the stock to a sell, and they've cut the target price to 650 rupees per share. What they are saying is that the core operating profitability, that is something that could be structurally impaired, and the leadership vacuum that you're seeing may not help. They would say they are advising to stay cautious with regards to the heightened uncertainty that's coming in as well as things unfold. You have a Morgan Stanley, which has a target price of 755. They've maintained an equal weight. What they are indicating is the inflated MFI interest income at 900 crores annualized. That is what has hit FY25. They are seeing downside to FY25, 26 and 27 earnings estimates as well. And there is a risk of 15 to 20% downgrade coming in terms of the earnings if you have to look at the coming 2 years. Macquarie has a target price of 1,210, and they haven't outperformed. So they are absolutely optimistic. Overall, what they are saying is that many question arises given the disclosure timing. The focus will be on clarity over management succession in the short to medium term, and the factors to watch will be the peak credit costs, governance and disclosure issues. So I think Macquarie probably would be revisiting as well as things unfold from here on, because 1,210 is an absolute optimism as well. But let's also welcome in Sharmila Joshi to give us more details and her view. Sharmila, we've been talking about IndusInd Bank with you since quite some time. What is your view with all of the things that are getting unearthed so far, and the kind of variations that you're seeing in terms of what brokerages are making out of it? I mean, at one end you have an Investec. They've downgraded for a target price of 650, whereas you have a Macquarie, which is still maintaining a target price of 1,210. Which side would you be weighing in?
So, I think, first of all, what all we've been hearing is far from, something that can give comfort to any investor. And I think which is precisely why we've seen the stock correct to the extent that it has. So to my mind, definitely this is not a stock that I would recommend buying in. Having said that, I also do think that a lot of the worries are now in the price, because this is now a story that has been playing out over a period of time. It is not like day one that we are talking about, the troubles that the bank is facing. So, from that point of view, I do take the Macquarie point of view that it is governance that is going to be key going ahead. Some changes have already been made. So the process has started, the process of sort of healing and getting things back in order has started. So from that perspective, I think perhaps the worst is sort of now priced in what currently is the market price. So I wouldn't look at this as from a valuation perspective. I would look at it more as how things get sorted out in times to come. So absolutely neutral on the stock, but we've seen even banks and a lot of other companies recover from a lot worse. So I think now you have to give them the time to really put all their blocks in, put their house in order. So for me, really, it is just a wait and watch sort of a situation right now.
And watch, that's what view coming from Sharmila. Thank you for that view. But two stocks are in focus. So two block deals in focus today, Bharti Airtel and JSW Infra. Somit joins us to give us more details.
Yes, both the stocks remain in focus. Both the stocks are down around 2% in trade after the block deals have happened. Firstly, when it comes to JSW Infra, it was the promoter family, that is the Sajjan Jindal Family Trust, which has sold close to 4.2 crore shares. There is 2% stake in the company via block deal. And the floor price for this deal was set at around 288 rupees, which was at a discount of around 3%. But the block deals have happened around the range of around 290 to 291 rupees. The promoter has garnered close to 1,200 crore rupees from this block deal, and the lock-in period for the buyers is around 60 days. Jefferies was the sole banker to this deal, and post this deal, the promoter holding in the company would come down to around 83.6% as against 85.6% earlier. When it comes to Bharti Airtel, it was Singtel, which is the co-promoter of the company, which has sold close to 4.76 crore shares in the company via block deal, and the floor price for this deal was set at around 1,800 rupees, which was at a discount of around 3.6%. But this block deal has happened in the range of around 1,821 rupees to 1,827 rupees. Now again, the lock-in for the buyer for this deal is around 60 days. JP Morgan was one of the brokers of this deal, and post this deal, Singtel's holding in Bharti Airtel directly and indirectly would come down to around 28.3% as against 29.5% earlier.
Right. Thank you so much, Somit, for all the details. Sharmila, just wanted to have your views on both the counters, Bharti Airtel and JSW Infra.
Well, like both the counters, let's talk of Bharti Airtel first. I think we've seen a good set of numbers from Bharti Airtel, and overall, if you ask me honestly, more than numbers, I think if you are looking at telecom as a sector and as a play in the context of the country, and where we are in terms of data usage, what we are pricing data at, how things are likely to sort of proceed going forward. Also, the fact that this is a sort of a capex heavy sector, and from that point of view, your balance sheet requires to be good to be able to make those investments to better your the offering that you have. So from all those perspectives, I think for me, Bharti Airtel is the preferred play. Probably Reliance would be the next, but their telecom is not sort of separately listed. So from that pure play point of view, really it is Airtel, and we've seen the kind of returns it has given long-term investors. I think that will continue. Yes, I think the block deal happening at a price lower than they normally do happen at a discount. So I think it's not. I mean, I'm not looking at this news per se, but I'm very positive on the stock. I think similarly for JSW Infra, the kind of capex that they have planned as well as their outlook going ahead. Again, I think I'm fairly positive on the stock, but as I said, I think from a long-term investor perspective, probably Bharti Airtel is the stock that I would prefer.
Right, so that's with regards to Bharti Airtel as well. But moving on, JSW Energy, that is another stock which is in focus as well on the back of numbers. A 16 to 18% increase that's coming in terms of profitability as well. Now, it's mainly contributions that have come in from the Mahanadi thermal project as well as the organic wind capacity additions that have happened for a JSW Energy that have aided the numbers this time around. Overall, if you see in terms of the earnings, the EBITDA as well, that has seen a growth of around 5% this time around, and this is on the back of the RE renewable energy capacity additions and the contributions that have also come in from Utkal along with the thermal plants that we spoke about. In fact, we did speak to the management as well. Let's quickly hear out that bite from that conversation. The stock is seeing gains of 2.5%.
See, quarter has been, in two ways we see this quarter. Quarter has been phenomenal for us for the reasons. One is, of course, in terms of the revenue, in terms of the margins. But apart from that, some few big actions which going forward are going to be a key differentiator in our performance is a very large return accretive acquisition of KSK, which is now JSW Mahanadi, which we have acquired on 9th of March, 6th of March. So this is one, and which has in fact demonstrated in just 25 days of operations what we have been able to turn around this asset, what it has performed for maybe 340 days, what we did in 25 days. That gives us a lot of confidence that this is going to be a big differentiator. Addition to that, the acquisition of O2 Power, which we had announced earlier, we have completed on 9th of April. So these two are major drivers going forward, which will play a significant growth, both on our revenue, on our margins, whether it is at EBITDA level or at PAT level. So these are the key differentiators. I see that quarter two has been very, very instrumental. In addition to that, when we talk of generation in quarter four for us, we have seen a growth of 24% generation growth. And the key drivers to this have been that RE portfolio growth has been 34%, but out of which 67% growth quarter on quarter has been because of the wind capacities which we have added during the year. Despite not reaching the wind season, peak wind season, it has to start now. Despite that, there has been a 67% increase. And also the generation growth has been led by the acquisition of KSK 25 days, which we have got, plus our JSW Utkal unit in Odisha, which was operating with one unit of 350 megawatt. We have been successful in commissioning the second unit in March, and Utkal plant has stabilized. So these two drivers in thermal space and the RE capacity additions have been the major drivers for quarter four in terms of generation growth of 24%. Maybe the demand growth was under 4% in the country.
So that's the management coming in there. Sharmila, how are you looking at a JSW Energy and the way renewable energy is, paving its way from a business perspective as well? A good stock to bet on?
Yes, so I've been recommending JSW Energy for the longest time, and it's wonderful to hear the management sound so upbeat. And one of the reasons that I sort of have been in favor of, I'm in favor of the entire power sector, and within the power sector, stocks that are talking of renewable energy, because to my mind, you do have market picking up on themes. So obviously, the big theme for this last month has been defense. But I think that if you were to talk of slightly longer term themes, then things like renewable energy and stocks making headway in that, and then now finally you're seeing it come into their numbers and the management sounding so upbeat on all their initiatives within the renewable space. is great to hear. And as I said, yes, I mean, that's the reason that I like a stock like a JSW Energy or a Tata Power, because they are making those initiatives in the renewable energy, green energy space. And it's finally, in the case of JSW Energy, it's finally to show in their numbers.
Right, so that's with regards to JSW Energy as we speak. But let's quickly pull up a Signature Global. That stock is in focus as well on the back of numbers. If you see in terms of what they have reported, the Q4 pre-sales is down around 61%, while the collections have seen a growth of around 16% this time around. The stock is nearly trading at the day's highest levels with gains of 4% coming in there. They've met their FY25 pre-sales guidance of 10,000 crores. However, FY25 launches has been missed. Revenue recognition and collection guidance is something that they have missed as well. But I think the street is very happy with the pre-sales number, it seems. Let's welcome in Rajat Kathuria, CEO at Signature Global India. Rajat, good afternoon and welcome to the show, and a pleasure to speak to you. This is Hiral on the side. If you could help us understand, the pre-sales is down 61%, but met your estimates in terms of the guidance. What was the reason for the miss in terms of the FY25 launch, revenue recognition and collection guidance?
Sure, Hiran. Good afternoon. I think in one sentence you've asked quite a few questions. I'll try to break it down and answer all of them. See, on an overall basis, the year went quite well for us. We are an 11-year-old entity, and in the year gone by, we've crossed 10,000 crores of pre-sales. To break it down further, we have sold more than 4,000 units at an average ticket size of about 2.5 crores per unit, which demonstrates our core theme of addressing the need of the middle income, households, the Aam Aadmi, doing sales in the range of 1.5 crores to about 3.5 crores, of apartments which we sell. And we are probably the largest, volume driver within the segment in the Delhi NCR region. For the coming year and on a longer term basis, we feel that the demand is there and there is lack of supply. So we've given a guidance that we can continue to grow at comfortably 20% plus on a YOY basis for a medium term perspective, which I think is getting well appreciated, because earlier we were just giving yearly guidances. This time we've said that this can be achieved over a medium term basis. As far as collections are concerned, you're right, we've not met our guidance, but in absolute terms, the collection is was very good. Over the last 2 years, between fiscal year 23 to fiscal year 25, our collection number has gone up 2.3 times. Even over the previous year, there's a fairly steep rise in the collection number, and it continues to grow, on a quarterly basis. In addition to collection, we've demonstrated a very good operating cash surplus. So during the year, we've got almost more than 1,600 crores of operating cash surplus, which is almost closer to 40% of the collections which we did in the same year. A lot of our growth and net debt reduction, effectively balance sheet strengthening, has happened just by way of operating cash, which we've earned. So out of the 1,600 crores, more than 1,000 crores has gone into new business development. About 300 odd crores has gone into net debt reduction. And as of today, the net debt stands at a, fairly low number in terms of absolute terms. It's just like 880 odd crores. So, sales are growing, collections have grown vis-a-vis previous year. Yes, we missed the guidance, but the guidance for the coming year is quite steep. We are planning to do about 60 billion, 6,000 odd crores of collections in the coming year. Our sales growth has been driven by both volume and value increase. Volume wise, sales have grown more than 30%. Value wise also there is a growth of 6 to 7%. So it's a fairly balanced sort of growth which has been achieved by the company. Portfolio additions have happened. We've added almost 8 million square foot of developable area. The money came from the operating surplus, like I just talked about. And see, in terms of revenue recognition, the accounting is more, back-ended, because this is happening basis completed contract method of accounting, which means that anything which we would have launched, let's say 4 years early, 4 years, historically, is kind of getting completed now. So the P&L reflects the position of the company, which was there 4 to 5 years earlier. And for us, where we've seen literally hockey stick sort of, number growth over the last 4 to 5 years, the P&L is not representative of the current size of the business. Having said that, we recorded revenues worth 2,500 crores, achieved gross profit margins in excess of 30%, and recorded a PAT in excess of 100 crores. So I think quite a few positives, and by and large, we are maintaining the direction which we've talking about over the last 12 to 18 months.
Rajat, Varsha this side, good to have you. Just on the collections part, I wanted to ask, your collections are expected to see strong pickup when it comes to FY26. Wanted to have your view how cash flow will shape up.
So, Varsha, thanks for asking this question. So, see, our collections are linked to the sales being done. During the previous year, or rather, I would say the last 5 quarters, we've been consistently launching new projects. And whenever in any particular year or any particular quarter we're launching projects, sales are happening, collections are, picking up. In the previous quarter, we were anticipating certain new launches, which did not happen, and hence, we missed our quarterly sale target, or a particular number, about 3,000 odd crores, which we've been achieving on a consistent basis for the last 3 to 4 quarters. As far as collections are concerned, we are launching couple of new launches, something in Sector 71 Gurgaon within this quarter, something large in Sector 37D, which is just off Dwarka Expressway in the coming quarter. As these launches are happening, it will give us enough headroom to meet our collection guidance. We expect a 40% surplus out of the amounts collected, post incurring all hard costs, SG&A expenses, and even taxes. So you can take a tentative 40% guidance of operating surplus vis-a-vis the collection in the coming year.
Strong number, Raja, that you're looking at. If you have to look at the revenue, I mean, the analyst or the street view is right now that a 20 to 25% growth is what we should be looking at in terms of FY26, right? Now, taking that into consideration, if you have to look at the profit bit of it as well, seems to be on a strong expectation as well. But do you think there could be pressure coming in from a margin perspective, taking into consideration the kind of launches that you're looking at, because that will entail initial project investments, and secondly, the input costs, which is on an uptick as well?
So you're right. See, that's always the case because if you think of it, the year gone by, our pre-sales crossed 10,000 crores. Revenue recognized was less than 2,500 crores. Whereas the SG&A, which is currently being incurred, is to support the current sale level, the pre-sale level. So there's always, an in a way element of higher cost, which is kind of impacting the margin. So we can't get away with it. I think growing the business, adding more land, doing sales, and initiating more projects is more important for us, rather than over focusing on a particular margin. But having said that, in this year, as we'll complete projects which are almost twice the size as we did last year, almost 4,800 odd crores of completions we are anticipating in the current year, you'll see a good bump up in the margin vis-a-vis the previous year. But, that particular factor, we can't do anything about.
Right. Rajat, one question I have is with regards to strategy, because with the numbers that you're saying, the outlook for FY26 seeming strong, good momentum is what you're anticipating, taking the guidance into consideration. The project pipeline is good. You have leadership in terms of affordable and the mid-segment housing, and you are shifting towards premium as well, right? So what will that entail in terms of strategy? Will it be moving towards premium, or you will still be a leader in terms of affordable, and premium will still be a small segment. How does that math work?
So see, by and large, I would say we've been focusing on mid-income housing. Given the current land prices, affordable within the city is not a viable business. This was our foundation of the company when we started back in 2014. That we used to do affordable housing within drivable distances, like within the city of Gurgaon or Sohna for that matter. But at the current land prices, that's not like a viable business, and that's why we had to pivot ourselves more into mid-income housing. Our focus is going to remain, by and large mid-income home. We don't want to get into luxury segment. Yes, we may do, while calling it larger mid-income segment, some things which are like more premiumized, but that's going to be the focus. So our focus, I think, Gurgaon is a very deep market. We've done 4,000 units plus in the previous year. There is volume growth possibility. Value is still going up in Gurgaon, because there's still lack of supply from good quality companies. So we don't aspire to get into any upper mid segment or luxury housing segment. So I think we are really focused with what we intend to do.
So that's a strong one coming in there. Thank you, Rajat, so much for joining us on the show. Let's quickly take an intraday chart of Signature Global to understand what the stock is doing as we speak. There you go, at the day's highest levels as we speak, with gains of 4.5% coming in there. But let's quickly slip into a short break. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
That's huge. That is a biggie. It's out of there.
गोल्ड ग्लास क्लियर ग्लास, कार हो या नियर, सब कुछ दिखे क्लियर.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start.
Benchmarks fall as Nifty extends losses and Sensex trades more than 300 points lower. Bharti Airtel contributes the most to Nifty losses.
And defense stocks continue to gain after the strong order outlook after the success of Operation Sindoor. Index rallies for 8th consecutive session. Jefferies bullish on the sector with focus on HAL, data patterns and BEL.
Newland Labs plunges over 6% after reporting disappointing fourth quarter numbers. EBITDA dropped by more than 52% while profit was down 59%. Company expects to resume growth in FY26.
And Godfrey Phillips fails to impress the market despite reporting robust Q4 numbers. The stock tanks 5%, revenue jumps over 70% while net profit grows 30%.
Trump changes his tone on India-Pakistan tensions, claims he helped settle the problem between the two countries, says let's do trade and not war.
Welcome back to Profit Buzzers. Clearly, if you go to see in terms of markets, two sectors which are gaining steam are defense as well as railway. So Anushi has been in full action on the back of this. But first, let's pick up the defense space. Clearly, strong gains coming in there this week as well. 17% is the kind of uptick that we've seen in terms of the defense sector. What's aiding the up move? First, let's get across to Anushi. Anushi, we've been discussing the space pretty closely over the last couple of trading sessions, and the kind of indigenization that is at its peak from a Make in India perspective. Help us understand how has the performance been of the defense companies overall so far, and what are volumes indicating with regards to the impact?
Right, thanks for that, Hiral. So what we are seeing is strong up moves in defense. Now, this is a phenomenon that we've been speaking in the last few sessions itself. 1 week return, just 17% of an upside that we are looking at. In 6 months, the index has seen about a 23% gain, while in 1 year, about 54% of a gain. So it's a significant kind of an upside that we are looking at. You know, a couple of stocks which stand out. Firstly, Cochin Shipyard. Now that volumes are seeing about a 4 times of a jump as compared to its 30-day average. The stock just being 34% up in 1 week itself. Bharat Electronics, another up move, 13% is what we are looking at, 1.2 times of a volume that we are seeing. In fact, HAL, if you are looking at, it's seeing 14% of an upside, while Bharat Dynamics and Zentech seeing returns of up to 22% with about 1.4 to 2.6 times of a volumes that we are seeing in. Now, do note that key role of all these defense companies have been in Operation Sindoor. In fact, let's just talk about Bharat Electronics itself. The Akash Tir program that was there, that was announced, which was successfully deployed for these operations that we are looking at. ISCCS system is another one which has been integrated for combating some of these drones of the Pakistan that were there. In fact, there's an interesting view coming in from Jefferies as well, in fact, where they have suggested that defense indigenization focus from FY14 has been most for these defense companies, and has led to this rise in revenue that we are looking at in double-digit number growth that we are seeing at. Recent India-Pakistan tensions also saw PM Modi lauding the impact of what these defense manufacturers have created, which points to further order book revenue visibility going forward. But that's all the macro point of view that we are seeing. In fact, if you look at the micro point of view also, most of the Q4 results that have come out so far have been on the stronger side. So this has something that we'll be watching out for. Hindustan Aeronautics, Data Patterns being the top picks, followed by something like a Bharat Electronics. So a lot of focus has been on the defense pack overall. Again, of emphasis on the order book revenue visibility going forward, considering now there is a heightened kind of a security in terms of what these defense manufacturers are doing.
Thanks, Anushi. Stay with us. Let's also welcome in Akshay Bhagwat from JM Financial. Akshay, taking into consideration the strong moves that we've seen in terms of the defense pack, the sector, individual stocks as well, are you seeing further buying opportunity? What are charts indicating, or do you think this is the best time to book profits now?
So first of all, good afternoon. Well, yes, defense names have been on a roll, and it's come back hard, because if you look at the last 6 months of price action, really this was one of the most talked about sector, the railway sector and the defense sector, because post-budget, I believe a lot of expectations were built. But after Operation Sindoor, I believe that has been more of a trigger point for most of the defense names. And if you look at stocks from a technical perspective, stocks like a BL, which has had a very strong price breakout on the on the monthly charts, because all-time high levels break above 340 just cements the stock on a very strong or a firm footing. Now, if you ask me whether I need to buy this at the current market rate, the prices have been a bit overstretched for comfort on the short-term trading parameters. So a bit of a cool off from the current level would make it more attractive from buying and a risk-reward perspective. So certainly, yes, defense names still more to go. If you look at the strongest charts, it is HAL and Bharat Electronics. Bharat Electronics roughly is heading for targets of around 377 to 390. Those are the short-term targets which I predict. Ideally, if you get a slight dip around 355 odd levels, that would bode well from an entry perspective. And if I were to look at Hindustan Aeronautics Limited, then this stock is mostly heading for levels of 5600. So still positive on defense bets and more to go in the coming days.
Absolutely. I think all the defense companies have seen a smart move from those March lows, and that's where the rally has continued. Sharmila, your view in terms of the defense sector, do fundamentals and valuations support buying at current levels? And if so, which would your top pick be?
So, I was just thinking while, you were doing this whole thing about how the stocks have gone up and what are the names, etc., and how to really play the theme going forward. Because obviously, I think what has happened here is that there was a steep correction in across these defense stocks after the very fancy valuations that they were getting last year. And then because of the change circumstances, we've seen this buying come in. So I think, there are two things that I would do at this point in time. One is there was this piece of news that I heard that maybe there could be a greater allocation to defense, and a lot of it could go towards your navy or your, that bit of the defense play. And then from that perspective, if you were to sort of combine it with the fact that we are already seeing the run up in Mazgaon Dock as well as Cochin Shipyard, but the numbers, I think, of Cochin Shipyard, which I remember seeing, they were good. Also, I think both Mazgaon Dock as well as Cochin Shipyard have really good order books. So, my only caveat here is that if you buy at this level, you're not going to get the kind of return that you got in the period leading up to 2024. So, those 3 years, the kind of return that it gave you, they may not give you that kind of return. But order books are certainly strong, and there could be sort of more money coming their way if this allocation news turns out. I think another interesting, and probably to my mind a more interesting space could be names like the data patterns that we spoke of, because there is this whole other piece that is coming up around the PSUs, which could be supplying things to these companies, and which we've already been seeing, the kind of electronics that go into it, the drone usage, etc., which have all been successfully displayed. So a little bit of study required there. Data patterns was the obvious name that I said because you all spoke about it. But companies like that could probably be more interesting at this point of time than though I do like even an HL, given the fact that it has strong earnings, etc. But as further investment, maybe these names could be more interesting.
Right. Let's shift our focus to railways now. The stocks that are back on track, companies like RVNL, RITES, Titagar wagons are up more than 20% in the last 5 days. Anushi joins us to tell the key trends she's picking up from this space.
Right, thanks for that, Varsha. So what we are seeing is some strong up moves in the railway pack as well. Now, higher trading volumes is something that we are looking at. Some of the names that we are seeing, firstly, RVNL, over 5 times of volumes that we are seeing compared to the 30-day chart, which is there. RITES and IRCON, strong performers over here, 9 to 7 times of a volume, 9 times or 7 times of volume that we are seeing compared to the 30-day average, while Titagarh about 5 times volume. So strong volumes in the counter that we are seeing. And in fact, what is interesting is the last 5 days move. Now, something like RVNL and RITES have clocked in more than 21% of a stock price return, while Titagarh and IRCON have seen about more than a 22% of an increase in their stock price, which is interesting considering if we look at their year-to-date and like last 1 year chart, wherein returns for some of these railway companies have been on the negative side, considering pictures on valuations, the order book revenue visibility, also some of the numbers that we've seen in the previous quarters have been on the softer side. So what we are seeing for something like RVNL and RITES is about a downtick of 4% or 8% in the year-to-date, 8% on a year-to-date basis, while Titagarh and IRCON have seen a sharp decline of more than 20%. So it's interesting how, we are seeing some bit of recovery coming back for these railway stocks which are there. Some of the recent updates if we have to pick up for RVNL now, today's focal point also being that it has received an order worth about 116 crore from Central Railway. To consider that its order book size as of December 24 is at this around 97,000 crore. Company expecting more than a 1 lakh crore of an order book going forward. RITES has been another stock in focus. They just came out with their results wherein we've seen about a 4% of a downtick in their revenues, while the margin saw a healthy expansion to 30%, while net profit was up around 5%. Key takeaways being that less revenue was because on account of quality assurance and the turnkey segment impacting its revenue. Also, there were almost no exports that were seen in FY25, but for the outlook going forward, they do expect export recognition and better execution going forward, which would translate into a 15 to 20% kind of a revenue growth compared to the 4 to 5% of growth that we've seen, EBITDA margins also would be in the sustainable range of 20%. So that is another key point that we should be watching out for. But a lot of these railway names, again, in focus and trade today, higher volumes seen across the segment.
Right. Thank you so much, Anushi, for all the details. Well, Akshay, how are the charts looking when it comes to railway sector, especially when you have, RVNL, RITES and Titagar? So what should investors do?
Yes, if you look at the price charts, railway stocks also have come back very hard in terms of the pullback rally in the last 3 to 4 trading sessions. Especially from a charts perspective, there is clear bottoming out signs, at least from the medium term perspective. So chart-wise, a couple of stocks which are on my radar right now is Titagar Rail. If you look at the volumes, which was rightly said a few minutes back, I think after 2017, today's trading volumes is one of the massive volume uptick which the stock has registered. So clearly there is a lot of trading action which is picking up, and there is a technical breakout at the levels of 800 in Titagar Rails. So this promises you possibly a good upside target in the coming days. Immediate targets which I foresee is 1100 to 1130 odd zone in this stock. There is a support now which is 800. So clearly a positive pullback rally which should be on in Titagar Rail. And RVNL is the other name you can look forward to in this particular pack. Almost after I think 1.5-2 months of a support being cemented at the levels of 300 T20, today the momentum has kicked off, which can easily see the stock moving up for levels of 475 in the next 1.5 to 2 month perspective. So these are the two best names on the charts, RVNL and Titagar, which can be looked forward from a medium term perspective on the upside.
Right, so RVNL and Titagar would be in focus. But Sharmila, let me come to you on the overall sector, your view on the overall sector, considering the order book these companies have and your favorite picks amongst them.
So I'm not a great fan of the sector, let me just say that. And I think one of the reasons maybe people are looking at it so closely is, in light of all this tariff, etc., you want to look at sectors which are more sort of inward looking, and the correction was also quite steep in some. See, the two stocks I do like are RVNL and IRCTC. Out of that, RVNL looks expensive to me at this level. IRCTC I continue to like. I think they are that the monopoly going for them. Valuations look interesting. So IRCTC would be the stock that I would really look at in the railway space.
IRCTC on the radar, 3.5% up move coming in there. Let's quickly look at LIC Housing Finance on the back of numbers. Overall, if you go to see, the NI has dropped. The net interest margins have gone up, so there is a margin uptick visibility that's coming in there. The provisions are up on a sequential basis. However, a reversal in provisions was what we were looking at. The profits have surged for the company, and this is only on the back of a high credit cost and provisions in the fourth quarter of FY24. So there is that growth momentum, which is absolutely lacking in terms of LIC Housing Finance. Very quickly, Sharmila, your view in terms of LIC Housing Finance?
So I think real estate is a very important sector. And if you just spoke to Signature Global a while ago, and the segment that they are talking of, affordable housing, to my mind, that sector, as well as tier 2, tier 3 cities, where we will see a great number of houses coming up, and which could be a target audience for a company like LIC Housing Finance. That, coupled with the fact that we are now in a cycle where interest rates are getting cut, that to my mind make not just LIC Housing Finance, but anything that is in the sort of affordable housing, that mid-ticket size loan space, quite interesting. Here the correction has also been quite significant. So I think pick and choose, but this could be an interesting space going ahead.
Thank you for that view. Now, two stocks which are in focus on the back of earnings. Let us pick a chart for Newland Lab. If you see the peak set of numbers the company has seen now, there's the revenue downward that you're seeing, that is 14.7% on the back of significant drop in their CMS, that is Customer Manufacturing Service segment, and the EBITDA margin impact that you're seeing is due to negative operating leverage that the company has seen. But FY25 was expected to be a consolidation year, and FY26 is expected to be a growth year when it comes to Newland Lab, and EBITDA increase is expected from a more profitable CMS or specialty mix that the company will see in FY26. Next stock on my radar is NOSIL. If you see, Again, weak set of numbers, intense pricing pressure and product dumping have actually impacted overall financials for the company. Volumes for Q4 FY25 grew 4% on quarter though, but if you see on a year-on-year basis, the company has not seen a very good kind of Q4 earnings. They've announced capex program of rupees 250 crores in the Dahej facility. So these are two stocks which are under pressure on the back of weak earnings. Sharmila, let me come to you especially for Newland Labs. Company is expected to have a good growth when it comes to FY26. Are you tracking this counter?
No, not really. And I think from a valuation perspective, it also looks a little expensive.
All right, got that view. And Akshay, how are charts looking when it comes to Newland Labs?
Well, look, it's more of a neutral price structure we are in right now. If you look at the broader price structure, it's been stuck in a trading range since long, and the trading range, which is evident in the last 3 months of trading activity, is that the stock is respecting the support of 10,500 but resisting at 13,000. So clearly a neutral setup. There is no trade which I see working out here. If you're holding the stock, then you need to keep a stop loss below the supports of 10,000 and try to look for an exit once you get levels of 12,500, because the broader technical setup still is not indicative of any major upside move as of yet.
Right, so that's with regards to Newland Laboratories. But moving on, PB Fintech, interesting one, because on the back of earnings, the management did a conference call where they said that they are seeing a slowdown in the first half of FY26, and from the way it opened, it hit a high of 1853, and that's when it actually corrected. Overall, if you go to see, the top line was better than expected. They've continued to deliver on the margins as well. The strong PAT number is a clear beat, and it seems they are on course for FY27 PAT guidance of 1,000 odd crores, but it's just the slowdown in the first half of FY26 that the street is concerned about. In terms of brokerages, you have a CLSA which has maintained an outperform. They've hiked the target price, interestingly, to a 1970 from a 1860. So that's a strong one coming in there. What they're saying is that the growth should moderate. Profitability will expand substantially. They're expecting margins to reach almost 16% by FY27. And they've cut their net profit estimates for FY26-27. And this is on the back of tax payment, which was at around 9% in FY25. In fact, the company will start paying full corporate taxes only by FY28. The stock still trading in the positive. Sharmila, quick view on PB Fintech, though the company has come out and said that there could be slowdown in the first 6 months. Seems to be like the street has punished it slightly from the way it opened. But are you seeing any major concerns? Because it seems from a CLSA note that the long-term growth prospects still look very strong.
Yes, I think you pretty much said it all. I reacted very positively to the numbers when I saw them, but obviously the stock corrected after the management spoke. And valuations are sort of pricing and everything at this point in time. So if you give good numbers, but you say next year will be slow, then market is going to react accordingly. But the long-term picture continues to stay good. I completely agree with you on that. So I think for now we'll just wait and hope that it corrects more, so that you can try corrects from here, so that you can look to buy.
Okay, and Akshay, your view on a PB Fintech, taking into consideration fundamentally short-term weakness, strength coming in long-term, are the charts also replicating a similar trend?
Absolutely. Similar trend is replicated on the charts. Longer term trend is intact. It is just the short term volatility you need to get passed through. So right now we are at a short term resistance zone, roughly around 1800, 1820, from where the stock has been reacting and trying to digest the aftermath of the results. So if in case it does correct from the resistance again, you can expect a slight dip around 1600, 1650, which would be more lucrative levels to enter on this dip. In case it doesn't and it settles above 1850, then we need to reconsider whether that dip will come or not. But as of now, it makes a lot of sense to wait for a slight dip before taking a buy on this counter.
Got that view. Well, next stock which is in focus is Godfrey Phillips. It came out with a Q4 number. Though if you see, revenue was up almost 70%, but it's the margin which has taken a hit. So revenue was up 70%, EBITDA was up 41%, but margin were at 14% versus 17% last year, and net profit was up 30%. Now the cost of raw material grew 45%, and the employee cost went up 42%, and this is the reason why we are seeing the EBITDA margin at 14% versus 17%, and this is the reason why the stock is under pressure in trade today. Sharmila, a quick view on Godfrey Phillips. Do you track this counter?
I mean, for the longest time, we have really two players within the tobacco space, Godfrey Phillips and ITC, and in spite of them getting punished, almost every budget there is something negative, and so much taxation, etc. But the revenue growth is constant, so I think people are smoking more than ever. So yes, I think you need to take the the corrections in your stride, because I think the long-term view for this is still very strong.
Got that view. Akshay, how are charts looking when it comes to Godfrey Phillips?
From a slightly medium to longer term picture, definitely stock making an all-time high is a very strong sign of a healthy uptrend in place. It is just that if you were to micro time it, whether I need to buy it at the current market price, if it's down by 5%, then the answer is no, because clearly there are some short-term negative divergences on the charts which hint that this slight correction which we have seen can extend till levels of 8150, 8175 zone roughly. So if you get those dips, that would be the right entry price in the stock. So a positive view in place, but not recommending to enter at the current rate. Dips at the levels I suggested would be the appropriate entry levels to buy in the stock.
All right, so that's Godfrey Phillips, 5% lower circuit on that one. Let's quickly pull up a Jubilant Pharmova. The company has reported a profit of 154 odd crores versus a loss of 59 odd crores in the previous quarter, and that's the reason why you're seeing that spike coming in on that counter. Stock at the day's highest levels on the uptrend with gains of 4% coming in there. I just have the profit number, but it's interesting. 9.7% increase in terms of the top line. 1,929 crores is what the top line number has come in at. But what is the clear outlier over here is the profit number of 154 odd crores versus a loss that was reported in the previous quarter. In fact, Varsha tracks this space pretty closely. Varsha, any inputs from the two numbers that are flashing on the bottom of our screens? Revenue, a 7 to 8% kind of growth, and the company has reported a profit this time around versus a loss that was reported in the previous quarter.
Yes, so revenue growth is the one thing which is in focus is other operating income, which has grown. So last year it was almost 122 crore versus 130 crore this year. And also, if you see on the margins front also, so cost of raw materials have also, they've gone up, but finance cost. So finance cost in last year was almost 73 crores. This time it's around 52 crores. So huge, reduction when it comes to finance cost. Even your depreciation cost has gone down. Your other expenses have also gone down. And one more thing, the last year company did had an exceptional item and of almost 168 crore, and this time around the exceptional item is around 3.3 crore. So this is also one of the reason why you're seeing the company turning profitable. So overall, good set of numbers. We need to wait for the press release to come. What were the volume growth and what were the products which lead to this kind of revenue growth?
The face of it looks to be a strong number, right? Sharmila, quick view in terms of Jubilant Pharmova, a profit that has been reported versus a loss, as Varsha highlighted, in terms of raw materials as well as finance cost. Those are the key monitorables, but volume is something that we should be waiting out for. But your quick take.
Oh, well, I think the sort of the valuations don't really permit you to really look at it closely as a buy, but the numbers per se are very, very satisfactory.
Right, so that's with regards to Jubilant Pharmova, but completely out of time. Thank you, Akshay. Thank you, Sharmila, for joining us on the show. From Varsha, the team that put the show together, and myself. Thanks for watching. In fact, lots more lineup on the other side. Please stay tuned to NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you
Hello and welcome to NDTV Profit. You're watching IPO Adda and the company in focus today is Bell Rice Industries. It's an auto component maker with a large portion of revenue contributing from the two-wheeler segment. The company's IPO is opening on May 21st and closes on May 23rd. Price between 85 to 90 rupees per share. It has a fresh issue of 2,150 crores. That gives a company a value of little over 8,000 crores at the upper end of the price band. And joining me today is Mr. Shrikant Shankar Bhalwe. He's the Managing Director, and Swasith Bhalwe, who is the Chief of Staff at MD Office. Gentlemen, thank you very much for joining us today. Beginning with Mr. Shrikant. Sir, give us a sense of the space you are in and the amount that you're raising, 2,150 crores. How is it going to be used?
So we are into automotive components. We supply parts for two-wheeler, three-wheeler, four-wheeler, passenger car and commercial vehicle also. We are raising 2,150 crores. Out of that, 75% will go for the debt repayment and 10-25% will remain for general corporate purpose.
Swastit, can you come in here? You are one of the leading suppliers to the two-wheeler industry. One of the biggest issue with the two-wheeler industry is the kind of slowdown which we are seeing. We are not still pre-COVID level in terms of sales. So how do you see this industry and how you have been growing for the past couple of years?
So firstly, on the industry, we're very optimistic on the industry. I think you're correct that we have still not reached the FY19 peak volumes that had been attained. But we feel that in the coming years, the two-wheeler will be a very fast-growing vehicle class. Based on various industry reports and news channels, we expect to grow at higher than 8% CAGR going forward. So we expect this to be a high-growth industry. Our growth has been very much in line with the two-wheeler industry. If I also just give you a statistic, over the past 8 years, we've grown at an 11.5% CAGR, while at the same time, the two-wheeler industry in terms of volumes has grown at 1.4%. So that's been an area of outperformance for us historically. And as the two-wheeler industry grows in the future, we'll also make a best end of it to move along with it and faster than it.
Mr. Shrikant, if you can come in here and give us a perspective on how you've been able to diversify yourself within the industry from being one of the largest chassis supplier to various other components and products that you're offering to both two-wheelers and four-wheelers?
So we are supplying components for two-wheelers. So we make side stand, main stand, chassis, brake pedal, gear change lever, swing arm. So whatever you see into scooter or motorcycle, whatever in the sheet metal, I think we are doing major of the parts, and we have the strength of that experience for last so many years. And we do make plastic parts also. So we do plastic molding, we do plastic painting, and followed by some assembly work also. So typically, the value addition is very important, and we started with a small press components, then press components plus manual welding, then press components plus manual welding plus robotic welding. So that is the way we got into entrenched in the value addition, and then subsequently we went for the ED coating, powder coating, assembly work, and that is the way I think is the right way to grow.
So, Sid, if you can come in here with, your exposure to two-wheeler is around 65%, and we are seeing a slight slowdown in two-wheeler, especially in the last quarter or so. How do you see that translating into your operations, especially for the last financial year? Because we have the financials only for the 9-month period ending December 2024. So, how do you see that entire performance?
So, while the two-wheeler industry has been, there's been maybe a bit of slowdown in the past couple of months, we're still very bullish on it. In fact, we think the recent tax cut announced by the government of India is a very positive incentive for consumption in terms of two-wheelers to increase. So we're still very, very bullish on the industry. Our performance has been robust. We've been playing on a large order book that we have accumulated over the past 2.5 years. And due to the large order book, we have been able to achieve good growth in the last fiscal year. And going forward, we expect to continue doing that.
I was looking at your EBITDA margin for the 9-month period. It came around 12.4%. Is there, and it's a slight decline on a year-to-year basis for the 9-month period. Is there a pressure on margins because of the kind of slowdown which is coming in?
We don't think there's a pressure on the margins due to the slowdown. We think the volumes still remain robust. Our top customers continue to do well and continue to attain market leadership. So in that sense, we are hedged against the industry because we work with almost all of the major OEMs in the two-wheeler industry, in the four-wheeler industry, and in the commercial vehicle industry. So irrespective of what happens, in between the volumes and market shares of our respective OEMs, we'll continue to do well given our large order book and our exposure to multiple different OEMs.
Is 12.4% the normalized EBITDA margin, or there is enough room to go up from here as well?
We think 12.4% is an EBITDA margin that we have maintained. Even if you see our EBITDA margin for fiscal year 2024 is close to 12.5%. So we expect that this EBITDA margin is something that we can definitely vie for going forward.
You mentioned about the order book here. Can you give us a sense of the kind of order book that you have, and how is typically an order booking that is done? Because you are in the auto industry, you work closely with the OEMs. Do you have a long, timeline of order books which comes in because of the kind of product launches and the rollouts that comes in?
Right. I think you hit the nail. Hit the nail on the head. I think the automotive component industry has a long gestation cycle for new orders. So first you get a RFQ, a request for quotation from your OEMs, after which you give a quotation, after which you talk about development timelines, and then it goes into a ramp up. So there's serial production, and then ramps up over anywhere between 3 to 6 months to kind of hit a peak. So from the RFQ to when the production goes to peak can be anywhere between an 18 to 24 month cycle, maybe even more sometimes. So we've been really persistent with the efforts with all of our OEMs, and there's a large order book that we have built today is due to the efforts that we've put in over the past 2.5 years.
Mr. Shrikant, can you give us a sense of the kind of order book that you have?
See, typically, we cannot share the names of the customers or the products, but I think our customers are doing good strategy on the growth, and we are part of that. I think that's what I can share you as of now.
What I understand is your top customer accounts for nearly 18%, and I understand that Bajaj being one of them. Is the slowdown having any impact in the future orders that's coming in?
No, there is no impact on that.
How do you planning to diversify it across powertrains, especially EV? Because now we are seeing an increased EV penetration coming into two-wheelers. Are you geared up for that kind of market, and are you agnostic to powertrains, Mr. Shrikant?
Yeah,
so typically what we manufacture is a frame, and frame is a agnostic product. It is required for ICE engine also, and it is required for EV engine also. So it is not we are not worried on that part. So maybe that is the good part, because it is required as a necessity, and same thing is for other parts that we are manufacturing in the steel and plastic. So it is part of the growth strategy. I think we are not worried on the EV happening at a what pace. We are de-risked from that side.
Just to add on to that, I think we have already been working with a few EV manufacturers.
Can you name some with whom you're working?
No, it's not correct. We can't share the names.
Okay, I understand that. My understanding is that you already have a capex program in place. You're setting up 3 facilities, one in Pune, one in Bhiwadi, and another in Chennai. What is the status of these 3 facilities? When are they going to come on stream?
Okay, so all 3 facilities are slated to grow online in the first half of this fiscal year, which is FY26. And across all 3 factories, we have orders from some marquee OEMs. So we expect this to not only increase capacity utilization, but to also increase our geographical diversity. So that'll allow us to become more closer to the customer, have a just-in-time inventory model to enable closer coordination, and thus take part in more and more order wins. I think the Chennai facility is the most imminent one, and there we expect our revenue to ramp up sharply.
Give us a sense of the kind of capacity that will be added and the kind of potential revenue if it goes to 100% utilization.
So in general, I think 100% utilization is something that's not possible in our industry, given that it's seasonal. Across months, there's a change based on various festivals and how the consumer feels to spend in certain seasons. So I think an ideal capacity for us will not be more than 80-85% on average through the year at its peak. So I think we can expect these facilities to hit their peak anywhere between the next couple of years.
So I said, Mr. Shrikant mentioned that you're going to use this fundraise primarily to reduce your debt. What would be the gross debt after the debt repayment? I think 1,600 odd crores is what you're going to use to repay the debt. What will be the debt which will be left on the balance sheet after that?
So if you see our gross debt until December, I think we expect to, of course, reduce that by 1,600 crores. I think it'll be tough to give you an immediate answer on what the gross debt is expected to be, because, of course, with increasing orders and increasing revenues, our working capital requirements may also go up. That being said, I think as a rule of thumb, you can assume that 1,630 crores will be delevered immediately. And the remaining general corporate purposes, cash is fungible, so you can use it across multiple capex requirements, marketing requirements, R&D requirements. So we'll be using them as we see fit and where we see opportunity.
Mr. Shrikant, if you give us an idea of your material subsidy, which is based out of UAE, is, if I'm not wrong, it's called Balway Engineering Trading Company. It accounts for nearly 20% of your top line. What is the role of that company, and how does it fit into your operations?
So typically, I have 2 sons. Elder son is Sumedh, who has done his engineering from Purdue, and then he was with me for 4 years. And after that, he went to MBA at Harvard. and he just completed his MBA last year, and he has joined our business. For last 9 months, he's with me in my business, actually involved. And younger one is with me right now, Swasthit, who did his engineering from Wharton, and then he was working into US and McKinsey for a couple of months, maybe 1 year more. So both have been in US and they have a good exposure. And I thought that we should do a growth, and we should do growth in the domestic market, and we should do some exports also. So typically, when you start a relationship, there has to be legacy, there has to be a relationship, there has to be a presence. So I think UAE is a place which is connected to the Africa, and Africa market is going to be a growing market. So we thought that we should be connected with them, and our presence shows that our strategy is there, which is not a thinking by overnight. And in that presence, I think this presence of us is going to help us to have a very strong strategy.
So what kind of activity does this company do? Because it's a large chunk of your revenue which comes in.
Right. So in terms of the activities we do, it's mostly trading over there, trading in commodities. These commodities are the commodities that we also use in our automotive component business. So it gives us an insight into global indices, global materials, innovative materials that are coming up, materials that can be got through some sort of arbitrage. So it exposes us to multiple different types of metals and polymers and other electronic components, which we think are extremely core in terms of helping us in our procurement decisions in our automotive component manufacturing business.
Because it's a trading business, as you mentioned, normally trading businesses have a very low margin. Does it not suppress your margins?
It does suppress our margins on a consolidated level. That being said, we also look at our trading business and our manufacturing business separately. So the manufacturing business and the investment decisions over there are made, on a standalone basis and based on the new orders that are coming up. Similarly, when we, do take on any new orders in our trading business, it is looked at on a standalone basis. So, we maintain separate balance sheets, and thus it's very easy for us to track the growth, ROC, and EBITDA in each of these businesses separately.
So because we have the blended margin with us, which is 12.4%. So what would be a typical margin for your manufacturing and trading?
So I think that information is available directly on our website. Since it's a 100% owned subsidiary, it's available directly on our website for anyone to look at.
Finally, Mr. Shrikant, how do you see this business growing and diversifying from here, because the auto industry is also evolving on a faster scale with respect to technologies, with respect to powertrains and new kind of vehicles coming in. Will you be looking at expanding aggressively into non-two-wheeler segment as well? Because currently you have 65% coming from two-wheelers.
See, I always feel automotive industry is the backbone of the Indian economy. India is a very widely distributed across the length, width, and you can say northeast, southwest. It's a big landscape, and public transportation is not going to be a solution. There is a need of an individual mobility, and as you are aware, the India is a young generation. The youth is the big participative in the economic growth, and this youth needs the good communication mode for travel. For that, maybe even they get from school to college, they have to go to the college, they have to go to class. There is a need of a saving of time, going and doing the best and getting the good marks. So I think over there is a need of having a vehicle as a necessity, not as a luxury. So that is the big constant growth potential is what I feel. And apart from that, Indian economy is growing, Indian economy is at a rising, and our presence in the world map is going up. And in this perspective, I think automotive industry is going to grow. Now, what is going to be a strategy from our side is we want to consolidate, strengthen our current presence, and definitely as my both sons are joined, we like to do something definitely which is need of the part of our technology and something add as a new product.
Finally, Sursted, is exports on your horizon, because you get a lot of domestic revenue as of now? Are you going to look at export market for catering to global OEMs as well?
Yeah, I think exports does remain a priority for us, irrespective of the global tariffs that are happening right now. I think exports remain a huge opportunity for India. India is at the right place at the right time. We already do work in exports by working with some marquee luxury car manufacturers. So, we're kind of going from the whole breadth from a, two-wheeler industry to the luxury four-wheeler industry. So we already have exposure over there. And the order book that we have in the four-wheeler space will allow us to grow our exports further.
Well, that was the management of Bellrise Industries, a key player in the IPO space that we are looking at. So that's as far as where the primary markets action goes. But let's see how the markets are doing currently. Now, in terms of where the benchmark indices are headed, let's look at something like a Nifty 50 down in red, seeing cuts of around 0.2%. Let's pull out the point contribution table. Now, in the point contribution table, you'll see some bit of pressure building in Bharti Airtel on the back of the block deal which has taken place. Infosys, SBI and other stocks in red, while something like a Bharat Electronics has continued to buck the trend. It's in green again, seeing gains of over 2% in trade. ICICI Bank, ITC, other stocks in focus. As far as where the Nifty Bank is concerned, let's look at that as well. Nifty Bank currently seeing gain in red as well. Almost flattish kind of moves that we are looking at over here. But in terms of where the broader markets are concerned, broader markets considerably better than how the benchmark indices are faring. In fact, Nifty Mid Cap 150 is up over 0.9%. Nifty Small Cap 250 up over 1.5%. Let's also see how the overall breadth of the market is looking at. Let's see the advance decline ratio overall. Clearly advances in favor thanks to the broader market momentum that we are looking at. Almost at the ratio of around 2:1 is what we are seeing in terms of where the sectors are considered. Nifty Defense is one sector which has continued to remain in focus. Nifty Realty, another one, up around 2%, while something like Nifty IT and Nifty Healthcare are seeing cuts of over 0.8% or 0.4%. But it's the railway pack which is in focus, and we are seeing some bit of strong up moves here. But before we talk about railways, let's welcome in our guest Vaibhav Vidwani, fundamental research analyst at Bonanza Portfolio. Welcome, Vaibhav. Firstly, on to the markets that we are seeing, broader markets doing considerably better now than the benchmark indices is what you're seeing. Want to get your assessment on the overall market trends?
For me, like if we see continuous right now, our economies doing good, and the results which companies have delivered are not very bad. I will say are quite good as compared to the companies at international level. So, and if we see because of the international tension, investors are getting attracted toward the Indian market. So these all things guide that our market is quite positive from here.
Okay, so that's as far as where the sector market perspective is considered. But let's talk about sectors, and one sector which currently stands out is the railway space. Now we are seeing strong volumes in counters like RVNL, RITES, Titagarh with more than about 5 times of volumes. Ircon also another stock in focus, seeing 7 times of volumes here. Now this is interesting if we look at the last 5 days chart of these companies, with all of them considerably seeing returns of upwards of 19 to 20% each. But if you take the year-to-date in consideration, we are looking at cuts of around 3%. In fact, for Titagarh, it's seen about a 20% of a downtick. Last 1 year, seeing about a 27% of a downtick. So it's interesting how, the concerns earlier had been on the EPS growth of some of these companies, on the order inflows, on the execution side of it. So, Vaibhav, let me come to you on the overall railway space. What is your view? Now we are seeing these bullish trends coming back for the markets. So is this a sentimental kind of a drive that we are looking at? Are valuations still reasonable in this space? What's your assessment?
As per me, if we see as per the overall sector, after the defense, our government is focused on railway. So, and earlier, means in April, and there were expectations of a government meeting for the railway sector. for the railway orders. So because of the India-Pak tensions, that those meetings got delayed. So there were expectations earlier. So now the expectations are that in 1 or 2 months we can expect good orders in the railway segment, and which will support the revenue growth. So our government is focused on railway sector, and it is expected to in future also that they will improve this particular sector at very high levels. So we can and these all things will support the revenue growth of the companies in this particular segment. So that's why my view is quite positive, and it is expected that they will deliver a continuous robust numbers in upcoming quarters.
Okay, so while the expectation is overall on the optimistic side, do you have any stock picks in this space?
Yeah, means the potential stocks are like RVNL we can look for, Railtel we can look for. So these are the stocks which have delivered good numbers, and expectations are quite positive in upcoming quarters.
RVNL being the preferred pick here, but let's also talk about defense. You were talking about that as well, considering the Indo-Pak tensions that we've seen, the success of Operation Sindoor. If you are looking at the index, clear up move that we have seen. In fact, the index has been up over 17%. Paras Defense, Cochin Shipyard, seeing gains of over 12%. In fact, Paras Defense is locked in an upper circuit today. Garden Reach and Moscow have been another few counters that we've been seeing. Shipbuilders have seen some strong up moves in the last few sessions. Now, even if you talk in terms of where the volumes are considered, Cochin Shipyard, BEL, Bharat Dynamics seeing volumes of over 2 to 4 times each. Again, Bharat Electronics has been one of the standouts in the Nifty 50 pack also, with their programs like Akashtir, IACCS have been in focus, which have been deployed for the use of Operation Sindoor. Even Jeffries came out with a note on the overall defense space, saying that if you look at the defense indigenization focus from FY14 has been on a steadfast, with now the company seeing revenues in double digits. So a double digit is kind of the growth we are looking at. Most of the Q4 results also that we've seen have been on the stronger side so far. Hindustan Aeronautics, Data Patterns, followed by Bharat Electronics being their top preferred picks in this space. They are expecting to see double-digit EPS CAGR growth in medium term, along with some healthy return ratios. So, Weber, in the defense space, if we look at the 6-month, 1-year returns for this, 23%, 54% of an upside that we are looking at. Is this now that there are prospects of high orders, high ordering pipeline, considering more investor confidence in even the government confidence on some of these domestic manufacturers out there? What is your overall outlook on this space? Do you see that the valuations continue to remain on the healthier side, and if you have like stock picks in this space?
So if we see in recent Mission Sindoor, India have used their most of the weapons which were domestically productions have done. So, and now what India is focusing, they are trying to become a exporter. Earlier we used to be an importer. So these all things are guiding that in future we can expect good order growths. And if we see, like earlier, we were importing near about 65 to 75% of the things from the other countries. Now we are importing only 35%. So these all things that like we are reducing our imports, and we are also focusing on exports, where the focus countries will be France, Armenia. So these all things guide that in future these companies in defense segment have potential to deliver a robust growth in their order book, and that's why we can see a good movement in defense stock in near terms, and in upcoming quarters we can even expect good numbers from the defense stocks.
Okay, so that's the view that we have for the defense sector. Thank you, Weber, for joining on the show and sharing your insights on the various stocks that we've discussed. But that's all the time that we had on this edition of Profit Top Trades. Stay tuned for India Market Close coming up next.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome. You're watching India Market Close. I'm Harsh Saita. With me is Neeraj Shah. Let's quickly look at where the Nifty is settling in at today. We're just about the flat line, but slight negative bias in that sense. We're holding 25,000. Let's look at the intraday chart as well. The Nifty Bank also very similar texture. It's been fairly range bound today, but we've traded in just 100 to 120 point range, and we've just briefly moved in spikes. Other than that, it's been very range bound day of trade in that sense. We're 50 points off the highs, but after yesterday's late rally, it's not a bad day at all, at least on the Nifty 50 index. Why is it sulking? It's largely because of IT stocks, because those are some of the key contributors. But before that, let's look at the heat map. There you go. Bharti Airtel, one of those which is down in trade. That block deal by Singtel, keeping that stock a little bit under pressure. Shriram Finance is the other one. This has been fairly volatile as well in that sense. When moving up, it's been fairly sharp, the movements, and so have the movements been moving down as well. IndusInd Bank, well, the story continues to unravel. New problems continue to emerge, if I can call it. You look at some of the IT names. Those are the other laggards, and HCL Tech and Infi down nearly 1.5 to 2%, a Wipro also down 1%, and a Tech Mahindra also featuring among those names. So IT stocks clearly are one pocket of the market which is seeing pressure. But what a run BEL has had this week, 4% higher, and the Nifty Defense surely is the sector of the week. It's been a phenomenal run. We'll of course look at the Nifty Defense at close, and I'll be fascinated to see how we've moved all through the week in Nifty Defense. But some of the other names doing well. Bajaj Auto is doing well, and Eternal featuring Tata Consumer, HUL. So some consumer facing names definitely doing relatively better in trade today. Let's pull up the contributors as well, and within the contributors you'll see some of the heavyweights doing okay, and ICICI, Reliance, ITC within that pack, but BEL really standing out. Nothing material at least among the gainers. Among the losers, you can see Infi, HCL, Feature, along with an SBI, but the meaningful contribution is by Bharti Airtel. So no real big movers on either side, as you can see. Let's look at the advanced decline and the breadth. Fairly steady, right? So the broader markets seemingly doing better, evidently, at least from this graph. 1550 gainers, just to about approximately 700 odd losers. Let's look at the mid cap and small cap indices before we go to sectors. 1% higher on the Nifty mid cap, so we build on those gains. The Nifty small cap of 1.5%. So this is where all of the traction is coming from, essentially, and we are sitting at the high point of the day on both of those indices. Nifty range bound, but these two buzzing in trade. Let's look at sectors as well. Within sectors, you'll see, of course, defense 6%, phenomenal move. Realty is up 2%. Within broader markets, that's the one that's doing fairly well for itself. But outside of that, auto, FMCG are just some of the sectors which are doing okay. Nifty Bank absolutely flat. That's been the contribution, and that's been the type of story we've seen through this week. Nifty IT down 0.8%. So that's where some pressure is coming from, and pharma has a slight negative bias as we speak. That's how it's really shaping up. But it's that kind of a time where it's very important to understand direction. At this point, we're going upwards. Ruchit Jain joining me from Motilal Oswal. Ruchit, tell us, where do you see the direction now? Do you see a meaningful breakout on either side from here? Do you see that happening?
Yeah, hi, very good afternoon. Well, in last few trading sessions, we have seen a good follow-up move in the index as well as in the broader markets. In this week, we started with a breakout above that important 25,550, 24,550 resistance, which was the 61.8% retracement of the entire previous downtrend. And post that, the follow-up move has also been good, where in any decline or consolidation, that previous resistance of 24,600, 500 acted as a support, and now in fact we have even surpassed that 25,000 mark. Now the good thing has been over this entire week, which has gone by, is the market breadth. If you look at the advanced decline ratio, the overall advanced decline ratio has been quite positive. And this, of course, has been led by more of a FIS buying, which we have seen in the cash segment, in the index futures also, except one day where they found when they announced some long position. I think overall they have done quite good buying in the index futures as well as in the cash segment. So we believe that this uptrend is likely to continue going ahead. Today also, in spite of index being within a range, we can clearly see that the momentum is more in the broader markets. The advanced decline ratio still remains healthy. So on the index side, we expect limited downside from here on. Whatever corrections would be there would be more of a time-wise corrections rather than price-wise corrections. And we expect markets to move gradually higher towards 25,200 marks first, followed by 25,500.
Bullish as ever, 25,200, thereafter 25,500. Ruchit, a bulk of the action is on broader markets, so I'll come there. But talk to us about the Nifty Bank as well. Again, we've seen a good solid move, at least over the last 6 months. The Nifty Bank has for a prolonged period of time outperformed the index before the index has caught up now. What's the sense like with regard to that one at this point?
So in this leg of uptrend that we started since mid-March, I think clearly the leadership initially was taken by the Nifty Bank Index, where the banking and especially the private sector banks in the NBFC space showed a decent outperformance. Now the movement has shifted more to the broader markets, but the trend for the Nifty Bank Index has not changed to negative. I think what we have seen in this entire last 1 month has been more of a time-wise corrective phase within an uptrend, and the index has managed to hold its 20 DMA support on a closing basis. We have not seen index closing below 20 DMA, I think, since 8th or 9th of April. So till that level is intact, which is now around 54,400, till the index is stable above that 54,400 mark, I think we would see a resumption of the uptrend quite soon in the Bank Nifty index. But yes, initially what had happened in the month of April or during the later part of the March, that the other sectors were not doing well. It was very selective Nifty bank, NBFCs or some of the defense name which have started gaining momentum. So, there was a good relative outperformance. But now if we see last 1 week, the broader markets have started gaining attention. Many of the other sectors have started participating where buying interest is there. So I think we may not see that kind of relative outperformance, but the trend would continue to remain positive, and we should see a gradual up move towards 50,000, 57,000 in the bank nifty as well.
No, but the beauty though for today's trade, yet again, if yesterday was a day when the large caps outperformed, it's back to business today, which has been the template this week, that the mid caps and small caps are doing so well, and 1.48% is quite stunning, really. I mean, as much as people are skeptical about small caps, including Lawrence Balanco, saying that large caps might probably do better, it's very heartening to see the small cap activity right now. Harsh, won't be surprised if in the next 1 month, which is the month of June maybe, or mid-June, we'll see a flurry of OFS, and IPOs activity coming back. So yeah, definitely something to watch out for.
Evidently so. In fact, that's the one question which was on my mind since the last couple of months, that now that we're starting to see a bounce back, when does IPO action start? Because it's been subdued for a very long period of time.
Yeah. Most certainly.
And the other piece also, Neeraj, is that earnings, some of the numbers, at least in broader markets, may not have been outstandingly impressive, but they've just been in line, and even in those situations and circumstances, you have strong moves on stocks. So all indications of sustaining everything that's playing out, right? I mean, that's just...
Most certainly. In fact, Ruchit, come in then. Therefore, one is your ideas, and two, I'm just asking you, I mean, for somebody who doesn't want to sell, so give me, if people can buy into a Titagarh Rail, Cochin Shipyard, Garden Reach, Mazgon Dock, Jupiter Wagons, railways and defense are on a roll.
Yeah, so I think railways, I think, which has started moving since last couple of days only. But defense, if you see as a space, since the month of April itself, we were witnessing very good price volume action. In fact, the later half of the March month itself, we were witnessing very good price volume action. The uptrend started at that time, and I think this is just a continuation of the trend we are seeing. The kind of volumes, Neeraj, that these stocks are witnessing, even after an up move of about, almost many stocks have rallied 40 to 50% from the lows, or even more than that. But still, we are witnessing good volumes happening even after this rally, which clearly indicates that this is likely to extend further on the higher side. There could be in between minor corrections, but not expecting any significant reversal or any kind of underperformance in the defense space. So I think this uptrend is likely to continue going ahead as well if volumes are happening even at current levels. Now, railways as a theme, I think should work out in the short term. Because many stocks, if you see stocks such as Titagarh is there, Railtel is there, they have formed a good support base. In fact, these stocks have seen a good consolidation of about 2 to 3 months. Last 2-3 months, we were not witnessing any kind of selling activity in these stocks. Rather, they were more consolidating within a range. And now we have seen good volumes action coming in when the overall markets have resumed the uptrend. So I think both this space, railways as well as defense should continue to do well going ahead.
Okay, stocks, Rajit?
Yeah, so a couple of buy recommendations, where the risk reward ratio is also favorable at current levels. One would be Hudco, where the stock has been gradually forming this high top, high bottom structure. Last few days, we have seen some consolidation entirely above its important 200 DMA support. And the stock is now on the verge of a breakout of this consolidation. So Hudco is one stock where still we have not seen any significant up move in last few days. So risk reward ratio is still favorable. One can buy with stock below 223 for potential targets around 250. And Eternal is another stock which we have also recommended to go long on. So primarily about, I think, 3 to 4 months of consolidation has been seen in Eternal too. And that too after a good price-wise corrective phase from its all-time high. So this is one space stock where we believe that the stock has done a bottoming out process, and we should see a run-up rally soon in the short term. So Eternal can be bought at current levels with stock below 235, expecting target somewhere around 260.
Okay, right, Ruchit. Thank you for those views. Stay with us because you're going to speak with the management of JB Pharmaceuticals. We have Nikhil Chopra, our CEO and whole-time director, joining us. Nikhil, good chatting. I'm Harsh. Let me first start off by asking you, the growth clip over the last 3 to 4 years has been extremely solid. I won't just talk about FY25 or Q4 in particular, but the last 3 to 4 years. How sustainable is this kind of 25% growth clip number, at least on the top line? And where will it come from? Because some of your businesses, for example, CDMO, which are higher margin, can have the ability to grow faster, and their share in the mix, there is scope to expand that.
So Harsh, good to be on NDTV Profit. And I think very good question that you're asking. You're asking about the entire journey that we have traveled for last now 3 years, 4 years, and how does the medium-term outlook look. So the way we are poised as a company, India business contributes now close to around 60% of the revenue. And India, we have been growing at a CAGR of around 12 to 14% x the deals that we have done. Market growth in India is around 7%, so we handsomely beat the market growth, which will be sustained. I was hearing just before you were talking to one of the guests, you and Neeraj were talking that results are okay, but if you are able to sustain that growth and makes better profit and able to invest right back in the business, that is what the model we are seeing in the coming time for JB. So our profits always will be growing better than the top line. We should be able to grow close to 12% in the coming time overall, short to medium term. Top line 12%, and profits we want to grow around 15%. That is how the outlook is, and this will more be coming from India. India will be growing at around 12 to 14%, backed up by solid volume growth. Our volume growth is around 6% as compared to market volume growth of 2%. And the portfolio that today we are positioned in India, 70% of that portfolio is progressive. That gives us a lot of confidence in terms of how we can harness this portfolio more in the chronic space, more in the lifestyle diseases, be it cardiology, heart failure, lipids, hypertension. Equally, I think the company has done fantastically well over the last 2-3 years in the area of probiotics, pediatrics, and this will be able to sustain for short to medium term in the coming time. Also, what you are asking about the world of CDMO. CDMO has been a fantastic run for us. CDMO in 2020, when we came in, was contributing 5% to the revenue, which was $10 million. Today, CDMO is contributing 12% to the revenue, which is $50 million. And this $50 million, the vision that we have kept in next 4 years, we want to take this $50 million business to $100 million. Our average run rate per quarter this year has been 110 crores. And this business happens in the world of lozenges, and entirely this business happens across the globe outside India with some of the big multinational players, more the consumer space, more in the area of cough and cold. That is how we are positioned. Now, fortunately for us, last couple of years, we have been working on some big 4 or 5 marquee projects, be in the area of ORS, be in the area of lozenges now going to Europe and US. Already we export our lozenges to South Africa, Russia, Southeast Asia, Middle East, South Africa, but now we are getting into Europe and US market with lozenges. We are getting into a new formulation for cough and cold throat spray. We are getting into some tie with for the injectable business for a company in South Africa. So a lot of progress that we will be seeing in this business in the coming time. So right now the run rate is 110 crore for FY25 every quarter, which is around 440 crore business. FY27 April onwards, we see this run rate from 110 going to 150. A CAGR growth of 15%, that is what we see in this business, and more it will be margin accretive. So overall, 12 to 14% growth, India 12 to 14% growth, CDMO, company 12% growth. We have been also fortunate to raise our guidance in 3 years every year. If you look at the EBITDA margins that we delivered were 26.3%, that is 1032 crore. The guidance was 25 to 27%. Now, yesterday in our investor call, we have revised our guidance from 27 to 29%. In that range, we'll be able to deliver EBITDA margins. This all will happen with better product mix, driving the efficiency, and more of the EBITDA margins will be coming from the top line.
Point taken, sir. So, I'll push you a bit with regard to margins, but I just want small correction. The last 4-year revenue CAGR is 17%, so not 25. 25 is the domestic formulation business top line growth over the last 4 years. So just small correction there. But I want to sort of talk about margins for a couple of minutes. What is it that is driving margins consistently higher? Because that's where a bulk of your profitability push is coming from. And what makes you confident of this, of hiking this margin guidance to 29%, and any downside risk to that?
So if you see the 4-year journey, India was contributing 45% to the revenue and CDMO was contributing 5%. So total was 50% in 2020. In 2025, if we fast forward, today India is contributing close to 50, 57, 58%, and CDMO is contributing 12%. So that contribution going up of India and CDMO is the gradual jump that we have been seeing in the margins. And this close to 70% today, what contribution comes from India and CDMO, we want to take it to 80%. That is what is a trajectory which will help us to improve. That gives us a lot of confidence. And within India, if you look at today, 55% of business is coming from chronic space, where there is a lot of refill, a lot of adherence, and some of the therapeutic areas that I have been talking within India chronic space, we are leaders in the category, like hypertension. We have a big franchisee called Silacar T. Equally, we have done fantastically well. Our 6th brand now entering in the top 300 in IMS is Sporolac, the probiotic brand which we acquired. So a lot of ingredients are there which will help us in terms of growth aspirations that we have put in place for India, 12 to 14%, which in turn will be margin accretive because a lot of contribution will be coming from chronic and semi-chronic therapies. Downside is we are trying to do something in a small way in rest of the world branded generic business. That business is a $50 million business. Unfortunately, that business has been growing at high single digit. But what we have done is in last 3 years, we every year have been filing 10 products every year in the form of dossiers for this markets, that is Sub-Saharan Africa, Latin America, Southeast Asia, and Middle East. These products will start commercializing in FY27. Up till now, the business that we do in rest of the world, brand and generic world, is $50 million. 50% of that business is tender. In tender, there are risks that you lose the tender because of there are companies which are competitive and they just supply the goods at cost of material. So there you see some pressure points which we have been facing in some of the markets, historically in South Africa and rest of the world market. Otherwise, the focus continues to remain in India. Focus continues to be the world of CDMO, and the products that we are trying to file and get registered in rest of the world market are all progressive in nature. So we'll be able to demand better pricing and it will be all prescriptive in nature.
Nikhil, good afternoon, Neeraj here. Quick follow-up to that and then a question on CDMO. But these products that you said that you're filing which commercialize in FY27, does it give a fillip to your revenue run rate growth FY27 onwards? I mean, as Harsh said, was probably around 17% CAGR for the last 5. Do you reckon that you could actually eclipse those numbers FY27 onwards with the commercialization of these molecules?
This, Neeraj, just to correct you, that 17% CAGR growth is backed up by the 5 deals, acquisitions that we have done in India.
Fair.
That is how you see the 17% CAGR growth.
Be that as it may, organic plus inorganic, not a problem.
Yeah, organic. So what will happen with this work that we are trying to do in the rest of the world market? The business growth is 8-9% if you look at. But this will propel up the growth to around 12 to 14%, which will happen. But more benefit will come in terms of the margins because this product will be at a price point where we'll be able to take price increases, we'll be able to generate better demand and we'll be able to command better pricing, which today we are not able to do in our current portfolio because it is more commoditized portfolio. So you will see in the coming time with what we are trying to do in India, CDMO in some parts of BGX, I think mid-teens growth will be more than happy if that is what we're able to demonstrate. But net, the way we look at our profits have to grow better than the top line.
Which they will. So that's why you reach 29%. Okay, I understand. But if you do 14% organic and nothing stops you from continuing in the inorganic moves, right? I'm presuming with size you'll probably have better opportunities. So are you saying that from 17% CAGR you will go down to 14? Or do you believe 14 organic plus inorganic means that you might actually be able to eclipse 17%?
Right now, short to medium term guidance is 12% growth. Let us look at from that
organic and inorganic
is 12. No, only organic as is on the existing portfolio of 4,000 crore. Okay. If we buy anything in India, it will be top up. And FY27 onwards, when we start registering our product, our market projects come into place, you will start seeing
14%.
See, if we don't do anything, Neeraj, if we continue business as is, I see sometime mid of FY27 by. But if we buy and do some inorganic acquisitions, then the growth
it'll be
will
higher.
propel up to what figures you are revealing. Yeah.
Okay, and this 29% also will be from FY27 when you enjoy the benefits of these commercialization molecules. Okay, just one quick.
No, FY27 is the immediate guidance to 27 to 29%.
And then it improves, you are saying.
Yeah, then we'll see if God will be kind for us, we'll improve. So guidance for the current year onwards, the guidance is 27 to 29%. That is how we'll range. And we've been fortunate enough that we are always on the higher side of the guidance that we have been committing.
Okay, Nikhil, just one final question from my end. CDMO seems to be the buzzword, save for one or two firms. Almost everybody in this pharma space who's got the CDMO angle to themselves have delivered very solid numbers and spoken very constructively of the quarters ahead. I've heard you speak about higher proportion of CDMO as well. Could you give some color there very quickly? We are out of time, but yeah, just one last question from my end, please.
So Neeraj, our CDMO is a bit different as compared to the way understanding of CDMO is spoken.
Okay.
Just for you to give a flavor, 70% of our CDMO comes in the form of lozenges, cough and cold across. I can't take the name of brands, but we do big manufacture of big brands across some of the big market consumer players. So 70% happens in the world of lozenges. That is how, and this goes to South Africa, Russia, this goes to Southeast Asia, Middle East, Sub-Saharan Africa, Australia, New Zealand, Canada, and now we have got the entry in Europe market, and now in a small way we'll be getting into the world of US market also. And this lozenge, and we are the 5th largest globally in terms of capacity that we have for lozenges. We have the capacity to manufacture 2 billion lozenges annually. Last 3 years we've been manufacturing 1 billion lozenges every year. So that our CDMO is a bit different. But now what we are trying to do is to get into different formulations within the CDMO space, more in the consumer world. Throat spray, stick pack, unit liquid dose. So we only manufacture branded products in the world of CDMO. We don't do a P2P work in the world of CDMO. So our CDMO touchwood has been margin accretive. It requires a lot of developmental work, and our plants are all regulatory approved. That is how we are positioned in the world of CDMO, and we are very much optimistic. What I was telling you, that there are some iodine-based products where the projects, where some commercialization will happen in a big way for some of our products in the world of CDMO. Equally, we are looking to have a big ORS-based project with one of the big global consumer company, which will start commercializing in mid of FY26. And we are trying to do something in the world of lozenges, which I told for Europe and US market. So these are 3-4 things. And equally last, we also have developed a formulation in the form of throat spray, which we are very much optimistic that this in different drugs will be able to deliver to our partners. So that is what we are trying to do in the world of CDMO, not like traditional work with many of the companies do.
Thank you so much, Mr. Chopra, for joining us this afternoon. Both Neeraj and me itching with regard to more questions on your business, but we'll have to let you go on that note.
Thank you, Neeraj. Thank you, Harsh, for having me on your channel, and we'll be more than happy to connect with you in the coming times.
Perfect. Thank you so much, sir. Very kind of you. Ruchit's still with us. Now, one stock absolutely flying in trade. By the way, Imami's numbers, so earnings coming thick and fast. Imami's numbers at the bottom of your screen. Ruchit, I want your quick view with regard to Dhanuka Agritech. The stock is up 12% on the back of very strong Q4 numbers. Quickly, what's your view?
So overall trend remains positive for the stock because the kind of volumes that we have seen in the stock today, and then post the numbers, that it's a speak that a lot of buying interest is there in the stock. And I think in the short term, we should see further high levels, maybe towards 1800, 1850, which were the previous highs in the month of September 24.
Okay. Varsha is in fact with us, 10% higher on the counter. Very, very strong numbers. Varsha, take us through the numbers and give us the rationale as to what's happening.
Yes, thank you for that. So yes, good set of numbers. Revenue is up 20%. Now EBITDA is up 37%. Now one of the reasons why you're seeing EBITDA growth is decrease in other expenses and also the change in product mix that the company has been doing. If you see, EBITDA is up 37%, but net profit is up only 28%. Now one of the reasons is the net profit impact that you're seeing is led by finance cost, which increased 2.5x, and depreciation cost also increased 32%. But on the international expansion, though, they're planning to expand over 20 countries, including Latin America, Europe, Middle East, Africa, and Asia. And also, on the future outlook, though, management expects a double-digit growth trajectory when it comes to top line and around 21% of growth in the bottom line, despite challenges that the agrochemical industry is going through. And they anticipate revenue growth of 10 to 15% from the acquired products in the next few years, and they're also focusing on enhancing marketing efforts when it comes to existing products to boost the volumes.
Okay, thank you so much for that, Varsha. Of course, evidently very strong profit growth as largely driven by margin expansion. That's how it's playing out. Now, earlier in the day, in fact, the other stock in focus was Patel Engineering. We took the company and spoke about it on KYC, which is our show at 11:30, and we highlighted the company is lowering cash flow trends among other key concerns, and we asked the management also about it, and they suggested that the trend will likely continue. There will continue to be pressure with regard to where cash flow from operations is concerned. Led to a bit of an impact on the stock price. That one was down around 1% or thereabouts immediately post our interview. So just kind of marking that out, something to keep in mind, some great takeaways coming from there. They said no growth expected in FY26 versus FY25. They have literally doubled in terms of their receivables, which were sub 250 crore, have gone to sub 550 crore in a matter of a year. So very, very large increase with regard to its receivable base, and they are expecting that receivables to remain elevated, and therefore some bit of pessimism slipping into the counter as well. A large part of the receivables coming from government, and therefore that pressure with regard to cash flows as well as the stock price. Anyway, what we're going to do is we're going to slip into a very short break. On the other side, we'll bring you all the chatter behind dealing rooms with our segment Heard in the Street. Stay tuned. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
All right, BHEL numbers on your screen, and just want to mark them. They should come up back again because the numbers missed estimates, I think, if not by a country mile, then by quite a significant margin. as a result of which the stock has come off a little bit. Now, it's a business that has the potential to do a lot. Somehow the quarterly numbers don't quite come out in the same fashion. So bear that in mind. I would reckon that the bottom line number and the EBITDA number would have disappointed the street. Okay, but that time of the show, wherein we get in Somit to talk about all the chatter from the dealing rooms in our special segment, Heard on the Street. Somit, yesterday's list really intrigued me. I'm waiting to see how would you surprise us today.
Well, Star Health is up 8% in trade today. Today in the list, firstly, it's GE Shipping now. The stock has gained more than 7% in trade. And dealers are indicating that there is a buzz of a potential buyback announcement that could come in from the company's side. Now, if you look at the cash balance of GE Shipping, it stands at close to 5,860 crore rupees, which is nearly 40% of the company's market capitalization. So keep an eye out for GE Shipping in trade. Second stock on the list is LIC Housing. Dealers indicate that smart investors have started to accumulate this counter at lower levels. Now, the rationale behind this is firstly the fact that it is one of the cheapest housing finance NBFC, and second, the growth guidance given by the management appears to be quite strong. Third on the list is Apar Industries. Dealers indicate that a large prominent FII investor has been a buyer in this counter of late, and that is one of the reasons why the stock has surged more than 45% in the last 8 trading sessions. PSU stocks like BML, Cochin Shipyard, Garden Reach, Ircon, RITES are buzzing in trade. In fact, the entire railway pack or the PSU pack has been buzzing, and dealers are indicating that PSU focused mutual fund schemes are a buyer in PSU stocks today. Aditya Birla, Invesco, ICICI Prudential, Quant and SBI all have PSU focused mutual fund schemes. So keep an eye out for PSU stocks in trade, given the fact that the cash levels also with mutual funds are at an all-time high on an average. And lastly, Premier Energies is the stock that remains in focus. Dealers are indicating that few HNIs have started to accumulate this counter on expectation of strong Q4 numbers. The company will be reporting its numbers on May 17th. So keep an eye out for Premier Energies as well.
So all of those and one more. Let me add one more to the list. Thank you so much, Somit, for that. Jubilant Pharmova, numbers coming in, revenue up 10%, EBITDA up 27%, margins at 18% versus 15.5%, PAT at 154 crore versus a loss of 59 crore, stock perked up 4%. I wouldn't say immediately on the back of numbers, because that spike up we saw sometime around 1:30 p.m. But nonetheless, up and away in trade is something like a Jubilant Pharmova. So that's the other one which is absolutely on a tear. Ruchit still with us, also joined by Neeraj Diwan, independent market expert, and Lakshmikant Shukla. He's the tech research analyst at Yes Securities, also joining us. Welcome both of you. Let me first take my question to Neeraj. Neeraj, something like a defense at this point, has something changed materially and structurally for it to be up 6% on, and after a week in which we've seen very solid gains, right?
Yeah, good afternoon.
Good afternoon.
Of course, defense stocks have been doing well, after the recent, issue that we had with Pakistan, and you saw that there is a need now where there's a possibility that the defense budget may go up further. But then you rightly said that after the stocks have run up, why today they again up so much? I think it's more to do with, now what I feel, it's more of a FOMO trade. I think the traders who have not really participated in this rally in defense stock, they are looking at buying options. So immediately, and the stocks have run up a lot. They've given a good correction. Like a Mozdok, which we were looking at 2,000, 2,100. That's what we were recommending. The stock has really run up now, close to 3,500. So, got a very good return from these kind of stocks, whether it's Mozdok or Zentech or the likes. But now at this price, I think the stocks, according to my understanding, should consolidate. Till there is some further news flow which comes, which is positive for them. But that will not come immediately. If something has to be done with some allocation, budget allocation, which also a long time, will come after, when the budget session happens. That's still a long time to go. So I think that now it's more of a, trader community which is trying to get some gains in the short term. But valuation wise, I think the stocks have run up a lot. So you may get some specific opportunities still where the stocks are still much below the highs and they're still doing well as far as operationally results are concerned. But general, I don't think there's too much to be done right now at these prices.
Okay. Well, it's just crazy the way this space has moved, right? And we asked Ruchit about what to do with some of those, defense names and railway names, and the railway rally is just underway just now. But Ruchit, can't let you go without talking about the kind of moves that have happened in some of those result-related boys. So before we thank you, I'll pick out 3 names and you tell us if you like any of those on the charts. One is KPI Green, one is Blue Jet Healthcare, and maybe we spoke about Dhanuka Agritech with you, but if we haven't, then that one.
So I think Dhanuka Agri already we have spoken, and amongst the other two, KPIT Tech definitely seems quite interesting if one is looking from a bit mid-term perspective. Now I think the price-wise corrective phase has already been done, where we got a positive divergence around between the 1,000 and 1,100 mark. And what we can see that now, when the IT space has started, showing some good up move, then the volumes in KPIT technologies have started improving gradually. And last 2 or 3 trading sessions, even when the IT is negative, we have not seen any kind of selling or any kind of pullback with higher volumes in KPIT tech. So there has already been signs of a relative outperformance within the mid-cap IT names in this name. So I think the stock has already moved up a bit. So in case if we get any kind of minor dips towards that 1,300 mark also, that would be a good opportunity to buy KPIT Tech. So this stock seems that it should see a relative outperformance within the sector going ahead.
Lakshmikant, let me come to you. Is there a view you have with regard to defense stocks? Because we've already taken the view coming in from Ruchit. So just quickly wanting your view before we move on.
Hi, good afternoon to you all. So regarding defense stock, that most of the defense stock had already sold higher. So I'm not expecting some more upside in these stocks. So I'm waiting for the pullback move so that I can see some sort of base formation. Then after I would like to recommend a few of the defense stock. And in my radar, we are closely watching the momentum in the BL, HAL, and Paris Defense. So I think in these 3 stocks are looking far better than if we compare from the other stocks. So I think that whenever pullback, we could see some sort of pullback and base formation toward lower level. Then after we can recommend for taking or initiating long position in these 3 stocks.
Okay. All right. The other pocket of stocks which are buzzing today are railway counters. And Ruchit, actually, before I move on and go to railway, let me quickly take a view on a Jubilant Pharmova. The stock is up 4.5%. Do you have a view on this one?
The price-wise corrective phase has already been done. I was just watching the stock a few minutes ago when we were talking about the results. We have already seen a decent correction over the last few months. Now it seems to be more of a time-wise correction phase or a consolidation in the stock. On the higher side, 1,000 is the immediate resistance, where we have seen in the month of February, the stock has not been able to cross that 1,000 mark as of now. So until we see any breakout above that 1,000, I think the trend should remain sideways, and then 1,000 to 820, 850 on the low side would be the immediate support.
Okay. Ruchit, thanks so much for joining us. We'll let you go on that note. Thanks for your views. Always good having you. Let me also quickly have a look at BHEL, because that stock also has fallen from the day's high of 260. It's now currently sitting at sub 250 rupees or just about 251 rupees a share. So the stock just able to hold 250. Lakshmikant, would you have a view with regard to a BHEL? Because of course they came out with numbers, but quickly your view, because plenty of movement on the counter.
After giving the consolidation breakout above the levels of 235, then after we have seen bullish momentum in this stock with the formation of higher tops and higher bottom. And day before yesterday, it has also reclaimed its 200 DMA. But in today's session, it has showing some sort of resistance near the levels of 260 to 265 zone. So I think that would be the upcoming hurdle for this stock. And it has also formed a gravestone doji kind of pattern pattern which is showing a profit booking coming from the higher levels. But if we look at the broader time frame structure of BHAL, so our view will be positive because it is still trading on its key moving averages until it hold above the levels of 235 to 238. We expect this upside move, and once the follow through move start coming, then we could see a higher level in the stock. For the fresh breakout, one should wait for the 260 mark. Once it taken out the 260 level, then after we could see a 280 to 284 range in the upcoming sessions.
And your picks for this afternoon, Lakshmikant?
I would like to recommend two stocks. First one is coming from the chemical space, that is Aarti Industry. So I have seen consolidation breakout in this stock with the formation of bullish candle, and it is also coming out of the base formation from the levels of 460 to 464 range. Now it is attempting to break its 200 DMA. So overall structure seems to be bullish in Aarti Industry. So one can go long with the stop loss of 460 and can expect upside move toward the levels of 499. Second stock which I would like to recommend, that is in this tower. So again, this stock has formed strong base near the levels of 390 to 392 zone, and today it has given consolidation breakout, and today it has also surpassed its key moving averages. So again, and we look at the indicator and oscillator. So again, they are showing positive sentiment for this stock. So overall structure seems to be bullish. So I am expecting the target of 425 with the stop loss of 395.
Okay, all right. So that's the view coming in on a couple of counters, which Lakshmikant has his eyes on. One of the other big movers today in trade, Neeraj, is something like an Angel One. The stock is up 9% in trade. You believe that some of these capital market plays?
DAM is up 9% today.
Correct.
MK is up some 4-5%.
Correct. So Neeraj, you think that some of these capital market plays are good bets? In fact, I was asking Neeraj Diwan whether some of these capital market plays are good bets at this point, and if so, how would he play it?
Let's ask Neeraj Diwan about it. Yes.
Okay. Yeah, I think it makes sense because the kind of movement that you see in the market, I think the volume will again pick up. I'm seeing that also with some of the clients that again, because now there's a possibility of churning your portfolio, you're getting some of your rates back, and we've seen some good data, client addition also coming from Angel One lately. So I think after the correction that these stocks had done because volume had dropped, so there was some concern there, but now again that's picking up. So they definitely make a sense. I think there's some more trading upside which should be there in the capital marketplace. Though I am more positive on something like asset management companies, like Nippon Asset Management Company. I think they long term. I think that's a very good company. Or asset management companies have a long term good horizon where you will get even the SIP monthly SIP figures. They'll trend upwards only as you go forward. So, and plus, the amount that is getting invested in mutual funds, that even when we saw the markets correcting in January, I think still you didn't see people holding back to the SIP. Still, that amount remains strong, which comes on a monthly basis. So I think they definitely have a good future. And as far as pure, brokerage or the capital market space are concerned, there also I think some more upside should be possible.
Okay, interesting. Okay, I'll have no such problems when I ask a question to Neeraj Diwan, but be that as it may, let's shift focus to railway stocks, which are back on track, literally and figuratively. Companies like RVNL, Rights, Titagarh Wagons are all up more than 20% in the last 5 days. Anushi Johnson to tell us the key trends she's picking up from this space. Anushi.
Thanks for that, Neeraj. So what we are seeing is in the last 5 sessions, strong up moves for some of these railway counters that we are looking at. In fact, a 20% of an upside is what we are seeing for our RVNL, rides, Titagarh, Ircon, something like Jupiter Wagons and other railway counters also buzzing. Now, this is in contrast to what has happened so far in the last 1 year or the year-to-date period that we are looking at, wherein Titagarh and Ircon has seen a cuts of more than about 12 to 20% each, while RVNL and rides have also been under pressure, seeing cuts of around 4% and 8%. Similar trends that we are looking in the last 1 year period. Also seeing where Titagarh and Ircon especially have been under pressure. So some bit of recovery coming for some of these stocks that we are looking at. Again, a lot has to do with the kind of sentiment also that has come back for the market. So railway stocks in particularly buzzing on that basis. In fact, if we talk about the volumes today, quite a lot of buzz that we are looking in terms of volumes. Rides and Ircon seeing about 9 times and 7 times the volumes compared to 30-day average. RVNL and Titagarh meanwhile seeing about 5 times volume compared to the 30-day average. Today's, if you just take news updates and recent updates in consideration for RVNL, the stock focus has also been on the recent order that they've received at the size of 116 crore from the Central Railway. Order size that we are looking at, order book of the company 97,000 crore as such. Now, if we go back to these last 6 months or so and see what has been happening in the railway space, there had been some concerns related to where the execution is. So execution was one factor. Other than that, in the third quarter, we had seen a weaker set of results. In the second quarter also, there were concerns related to that. So it's kind of the EPS growth and the revenue growth which were a bit of a question mark on the street. But considering new order inflows for some of these key players that are there, FY26 outlook would remain important, especially once they start reporting their numbers. So meanwhile, if we talk about rides which came out with its numbers just recently, we did see about a growth of 4%. 4% was a downtick that we saw in revenue, but it was the margins which were a standout. A 30% was kind of the margins that we looked at. In fact, we had a conversation with the management wherein they now say that they expect a 15 to 20% of growth coming back for the business versus the kind of degrowth that they had seen. This was the degrowth also that we had seen was in terms of their quality assurance and turnkey business, which had impacted the revenue. While there were no prospects of exports also that were there, they expect the exports also to come back for the business. Titagarh also, what we had seen was some issues related to the supply side from the Indian Railways, considering the procurement. So how that would fare out in fourth quarter again is something that we should keep a track for. But for now, overall, positive signs that we are seeing in terms of where the stock performance is concerned, a bit of recovery considering the 1 year and the year-to-date returns have been on the negative side. So focus would now remain on the execution and order flows coming back for some of these railway players that are there.
Interesting. Thank you so much, Anushi, for that. Neeraj Diwan, let me come straight back to you. With regard to defense, you seemed cautious. What about railways? Because that's the other theme which is clearly picking up. One, your sense with regard to why that is so, such a strong rebound. Anushi kind of, dampened the kind of sentiment that's there on railway, at least on the street that we can see visibly today. But it's been, or underplayed it to a certain extent, but it's been very, very strong, the moves. How would you play railways, if at all, and what do you reckon is driving this?
Yeah, I had been expecting railway companies to do well. So basically, the order flow again has picked up in the last couple of months. And though this year, the year ending 31st March 25, you didn't see that kind of a growth which we would have liked to see. But because the order flow has increased again and the order books are very strong, I feel the coming year or the current year should be good for them again. You should see growth coming back for these companies. And, after the run-up that we saw last year, the stocks had corrected a lot. You see stocks like Texmaco Rail or Titagarh Wagons or IRFC. They had corrected so much and they'd become, on valuation front also, they'd become attractive. Even say after the growth, the tapered growth that we saw this last year. So I think that's what is playing right now. So I think the expectations of the growth coming back in the current year, and I think that is what is playing on the stocks. And I think they should perform well even from these levels. And so the one caution thing would be that you need to be careful on which company at what price you're buying, because you can't just buy across the board, because some of them are definitely expensive even after the correction. So I think be selective, and I think there's still some upside which should be there for the railway companies.
Okay. Do you have a view, Lakshmikant, with regard to defense? Apologies, with regard to railways? Some of the counters really buzzing.
As we are seeing from the dashboard of yours, that most of the railway stock has already have a lot of heat up, and we don't have any recommendation view at current levels. So again, we should wait for the any pullback move or throwback move from the higher levels, and then after we could see any further correction, or we can say some reversal kind of pattern. Then after we can recommend for taking buying position in these stocks. So among these, I think IRCTC, one of the stock which is hovering near its 200 DMA, which is placed around the levels of 815 mark. And in yesterday's sessions, we have seen some sort of profit booking. So I think once it conquers the level of 815, then after we could see the further higher zone of 845 to 850, while downside the levels of 795 to 790 could act as the strong support for this stock. So I think this is the only stock where we could find good risk and reward ratio. But in most of the railway stock, risk and reward ratio are not favorable. So I think one should wait for the pullback move.
Taken. What about something like a RITES, Lakshmikant? Stock is perked up 14.5%, RVNL 8% higher. How much would you wait, and what are the levels that you look for in these two counters in particular, because both of them absolutely flying in trade?
See, talking about RITES, so RITES has given already a move of 14%. So now I'm expecting the levels of 265 to 260 zone, from where we could see some sort of rebound and reversal formation, and then after we could recommend for taking long position in it. But if we try to catch this stock at current level, then definitely what happened, one day we see huge profit, and another day we see correction in the same stock. So I think one should wait for the correct level for making entry.
Okay, so that's with regard to some names within defense and what you should look out for both on the fundamental and technical side. But defense is one theme along with railways that's playing out extremely well, and we have Anushi with us to give us perspective with regard to what's happening in defense, because not only is it up 5% plus today, it's up nearly 6% today at the very top. We've seen a bit of a cool off from that point, but it's up 17% for the week. What's aiding the up move in the sector? Anushi.
Right, it's every other session now that we are describing about what's happening in the defense sector. 1 week chart, if you are looking at 17%, is kind of an up move that we are looking at. In fact, in the last 6 month period also, we are seeing about a 23% of an upside, and 1 year about 54% for return that we are seeing for some of these defense counters that are there. Now, recently, in this 1 week, of course, the main focus has been on the success of Operation Sindoor, what has happened in India, Pakistan, what could this mean for the order pipeline of some of these defense companies out there. So a lot of now new prospects on how these order book visibility going forward would improve for these companies there. But coming to stock specific side today, Cochin Shipyard, Bharat Electronics, Hindustan Aeronautics continue to be in focus. We're seeing higher volumes in some of these counters. Cochin Shipyard, of course, also buzzing on the back of its Q4 results as well. Just 1 week, if you are looking at what's happening here, 34% is kind of an up move that we are looking at. Bharat Electronics, another one, 13% of an up move. Just yesterday, the company did notify also that how its key IACCS operations were used for combating this India-Pakistan situation, the drones that were there. So on the success of that, along with something like Akash Tir, how that was successful in combating some of these drones also that we are seeing. So several low drones of Pakistan. So Bharat Electronics has been buzzing on basis of that. Other aspects, if we are looking at what has happened other than is an interesting note which has came out from Jefferies now. Now Jefferies have pointed about the shift that has happened from FY14 to FY25 in terms of where the indigenization theme has played out. If we even look at the what has been the defense production, that has seen a considerable upside. Now about 2 to 3 times is kind of the return that we are looking at the defense production, currently level standing at the size of 1.4 lakh crore. PM Modi also lauded the Made in India equipment and points to further domestic manufacturing focus going forward. So again, meaning of how higher order prospects would be for some of these companies becomes a focal point going forward. Now, India's focus is also building on the global image and defense on the defense side continues. If we look at the defense exports also, roughly to the size of 23,600 crore is what we saw defense at end of FY25. And now the long-term view is that this should increase forward to 50,000 crore or so. Now, Jefferies' top picks includes the likes of Hindustan Aeronautics, Data Patterns, and Bharat Electronic. A lot of focus has been on these defense electronics play here, so that is something that we should be watching out for. Hindustan Aeronautics again saw about a 95% of an increase in their order book, so commentary would be awaited. They also have their conference call at 4 p.m. today. So, what could be the pipeline and the execution for some of this would be on a standpoint as well. Other than that, if we see the expectations also for improvement in the return ratio going forward, and the expectation that there would be like a double-digit growth in the EPS for the medium-term basis for some of these defense plays out there. So overall, defense strong up moves that we are seeing, driven by the sentimental factors along with what the expectations, how the companies that have reported so far their results also on a good point is what we are looking at.
Thanks for that, Anushi. Well, that's defense. By the way, Hyundai Motors numbers on your screen, and if that stock needed a reason to move ahead, sadly this quarter hasn't given it any. Single-digit downtick in PAT, single-digit uptick in revenues. I don't know what the estimates would have been, but suffice to say the quarter is very, very flat. So no big changes. We'll be talking with the management, I think, on Monday or Tuesday. So we'll of course talk to them about what happens next. A much fancied, if not a fancied IPO, a much spoken about IPO, also because of the size that they carried. Somehow the performance not quite out there. Autos have been a bit of a lull as well, Neeraj Diwan, in the last few days, but for the uptick that we've seen this week. What about four-wheelers? Is a Hyundai a good idea, or would you look at a Maruti or M&M maybe? What do you like?
Actually, M&M definitely has been an outperformer. We've seen the performance and the recent acquisition that they've been able to do. I think that is one stock which, any dip should be used to accumulate and should be a long-term portfolio stock. And I think all the segment they are in are firing well. And plus, if whatever the monsoon predictions are, if monsoons are also good, then even the tractor segment should do well going ahead in the next 2-3 months. So M&M would be the top pick in the sector. And besides that, I think four-wheeler, I'm not having too many options right now. Besides M&M, Maruti definitely looking at Maruti, but not really adding right now. I think we need to see some more, because the commentary by the management after results was not that encouraging. So we need to see a couple of monthly figures and see what is happening there to take a fresh view to at what price you can add Maruti again. But M&M definitely is the top pick.
And what about the two-wheeler space and the auto ang space? Is that probably a better way to play this entire theme with regard to auto, Neeraj?
Yeah, two-wheelers, again, TVS Motors that you've seen over the last so many quarters has been doing very well. So TVS Motor definitely should be the portfolio stock there as far as the two-wheeler space is concerned. And dips there should be used to accumulate. Besides that, I think even Hero Motor and Bajaj, after the correction that we've seen, I think there is definitely a case for some momentum which should take the prices up from these levels, and even for trading you should get some return from these companies, because now the valuations are attractive. So some improvement, even some improvement from the rural demand can also come in, which will help them going ahead. So I think these can also be looked at as far as trading is concerned. Auto ancillary, again, then auto ancillary is because most of the companies would be in the mid cap, small cap space. So one needs to be very stock specific and careful and selective the companies as far as the auto ancillaries are concerned.
So that's how it is. But we'll leave it at that. Thank you, both of you, for joining us. What we're going to do is we're going to slip into a very short break. On the other side, we'll get you top BTST ideas and picks for tomorrow. We'll get you the bull versus bear, and we'll get you fresh views with a fresh set of guests. Stay tuned.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
All right, back with India Market Close right here on NDTV Profit. Just pull up the markets once before we get on to some specific stocks in focus. Let's just look at the Nifty, and quiet, steady as she goes. Okay, Crompton has been the stock in focus, and on the back of Q4 earnings, which saw the revenue growth lagging expectations, but on the flip side, margins have had a positive surprise, and that's presumably why the stock is doing what it is doing. Mahima Johnson to tell us both the bull and the bear case for this particular stock. Mahima.
Right. So, as you rightly mentioned, in terms of its Q4 performance, the overall revenue growth lagged expectation. The street was expecting a slightly better growth in terms of its revenue, but overall gross margins as well as EBIT margins came in as a surprise, which is why we're seeing the up moves in the stock today. In terms of the overall demand outlook, we've seen that new premium launches are being seeded now, and that will support the recovery in the demand that has been muted because of delayed summers as well as subdued sentiment has been impacted. Plus, overall, we'll also see discretionary spending going up, and we might see that also boosting demand going forward. In terms of margins, overall strong growth has been witnessed in terms of the margins, but in terms of the segmental performance, strong growth in pumps and pumps was seen, and Butterfly Gandhimati revenue rose 11% YOY. But in terms of fans as well as lighting, there was weakness there. There was weak growth in fans, and lighting segment also fell by around 2% in terms of its revenue. In terms of the margin picture, ECD margins have remained flat so far, which is almost 23% of the overall revenue, but the overall margins on a consolidated front did improve, and this was on the back of a better product mix. In terms of the overall picture where it comes to valuations plus growth, profit CAGR growth in the past 3 years has been around 26%, but valuations don't look cheap for this particular counter, because right now trailing 12 month it stands at 40 times, which will go to further 33 times in 2026, and overall in 2027 it's estimated to go at 28 times, but 28 times still not looking cheap in terms of where the company stands. Lastly, in terms of just a quick update in terms of its key updates, and before I go to that, in terms of how brokerages are penciling in, it's interesting because as per Bloomberg, there are around 36 buys for this counter. just one hold and one sell. And Jefferies has had the highest target with a target price of 485, whereas JP Morgan has maintained a neutral with a target price of 365 on this counter. And lastly, in terms of key updates, the company has announced its foray into solar rooftop, and it's also considering a 3.5 billion capex in the next 2 to 3 years in the greenfield facility. So this is the overall view as to how Q4 has panned out for Crompton and what the bull versus bear case looks like.
Well, a case on either side. Thank you so much, Mahima, for breaking that down for us. Also joining us on the show, Aditya Agarwala, Head of Research and Investments at Invest for EDU. We have Nirav Ashar, Head of Research at Latin Manharlal Securities. Nirav, let me come to you first with regard to a Crompton. 7.5% move today, but the upside that some of the analyst community is seeing, some members, very strong even from here. 35+% at least over the next 12 months is what some analysts are building into this counter. Warranted? Do you believe that the turnaround is visible? Because the last 3 to 4 years haven't been particularly enthusing for this one.
Well, good afternoon and thank you for the invite. Good afternoon. This stock has been a rank underperformer, and of course they have done this acquisition of Butterfly Gandhimati, and a lot of time has been spent in consolidating and trying to stabilize the acquisition, doing the integration process, etc. I think while the street may be quite optimistic about the potential outcomes, I think this is a very, very reputed brand. It enjoys a very strong goodwill. And this time around, we've seen performance just coming in from the pump segment, whereas I think fans should have performed much better. There were a lot of expectations from the lighting segment also, but the competitive intensity seems to be quite high at this point of time. So I think it's a slight disappointment, still not very convinced about the story. And the capex which has been lined up, 3.5 billion, I think it's on the lower side. I think something more could have been desired as far as the capex is concerned. And as you rightly pointed out, the stock is looking expensive. It trades at 40 times, going forward 33 and 28 times. So it's not cheap in terms of valuation. So I think slightly disappointed with the result, and believe that this stock is likely to be a slow and a sluggish mover.
Okay. Aditya, are you more bullish with regard to this one?
Harsh, good afternoon. Thanks for the show. Yes, looking by the going purely by the chart setup and the kind of volume that you're witnessing in the stock, I'm more constructive on the stock. I think give it some time and stock will see levels of 390 to about 420 on the upside. These are the kind of levels that I'm looking at. Just to give you a small bit of advice, piece of something that I've noticed on the graph is look at the volume that we are witnessing in the stock today. The last time I see this kind of a volume was sometime in May 2024. And from there on, stock had witnessed at least a 25 to 30% upside in Crompton Greaves. So I'm not saying that something similar can be seen in the stock, but just purely going by the chart setup and the kind of volume that we're witnessing in trade today, I wouldn't want to write this off, this move completely, and would want to play this trade. If you already have the stock, continue to hold. If you're looking for a fresh entry, you can also get into the stock at current levels, place the stop somewhere around 340 odd levels, and look for a target of at least 390 to 420 on the upside. That's my take on Crompton.
Okay. Aditya, thanks for joining in. Any ideas around the whole renewable energy space, particularly the wind energy companies? And I'll get Nirav for the fundamental view as well. But technically first, Inox, Suzlon, Sangvi Movers, any thoughts there?
Hi, Neeraj. Good afternoon. Oh, definitely. I think Inox Wind is something which I've been looking at for some time now and looks very interesting to me on the chart setup. I think this is one stock which is gearing up for a big move on the upside. More of a consolidation as of now, just yet. We have not seen any momentum pickup, but just purely going by the chart setup and the momentum indicators, which is RSI and MACD, I think it's going to test levels of 210 to about 230 on the upside. So I would want to give some weightage to this stock, add partially maybe at current levels, And if it trades above 185, I would like to add more to the position. 170 on the downside is a very strong support area. And the reward that I look at in the stock is phenomenal from these levels, which is 230 on the upside. So yes, I would stick my neck out, buy Inox Wind, allocate some part of my portfolio to this stock.
Okay. Watch out for that one. Nirav, Asher, before we get to Aditya's calls, a word on this, because the wind installations for the month of April have turned out to be very, very strong. I think in terms of megawatts, wind energy, about I think 1 gigawatts versus 270 megawatts last April. You like this bucket?
Well, yes, as you rightly pointed out, the execution has been picking up quite fast, and the focus thrust has been on renewable energy. So, of course, the likes of Inox Wind and Suzlon, definitely they are likely to perform quite well going forward. And as you rightly pointed out, Sangvi Movers also could be a stock in focus. And I would like to point out one more stock, that is Apar Industries. This company has reported a phenomenal set of numbers, and incidentally it has got exposure to conductors, cables, and transformer oils. Now cables, they are catering to the renewable energy space, which is they make cables for the renewable energy space, particularly that is wind and solar, and this division has shown some a phenomenal performance. So I think there is a lot of proof to justify that the renewable energy space is really picking up momentum. Of course, we are seeing transformer makers also do quite well. That is because there is integration of the renewable energy with the national grid. So I think that is definitely triggering a lot of positive action in the HVDC related stocks, which we have discussed earlier also.
Yeah, okay, fair call. Aditya, are you doing any trades now here at these levels on the benchmarks at all? And what are the stocks that you're recommending?
Yes, Neeraj, I would go out and do some kind of a shopping, at least as far as index is also concerned. Nifty, I think so it's giving a good opportunity. Today is more of a consolidation sideways move. Interesting to see that VIX is inching closer to about 16. So everything seems poised for a next leg of up move, which would be coming next week. Maybe people are just anticipating that nothing builds up over the weekend, which is why the positions are light. I would like to take some position on the Nifty itself from current levels. Look for a target of 25,250 on the upside with a stop loss somewhere around shade around 24,950 to about 24,900 on the downside is a good support. I think Bank Nifty too from here on should see levels of 57,500 easily come next week. As far as trading ideas are concerned, I've got a couple of buy recommendations. One is Tata Communication. This is again one stock which had witnessed a massive correction on the downside and now is broken out from a sideways consolidation phase, more of a bullish head and shoulders pattern. Buy for a target of 1730 on the upside with a stop loss at 1580 on the downside. The second stock is MCX. Now all these exchanges are doing phenomenally well. You talk about BSE, you talk about the way NSE has been trading and the demand we are seeing in NSE in the primary market. MCX, I think, has a lot of catching up to do. And going by the chart setup as well, looks like it will do that catching up. So for a target of 7,000, I'll be a buyer here with the stop loss at 6,200 on the downside.
Okay, so those are two names, Tata Communications and MCX on Aditya Agarwala's radar. But Eureka Forbes posted a very strong Q4. Revenue jumped 10%, but margins expanded to 14%. Mahima here with a summary of the result. Mahima.
Right, so for Eureka Forbes, it was a fairly recent quarter in terms of the tough macro environment. Now, in terms of this particular quarter, it's the 6th consecutive quarter for double-digit growth per se for Eureka Forbes. In terms of number, revenue saw growth of 10-odd%, EBITDA saw a growth of almost 29%. Margins improved quite significantly to around 14.2% from 12.2%. So almost a 200 basis points uptick there. In terms of net profit, it stood at 49.5 crore versus that of 20 91 crores. So it has more than doubled this particular quarter. In terms of what has worked well in terms of growth, that was led by premium water purifiers as well as robotics vacuum cleaners, and company highlighted witnessing some green shoots in terms of service business as well. So there was some uptick in terms of service revenues as well. Now, what aided the profitability as well as margins, employee expenses including ESOP declined by around 4%. There was a 30% decline in terms of its finance cost and a 133% growth in its other income as well. So overall, PAT was also aided by a significant growth in terms of its other income as well. So this is the overall view as to how Q4 has panned out for Eureka Forbes.
Okay, Eureka Forbes 9.5% higher in trade. Nirav, Ashar.
Yes. I think my limited perspective on this, Harsh, might be that this is the magic of Pratik Pota working out, right? Simple. Yes. I mean, we know what he's done in his previous avatar. Correct. And I think with a business like this, and maybe I think in the one interaction that we've had with Eureka Forbes, they've spoken about how they want to get into a number of ancillaries. So both vertical and horizontal. And maybe some of that might be now coming to fruition after a bit of a lag. Maybe.
At least it's starting to reflect on the numbers in some fashion. And maybe you're right. Nirav, do you agree with that view?
Definitely. I think this water purification space has got a lot of potential going forward. And I think we have limited number of players in this particular space, and there is a lot of scope to diversify into various areas like specialty chemicals and water desalination exercises and water conservation, etc. So I think what this company has done is that they have been focusing on marketing. They've done a lot of upfront investments on the technology front and on the marketing front and on the manpower front. And I think all this is beginning to show results at this point of time. And I think things are only likely to get better from here onwards.
Aditya, what do you make of this one on charts?
A very strong move. Just as a disclosure, this is one stock which our clients would be having in their portfolio. This is recommended to them. So we're looking at a target of 640 on the upside. And again, going by the volume and the kind of move that we're seeing today, I think one should really continue to hold on to this position with an intermediate target of 610 and then 640 on the upside. If you're looking for a fresh entry, maybe wait it out next week, see if you get something lower, close to about 590, 580 could be a good entry point. But yes, it's a very strong looking chart setup and can see 640 on the upside.
Okay, so on the back of that, you have a Eureka Forbes also looking good even now. Signature Global though, that's the other one in focus. Q4 numbers posted. Pre-sales numbers fell around 61%. Let's get in Anushi to give us more perspective with regard to the numbers. Anushi, stock up 5%.
Right, Harsh. So what we saw in the fourth quarter was lack of launches, which has resulted in the 61% of a dip that we are looking in terms of pre-sales, while collections saw about a 16% of an uptick. But of course, it's the FY26 outlook, which is interesting. Now, if we saw in terms of the guidance, they did meet their FY25 pre-sales guidance of 10,000 crore, but it was in terms of launches, revenue recognition and collection guidance that we saw a miss in terms of what the guidance was given. In fact, collection guidance was at 6,000. They clocked in about 4,400 crore of collections. Revenue recognition, they fell short by 500 crore. While for launches, the expectation was 16,000 crore, but they clocked in with a number of 13,800 crore. While realizations have been on the healthier side, it's the kind of trajectory that now FY26 needs to have, wherein they see about a 25% increase in launches to 17,000 crore. They are expecting a 20% of our pre-sales growth to 12,500 crore, and collections basis on this shortfall that we are seeing in FY25 here, they are seeing a higher uptick. They're seeing a higher pickup, about 35% growth to 6,000 crore for the next year onwards. So aim is to deliver about ongoing projects in coming 7 to 8 quarters, and this is roughly with a revenue recognition of 10,000 crore from these ongoing projects that they see. Forthcoming projects are to be launched over the coming 2 to 3 years is kind of the pipeline that we are looking for a Signature Global. Of course, we also spoke to the management of the company to understand their FY26 outlook. Do listen in to what they had to say.
see, on an overall basis, the year went quite well for us. We are an 11-year-old entity, and in the year gone by, we've crossed 10,000 crores of pre-sales. To break it down further, we have sold more than 4,000 units at an average ticket size of about 2.5 crores per unit, which demonstrates our core theme of addressing the need of the middle income households, the Aam Aadmi, doing sales in the range of 1.5 crores to about 3.5 4 crores, of apartments which we sell. And we are probably the largest, volume driver within the segment in the Delhi NCR region. For the coming year and on a longer term basis, we feel that the demand is there and there is lack of supply. So we've given a guidance that we can continue to grow at comfortably 20% plus on a YOY basis for a medium term perspective, which I think is getting well appreciated, because earlier we were just giving yearly guidances. This time we've said that this can be achieved over a medium term basis. As far as collections are concerned, you're right. We've not met our guidance, but in absolute terms, the collection is was very good. Over the last 2 years, between fiscal year 23 to fiscal year 25, our collection number has gone up 2.3 times. Even over the previous year, there's a fairly steep rise in the collection number, and it continues to grow on a quarterly basis.
Okay, Nirav, let me come to you straight up with regard to real estate. Is that something that you're excited about with regard to an opportunity, and how best would you play it?
Well, definitely it's an opportunity. I think pre-sales have been quite good as far as Signature Global is concerned, and the realization per unit has also been pretty decent. Rest of the things can be excused, at least for the time being, the fresh launches and the collections, etc., the miss in terms of collections. But I think it's an opportunity definitely to look at the stock from a medium to long-term perspective, especially in the light of the fact that they have guided for a 20% growth in the medium term.
Okay. Aditya Agarwala, what do you make of the move on Signature Global and some of the real estate counters today? There has been some bit of buzz.
Absolutely, Harsh. And an interesting play, the entire segment. Though there are pockets which are looking interesting, there are pockets which are not moving much. The consolidating. From this pack, couple of stocks which stand out for me, and then I'll come to Signature. Lodha is something which definitely stands out for me, and one stock to look at and can be added in your portfolio from a medium to longer term time frame. I think here you can easily look at a target of 1600 on the upside with an intermediate hurdle at 1500. I think this is the top bet within the real estate space as of now. Followed by a DLF, that is also something which is looking very interesting to me. We've seen a good correction and a consolidation, and in today's trading session, we're witnessing a breakout from a bullish head and shoulder pattern. I think it can easily test levels of 770 to about 800 on the upside. So as far as top bets are concerned, Lodha and DLF are the top bets for me. Coming to Signature, yes, it's a good move, followed by good volume as well, backed by extremely healthy volumes as well. I think 1300 is something which is doable on the stock. If you already have it, continue to hold for a 1300. If you're looking for a fresh entry in this space, I would give this a pass. Look at a Lodha and a DLF better in comparison to a Signature.
Okay, so that's the view coming in. Aditya, while we're at it, what's your BTST for today?
So it's a stock that we were discussing, or maybe you were discussing some time back. It's TVS Motors. Looks very interesting to me on the chart setup. Again, a fresh breakout from a flag pattern. Can be bought for a target of 2950 on the upside with the stop loss at 2800. I think two-wheeler space is looking very interesting, and TVS Motors is something which stands out within that space.
Right. The other one in focus today is something like a Newland Labs. Lower custom manufacturing impacted top line as well as margins. In fact, negative operating leverage playing out. FY26 was expected to close flat, but hasn't quite. It's closed 15% lower in terms of top line, so it's disappointed the street. Nirav, how would you read into the numbers, and how would you read into the theme of contract manufacturing which is playing out at this point?
Well, I think going forward, contract manufacturing is likely to pick up, but of course there has been some uncertainties with respect to the tariffs, etc. So that could be one challenge which these companies could face. And Newland Labs has been a disappointment in terms of performance, and the valuations were quite stiff. So I think we can expect the stock to correct further.
Okay, so that's on Newland Labs on the fundamental side. Aditya, do you have a view?
Yes, and I concur with that view. I think it's looking weak, broken down from a 200-day moving average after a gap of approximately 3 years. After 3 years, stock has broken from its 200 DMA. That means something, Harsh, and I think this downside is likely to continue. 10,000 on the downside is an immediate support. If that is broken, I think stock will be in for a deeper correction. So as of now, it's a complete avoid. If you already have in the portfolio, my recommendation would be to exit, book out losses if incurring any loss, and look at better opportunities.
Okay, so maybe exiting is better at this point. Now, in terms of some other buzzers, you also have an SKF India which came out with numbers. I'm not sure, Nirav, if you had a chance to look at those numbers.
Oh, well, actually, this space is quite interesting, the bearing space, industrial bearing space. And there are limited number of players in this particular space. So I think there's always going to be a scarcity premium as far as these companies are concerned, whether it is SKF or whether it is Fag Bearing or whether it is a Timken. I think most of these companies have been struggling with respect to the volumes and the growth has been very flattish. So I think the stocks were just consolidating in the recent past, and I think this trend is likely to continue going forward.
Okay, Aditya Agarwala, one question on Airtel. Top loser today, but is it at support levels? Is it possible to trade this, or would you leave it alone?
I will leave it alone, Neeraj. I think a stock can correct further to 1750. That is the zone I would look to get, look at the stock, go get long again in the stock. At current levels, I think so it needs some kind of a time-wise correction and maybe some price correction to 1750. Then I'll be more interested. As of now, I'll leave it alone.
Thank you so much, both of you gentlemen, for coming in, speaking with us over the last half hour or so, giving us all of those views. 2 minutes to close for the day and for the week. So 2 minutes before all of us, including Neeraj, wraps up for the weekend. Quickly, flat, slight negative bias on the Nifty, the Bank Nifty, absolutely as flat as it can get, in fact, on the Bank Nifty. Let's look at the Nifty intraday as well. It's been a fairly range-bound day of trade, mind you. It's not been, there haven't been too many gyrations, no large ones at least, except for that little bit at the start, and thereafter it's been fairly range-bound in that sense. Let's look at the heat map, and even within that heat map, you'll see some stocks which have done well. Defense is one theme, FMCG is the other, and auto is the third. Those three largely individual players leading the Nifty today, and that's been the theme that's played out. What's not done well is an Airtel. Alt IT is under a wee bit of pressure, but honestly nothing to complain about, because the kind of move that we saw on IT on Monday, that near 7% move, was just so impressive that anything else after that IT did would likely be okay for the rest of the week. But outside of that, we've seen some bit of pressure with regard to banks, and SBI in particular was down 2%. Axis Bank down, slight negative bias on that one, but some of the heavyweights have done relatively okay. Let's look at the advanced decline. Again, no meaningful losers or gainers on the Nifty 50 contributors, but the advanced decline, you will see a sharp outperformance with regard to the advances versus the declines. The breadth was good, and what we've seen within the mid cap and small cap index is a good outperformance. We've closed around 0.8% higher on the Nifty mid cap, but the Nifty small cap is where a bulk of the action was, at least in trade today, 1.5% higher. It's been that way for the last hour and a half or so, but nonetheless, we go home with good gains on the Nifty small cap. So that's the one that really stood out. I want to quickly mark out some of these. We've closed for the week, and therefore want to quickly mark out how some of these indices have done for the week. Let's first start off with the Nifty 50 index for the week gone by. And it's been a fairly good week on the Nifty, 2.3% higher for the week. Even though we've gone home flat, we've held 25k for the week, which is extremely positive at close, nearly 2.5%. The Nifty mid cap, if you can pull that one up as well. Of course, there were days on which there was an outperformance by the mid stocks and clearly 4% higher on the Nifty mid cap, and today was one such day. The Nifty small cap, I'd reckon, has done even better for the week. There you go, 5.5% higher on the Nifty small cap index. Now quickly on to certain sectors. I want to pull up first off the Nifty defense, because that one really stood out. 14% in a single week, this one, the Nifty defense. Very, very strong moves that we've seen. The Nifty IT next, if we can quickly pull that one up, and thereafter the Nifty Realty. Okay, so nearly 4% on the Nifty IT for this week. Nothing to complain about, but after the kind of start that we had on the Nifty IT, I would have reckoned that it may have done better, but nearly 7% on the Nifty Realty. So some broader market names coming to the fore and participating. That's how it's played out. Defense and Realty is where this week's real gains have been made. Strong outperformance by both of those indices. I want to quickly last off try and cull out the big winners of today, the BSE 500 top gainers, top losers, before we look at what to look out for next week. But there you go, defense, railways and earnings. That's what's dominated the winners today. Then you have an Angel one as one of them, yeah, pretty much everything else is fits in those three buckets. Well, the losers, again, some of them on the back of earnings. Godfrey Phillips and Nosil were just two of them. Garware Tech also within that basket of earnings. But those are some of the big losers as well. Now, this is with regard to, of course, what to watch out for. Those are just some macros to look out for. Let's quickly move on. And yeah, that's China industrial production, house price index, China unemployment. No big moves for us. But in terms of shares to exit lock-in, Hexaware Tech to be kept in mind on Monday. That will likely move. And that's a list of all the earnings. Divi's is one which most will have an eye out on. DLF is the other. BEL has had a phenomenal move run this week, will also be on the list. Power Grid is the other one. Then you'll have some of the other smaller names which will also likely be in focus. But with that, completely out of time on this edition of India Market Close. It's a thank you from all of us and a goodbye. Happy weekend.
If we are able to make a woman sit on a stranger's bike and make her go to her destination in a dim-lit street, we felt it was history-worthy.
About कोई soft-spoken तो है?
Did you just call me soft-spoken?
Yeah. No?
No, I should just record this and let my team hear it.
I think what changed the game was bringing two-wheelers into the picture. Bikes, right?
Yes. India has always been the land of two-wheelers. Why don't we leverage this existing infrastructure to create a commute? You are getting on the bike of a stranger, but this stranger is verified who's driving your bike.
It took you 75 rejections. What was the harshest rejection you faced?
We remember every rejection. Some of the rejections we believe were also valid and we learned from it.
How do you have 7 ideas that don't work and keep continuing to the 8th?
I quit my job without a plan. I ventured into some traditional industries, including real estate, mining, manufacturing, tiles.
कोई sector छोड़ा नहीं.
I wasn't getting success in any sector.
But you even ended up learning Korean. How do you use those skills now?
I've actually quit my job while I was on a business trip in Korea.
How did you say I quit in Korean?
Na kuman desaya.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Welcome, you're watching Market Express and I'm your host Malika Mishra. Let's get straight into the show. Markets end lower for the day after trading in a narrow range. Nifty crosses 25,000 to close flat, while Sensex finishes more than 225 points in the red. Small and mid-cap indices see a broad-based rally. Markets rebound after the success of Operation Sindoor. Nifty gains 4% for the week, while Sensex closes 0.6% higher. Nifty Defence closes as a top sectoral gainer on strong order book outlook after the success of Operation Sindoor. Index rallies for the 8th session in a row. Jefferies bullish on the sector with focus on HAL data patterns and BEL. Railway stocks are back on track after losing steam. RVNL was buzzing on the back of an LOA for an order worth 116 crore from Central Railway and Rights, gained over 14% after a 5% rise in profit and expectations of 15 to 20% growth in revenue for FY26. Nifty IT index fell close to 1% in a weak market, reflecting broader market declines. Key IT stocks like Infosys and TCS saw losses contributing to the downturn. The overall market sentiment was negative, with more stocks declining than advancing. Investors remained cautious amid global and domestic economic concerns. The Nifty Metal Index made its strongest weekly gain in 4 years, driven by easing trade tensions, positive global demand outlooks, and strong performances by key players like Tata Steel and JSW Steel have fueled the rally. However, analysts warn that domestic demand remains weak and export dependency could pose risks. Investors are advised to remain cautious despite the bullish momentum. Rupee closes stronger against US dollar, closes 3 paise stronger at 85.52 against US dollar. Waaree Renewable Technologies, a subsidiary of Waaree Energy, secured a 114 crore order for a solar power project as announced in an exchange filing. The project involves engineering, procurement and construction work for a ground-mounted solar power plant, including operation and maintenance services. While specific details like project capacity or timeline weren't disclosed in the filing, this order adds to the company's robust portfolio, which includes a 3,264 megawatt order, book value at 3,500 to 4,000 crore as of April 2025. Anand Rathi Global Finance rates Mahindra & Mahindra a buy rating. The target price for the stock is 3,600 rupees. Mahindra & Mahindra's revenue may grow 18% on a compounded annual growth rate over FY25-27. Now, the brokerage has a positive view on the company due to its domestic market share gains across passenger vehicles, commercial vehicles and tractors. The brokerage expects volumes to grow at a 9% CAGR over FY25-27. IndusInd Bank uncovers 674 crore in accounting errors from incorrectly recorded interest over 3 quarters of FY25. Following internal audits, despite this, brokerages are mixed on the counter. Investec downgrades the counter to a sell rating with a target price of 650 rupees. Morgan Stanley holds equal weight at 755. Macquarie maintains outperform at 1,210 rupees but highlights governance and succession concerns. JSW Infra's promoter Sajjan Jindal Family Trust plans to sell a 2% stake of 4.2 crore shares worth 1,200 crore via a block deal. The floor price is set at 288, a 3% discount to the current market price with a 60-day lock-in period. Jefferies is the sole banker for this deal. LTIMindtree has announced the opening of its Digital Innovation Hub at the Research and Innovation Hub of Science Center of Excellence. The LTIMindtree Digital Innovation Hub will enable ideation, co-creation and implementation of advanced digital solutions for Eurobank, Fairfax and other EU customers, and aligns with the strategic vision of the Cyprus government to strengthen Cyprus's role as a regional tech and innovation hub, triggering unique cross-border opportunities for tech collaborations. Hyundai Motors Q4 revenue grows 2.5% to 17,562 crore rupees and EBITDA rises slightly to 2,489 crore rupees. Margins dip to 14.2% from 14.4% earlier and net profit drops 4% to 1,583 crore rupees. The company declares a final dividend of 21 rupees per share. JSW Energy's Q4 FY25 revenue rises 16% to 3,189 crore rupees. EBITDA grows 3% to 1,204.5 crore rupees. Net profit jumps 16% to 408 crore rupees, surpassing the 295 crore forecast. Net generation surges 24% YOY, driven by wind and thermal additions. FY26 capex is projected at 15,000 to 18,000 crore rupees. A unit of Bajaj Auto has infused 50 million euros, that's about 480 crore rupees, into KTM AG for the fourth time since February, even as the Austrian bike maker looks to stave off bankruptcy. Bajaj Auto International Holdings BV, the Netherlands-based subsidiary of the automaker, has subscribed to convertible bonds of 50 million euros issued by Pierer Bajaj AG on Thursday. The investment consists of 500 bonds worth 100,000 euros each. And Godfrey Phillips fails to impress the market despite reporting robust Q4 numbers. Stock closed 5% lower. Revenue jumps over 70%, while net profit grows 30%. Meanwhile, cost of materials grew 45% and employee costs went up by 42%. PN Gargil Jewellers draws focus after its Q4 results, showing slower than expected revenue growth, while margins stayed flat. Speaking with Saurabh Gargil, CMD of PNG Jewellers, he confirms the revenue rise but notes unchanged margins. The management projects single-digit volume growth for the next quarter. Shares of MediAssist Healthcare Services declined over 7% to 457.15 apiece, the lowest level since May 13th. For the fourth quarter, MediAssist reported a total income of 196 crore, representing a 15% year-on-year increase, while operating revenue rose 13.2% to 188.9 crore rupees. However, quarterly profit decreased by 15.9% due to tax benefits received in the previous year's comparable period. LIC Housing Finance reports Q4 numbers in line with estimates. While an uptick was visible in margin, profits surged by 27% compared to last year due to high credit cost and provision during the quarter, but growth overall lacked. Newland Labs plunges close to 6% after reporting a disappointing fourth quarter number. EBITDA dropped by more than 52%, while profit was down by 59%. Company expects to resume growth in FY26. NOCIL's Q4 financials reflect intense pricing pressure and product dumping impacting margins. Revenue falls 4.7% to 340 crore rupees. EBITDA drops 23.4% to 34 crore rupees, and margins shrink to 10% from 12.5% earlier. Net profit declines 50% to 20.8 crore rupees. Volumes, on the other hand, rise 4% on a quarter-on-quarter basis, and the company announces a 250 crore capex program for its Dahej facility. Eureka Forbes reports sixth consecutive quarter of double-digit growth. Now, the company saw a decent Q4 amid tough macros, with a revenue jump of close to 11% and over 2 times growth in profit. Fourth quarter growth was led by premium water purifiers and robotic vacuum cleaners. Jubilant Pharmova's consolidated total revenue from operations stood at 1,928 crore as against 1,758 crore rupees in the year-ago period. Now, the total expenses in the fourth quarter were higher at 1,731 crore as compared to 1,661 crore in the same period a year ago. In the fiscal ended March 31st, 2025, consolidated net profit was around 836 crore as against 72.7 crore in FY24. Singapore's telecom company Singtel sells a 1.2% stake in India's Bharti Airtel for about $1.54 billion. The deal was done through its unit Pastel, which sold 71 million Airtel shares at 1,814 rupees each. Now, after the sale, Singtel's share in Airtel has come down to 28.3% from 29.5% earlier. Even after the sale, though, Singtel still holds a large stake in Airtel. Bikaji Foods International slipped over 1.5% to 704.5 after the company's consolidated net profit fell 65.66% to 40 crore rupees in Q4 of FY25 as against 116.28 crore posted in Q4 of FY24, that's last year. However, total revenue from operations grew by 14.6% year-on-year. In the latest fiscal period, the ethnic snacks segment reported a revenue growth of 11.4% year-on-year, contributing approximately 71.3% to the total revenue. Signature Global sees a 61% decline in Q4 pre-sales, though collections increased by just 16%. Revenue drops 25% to 520 crore rupees, but EBITDA surges over twofold to 43.4 crore. In a conversation with Rajat Kathuria, CEO of Signature Global, he highlights the company's 15 to 20% growth guidance for the medium term. Stocks of GE Shipping gained more than 7% in trade as dealers indicate that there is a buzz of a potential buyback announcement. GE Shipping has a net cash of 5,860 crore rupees, making it 40% of their total market capitalization. Now, while CLSA believes the Nifty could touch new highs in the near term, Manishi Raichaudhuri, the Chief Executive Officer or CEO of Emmer Capital Partners, strikes a more measured tone. Speaking to NDTV Profit, Raichaudhuri said that although India's long-term outlook remains strong, the index may not outperform in the immediate future due to elevated valuations and muted earnings estimates. Shares of Cochin Shipyard shot upwards in Friday's trading session, up as high as 13%, leading the defense stocks rally after the company posted its financial performance for the final quarter of fiscal 2025. This was further boosted by a Jefferies note indicating bullish sentiment on the sector. Cochin Shipyard's fourth quarter net profit and revenue saw growth. However, its margin overall contracted. PB Fintech shines in Q4 of FY25 with revenue climbing and beating expectations. Margins improved significantly and net profit soars, boosted by other income. The health business thrives, keeping the company on course for its FY27 profit goal, though a slowdown looms in the first half of FY26. CLSA remains bullish on PB Fintech, maintaining an outperform rating and raising the target price to 1,970 rupees from 1,860 rupees earlier. The brokerage expects growth to moderate but profitability to expand significantly with EBITDA margins reaching 16% by FY27. PB Fintech is projected to start paying full corporate taxes by financial year 2028. Jefferies maintains buy rating on Crompton Greaves, sets the target price at 485 rupees with 46% upside potential. Company saw strong EBITDA growth of 24% in FY25. The brokerage expects new launches in street, industrial, indoor commercial lighting aid the company's B2B business to business numbers. Crompton Greaves also plans to foray into rooftop panels with an addressable market of 20 to 25,000 crore rupees. Bharat Heavy Electricals reported a solid Q4 FY25 with an 8.9% revenue increase to 8,993 crore from 8,260 crore year on year. EBITDA rose 14.3% to 832 crore from 728 crore, with margins improving to 9.2% from 8.8% earlier. Net profit grew 3% to 504 crore from 490 crore. Despite missing some analyst estimates, BHEL's growth reflects strong order execution in power and industrial segments, supported by a record 92,534 crore order inflow in FY25. Emami reported an 8% revenue increase in Q4 FY25 to 963 crores from 891 crore year-on-year. EBITDA grew 4% to 219 crore from 211 crore, though margins slightly dipped to 22.8% from 23.7%. Net profit rose 9% to 162 crore from 149 crore earlier. The company announced a special dividend of 2 rupees per share. Strong domestic demand for personal care and healthcare products, led by brands like Navratna and Boro Plus, drove growth despite rural market challenges. Jubilant Pharmova reported a 9% year-on-year revenue increase to 1,929 crore in Q4, surpassing expectations. EBITDA grew 27.3% to 345 crore, with margins improving to 17.9% from 15.4% earlier. The company turned a net profit of 154 crore compared to 58.6 crore loss last year. A final dividend of 5 rupees per share was announced. And following closely behind Elon Musk's Starlink, Amazon's Project Kuiper is actively pursuing entry into India's satellite broadband sector. The company reportedly has submitted an application to the Department of Telecommunications for a global mobile personal communications by satellite license, aiming to offer satellite-based internet services nationwide. Project Kuiper's application predates the LOI, letter of intent, recently granted to Starlink. The Karnataka government has requested electric buses under the PM E-Drive scheme to enhance urban public transport, with Union Minister H.D. Kumaraswamy assuring full support and confirming phased allocation. The state will receive buses in upcoming phases, supported by infrastructure like charging stations. This collaboration strengthens India's green mobility mission, aligning with PM Modi's vision for clean and equitable transport. Discussions between the centre and Karnataka ensure swift implementation for sustainable urban mobility. Defence Minister Rajnath Singh visits Bhuj Air Force Station today, briefing Indian Air Force warriors at the base targeted by Pakistan during recent hostilities. Defence Minister urges the IMF, the International Monetary Fund, to reconsider its loan to Pakistan, alleging that over 14 crore will fund terrorist Masood Azhar, calling it indirect terror financing. 6 members, including gang members who were providing SIM cards fraudulently to gang involved in cybercrime in connivance with officials of telecom companies, arrested from Chitrakoot district. Police have recovered 31 mobile phones, 87 fake Aadhaar cards, 556 unactivated SIM cards, 514 pre-activated SIM cards, 3 biometric scanners and other articles from them. Lovely Professional University has terminated its memoranda of understanding with institutions in Turkey and Azerbaijan, citing recent geopolitical developments it considers contrary to India's national interest. The university said the decision includes the immediate termination of student and faculty exchange programs, joint research projects, dual degree initiatives, and all other academic collaborations with institutions from the two countries. Earlier, amid growing backlash against Turkey in India, Jawaharlal Nehru University JNU on Wednesday announced the suspension of Memorandum of Understanding with Aynulu University, Turkey, citing national security concerns. The Supreme Court has directed the West Bengal government to pay 25% DA to state government employees. A bench of Justices Sanjay Karol and Sandeep Mehta issued an interim order directing the West Bengal government to make the payment within 3 months and posted the matter to be heard next in August. The Indian Coast Guard has successfully rescued 6 crew members of cargo vessel MSV Salamat, which sank yesterday in Mangalore. ICG received a distress alert from MT Epic Susui, a transiting vessel, reporting the sighting of a small boat adrift with 6 survivors on board approximately 52 nautical miles off the coast of Surathkal, Karnataka. ICG ship Vikram, which was on routine patrol in the area, was immediately diverted to the location. The Coast Guard team swiftly located and safely recovered all 6 survivors from the dinghy. Union Home Minister Amit Shah inaugurates the new multi-agency centre at North Block in New Delhi today. Highlighting Operation Sindoor, he praises it as a testament to Prime Minister Modi's resolute leadership, the precision of India's intelligence agencies, and the flawless strike capabilities of the nation's armed forces, according to the Ministry of Home Affairs. And a 4.5 magnitude earthquake strikes China near Tianjin, with tremors felt in Beijing at a depth of 10 kilometers. No immediate reports of casualties or damage emerged. This follows a 5.6 magnitude earthquake in Tibet and China on May 12th. And Trump changes his tone on India-Pakistan tensions. He claims he helped settle the problem between the two countries. He also says, let's do trade and not war. Health authorities in densely populated Hong Kong and Singapore have warned that COVID-19 cases are spiking as a resurgent wave spreads through Asia. Now, the virus's activity in Hong Kong is now quite high. Albert Au, head of the communicable disease branch of the city's Centre for Health Protection, told local media this week the percentage of respiratory samples testing COVID positive in Hong Kong recently reached its highest in a year. An Indian origin techie, Vishnu, was among the 3 persons killed in a tragic climbing accident in Washington state, North Cascades range of western North America. Vishnu, 48 years old, a resident of Seattle, was attempting to climb North Early Winter Spire area of the Cascades along with his 3 friends on Saturday when the accident happened. And the Israeli military intensified operations across Gaza Thursday, killing more than 100 people and pledged to continue bombings. Many of the casualties were in Jabalia, in northern Gaza, and in Khan Yunis in the south, according to Gaza Civil Defense. Now, Israeli Prime Minister Benjamin Netanyahu has pledged to eradicate Hamas with a strategy that would see the military hold more territory in Gaza and push the entire civilian population into a smaller area in the south. And with that, it's a wrap on Market Express, but do stay tuned to NDTV Profit as there's a lot more lined up for you right on the other side.
If we are able to make a woman sit on a stranger's bike and make her go to her destination in a dim-lit street, we felt it was history-worthy.
अब्बा कोई soft spoken तो है?
Did you just call me soft-spoken?
Yeah. No?
No, I should just record this and let my team hear it.
I think what changed the game was bringing two-wheelers into the picture. Bikes, right?
Yes. India has always been the land of two-wheelers. Why don't we leverage this existing infrastructure to create a commute? You are getting on the bike of a stranger, but this stranger is verified who's driving your bike.
It took you 75 rejections. What was the harshest rejection you faced?
We remember every rejection. Some of the rejections we believe were also valid and we learned from it.
How do you have 7 ideas that don't work and keep continuing to the ape?
I quit my job without a plan. I ventured into some traditional industries, including real estate, mining, manufacturing tiles.
कोई sector छोड़ा नहीं.
I wasn't getting success in any sector.
But you even ended up learning Korean. How do you use those skills now?
I've actually quit my job while I was on a business trip in Korea.
How did you say I quit in Korean?
Nakuman desaya.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with.
Broader indices outperformed the main indices among sectors. Media, power, PSU, realty, capital goods indices up 1 to 1.7%, while IT index is down by nearly 1%. Amazon reportedly gears up to bring Project Kuiper in its satellite internet service in India. The company has reportedly approached the Department of Telecommunications seeking authorization to offer broadband services via satellite in the country. Defence Minister Rajnath Singh says any financial assistance provided by the IMF to Pakistan is no less than terror funding and urges IMF to reconsider. This comes a day after a fresh $1 billion financial assistance program was approved for Islamabad as part of its bailout package. Singapore Telecommunications says it had sold around 1.2% of its stake in India's Bharti Airtel for $1.54 billion. Singtel, which has been an investor in Airtel for over 20 years, said its stake would drop to 28.3%. Deciding a 24-year-old property dispute between the ISKCON Mumbai and ISKCON Bangalore, the Supreme Court finally clears the air and says the ISKCON temple in Bengaluru belongs to ISKCON Society Bangalore, registered under the Karnataka Societies Act. The IPL 2025 season kicks off again with its 18th season on Saturday after the temporary halt, with Kolkata Knight Riders facing Royal Challengers Bengaluru at Eden Gardens, Kolkata. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Along the next half an hour, we're going to take you through the latest in markets as well as national and international news. So let's take a look at how the markets fared today. Markets ended flat in a choppy season, with the Nifty holding just above the 25,000 mark, down 42 points. The Sensex closed at 82,330. Realty and media stocks led the gains, while IT and pharma saw cuts. Harsh now joining us with a detailed market roundup for the day.
Well, it's another absolutely flat day on the index. A slight negative bias, if at all, but we've held 25K, which is the big positive. A bulk of the action was actually broader markets. Let's look at the advanced decline on the broader markets first before we talk more about the Nifty. The breadth was extremely favorable, and therefore you saw good traction both within the Nifty mid cap and small cap. That's what's generally implied. 1.5% move on the Nifty small cap, which has moved up 5% this week. The Nifty mid cap also has done fairly well for itself, nearly 4% up this week. The Nifty 50 though, through the week has had a decentish run, 2.5%. So that's how it's all played out, but definitely week in which all three indices have done well, but broader markets have clearly outperformed for today as well as for the week. In terms of stock-specific action, today belonged to largely the defense and the realty space. Those were two pockets which were buzzing. The defense, railways also within that PSU basket did very well for themselves. Defense stocks up 6%. They were up 14% for the week gone by. Railway counters like RITES absolutely buzzing in trade, 8% higher. RVNL also, RVNL 8% higher. RITES 10+% higher. So strong gains seen in that pocket of trade. When you're looking at the loser within the Nifty pack, it's Airtel, which stood out, with Singtel obviously offloading some bit of its shares, but 3% lower only for Airtel. That's how it played out. IndusInd was the other one in focus, but the stock made a full recovery and closed near the flat line at close of trade today. Other sectors which were in focus were the realty sector, up 6% through the week, has had a phenomenal run again through this week. And then you had IT stocks which were in focus, which were the key laggards in trade, which pulled down the Nifty 50 at least among the large cap pocket. And that one also saw some bit of pressure, nearly 1% lower on the Nifty IT index, but it was still up 3.5%. Thanks to the phenomenal move that it made on Monday. But that's how it's played out both the day as well as the week.
Thanks, Harsh, for that. Definitely all eyes waiting to see how the markets fare on Monday and how they actually open. Meanwhile, global brokerage firm Jefferies highlights a robust quarterly performance for Indian defense companies driven by increased indigenization efforts and rising global demand. As India's defense and exports grow and domestic manufacturing strengthens, industry leaders are capitalizing on new opportunities. Anushi now joining us with all of the details.
As you've mentioned, we've seen about a 19% of an up move in the defense sector alone, and this is also a lot of sentimental moves that we are seeing after the Operation Sindoor, how the domestic companies in the defense space are now stepping up the indigenization focus and procuring more equipment needed for the defense needs of the India. But interesting note coming in from Jefferies. Now they have talked about this defense indigenization focus, and they've compared and given a scenario from how FY14 onwards to FY24 on FY25 onwards, we've seen a big shift coming in here with most of these defense companies' revenue seeing an increase in the double digits. In fact, we are looking at even the recent India-Pakistan tensions did see that PM Modi has lauded made in India equipment, which points to further domestic manufacturing focus. Even in the 2020, the earlier updates that have come out, government has increased their budget allocations over the last 10 years. We've also seen how the focus has been on increased FDIs also for this sector. So there have been a lot of moves from the government side as well. So India focus to building up its global image on defense continues over here. But even on the micro side of the things, in terms of how the earnings have shaped up, most of the Q4 earnings that we have seen results so far have been strong so far. Even if you look at HAL, the expectation was for a higher downtick because of the execution delays that were there, but it was a better than expected growth that we've seen in the revenue. The balance sheet of some of these companies have been improving, so that is on a watch out for. Global defense thematic adds to the upside from order book visibility of these domestic companies is what Jefferies has to say. HAL, Data Patterns being their top picks over here, followed by Bharat Electronics. Bharat Electronics having a crucial role in the Operation Sindoor that we are looking at. The note believes that HAL, Data Patterns and BEL could see further order book backed by double-digit EPS CAGR growth in the medium term, along with healthy ROE and ROC ratios going forward. So it's a mix of both the macro stand of view on how the government stand of point how Indian defense companies need to spend up, and also on the micro side how the earnings are faring better than expected.
Thanks so much for that, Anushi. Let's take a look at what's happening in the telecom sector. The Department of Telecom is expected to clear Amazon Kuiper for its satellite internet launch, marking a major step in India's expanding broadband ecosystem. Industry sources suggest that Kuiper may adopt a trial launch strategy similar to JioFiber, allowing users to test services before a full-scale rollout. For more on this, let me quickly go over to my colleague Aishwarya, who has all of the details. Aishwarya?
Well, satellite communication has been the buzzword lately, with Starlink applying for a license as well as it getting a letter of intent issued by the Department of Telecom. Following in line on that path is Amazon Kuiper. What we're learning from our sources is that the Department of Telecom is likely to issue Amazon Kuiper a letter of intent, followed by Starlink very, very soon. Now, Amazon will be bringing, just like Starlink and Airtel and Bharti Enterprises, OneWeb, high-speed satellite communication services to the Indian market, and this will, of course, mark their debut. Amazon Kuiper also has the second biggest capacity in terms of their satellite constellation network, which is about 3,200 satellites in the low Earth orbit that will provide high-speed satellite internet services in various markets, including India. Now, Kuiper let's talk a little bit about their Earth stations and what their devices will look like when that will be operational. Kuiper is likely to be fully operational in the next 18 to 24 months, is what people familiar with the matter have told us. They're also considering trial packages during their introductory or launch period, just like GeoFiber did initially introduce us with free devices. And also they may be considering or assessing different heavy discounts on these packages when they do start their services in India. Like I mentioned earlier, the company plans to launch over 3,200 satellites, making it the second largest capacity. Starlink has about 6,000, over 6,000 satellites, and that makes it a SATCOM company with the largest fleet of satellite constellations there is globally. So that's what Amazon Kuiper's devices and ground network will look like. They're also finalizing over 7 locations in India to build their ground stations or earth stations, also called as gateways. In India is what, and they've also identified certain locations. This is what we've learned from our sources so far as Amazon Kuiper's India debut is concerned.
That's right, Amazon Kuiper's India debut race to see who's going to actually have the first satellite network in India. Moving on, Defence Minister Rajnath Singh has reiterated India's firm stand against terrorism and nations that support it. Addressing the issue of hybrid and proxy warfare, he sent a strong message to the international community, especially in light of the IMF's financial assistance to Pakistan. Here's what he had to say on India's evolving defence doctrine, terror financing and the continuation of Operation Sindoor.
भारत यही चाहेगा कि IMF पाकिस्तान को अपनी $1 बिलियन की असिस्टेंस पर वह पुनर्विचार करे और आगे भी किसी भी तरह की सहायता देने से IMF परहेज करे। भारत नहीं चाहता जो फंडिंग हम IMF को करते हैं वह डायरेक्ट या इनडायरेक्ट किसी भी तरीके से पाकिस्तान या किसी भी देश में टेरर इंफ्रास्ट्रक्चर को बनाने में वह इस्तेमाल की जाए। हम नहीं चाहते। साथियों, अब यह स्पष्ट हो गया है कि पाकिस्तान में आतंकवाद और वहां की सरकार का चोली दामन का संबंध है। स्टेट और नॉन स्टेट एक्टर के बीच का नकाब अब पूरी तरह से उतर चुका है।
Now, just to remind you, the International Monetary Fund approved a fresh financial aid package of over $2 billion to Pakistan. While the IMF says that the money is meant to stabilize Pakistan's economy and support climate resilience, India has raised serious concerns. To break down what this latest IMF approval means and why India is objecting so strongly, let me quickly go across to my colleague Malika with all of the details. Malika, take us through the background of, how this all has transpired, especially in light of the India-Pakistan tension.
Yeah, definitely, Sanjana. And before I go into that, there are two key terms that one needs to understand. One is the EFF, which is Extended Fund Facility, and the second one is RSF, which is Resilience and Sustainability Facility. Now, both these terms, these are lending programs by IMF, but the difference is while Extended Fund Facility is a lending program that helps countries balance serious economic problems like balance of payments or weaker growth, and it is for a short term. On the other hand, RSF is a newer program that helps country build resilience against climate change or sustainability, longer term sustainability issues. Now, what happened with regards to Pakistan is that on the 9th of May, the IMF reviewed Pakistan's economic firms and released $1 billion under the Extended Fund Facility, which basically caters to economic mismanagement. Now, again, it went ahead then and approved an additional loan of $1.4 billion under the Resilience and Sustainability Facility, which is RSF. Now, Pakistan has had a long history of taking loans from IMF, going 20 years back in 1958. That was when the first loan was disbursed. Now, India's concerns are very simple. India did not firstly vote in favor of the IMF aid to Pakistan because it worries that the funds might be used for terrorism, and it worries that the funds could let Pakistan use its own money for terrorist attacks. Also, it urged IMF to rethink future aid for security risks and ensure that these funds are not misused by Pakistan or any other country for proxy wars.
Malika, thank you so much for that background. We'll continue tracking the story. This is, remember, as India is once again urging the IMF to reconsider its funding to Pakistan. Moving on, Aviom India Housing Finance, a struggling housing finance company, has attracted interest from two potential buyers: Authum Investment and Infrastructure and JC Flowers Asset Reconstruction Company. Both of these are considering making offers to purchase the company. Although they have not formally submitted their bids yet, they have been in talks with Aviom India's administrator. Now, earlier this year, the RBI stated and started insolvency proceedings against Aviom India Housing Finance back in January of 2025. And then in February, we saw the National Company Law Tribunal officially admitting the company into bankruptcy proceedings. And now a look at what's happening with regards to Bharti Airtel. Bharti Airtel's promoter Singtel has divested a 1.2% direct stake in the company, anticipating an estimated gain of $1.4 billion from the transaction. The Singapore-based telecom giant holds its stake in Airtel through Pastel Limited and is set to offload approximately 4.76 crore shares as part of this move. My colleague Sumit now joining us with all of the details.
When it comes to Bharti Airtel, it was Singtel, which is the co-promoter of the company, which has sold close to 4.76 crore shares in the company via block deal. Now, the floor price for this deal was set at around 1,800 rupees, which was at a discount of around 3.6%. But this block deal has happened in the range of around 1,821 rupees to 1,827 rupees. Now, again, the lock-in for the buyer for this deal is around 60 days. JP Morgan was one of the brokers of this deal, and post this deal, Singtel's holding in Bharti Airtel directly and indirectly would come down to around 28.3% as against 29.5% earlier.
Right, Sumit, thanks so much for that. Let me quickly go across to my colleague Agni now, because now it appears that travel platforms from actually boardroom and maybe travel issues are now also going into geopolitical tussles. Ease My Trip's founder and chairman Nishant Pitti firmly reiterated claims that Make My Trip has alleged Chinese ties, and it is a security concern when Indian Armed Forces personnel book tickets on the platform. Pitti claimed that this competitor's board members have direct ties with China, adding that despite the appointment of a new director, the deep-rooted structure of alleged Chinese-backed influence of the company cannot be ignored. My colleague Agni joining us with more on this. Agni, what have we heard in terms of response of, Make My Trip, and what is the truth currently? Because there is a lot of, hearsay, but we also saw Make My Trip coming out and say that they're very much an Indian company.
Right, so before we move on to what has been said and what has not been said, let's set some context here. So India and Pakistan are in the middle of geopolitical tensions right now, and China of course has always been sort of leaning towards Pakistan. So this is where Pitti's allegations stem from. He says that Make My Trip is on the inside it's a Chinese company, and that Indian Armed Forces booking their tickets on Make My Trip have to give their military ID, which again is something that is data stored by the Chinese. So Pitti says that this is a label of this is a national security concern, and he says that the company, 5 out of the 10 board members in the company have Chinese links or ties. Now, Make My Trip has dismissed these allegations and called them motivated. It has also said that it is a company built by Indians, which is run by Indians, and millions of Indian travelers also use Make My Trip on a frequent basis. So, Nishant Pitti has said that strategic board committees on the MMT are also influenced by Chinese linked directors. He has hit out at the rival company, which had recently appointed a Mauritius-based director and has called it a cosmetic change. Now, Make My Trip, remember, reiterated its position as a strongly Indian company, but it is getting, as Pitti's comments on social media are getting an increasing amount of traction as he points out these ties to Chinese links.
Right, Agni, thanks so much for that. We'll continue tracking the latest in this and bring you all of the developments. Moving on to what's happening in court today. After years of legal battle, the Supreme Court has settled the ownership dispute over the ISKCON Bangalore temple property, ruling that it rightfully belongs to ISKCON Bangalore Registered Society. Now, the bench led by Justice Abhay Ojha and Justice Augustine George Masiha delivered the verdict, overturning the Karnataka High Court's earlier decision that declared ISKCON Mumbai as the rightful owner. NDTV's Nupur joins us with more details.
From now on, ISKCON Bengaluru Society will be independent from ISKCON Mumbai Society. Remember, both the branches currently have several ISKCON temples running across the country as well as the world. Now, there has been an infighting or sort of a identity crisis between both the factions, as one claims that they have been following, the Bengaluru has claimed that they have been following the original will of the founder guru, and the Mumbai branch has strayed away and they have now turned disciples into their guru, which was against the will of the original guru who had in fact founded this organization. Now, with effect from the Supreme Court judgment, not only the property dispute stands solved, but also now ISKCON Bengaluru will be recognized as an independent authority and their temples are now independent from ISKCON Mumbai's controls.
Now, let's quickly turn back to my colleague Malika, who will provide the background of the case. Malika, this case has been going on for over 20 years now. Give us a context. Why was there this conflict between ISKCON Bengaluru and Mumbai in the first place?
Yes, so basically, Sanjana, this is a conflict between two ISKCON groups, Mumbai and Bengaluru. And the fight is about who controls the Bengaluru temple. And the dispute is also on the lands of ownership and whether Bengaluru can run its own temple independently. The timeline of the case was a little simple. Basically, a lower court said Bengaluru has control, but in May 2011, basically May 23rd, 2011, Karnataka High Court disagreed and gave control to Mumbai. Then, the next month itself, on June 2nd, 2011, Bengaluru's group appealed to the Supreme Court asking for independence. Now, while the ISKCON Mumbai claims that Bengaluru's temple is just a branch under their authority, Bengaluru's ISKCON is making a different claim. It says it's a separate independent organization with its own independent management. And therefore, today, the Supreme Court's decision is extremely substantial as it puts rest to this 20-year dispute between these two groups, giving Bengaluru its long call for independence with regards to its management and also functioning of the temple in Bengaluru.
Thanks, Malika, for that. And the Supreme Court finally settling this ISKCON dispute once and for all and saying it belongs to Bangalore. Now, let's take a look at what's happening on the sporting front. After a week-long suspension due to escalating tensions between India and Pakistan, the Indian Premier League 2025 will resume on May 17. That's tomorrow. The tournament, which had 13 matches remaining, will continue across 6 Indian cities, with the final now scheduled for June the 3rd. After the resumption, the players are set to rejoin their respective teams. However, several teams have announced some short-term replacements due to injuries or national commitments. All eyes are on Washington as Commerce Minister Piyush Goyal begins a high-stakes visit aimed at advancing a strategic bilateral trade agreement with the United States. With global trade dynamics rapidly evolving, the outcome of these discussions could have far-reaching implications for India's economic trajectory, setting the stage for stronger commercial ties between the two nations. For more on the significance of this landmark trade agreement and what it means for India's future on the global economic stage, take a look at this report.
Commerce Minister Piyush Goyal is all set to meet US Trade Representative Jameson Greer and Commerce Secretary Howard Lutnick in Washington. The stakes are high as India pushes for early wins in a bilateral trade deal aimed at boosting two-way commerce to $500 billion by 2030. This visit, scheduled from May 17th to 20th, builds on talks held in Delhi in March and Washington in April. The terms of reference for the Bilateral Trade Agreement or BTA are now finalized, covering 19 chapters on goods, services, tariffs and customs. The backdrop is challenging. The US and China have slashed tariffs on each other by 115%, renewing their trade engagement. This shift threatens India's pitch as a manufacturing hub, making robust US-India trade pact more critical than ever. Following the ministers' meetings in person, sectoral negotiations are set to begin, building on the progress made in April's dialogue. The goal is clear: create a framework that drives economic growth while navigating global trade headwinds.
The talks are continuing, they are progressing well. A team that will be led by the Commerce Minister Piyush Goyal is set to depart for the US today or tomorrow, and talks will start from May 17th to May 20th. And both the countries remain very much committed to conclude the first tranche of this bilateral trade agreement before the fall. And it's very, very likely also, it's possible that it also happens before this July 8th, which is the period when the 90-day tariff pause also ends. So the hope is that it is concluded as soon as possible and definitely before the fall, which is September or October this year.
All eyes on Washington as Piyush Goyal actually kicks off his visit today and will commence the 4-day visit and crucial bilateral trade agreement conversation in the US. Let's take a look at some of our other stories that are making news around the country. 6 members, including gang members who were providing SIM cards fraudulently to gangs involved in cybercrime in connivance with officials of telecom companies, have been arrested from Chitrakoot district. The police have recovered 31 mobile phones, 87 fake Aadhaar cards, 556 unactivated SIM cards and 514 pre-activated SIM cards and other articles from them. Lovely Professional University has terminated its memorandum of understanding with institutions in Turkey and Azerbaijan, citing recent geopolitical developments it considers contrary to India's national interest. The university said the decision includes the immediate termination of student and faculty exchange programs, joint research projects, dual degree initiatives, and all other academic collaborations with institutions from the two countries. Earlier, amid growing backlash against Turkey in India, JNU announced the suspension of its MOU with INU University in Turkey. The Supreme Court has directed the West Bengal government to pay 25% DA to state government employees. A bench of Justices Sanjay Karol and Sandeep Mehta issued an interim order directing the West Bengal government to make the payment within 3 months and posted the matter to be heard next in August. The Indian Coast Guard has successfully rescued 6 crew members of cargo vessel MSV Salamat, which sank yesterday in Mangalore. The Coast Guard received a distress alert from MT Epic Susui, a transiting vessel, reporting the sighting of a small boat adrift with 6 survivors on board approximately 52 nautical miles off the coast of Suratkal, Karnataka. ICG ship Vikram, which was on routine patrol in the area, was immediately diverted to the location. The Coast Guard team swiftly located and safely recovered all 6 survivors from the dinghy. The National Company Law Tribunal in Ahmedabad issued a notice in the Indian Renewable Energy Development Agency insolvency plea against Gensol Engineering Limited. During the hearing, advocate Swati Soparkar urged the NCLT to appoint an interim resolution professional considering SEBI's order and the exit of top directors. She told the NCLT that Gensol is now headless and that they need to appoint an IRP to take charge. The tribunal, however, refused to do so without hearing the case. And with that, it's a wrap on Profit 360. Stay tuned to NDTV Profit for more news and updates.
If we are able to make a woman sit on a stranger's bike and make her go to her destination in a dim-lit street, we felt it was history-worthy.
अब्बाई कोई soft spoken तो है.
Did you just call me soft-spoken?
Yeah. No?
No, I should just record this and let my team hear it.
I think what changed the game was bringing two-wheelers into the picture, bikes, right?
Yes. India has always been the land of two-wheelers. Why don't we leverage this existing infrastructure to create a commute? You are getting on the bike of a stranger, but this stranger is verified who's driving your bike.
It took you 75 rejections. What was the harshest rejection you faced?
We remember every rejection. Some of the rejections we believe were also valid and we learned from it.
How do you have 7 ideas that don't work and keep continuing to the 8th?
I quit my job without a plan. I ventured into some traditional industries including real estate, mining, manufacturing tiles.
कोई sector छोड़ा नहीं.
I wasn't getting success in any sector.
But you even ended up learning Korean. How do you use those skills now?
I've actually quit my job while I was on a business trip in Korea.
How did you say I quit in Korean?
Na kuman desaya.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
Hello and welcome. You're watching KYC. I'm Harsh Saita, and today we're going to try and analyze Patel Engineering the best we can. Now, in terms of what it does, I will get to, but what I want to know about Patel Engineering, firstly, an inward-looking company, domestic-facing, and builds infrastructure projects in India, and therefore it's interesting because very, very delinked from everything happening with regard to tariffs at this point, and also you'll have some bit of larger focus with regard to domestic infra in this year versus last year, given that of course there was elections last year as well. So you might see that pipeline get stronger in FY26, and that's why this one may be interesting. But what's happened in the last couple of financial years is the book to bill has come down. My question therefore is winning orders the concern? They seem to be saying that whatever orders that they bid for, they tend to win around 20% of those orders. Why then is the book to bill coming down? The book to bill is still very healthy, right? So nothing to be concerned from an absolute number perspective. But the fact that it's not growing is the concern. The other piece around book to bill is also the fact that they will have, as Anushi reminds me, they will have pumped storage as a big opportunity over the next year or two. So something again to keep in mind. How large is that opportunity, and what's the likelihood of that translating to very solid order increases? So book to bill is the one key piece. The second one is there's been a sharp increase in both receivables as well as inventory. I want to know what is causing this increase and whether this can actually get reversed in the current year. Because this is the increase which has happened. It's more than doubled from 200 crore to over 500 crore just in FY25. So is this a temporary phenomena? And if the receivables were to get paid off in FY26, what are they going to be used for? Because it will be a large chunk of cash flow which will come, over 300 crore for a 3,500 odd crore market cap company. So something I want to again understand. Then the third piece is with regard to the capex plan. What is the pipeline with regard to capex, and what's the outlook on debt? Because debt is half of the market cap currently, and I'm talking rough numbers here. So roughly half of the market cap is the debt number. Of course, there is the upside possibility of the debt going down as a result of receivables getting paid. But if that were not to be paid, and if there is a capex plan in the pipeline, what's the outlook with regard to debt? Because it's not looking too good with regard to how the debt picture is shaping up. Now, opportunities for bidding in FY26, we spoke about pumped storage, but outside of that, what's the opportunity size like? Will they continue to do 20% in terms of wins versus whatever they bid for? And last off, how is competition shaping up? Is that at all a concern? And is margins therefore going to be a drag? Because we've seen the book to bill shrink, and therefore I want to understand whether competition is one of those concerns or not. So we'll try and dive into each of these points when we speak with the management. But first off, I want to try and talk about the company. Let me first start off. It's an age-old company, frankly. So it incorporated, founded in 1949, and it boasts the capability of doing large-scale projects, especially building of dams. And not too many companies can do such large-scale projects, and therefore this one becomes important in that sense. It's headquartered in Mumbai. It's a key player in civil engineering construction segment, and it's completed over 350 projects in that segment. It constructs heavy civil engineering works, dams, bridges, roads, industrial structures, piling works, tunnels, all of those, and therefore deals with a fairly large range in terms of what it can do. It has 48 ongoing projects currently across 15 states, and just in terms of it has an international presence, but it's not so large in terms of the international presence, largely domestic, at least at this point. Now let's talk about the segment wise, because this is where it starts to get interesting and important. Look at hydroelectric. 66% is hydroelectric. Irrigation is just 23%. Tunnel work is just 8%, roads is just 2%, and then there is others. So a large chunk of it coming from these two, nearly 90% is just from hydroelectric and irrigation. So that's where the focus area is of the company. Now, in terms of client-wise order book, now this again very key. Central and state is 95% of the order book, and therefore you will always see some level of inefficiency in the balance sheet or in the P&L when it comes to these projects, because it's central and state government, and therefore you will see inefficiencies here, and that's why you're likely seeing some of the concerns that I've highlighted around cash flow, etc. Likely is because of this reason. But that's how it is with regard to Patel Engineering. Let's look at the key metrics that we'll try and break down and talk about, and we'll have Anushi Vakharia just joining me in a minute or so. But let's look at the metrics. We'll start off with the income statement. We'll try and highlight how the income statement has shaped up over the last 3 years. We'll look at the order book, we'll look at the balance sheet, cash flow, thereafter the shareholding, the return ratio, street cred, and last off we'll try to cover valuations. So that's how we'll kind of go through and analyze this one. Let's start off with the income statement. Good morning, Anushi. Take us through the income statement. Tell us how it's shaped up.
Right, Harsh. So it's an interesting piece that we are looking at in terms of where the income statement is. Now, FY25 just come out with their results. What we are looking at is a 12% of a growth for FY25. Again, the guidance given was for 10%. The management expects this 12% growth to continue for FY26. While if you talk about the margins, majorly have remained in the 14 to 15% of a range that we are looking at. So the question here would be, would there be further improvement in the margins that we are seeing, or would they sustain at the current levels that are there? It's net profit in the 3-year period that is interesting, seeing about a 56% of a CAGR growth, while 3-year revenue CAGR that we are looking at is in the range of 15%. So these are the key operational metrics that we are looking for the income statement. But let's also talk about the order book positioning that is there. You started off with how the order book to bill ratio has come down. 5 times was kind of the book to bill ratio that we had seen for FY23, which went down to around 3 times that we are looking at. So your 20,000 crore of an order book in FY23 came down to the size of 15,000 crore of what we are seeing. Of course, we are excluding the L1 contracts over here, but this is the overall picture that we are seeing. 3-year growth of around 0.5%, while 5-year growth is of around 7%. Interesting would be the years of FY27 and FY26, wherein there is a lot of more opportunity in the pump storage projects that the company anticipates. So how the order inflow shape up is something that we should be keeping a track of. So Harsh, overall on the order book size and the income statement, that's what the picture that we are building on. But let's talk about the balance sheet, right?
Yeah, the balance sheet, and this is an interesting one. I want to first look at how the equity and debt numbers in the balance sheet are lining up. Look at the equity share capital, it's at around 3,800 crore. Mind you, they've done 2 equity raises. One is a rights issue and the other is a QIP. The QIP has happened at 55.5 rupees per share, and there were of course a bunch of institutions which participated in that, and that happened in FY25. So you're seeing some bit of impact on the equity share capital as a result of that. The other piece is with regard to borrowing. Now the borrowing number has come down, and that's a big plus, right? From 1900 crore, the borrowing number has come down to 1600 crore. But it still does not lend comfort. And let me try and elaborate as to why. One, you're looking at a borrowing number which is still reflecting a debt to equity of nearly 2 times, or rather 1:2 times. Your equity is to debt is 2:1 at least at this point, nearly 2:1, right? So that's the first big piece. The second big piece is that your debt to market cap also, your market cap is also 3,500 odd crore. So debt to market cap also is 1:2. So your market cap is twice that, twice your debt level. So your debt level doesn't look too good. The third piece is with regard to interest cost to operating profit. Your interest cost is roughly 300 odd crore. Your operating profit is currently sitting at 750 odd crore. So 350 crore versus 750 crore odd, which is again 1:2. So you're looking at all these ratios where if a small compression were to happen in operating profit, you will see a large squeeze on your profitability because your interest cost will remain as is. And that's where a possible concern could arise. Last off, your debt to EBITDA, your cumulative debt to your EBITDA is 2:1. So it would take maybe 2 to 3 years of EBITDA to actually pay off your debt. But of course, your interest cost is so very, very high that it's going to take far longer. Your cash flows currently are around 350 crore. Your cumulative debt is around 1,600 crore. Your cash flow from operations, pure play, it will take us 4 to 5 years to fully pay off that debt. So which is where the possible concern is. Cash flows this year, of course, were a bit of a challenge, and I'll talk about cash flow in just a bit. It's clearly a thumbs down because you look at your FY24 number, you look at your FY25 number, 360 crore cash flow from operations versus nearly 700 crore. No concern per se from a fundamental perspective, but please understand that your receivables going up and inventory going up is not healthy. So we'll have to understand whether this is actually going to continue to weigh down on cash flow from operations even going forward, or whether this is some temporary phenomena which will unwind very, very quickly in the next year. So we'll have to wait and watch for that. But even otherwise, when you're looking at your debt plus your cash flow, it's not looking like a very pretty picture overall. So something to keep in mind both from a balance sheet and a cash flow perspective. Anushi, you want to go ahead with return ratios?
Yeah, just before I go ahead with the return ratios, you talked about cash flows, you've given a clear picture. The interesting point would be to point out about the receivables also. You've seen a spike in the last 1-2 years or so. Yeah. So the question would be, a lot of dependency on the government side of the project. So how is that the key reason as to why we are seeing the spike in the receivables is something that we should be focusing on. But quickly walking through the return ratio numbers that we are seeing in the past 2 years, we've seen ROE coming down from the levels of 10% to 7%, but ROC mainly in the range of 14 to 15% of a number that we are looking at. So, well, almost a neutral kind of a stance that we are building for the return ratios that we are seeing. So that's as to where the return ratios is panning out. So again, Harsh, what about the shareholding pattern now? Even this one is an interesting one. We've seen a pickup in the FII's number, but the other parameters.
Yeah, and understandable because you had a QIP as well in the last year. So it's likely that domestic institutions did pick up. But two things which stand out for me. One is your number of shareholders have gone up dramatically. FY23 end, there were 1.2 lakh shareholders. Currently, you're sitting at 4.5 lakh shareholders. In just 2 years, the number of shareholders has gone up, which is never a good sign. The second thing is with regard to your promoter holding. In FY22 end, your promoter holding was at 55%. Currently at 36%. So your promoters seem to be in some form or shape, directly or indirectly diluting. They may not be selling stake. They may be doing it through a rights issue, which they may not be subscribing fully to, or a QIP, but they are diluting at this point. So you want to see as to whether that dilution continues or not. That's on the shareholding. But you want to take us through street cred?
Yeah, just it's not been a great year or the last 6 months for the business in terms of where the stock performance is concerned. In the 6 months, we've seen about a 20% of a downtick in terms of where the stock price is concerned. Last 1 year, about 25%. But in the last 3 years, the returns have been fairly better. We're looking at more than 100% of a growth. So net, it's not been a great year for the business in terms of where the stock price is concerned, right?
Yes, absolutely not. But the 3-year returns are fairly decent.
Yeah.
The 3-year returns, it's a doubler, which is a 24% return if you're holding the stock from FY22, from at the end of FY22, which is not bad at all, Anushi. So frankly, it's a bit mixed, and therefore we'll give this one a neutral. Last of valuations, you wanna take that as well?
Fairly in line valuations that we are seeing as compared to their peers. Now, while if you are just looking at the trailing P, now that trades at around 15 times, HG Infra, J Kumar Infra in the same picture, around 14 times of a multiple that we are looking at. So, not much of a variation that we are seeing as compared to where the other peers are in the similar space, right?
Yeah, absolutely. Therefore, let's try and sum it up. Let's try and look at all of our parameters and how the rating stacks up for this one. Income statement, desiring more for sure, just about a 10% growth. Order book also seen a bit of a contraction, but could future visibility be better is really the question. Balance sheet, the debt levels still continue to be elevated. Can that change? Also, there is a cash flow concern this year from a receivables perspective. If that were to change, you could well see your balance sheet also improve. So a couple of those metrics are interlinked, and therefore you might want to keep your eye out on that. Return ratios at this point just below mid-teens. Shareholding, whether now the promoter, which continues to hold 36%, which is decently healthy. I'm not saying it's bad in any form, but I'm saying there's been a dilution from the 55% level. Street cred, 3 years good, near term there's been pressure, and valuations largely in line with how the street, how other companies in the space are placed. So that's how it stacks up with regard to our KYC ratings. Let's quickly go across to Rahul Agarwal, who's the CFO at Patel Engineering. Rahul, first off, welcome. Good morning. I want to first start off by asking you, how has FY25 played out for you, and what's the outlook and visibility for FY26, especially from a growth perspective and a book-to-bill perspective? How do you look at it? What's the opportunity looking like?
So FY25 has been a good year in terms of revenue. We have grown around 12%. So we have pushed all projects and during the year and got good revenues and execution at all places. FY26 is in terms of revenue maybe a bit flattish, considering that the FY25 order inflow was sluggish due to election year. But the order inflow in FY26 and 27 looks good. So what we expect is 10 to 12,000 crores of new orders coming in this year and maybe next year also. So FY27 onwards, we see a good growth coming in terms of revenue.
Agarwal, this is Anushi joining in. Firstly, the important aspect I want to consider is the cash flows. Now, what we've seen across the sector in the construction space, there has been a spike in the receivables that we are looking at. So, this is especially due to the factor being state government. So, because of which we are seeing this kind of a pickup in the receivables that you are seeing. Want to get your sense on what has led to this increase in receivables that we are seeing. What's the outlook in terms of the projects that are there tied up with the state government? Just want to get your perspective on all these parameters.
So, see, our revenues have gone up drastically in Q4, which has gone up by 20%. So there was some working capital, money blocked in there. So that's only a temporary thing. So we expect the cash flows coming up in FY26. So yeah, we should be back.
Rahul, your book to bill is still quite large. So why the flat revenue growth guidance for FY26?
See, we are primarily into hydropower segment, 66% from the hydropower segment, which is a window of project cycle of around 5 years. Then irrigation segment is around 3 years. And so what we have done, if you've seen last year, our book to bill ratio was around 4 in the previous year, and we brought it down to 3 by, improving the execution cycle in this year. So continuing the same book to bill ratio with 15,000 crore order book, we should be doing around the similar number. Although we are L1 and we have got some projects post March 25, around 2,500 is what we have added till now. So total to order book, including that, will go to 17,500. But yeah, this new orders will take some time to mobilize because 6 to 8 months goes in mobilization. So that revenues will start kicking in the next year.
Point taken. And Rahul, with regard to this receivables, this large chunk of receivables which haven't come through in Q4, you are expecting that to come when? Q1, Q2, or maybe thereafter?
See, so overall, there is not much increase in the receivable cycle. If you see my net working capital days is still somewhere around 110. So that has not increased drastically from the last year. But yeah, the revenues are also going up. So it should be in the similar range. But what we expect is next year onwards, cash flow should be better.
So, Mr. Agarwal, considering this 15,000 crore of an order book that you have, for this year, how much will be executed? And just want to get a sense, like there has been, you've cited out more opportunities in the pump storage space. So with the new inflows coming in, would this be at better margins that we are seeing? Just give us a picture on firstly the kind of execution that there is, and would this be with better margins? So would this 14 to 15% of a mix that we are seeing in EBITDA margins, would that likely to sustain or see an improvement?
The EBITDA margin would remain in similar range. What we expect is with the growing revenues, the interest costs may not go up, and so there could be a spike in the bottom line accordingly.
Okay, Rahul. So Rahul, how large is the opportunity therefore? And what would your pipeline with regard to orders which you are going to bid for be like for FY26, FY27? What component of that is going to be pumped storage?
So, see, the opportunity is huge. There is almost 30 gigawatt of work expected to come in for pump storage and also for hydro power, similar sizes there. It is about pick and choose what projects we'll choose. So we'll not bid obviously for everything. So we are looking to bid around 50 or 1,000 crores. So, and that's why we are targeting around 10,000 crore order inflow.
Okay, so since we are seeing almost a flattish kind of a growth in terms of what you've guided for FY26, for FY27, can you provide us an outline in terms of what could the growth be, considering that you're seeing a huge pipeline in terms of new order inflows?
Yeah, so that would be between 10 to 15%.
Okay, 10 to 15% with a 14 to 15% of an odd margins that we are looking at, right?
Right, around 14%, correct.
Okay, and coming to the debt picture now the focus also has remained on the debt side of the business. We've seen a reduction from the last fiscal onwards. Where do you see the debt number standing at by end of FY26?
So we are not anticipating major increase in the debt. So there would be some working capital borrowing, but we'll probably pay some term debt also. So we should be around similar range.
Understood. What would that number be, sir? Because your revenue is largely going to be flat. Would you still require more working capital is what I'm trying to understand.
So working capital may be needed only if the new order inflows are there for mobilization.
Sure.
We expect the debt to be at what, similar levels what we have today.
Okay, point taken. And with regard to how you're viewing the book to bill at this point, it's come off sharply from those elevated levels. Where does the book to bill go, and how large or how many projects are you going to bid for in the next year, and what's your success rate at this point like, and what's the anticipation with regard to success rate?
Success rate is generally around between 18 to 20%. So yeah, we are expecting to get around 10,000 with a bidding of around 50,000 crores.
Okay.
So that is what we expect. And book to bill, because we are primarily into hydro PSP, which the project size will be for a cycle of 4 to 5 years. So the book to bill average will remain between 3.5 to 4.
Okay, so 3 to 4 times is what we are seeing for the book to bill that is there. Just want to get your sense on these capex plans that you have now, considering more order inflows for the business, more opportunities in the hydroelectric space. What is the kind of capex that you project for FY26?
So annually, our capex is between 150 to 200 crores. That may remain.
Okay, so that is the kind of. Can you repeat the number that you said?
150 to 200.
150 to 200 crore is the number for the capex that we are looking at. In terms of the segment which is this, now segment mix, we are seeing about 66% odd or so of the mix from the hydropower segment. Would that sustain as a number as well going forward, or would we look at a higher percentage in terms of whether segmental revenues are concerned, contribution is concerned?
See, in terms of hydropower, PSP, irrigation and tunneling, these covered 90% of our order book. So that should continue.
And sir, you do around 350 crore of free cash flow every year. So just broadly speaking, I'm just adding profit after tax and depreciation at this point to try and arrive at that number broadly. I know I'm not taking receivables, payables into account because you suggested that working capital will largely remain as is, or you'll borrow to fund that. What do you do with the balance? You're going to do 100 to around 150 odd crores of capex. What do you do with the balance 200?
The capex would generally be funded through client advances. So, and whatever cash flow we generate, we will try to put in back in the business itself, because there are a lot of opportunities coming in.
Target return ratio, Rahul, that you're looking at, an ROE, ROC.
So ROC is around 14-15 right now. So that will continue, and ROE would improve because we expect the profits to go up as the revenues goes up.
Point taken. Thank you so much, Rahul, for joining us this morning and giving us this perspective. Completely out of time, so we're going to have to let you go. Thank you.
Thank you.
Anyway, so that's how kind of we sum this up. Patel Engineering on KYC. With that, from Anushi, myself, everyone puts the show together. Thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
If we are able to make a woman sit on a stranger's bike and make her go to her destination in a dim-lit street, we felt it was history-worthy.
अब्बाई कोई soft spoken तो है?
Did you just call me soft-spoken?
Yeah. No?
No, I should just record this and let my team hear it.
I think what changed the game was bringing two-wheelers into the picture. Bikes, right?
Yes. India has always been the land of two-wheelers. Why don't we leverage this existing infrastructure to create a commute? You are getting on the bike of a stranger, but this stranger is verified who's driving your bike.
It took you 75 rejections. What was the harshest rejection you faced?
We remember every rejection. Some of the rejections we believe were also valid, and we learned from it.
How do you have 7 ideas that don't work and keep continuing to the 8th?
I quit my job without a plan. I ventured into some traditional industries, including real estate, mining, manufacturing tiles.
कोई sector छोड़ा नहीं.
I wasn't getting success in any sector.
But you even ended up learning Korean. How do you use those skills now?
I've actually quit my job while I was on a business trip in Korea.
How did you say I quit in Korean?
Nakuman desaya.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
So had I bought 1,000 shares of Berkshire and did nothing else, sat on the beach, didn't get a degree, I'd be worth 80 million today. So that tells you what the power of Warren Buffett is. If you think education is expensive, try ignorance. What he did when he was younger, in his 30s, he did what is called the cigar butt approach. What is important is temperament, of being able to be greedy when others are fearful and fearful when others are greedy. Warren Buffett has taught us that if you buy a thing correctly and you sit on it, you'll compound and make money.
In ancient Greece, it was common practice to seek the wisdom of the oracle. And that's because the oracle was said to know a person's fate. The most famous oracle was the one in Delphi, and Greeks would make the pilgrimage when they wanted to understand what they should do with their lives. Over the last several decades, investors have been making a pilgrimage to Omaha to seek the wisdom of a different sort of oracle. I'm talking about Warren Buffett, in case you haven't already guessed. Now, this year, just a few days back, Warren Buffett announced plans to step down as Chief Executive Officer of Berkshire Hathaway, a position he has held for an amazing 60 years. Today, on MoneyWise, I'm asking, what can you learn from that outstanding career? And can you adopt Buffett's philosophy for buying stocks here in India? Joining me today is a very special guest and one who has been a long-time student of Buffett's style and someone who's used the learnings from that style very effectively. Ramesh Damani is joining me today. Ramesh, thanks so much. Pleasure having you.
Thank you, Alex. It's so nice to be able to talk about Warren Buffett. What an illustrious career, as you said.
So let's start with your first impression, your first experience of Warren Buffett. Where did that begin?
I'll tell you an interesting story, Alex. I was 20 years old when I went to America for the first time as an undergraduate student to California in Los Angeles, where my sister was staying. And most people who go to LA for the first time request a visit to Disneyland or visit to Hollywood Walk of Fame. But what I told my sister at that time, if I remember correctly, that I want to visit See's Candies and Walmart. And she looked at me very quizzically. Why would you want to go to such crazy places that she hadn't heard of? And there used to be only one store in that whole neighborhood called the San Fernando Valley, which had a Walmart or a See's Candy. But she, like a good sister, took me to visit it. And I don't know, I must have heard about Warren Buffett even before that, and that's why I wanted to see it. I'm not really sure, but I went back later in life when I had learned more about Warren Buffett and checked the price of Berkshire when I first landed in America in 1977, and the price was about $70 or so a share, which today, for comparison, is about $800,000. So had I bought 1,000 shares of Berkshire and did nothing else, sat on the beach, didn't get a degree, I'd be worth 80 million today. So that tells you what the power of Warren Buffett is. But as they say, you know, that if you think education is expensive, try ignorance. The education that Warren Buffett has given us and a generation of investors has rewarded us so handsomely that even if we didn't buy Berkshire at the 70s in 1977, you still made out well if you bought good stocks in the next few years.
And you've proven that very effectively over the years. I'm hoping that some of what we speak about over the course of this interview will benefit people who are starting out and who may have tried their hand at investing here in India. Let's talk about that style of investing, because he is a huge proponent, the OJ value investor, right? So when you talk about that style, where does it emerge from? What was the original thesis that he had? Did it change over the years?
Yeah, it did. I think what he did when he was younger, in his 30s, he did what is called the cigar butt approach.
Yeah.
That you buy things net cash, which is so cheap that the next puff or the next smoke is purely free because you got the cigar butt practically free. So, or net means buying things below cash value at that time. But that had two problems, that business. One, you couldn't scale that business because you can only get one puff of smoke out of a butt of a cigarette. Or even if you got net cash, with the advent of computers and technology and wider access to Wall Street, there are only so many net cash companies that are available in the market. So it wasn't a scalable business. And that's where Buffett's partnership with Munger helped him. Munger, who was his vice chairman and sidekick, told him this is not scalable. You need to find a scalable business. And what Munger added to Warren Buffett, and they two did so famously, was instead of buying a fair business at a good price, they bought a good business at a fair price. And that made all the difference. So Warren Buffett bought, say, for example, See's Candy, not as a cigar butt, but as a decent sized business, a cheap rate, this thing. But from that he learned what a good business was and how it can generate cash flows year after year. Now the problem of scaling. So there's a straight line you can draw on his intellectual thinking between buying See's Candies in the 70s, as I mentioned to you, and then buying Coke. Because he realized that Coke had a global franchise and people don't get tired of Coke. You might eat 3 pieces of candy, but you could have easily 3 or 4 servings of Coke in a day because it's such a sociable thing to do. So that was Warren Buffett. But to answer your point more precisely, what Warren Buffett says is important is not IQ in this business. He says if you have 125 IQ, you can take 25 IQ points off and you won't lose anything. But what is important is temperament, of being able to be greedy when others are fearful and fearful when others are greedy. And Warren Buffett has taught us that if you buy a thing correctly and you sit on it, you'll compound and make money. So I think the most important thing that young investors should take away is the attitude, the temperament that comes with it. I've often said this on this show and other shows, Alex, that to me in a bull market, nothing is sadder than someone making 20 points in a stock that could perhaps go up 20x.
Yeah.
If it went up 20x, it would change your life. You'd make up 20 points, you'll have a good party and buy a good dress for yourself. It won't change your life. So Warren Buffett taught us that build the temperament of being disciplined, long-term investors, look at compounding, don't worry the market closes down, have conviction. Every day, American businesses and in our case, Indian businesses throw an opportunity for us. Be ready to strike when the iron is hot.
And you said it. I want to delve a little deeper into first that early life and then also some of the decisions that he made post-Coke and the influence of Munger, as you've already pointed out. A lot of people know this, people who know about Warren Buffett and Berkshire Hathaway, but for those that don't, Ramesh, talk about the fact that Berkshire Hathaway was not an investment company at the start. It was a textile company that he bought.
It was, as you say correctly, one of those cigar butts that he found. He thought it was so cheap that he could, flip it. The owner, I think, was going to be doing buybacks, so Buffett thought he'd make 10-15% profit. So he bought that company. And when he bought a sufficient stake, he went to meet management. And management said, okay, we'll make an offer for, say, $15.38, $38 for the share. And instead of doing 3/8, he did it for a quarter. So he ripped Buffett off the 1/8. Buffett was so angry that he kept buying the company. He said, I won't tender, I'll take over the company. And lo and behold, in the 60s, he took over that company. And that became Berkshire Hathaway partnership in the 70s or something like that. And the textile business was ultimately closed down because it was a failing business. It had nowhere to go. It just guzzled capital. But sometimes good things come out of bad decisions. And thanks to us, the investors, he created a conglomerate. It was not the most tax efficient way, not necessarily the best way to promote a partnership. But anyway, it was done, and that's history. And that's become what we call Berkshire Hathaway, one of the most formidable conglomerates in America. I think Buffett has said once that if there were 25 other companies like Berkshire Hathaway, no one else would have to pay income tax in corporate America. The kind of taxes they pay, the kind of people they employ, the kind of market cap they have. I think the market cap is probably richer than the entire Indian stock market, perhaps, at this time.
And what strikes me of late also about Berkshire Hathaway as it stands right now, a lot has been said. The headlines, people have probably read it, the amount of cash that they're currently holding, which just reinforces Warren Buffett's philosophy about buying businesses when the value is right. But it takes gumption, Ramesh.
It does, and he's done that multiple times, though he's always said just remain invested, our favorite holding period is forever. But he tends to kind of skirt it sometimes because he has such deep insights into American valuations. So for example, I think it was in the mid-70s, 73, 74, he made an all-cash outlook. So he had a partnership, he liquidated his partnership, and he returned the cash to the shareholders, saying, I can't find value in the stock market anymore. And a few years after that, the market collapsed from the 73 to 79 bear market that took place in America. The bull market resumed a decade later in 1982. So that was one of the famous cash calls he made. This time he's been warning of a slowdown in America, and he sold Apple, which was obviously his biggest holding. And raised his amount of cash corresponding to that. But as he said in his last AGM, in his last statement, he remains perennially bullish on America. He thinks America's economy is always going to do well. But as you said, that he's looking for the right value, when to step in and buy. So I think his gun is loaded. He's still looking for an opportunity.
Keeping the powder dry. When it comes to making the right investment, and you spoke about Coca-Cola, let's talk about some of his early mistakes, shall we call it, purely from the perspective of not liking tech and then eventually going out and buying IBM he bought and then he sold. He bought Apple, became his largest holding. What, in your reading of his philosophy, made him make those decisions?
Well, the one that he always talks about as being his worst investment was a company called Dexter Shoes. He bought that for about $400 million or so. And what he laments is that he didn't pay cash for it. I mean, you could have paid $400 million and lost $400 million, which would have been okay with him. He bought part of it in Berkshire Hathaway stock. And if you see how much Berkshire has appreciated after that, he calls it thumb sucking. He said that probably the biggest mistake that he made in his life was buying Dexter Shoes, because the original local manufacturing was completely decimated by the Chinese imports coming in, and the company could never recover its business. So he lost it. Recently, of more recent variety, he's made a trade that is, I think, troubling him a little bit. He bought, I think, almost 25, 20, 30% of Occidental Petroleum. And the stock's down 30% from his price because oil prices have collapsed after that. So will Occidental Petroleum become his new Dexter? Time will tell, but I don't think he's particularly happy about that. A couple of other mistakes he's made.
Airlines, maybe.
Yeah. Well, the airlines, he actually got out of making money. He actually held it and held it long enough that he made money. It turned out to be profitable. But he's famously said that if you want to be a millionaire and become poor, buy airline stocks. So, having said that, when he looks value, he never liked railroads, never liked airlines, never liked technology businesses. He's bought all of them at the correct valuation. So I think the key takeaway from his life and learnings is that focus on valuation.
Yeah.
I think it covers a multitude of sins. You can make a wrong industry bet, wrong management bet, but if the valuation is your favor, at least the outcome will be good.
Okay, so let's turn the lens to an Indian investor that is trying to follow as much as they possibly can in the footsteps of Warren Buffett. Talk about how you have employed his philosophy in the way that you have invested. For example, identifying a company first off, the whole idea of the moat. How do you go about doing that?
I think Warren Buffett has said it that either you get value investing or you don't get it. There are not people in between. I think luckily for me, I got it, and I hung around with people who understood it, who practiced it. So we kind of did it. And you look back at the results. As I told you, when I came back to India in the late 80s, the Sensex was 800.
Yeah.
Today it's 80,000. So you had a 100x move just by holding on to stocks in India.
Yeah.
So India in many ways has been a very profitable area to practice value investing. Now people have tried all sorts of things in India. They tried arbitrage, they've tried F&O, they've tried buying with insider information, trying with what management says, and then we tried value investors. And the ones still standing on the top after 30 years are the people who've been value investors in India. So it's what you need to understand is that what Buffett allowed us to enter was there was a intellectual village called Graham Doddsville, who Buffett followed, and now I would call it Graham Doddsville, Buffett and Munger, which is an intellectual village for value investors. And Buffett not only was the mayor, we opened the doors and said anyone who wants to partake in it can do it. And thanks to his teachings, thanks to his lessons, thanks to his temperament, we all entered who wanted to enter. It was a free entry. There was no pass to it. And we bought stocks, and Indian market has been great for value investors. You've had so many great stocks like ITC, Reddy's, Cipla that have multiplied returns for investors over long periods of time. So I think we are very blessed that we could learn at the feet of the master almost.
Of course, you have a process that you follow that you've learned over the years, and you said that you've attended this beautiful village, this intellectual village. When you look at a company for the first time, what are the kind of filters that you apply? Not necessarily all of these fancy terminologies, but what are the simple questions that you ask?
It's in that case, I must admit that it's different from what Warren Buffett does. Warren is such a ferocious reader and such a ferocious acquirer of numbers that what he does is that he values a business and then checks the market cap to see if there's a difference between the valuation he thinks it should be and the value the market is ascribing to that. So by the time we wake up, he's probably studied 100 companies already. So he knows all the companies in the S&P 500. He knows companies in Korea. He knows companies in Japan, as he bought this Japanese trading company. So he keeps doing that. I have not, unfortunately, had the same prowess as him there. So I start from a different perspective. So I'm not exactly following Buffett, but if I like a business or I think bullish about the business. So for example, sometimes in the 2000, after the tech boom in India, I got bullish on the BPO business, or what is called now GCC, Global Capability Centers out there. I realized that we have a big business in India with telecom costs coming down, real estate costs being similar. So I went and did a deep dive on the entire the BPO business. It was a way of a few thousand crores. I thought it didn't make any sense to me. So we bought all the top 3 businesses that were doing BPO at that time. And that turned out to be a very profitable decision. So what I first do is I look at the market cap of a business and see what is the market ascribing value to it. So for example, to give you another more current example, the PSU defense shipping companies, if you looked at back 3-4 years, they were trailing at a fraction of the market cap they're trading now. It didn't seem likely because Mazgon Dock, which I'm not recommending, and I have a small position in it, but I'm not recommending this stock in any way. But to illustrate the point with you, it was available, it IPO'd at a market cap of 3,000 crores. And it had almost that much equivalent in cash in the balance sheet. And it had an order book visibility for the next 5 years. So it was just, deep value investing that we were practicing when we bought that. So I think there's a difference. I mean, you can't compare yourself to the sage, but the basic principles he taught are still valuable in India. Will they have a cash flow? Will they have, dividend yield? Will they have order growth? I think there are a lot of stocks and a lot of practitioners in India who skin the cat themselves. So as Warren has himself pointed out, it's not that you have to buy the same stocks. It's such a wide intellectual field. You have to buy things cheap, and you got to believe in the management, and you got to hold on till they came out. And I think that's the biggest lesson.
Okay. And you've given some lovely examples. So let me ask you this. Of course, you've made mistakes over the years. Everybody has. Interestingly, right? So if you're doing value, there are a lot of people that have perhaps looked at the same company and said that it's not worth the money and I don't want to buy it for various reasons. So in a sense, you're doing the opposite of what they're doing. And there's a reason why you have to do that, right? So, but it takes conviction. So if you've made the wrong call, unfortunately, things can go very wrong. How do you pick yourself up? And have there been instances where you've done that? How have you done it?
Yeah, I think there are two kinds of mistake. One is, of course, you buy the wrong stock itself. But let me give you an example of one stock that I got wrong. We bought a company called MTNL, if you may recall. That was the fixed line provider, public sector stock in India. That stock went from, I don't know, 200 to 20 bucks or so. So I lost 90% of my money in that stock out there. But the thing is, there's a quote attributable to Peter Lynch, where he says that you should always water your flowers and cut your weeds. So while I lost 90% of my money, it was a loss I could avoid because I had 10x, 20x in so many other stocks. So I lost one part of my earnings in MTNL, but it more than made up by other stocks that went up 10, 20x. If you flip everything for $20 profit or 20% profit, you're never going to get rich. So Buffett also taught Lynch and taught us that you have to hold on to the great winners forever because compounding will take you over time. But the other set of mistake, which Buffett calls thumb sucking, which are so important that I think value investors broadly will get this part right. So, we'll buy good stocks, and even if you have a few losers, the winners will compensate for the losers. So there's nothing I worry about too much. But it's what we call not the errors of commission, it's the error of omission. I mean, for example, Bajaj Finance, the company in my backyard that, in Pune, I mean, it's in my circle of competences in finance. And for many years, I missed that. I mean, that's an error of commission, error of omission. Because how can you miss that? It's in your backyard, it's a business you understand, it's run by management you trust, how you do that. Again, I'm not recommending any of these stocks, but just to illustrate the point that these errors of commission, errors of omission that you make sometimes hurt your portfolio more. I think no one can point out, say, oh, you didn't buy this or you didn't buy that. I think that's what we should try and, if there's something within your circle of competence and certain something that you should understand, and if you didn't understand that, you should really punish yourself. And I think that's something that I think we all could improve, including Warren himself.
Okay, so a couple more things that would be very beneficial to people listening in, right? Warren Buffett has over the years had concentrated portfolios. So I think the question a lot of investors ask at the start is, how many businesses should you own? Is it okay to have very concentrated bets? What's the definition, in your opinion, of a concentrated bet?
I think, yes, Warren Buffett does believe in that. Charlie Munger does believe in that. Unfortunately, I'm not that good a practitioner of what Warren and Jai said. I run a more diversified portfolio, though I would say 50% is in the top 10, 15 holdings. The rest is white tail because that's just the way I operate. I think it requires a lot of self-confidence and a lot of seasoning before you reach there. It's a goal you want to reach there, but it's not easy to reach there. So Warren Buffett has run a very concentrated portfolio. I think for most people, maybe you start off with diversified and then gradually move up the ladder.
Okay. Now, we've spoken a lot about which companies to buy, and you've said weed out the ones that don't work, right? And of course, margin of safety is something that Warren Buffett always speaks about when he invests in companies. But when do you sell is the question that a lot of people ask. Of course, you can aspire to hold forever, but if it's not doing well, how do you decide when to pluck the weed?
Well, if it's not doing well, then it's very easy. Then you know how to pluck the weed you want to do out there. But sometimes you have extraordinary winners in your portfolio because stock got up 30x, 50x. So you don't know when to sell. And there are very, very few businesses that you can hold through the business cycle. I think Munger was one person, Phil Fisher was one person who understood that they could hold the stock they bought. For example, Munger talked about a stock called Maotai, which is one of the Chinese famous liquor maker from China. And he's often told it was founded by Li Liu. And he said, we're going to hold this stock forever because, liquor is never going to go out of fashion and Maotai is going to be the most iconic brand out there. So they kind of find these businesses that they want to hold forever. So maybe a liquor business, a tobacco business, even in India, are businesses that you can hold forever. But the short answer to your question is that I bought a lot of stocks that have done very well in a bull market, up 20x, 30x in a bull market. So if you believe that the bull market is coming to an end, sometimes it pays heed to take some money off the table and sell those winners and wait for a better investment opportunity in maybe other stocks or maybe in the same stock but at a different time. So occasionally the market will take and overvalue these stocks. And as an analyst, it is your job to be true to yourself and not say, oh, because I picked a 30x, I won't ever sell it. At least I have not reached the state to buy that businesses that I can hold those 5 businesses forever. Not that there aren't businesses like that, but it takes a huge amount of intellectual rigor to figure them out. So if you do a bit more loose, elastic analysis, maybe one way, if it doesn't work, obviously you want to get out of that. If your thesis is wrong, the faster you get out of it, the better. The other thesis, if you think the bull market is ending, because typically, Alex, when a bull market ends, all stocks will be down 30, 50, 70%. So might as well lighten up at that point. So that's what I use for myself.
Okay, last point that I want to ask. And we've spoken about Buffett using cash and dry powder. I'm wondering whether you do. And are there moments when you have probably wished that you had deployed earlier?
I do. In fact, this is a good current time that I'm thinking that. In September, October, when the market was wobbly, as you remember, and I was feeling very nervous for the market. So we took some cash out from the table and created a cash reserve for ourselves, which held us well through the correction in October, through the trade wars, through this Indo-Pak conflict. It has held me well out there. But generally speaking, I like to be well invested. I like to be, to use the word fully invested. I am not now, but I'm a bit of a slower investor that once I get into cash, it takes me time to get back into it and deploy the cash. I will ultimately, but and as will Warren Buffett, but we need to find that those comparable values out there where you can put large sums of money to work. So it's somewhat of an intellectual effort to do that.
Last bit of advice that you would give to somebody listening in that is at the start of their investing career, trying to build an investment portfolio of stocks, what would you tell them?
It's very simple, actually. India is a young country. A lot of investors are young in India. So you want to first save more than you spend. That's the first thing out there. And secondly, what you save, you want to put in appreciating assets rather than depreciating assets, because that's what will go up. So if you go out and spend on a car or a phone, you feel nice, but it'll depreciate down in value. But if you buy a common stock or something that can appreciate, you'll probably make better gains out there. So start young, invest in appreciating assets, and what Buffett has taught us so vividly is learn how to compound money. Compounding is a magic that people need to understand, that Buffett has taught us, that if you double your money every 3 years, I think in 12 years you'll have 16x your money. There's one Warren Buffett quote which I don't remember exactly, but what he said is that if you want to get from the middle class to the money class, all you need is 30 years, a bull market, and the ability to compound money, and you'll get there. You can start with almost any amount of money, Alex, and which is the point I always tell investors. You can start with almost any amount of money. If you do it successfully for a 30-year period, which is your professional life, 30 years you would have 1000x the money that you started off with. 1000x the money. Wow. Do that on a computer spreadsheet and see for yourself. You double your money every 3 years. What happens in 30 years? It is extraordinary, and that path is open to everybody. It's the path is already laid out by Warren Buffett, and we just have to climb that path.
On that very special note, Ramesh, thank you so much for taking the time.
Always an honor to talk about my great guru in life, Warren Buffett. Thanks, Alex.
All right. Well, there you have it. I've been fascinated by this conversation. Let us know what you think, and do stay tuned. There's lots more coming up on NDTV Profit.
If we are able to make a woman sit on a stranger's bike and make her go to her destination in a dim-lit street, we felt it was history-worthy.
अब्बास कोई soft spoken तो है?
Did you just call me soft-spoken?
Yeah. No?
No, I should just record this and let my team hear it.
I think what changed the game was bringing two-wheelers into the picture. Bikes, right?
Yes. India has always been the land of two-wheelers. Why don't we leverage this existing infrastructure to create a commute? You are getting on the bike of a stranger, but this stranger is verified who's driving your bike.
It took you 75 rejections. What was the harshest rejection you faced?
We remember every rejection. Some of the rejections we believe were also valid, and we learned from it.
How do you have 7 ideas that don't work and keep continuing to the ape?
I quit my job without a plan. I ventured into some traditional industries, including real estate, mining, manufacturing tiles.
कोई sector छोड़ा नहीं.
I wasn't getting success in any sector.
But you even ended up learning Korean. How do you use those skills now?
I've actually quit my job while I was on a business trip in Korea.
How did you say I quit in Korean?
Nakuman desaya.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay
Welcome, you're watching The Big Question. I'm Tamanna Inamdar. Now, in the past few days, the country and the entire world has seen the might of the Indian Armed Forces as they launched Operation Sindoor, conducted precision strikes at terror hubs in Pakistan and successfully thwarted the swarm of drone attacks from Pakistan. What the world has also seen is the success of our indigenous, made-in-India weapons, a feat that many believed India was perhaps not capable of a few years ago, completing missions in 23 minutes and destroying Pakistan's foreign supplied weaponry. These have all been the result of made in India weapons. Now, this is the important perspective to look at in context. India has been an importer of arms for the last several decades. Our nation has relied heavily on foreign imports to meet our defense needs, making India the second largest arms importer in the world, with indigenous capabilities playing a limited role. In fact, indigenous defense production was often viewed as slow, uncertain, or symbolic. But that perception is now being rewritten. From a 65 to 70% import dependency, India has come down to 35% and aims to become a net exporter in the next few years. Defense exports are up by 34 times over 11 years. Defense production has seen an almost 3x increase. Now, while efforts have been underway to build self-reliance, Operation Sindoor marks the first significant test of these capabilities in action. For the first time, India's indigenous weapons were tested not just in trials but on the battlefield. And they delivered. Some of the indigenous stars of Operation Sindoor were the Akash missile system, the Nagastra-1 kamikaze drones, ISRO satellites that kept surveillance and Indian citizens safe. These weapons not only defended but also neutralized enemy weapons like the PL-15 missiles of Chinese origin, Turkish origin drones, and much more. So understand it like this: while the enemy had to import and was using weaponry made by China, by Turkey, India was hitting back, striking back and defending, of course, with technology with our partners, but largely with indigenous weapons. Post-Operation Sindoor, India's technological edge and tactical superiority has been recognized by experts around the world. So in that sense, Operation Sindoor is not just a military milestone, it's also a watershed moment for made in India weapons and the defense sector in the country. Now that's something, of course, that those of you who follow equity markets have been seeing in defense stocks. But this is a bigger story than just that. It's a moment that shows the transformation of India's defense sector from a buyer to a builder, from importer to innovator. And that's the big question we're talking about today. Is Operation Sindoor Indian defense sector's moment in the sun? And who better to speak on it than Ankit Mehta, CEO and co-founder Idea Forge, Ashok Atluri, Chairman and MD, Zen Technologies. Welcome to both of you, and thank you so much for speaking with us here on NDTV Profit. Just to set the ground rules straight, we're not talking about the financials of your companies here. We're not talking about your balance sheet. And of course, we will not ask you to divulge anything which will not be in our national interest. But we want to get a sense of how big a paradigm shift this is. Mr. Atluri, let me begin with you setting the context, because this is something we're seeing externally. But you know the shift and the tectonic shift that has taken place in the Indian indigenous defense sector.
Yeah, I think this is a big event, Tamanna. I think what's changed is the perception that India, the made in India brand has improved because of this. So I think this was a fantastic marketing opportunity for us. And I do feel that some companies have really come out tops. They have proven their products, and the government is really very excited that it's not only. So now the government has shifted from talking about only make in India for the India, but making in India for the world. Now they are trying to identify global champions. When we talk about being a net exporter, what we want is identify few product segments in which we can absolutely dominate the world and pour a lot of R&D amount into it, and then so export it to the world. But again, even before that, these companies should be have been battle tested. They have been also indigenous IP tested, in the sense there is a category called Buy Indian IDDM, in which they examine the IP content and they buy only Indian-made, Indian-developed drones and anti-drones. So I think this whole thing, from basically the effort that was started in 2016 by Mr. Parikar when he introduced the IDDM category, 2020 reiterated. So, and now we are actually seeing that in the battlefield, the products have worked. This is a huge thing, and I think the days for India to become a major defense player, not a made. So when people say make in India, I do get a little irritated. It is design, develop, and make in India. The IP is owned by us. We are not just partnering with it. So that's one category. Of course, there are other categories, as you said. We are collaborating with foreign players to develop locally and then sell it. Yes, but this is a complete India game now.
This I just love this. Zen Tech, and by the way, stock has been on upper circuit for the last several days. That's not what we're discussing today, but just that confidence. He gets irritated when people say make in India. We're designing in India, we're ideating in India, we're innovating in India. Ankit Mehta, that's an important difference to make. We're also going to be exporting from India.
Absolutely. I think what Ashok sir said, I think it's really important that we recognize the fact that India is no longer dependent entirely on the rest of the world to give it technology. I mean, I completely second his sentiment that it is actually very, you can say, demeaning to the Indian technology in the Indian context, where we are trying to say that we can't actually build technology in India when we have some of the biggest and the best global institutes in the country that have done us so proud in the rest of the world. The same talent, if it can do well there, then we can do stuff here as well. And that's what we are showing over the last 20 years at Idea Forge. That's what we've been doing. We've been building not just technology in the country, but we are also building some of the best capabilities in the world in the categories that we build for. I think that confidence will see a huge boost now, and we will see more people coming into this area, and we will see that more people will have the courage to not just get stuff from outside, but to make it such that it can be relevant for the rest of the world. And India is a great testing ground for that. In India, we have to make technology that has to work, not just now. We have tested them in real conditions, real crisis, or a real moment of you can say adversity with our neighbors, but we also have to build for them in the peacetime to work in some of the highest operating environments in the world. We are talking about flying at more than or operating at more than 6,000 meters, operating at minus 30 degrees, minus 40 degrees, operating in the deserts of Rajasthan, operating in the marine environment of our country. So building technology in India is really a testament to building very high quality stuff that actually works and can work anywhere else in the world as well.
So, Ankit, let me just take a follow-up from you. And, you've echoed what Mr. Atluri said, that why this idea that, it can't be built in India, because it hasn't been. Let's be honest, things have been very different. And Make in India before Operation Sindoor was a great idea. But now the theory has been proven by the practical. So people need to see the practical to see that it's really working, which is why I'm asking, is this the paradigm shift? Is this the moment in the sun for the Indian defense industry? Ankit, that question to you first.
For a war scenario, yes. But if you look at what we've been doing in India, and we've been combating militancy, we've been combating terrorism for a long while now. And the technologies we have created to combat militancy, terrorism in our country, they are also showing up in a very big way. We will see incidents, but the amount of development, process, method, technology that is being conducted, and a lot of it homegrown for doing these operations. Again, India has actually real world tested systems that have helped catch militants, insurgents in many operations out there. So that is one part of what we are very good at. We have proven capability there. But now with what has been battle tested, again, we get to a new moment under the sun where it will be recognized globally, and we will see that our technology will be trusted as well.
Mr. Atluri, for the longest time, the biggest news on the defense sector used to be deals that were inking with, and this was part of state visits, where you'd be inking deals with a European nation, with the United States, with Russia. And there was always this idea of transfer of technology, TOT. Ashok Atluri, the question to you. Where it would be, okay, India will get some transfer of technology in return for these large orders that we're giving. Has that TOT built the base of what we're seeing today, or is this an indigenous PLI incentive scheme backed push that we're seeing? How exactly has this gotten the Kickstarter it needed?
I think the products that we have developed are not my personal view is that it's completely indigenously developed. Companies like Ankit's IdeaForge, there's some other companies in drone segment, and Zen Technologies has been the forefront on R&D, and we have been working on a counter-drone system since 2018, when there was complete silence about anti-drone systems. We were talking about anti-drone systems. So what I think is whatever have been battle tested were completely indigenously developed. Some of the product, but some products of course have been imported. But I think this has the key, the paradigm shift here has been that India can develop and it works in the actual war. That confidence that the government must have got from now. So the follow-up action should be, the one thing any startup or any even existing player wants is, we want orders to come in a regular flow. And we want to build our capacities for a full-fledged war. Somebody was asking what kind of capacity should India have. We should think of a multi-front war from all our enemies, and we should say that if the full-fledged war is going and the expenditure of the ammunition, the equipment happens on a per-day basis, we should be able to replace. The industry should be able to replace. That is the capacity that we need to build, and government has to come forward, and especially in some certain segment, they should say, listen, this is a spare capacity you need to keep for a full-fledged battle kind of scenario. I think that confidence has come in after this event, and we feel that we feel almost redeemed that we bet big onto the IP development for the country.
Oh, redeemed and how? Redeemed and how? We're putting that up on our screen. These are the industrial heroes behind Operation Sindoor, and of course, full salute and respect to our armed forces. But these are the guys that are making sure it's indigenous. We're not dependent on anybody who can use their equipment to us as a bargaining chip or operating leverage, and that makes a huge difference whenever you are in this kind of a scenario. Ankit Mehta, I want to understand what is the kind of capability we're developing? Because one thing that we've seen in Operation Sindoor, and which is why it's marking what new age warfare looks like, that everything has happened without crossing borders on both sides. No one crosses any borders. It's all very technologically driven. It's a lot of stealth weaponry which comes into use. So this is truly at the cutting edge of what we're seeing globally. Is that safe to say, or is it an overreach?
No, absolutely. I think from the point of view of the counter-drone systems that were very effective in neutralizing the kind of challenges and the kind of attacks we were facing on our side, we definitely have proven that we have one of the best anti-drone and anti-air defense technologies in the world. And some of it is indigenous, some of it we have gotten from our partners, some of it is legacy systems as well. And all of them worked in a layer format to prevent an attack on our soil and our territory. And on the other hand, if you look at what we attacked with, again, I think the technology has to be there to do the kind of precision attacks that we have done on the other side, where we have been almost inch perfect in terms of what we targeted and where those munitions landed and how they were able to create the necessary damage that we were seeking on the other side. So yes, technology now going forward will entirely be dependent on the use of the aerial power, the unmanned systems, both in terms of attack and in terms of defense. They will be required, and they are also required even before any of this starts. They are required to gather the intelligence on the other side. They are supposed to operate in our territory and get us intelligence of what is happening on the other side, so that we can get the right kind of targets to look at the kind of targets that we can zero in on to ensure that we are able to be precise in what we are doing. And that precision is something that was very, very critical in India's operation. The ability to maintain that we have been very precise and very, very specific in what we did, I think is a huge win for our country. And that's the future, where we are going to do in any war scenario an end effect that is very clear, that it achieves its precise objective and does not cause too much collateral damage. That's going to be very important as we make sure that we get rid of the challenges that we face from across the border.
A precision without collateral damage. I mean, that's really the kind of thinking we want. Mr. Atluri, just want to understand the extent of technology and how we would compare to say what we now know and see across the world. Because it's one thing for us to say, and Operation Sindoor has shown that tactical excellence as well. But in terms of just pure hardware, weaponry, technology and capability, how do we compare to some of the biggest defense producers of the world?
So in terms of counter drones, I think we are absolutely there, and because we have demonstrated it. We need better integration with the weaponry system that we have. That's an ongoing process at this point. That's a proven process. I wish the armed forces accelerate the induction of that. But again, we are absolutely on and absolutely in top 1 or 2 as far as the counter drone technologies goes. Ability to intercept, and very preemptively, one of the things that we did was lot of problems that the procurement process now we're facing is they are buying counter drone technologies with commercial drone capabilities. That means to say only DJI drones or something which fly at 2.4 or 5.8 gigahertz are being stopped. But when we started investing much ahead and saying, listen, the terrorists or the government supporting them will not stick to the commercial frequencies. They may come with any frequencies, and lo and behold, we have actually seen in this scenario that they were flying in all kind of frequencies, and our systems are able to thwart them. Again, very, very few companies in the world are doing it operations at this level. So I think this was really, really proven that what we are giving is not a second kind of thing. It's absolutely in the top of the products in the world.
And Mr. Atluri, may I point out, without any media spotlight or glare, I mean, you and I speak pretty much every quarter, and of course we discuss your numbers, and sometimes you talk about what the new products etc. are, but not just you, for the industry as a whole, no media spotlight, no glare, no information on what India is really building till it is in action, and that also becomes a very important part.
Very frankly, when this thing came, our guys are there supporting the armed forces at the place of action. So the general feeling in Zen was, this was the moment we have been built for. And we were completely all out, saying what can we do at this point in time to support the Indian armed forces to win the war. And I think that commitment is much more than the orders that we are getting, the thing that I could see that when companies that are not having that high agency, that factor of that patriotism, will actually, when the war comes, they want to back out, which is kind of strange. So we have, this is the time we really put your heart and soul in supporting the government. So I think we as a company, it also kind of proved to us that, these guys were actually fighting with each other to go to the fronts. So, I think we are very, very lucky in that way that company is, completely committed by heart and soul to ensure that India wins every war, not only now, but in the future also.
Just amazing to hear. That's just amazing to hear, because it's intertwined. It's nationalism, patriotism, of course, profits, balance sheet. You are a listed company, so there will be that scrutiny. Ankit Mehta, we've hopefully got your line back. Just this point of how we compare with the best in class, because that's also important. We shouldn't lose sight of that bigger picture there if you want to continue to excel at this pace.
No, absolutely. So if you look at technology, particularly insofar as drones are concerned, and Ashok sir mentioned regarding what is happening in counter drone, but insofar as drones are concerned, there are many categories. There are categories that you can create that can launch from the palm of your hand, that can observe the target right in front of you, maybe a house or something else. And then you have drones that can operate from 5 kilometers away to go to the house and observe it, or maybe from 100, 200, 300. So it depends on from where you want to take off and go and observe your target. And each category has different roles as well. Some have the ability to observe the target, some have the ability to attack the target, and some will have the ability to have some kind of other sensing that may be required in that area. So in different categories, our drones will compare to different players in the rest of the world. And if I talk about this palm launch drones, I think India has just started. So that category, perhaps we are just getting started in the country. But if you look at one category that exists between 5 to 20, 30 kilometers, I think India has the best drones insofar as intelligence, surveillance, and reconnaissance are concerned in this category. Some of the drones that we build outperform what the rest of the world builds by a significant margin in terms of capability. Then there is a capability above that. Again, India is getting into that category right now, and we will progressively build the best in the world as well. So there are some categories for which we are already very, very good. And there will be categories that progressively we will become better at. And I think this experience in the war will also make sure that what you build is resilient and is capable of operating in the kind of environments we are going to see in the war. Going forward, we will need resistance to electronic warfare equipment on the other side. We will need resistance to making sure that we have capability of upgrading the intelligence of our systems in the field. So that, like Ashok sir said, we need people on ground to make sure that they can adapt to any situation as it evolves on the ground. So there are many learnings, and those learnings have to be translated into what we buy, and that is what's going to drive us and propel us to be ready for the next wave and the next iteration of what can happen.
So this becomes crucial in the next iteration. Ashok Atluri, what needs to be done to push us to our goal of being export surplus country in the defense sector by 2047?
I think we'll revise it to 2027. I think we should be really working very fast, and and I think what the government has already done: easy policy rules, PLI schemes, banning of import. These are the kind of steps, and IDDM. If you get these things right and then they insist that indigenization should happen, the IP should be Indian. I think we will be on track. And very frankly, Tamanna, we are almost there in the sense that 2047 looks very, very far away. I think by 2047 we will be really. I personally think we'll be the largest economy in the world. But if we should get the policies right, where these, and now the policies are right. What the industry needs is the proven technology, people who have done please start giving them large orders so that they build the capacities. And even the procurement process, when you go, there is a platform called GEM. In that, you become L1, and they have something called the reverse auction enablement. Those are the kind of things that really kill the IP owned companies, because there's a lot of R&D involved, and people who are actually reselling products, buying and reselling, they can really cut down their prices and come down to a very, very low level. And that's the way to kill the technology within India also. So these reverse RAs and all those kind of things have to be removed, or people who have proven technology, give them lots of orders so that they can make the system and keep improving. Listen, the fact of the matter is, if there is a IP driven company, no matter how much they give, they are addicted to R&D. All the money will go into R&D to create the next range of products. So you identify those companies which have track record, which have created the IDDM, and then start giving them large orders, and they have already proven the technology. And I think that will set the path for the global domination in certain categories. Again, we don't want to be dominant in all the categories, but certain like drones, counter drones. We are also good at training simulation. We are the best in the world in training simulation, and robotics that we are trying to get into. So get to dominate. The Pareto. These are the Pareto fields in which, if we dominate them, we'll definitely become one of the largest exporter of defense goods.
I appreciate that, Mr. Aturi, but having said that, there is a tried and tested system of procurement in India, and looking at the history we've had over, the history of the nation really, for the defense sector especially. I think if there is a transparent, tried and tested process, yes, it might be a little painful for you as an innovator, but that's part of what is important in a democracy as well. I'm sure you will appreciate that. But just fantastic speaking with both of you. Thank you so much for your time. This has been a very enjoyable conversation. IdeaForge CEO and co-founder with us today, Ashok Atluri of Zentech, also speaking with us on the watershed moment, the coming of age really of the Indian defense sector. That's all the time I have on The Big Question, but stay tuned. A lot more coming up on the other side on NDTV Profit.
If we are able to make a woman sit on a stranger's bike and make her go to her destination in a dim-lit street, we felt it was history-worthy.
अब्बा कोई soft spoken तो है?
Did you just call me soft-spoken?
Yeah. No?
No, I should just record this and let my team hear it.
I think what changed the game was bringing two-wheelers into the picture. Bikes, right?
Yes. India has always been the land of two-wheelers. Why don't we leverage this existing infrastructure to create a commute? You are getting on the bike of a stranger, but this stranger is verified who's driving your bike.
It took you 75 rejections. What was the harshest rejection you faced?
We remember every rejection. Some of the rejections we believe were also valid, and we learned from it.
How do you have 7 ideas that don't work and keep continuing to the ape?
I quit my job without a plan. I ventured into some traditional industries, including real estate, mining, manufacturing tiles.
कोई sector छोड़ा नहीं.
I wasn't getting success in any sector.
You even ended up learning Korean. How do you use those skills now?
I've actually quit my job while I was on a business trip in Korea.
How did you say I quit in Korean?
Nakuman desaya.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
If we are able to make a woman sit on a stranger's bike and make her go to her destination in a dim-lit street, we felt it was history-worthy.
अब्बा कोई soft spoken तो है?
Did you just call me soft-spoken?
Yeah. No?
No, I should just record this and let my team hear it.
I think what changed the game was bringing two-wheelers into the picture. Bikes, right?
Yes. India has always been the land of two-wheelers. Why don't we leverage this existing infrastructure to create a commute? You are getting on the bike of a stranger, but this stranger is verified who's driving your bike.
It took you 75 rejections. What was the harshest rejection you faced?
We remember every rejection. Some of the rejections we believe were also valid and we learned from it.
How do you have 7 ideas that don't work and keep continuing to the 8th?
I quit my job without a plan. I ventured into some traditional industries, including real estate, mining, manufacturing tiles.
कोई sector छोड़ा नहीं.
I wasn't getting success in any sector.
But you even ended up learning Korean. How do you use those skills now?
I've actually quit my job while I was on a business trip in Korea.
How did you say I quit in Korean?
Nakuman desaya.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
If we are able to make a woman sit on a stranger's bike and make her go to her destination in a dim-lit street, we felt it was history-worthy.
अब्बा कोई soft spoken तो है?
Did you just call me soft-spoken?
Yeah. No?
No, I should just record this and let my team hear it.
I think what changed the game was bringing two-wheelers into the picture. Bikes, right?
Yes. India has always been the land of two-wheelers. Why don't we leverage this existing infrastructure to create a commute? You are getting on the bike of a stranger, but this stranger is verified who's driving your bike.
It took you 75 rejections. What was the harshest rejection you faced?
We remember every rejection. Some of the rejections we believe were also valid and we learned from it.
How do you have 7 ideas that don't work and keep continuing to the 8th?
I quit my job without a plan. I ventured into some traditional industries, including real estate, mining, manufacturing tiles.
कोई sector छोड़ा नहीं.
I wasn't getting success in any sector.
But you even ended up learning Korean. How do you use those skills now?
I've actually quit my job while I was on a business trip in Korea.
How did you say I quit in Korean?
Nakuman desaya.
One of the most competitive spaces right now is the mobility space. And one player that is quickly making strides and managed to disrupt quite a duopolistic market is Rapido. I'm speaking today on the Disruptors with Pawan, who is one of the co-founders. Pawan, thank you so much for coming in and joining in and submitting yourself to our questions on the Disruptors.
Thank you so much, Taman. I'm actually pleasured to be here and excited to be here.
Yeah. Okay, let's start with the name of your company, Rapido, and how you think you have disrupted the space, which is dominated, of course, the mobility space by two big players, Uber, which is an international brand, Ola, which has come much before you. I think what changed the game was bringing two-wheelers into the picture, bikes, right?
Yes. So, quickly about the name, Rapido, we wanted to have a name that suggests something that is safer and quick, not just fast, not just quick. So Rapido in Spanish, it means swift. So we wanted to give that sense of smooth ride when a user is taking. And coming to the choice of two-wheelers, for us at Rapido, one of our mission is to actually create impact on billions of lives. What we have seen back in 2015 when we started Rapido was, while there was a ride-sharing revolution going on, a lot of common people are still struggling to get a vehicle or still, hopping on the footboard of the buses or Mumbai locals. We realized how can we make the existing transportation even more affordable and a bit more convenient. India has always been the land of two-wheelers. 200 million two-wheelers for almost a population of 1.4 billion. It almost averages out that every family actually owns a bike. We realized if all these bikes are anyways on the road, 95% of these bikes actually have a single passenger who is the driver who's driving that bike. We said, why don't we leverage this existing infrastructure to create a commute, not just in the top cities, 7-10 cities of this country, which are Delhi's and Bangalore's, but also in the smallest of the cities, let's say Siliguri, Patiala, Jorhat. Yeah, that has been our
but let me come back to what you started with. You've made it clear it's Rapido, it's not rapid, because you're saying swift along with safety. So speed and safety. The idea of a two-wheeler as a mode of transport, especially when you're hiring a mode of transport, is not necessarily seen as safe on top of the pyramid. You'll say, okay, it's faster, it's more economical.
Yes.
Not necessarily safe.
Yes. So that is exactly the perception that we wanted to break. If you quickly see, sometimes in your childhood, a lot of Indians would have already gotten on a bike. It might be with your father, with your brother, with your friend, whatnot. The only difference in Rapido is you are getting on the bike of a stranger. But this stranger is a verified, all checks done stranger who's driving your bike. We did not also wanted to call him a driver. We call our drivers as captains, exactly for this fact that that guy is responsible. That guy and the platform Rapido is responsible to take you to your destination safely. We knew that Rapido is the first player who is introducing the concept of bike taxi in this country. So this category itself, if it has to exist, then safety has to be its foundation. And hence we have gone multiple notches above what's required to ensure that it's safe. Just for a quick comparison, if you look at Rapido's current safety features, they are not just national best. They are sometimes the global standards. As simple as an Indian element. If you're a small town girl or a boy, right, and you are trying to go somewhere, your parents usually are worried. What do? They keep checking in on you. Hey, beta, did you reach? Did you reach properly or not? We said our platform needs to deliver that kind of safety. So we exactly did that. For any moment where there's an unexpected deviation or an unexpected stop, or if there is some trouble, the platform itself proactively calls the user and checks. Even before the customer is aware, the platform Rapido is aware and says, hey, are you safe? Let us know.
Okay, so safety features, you started, I think the disruptive element was bringing bike taxis into the picture when everyone was doing four-wheelers, and now, of course, everyone is across all categories.
Yes.
Yet, where are you in terms of market share? I think last I've seen, you are the number 2 player in most categories, in most locations.
Yeah, so as a platform, we are very proud to announce that we are the market leaders, doing around 3.5 million rides every single day.
Market leaders, that means you have more rides per day than Ola and Uber?
We are currently leading the market, and we do more rides than all the other players in this industry. Yes, doing 35 lakhs rides across all the categories.
Wow, so that is huge. So in 10 years, you've climbed to the top.
Yes.
But this has not been an easy journey, right?
Yes.
Yeah, 2015 is when Rapido started, but it took you 75 rejections to get someone to believe in your idea. Tell us about that.
So, back in 2015, there was already a ride-sharing revolution going on. Okay, there were players who are already trying to do it in four-wheelers, and everything is on the rise, right? So if you practically see any people, any investor who can possibly fund a vision like this, a vision that can be very Indian solution, right? They were already invested in one or the other existing players.
Yeah.
So it was definitely a tough journey, but the team, my founders, my other founders, I think we all pulled along. So we persevered. And for us, as a team, for the founders, all three of us together, this is kind of a third startup that we have done together. And individually, this is my 8th startup that we have done. So we are not very strangers to rejection.
You're used to rejection.
Yeah, we are made friends with the rejection. Yes.
Wow, you know, that's the lesson.
Yeah.
To make friends with rejection and still continue to persevere.
Yes.
So tell me about how do you have 7 ideas that don't work and keep continuing to the 8th?
I think maybe because it never struck to me that there was a plan B. The only way that me and the founders, and in fact the entire team, the team of Rapido, the initial team of Rapido was working on a different startup idea, and the entire team transitioned into Rapido. And when we were doing the transition also, not even a single person in the room had the thought of, hey, is there another alternate option? The only thing that we could see was, if we need to make impact, this is actually a better opportunity. Let's go ahead and do it. What excited us was, if we are able to make a woman sit on a stranger's bike in a small town and make her go to her destination in a dim-lit street, make her safely reach her destination, we felt it was history worthy. 75 Indian years after independence, if we are able to give that sense of safety to a woman, we felt it's worth trying, even though we failed. And so we just continued.
Yeah, so no, that is the success part.
Yes.
Tell me about the 7 failures. What were all of these ideas?
So I was definitely very freshly graduated. I had my first job in Samsung, and I quit my job without a plan. And
how old were you when you decided?
22.
So at 1 minute. At 22, you have a job in Samsung.
Yes.
You have come out of IIT.
Yes.
Yeah. You're living the dream, right? This is the dream. You go to IIT, you get a good job, and then you quit at 22.
Yeah. So because I went to IIT, more than me going to IIT, because I had the privilege of good education, I had the privilege of having great parents, great support system, I've realized if I, as an Indian youth, I'm not taking a risk, then I don't think I can expect the rest of the Indian youth to take a risk. But however, I did not have a plan. I did not have a team. So I ventured into some traditional industries, including real estate, mining, manufacturing tiles, marketing agency, and payments, logistics. So bunch of this, and I've
koi sector choda nahi. You tried everything, didn't leave anything.
Because I wasn't getting success in any sector. I'm like, at least one sector, please favor me.
No, but even there, it was a tough call. When we spoke about it briefly, so you approached 75 investors, and everyone had perhaps the first question I had speaking to you that you're coming as a third player in a market where you have two dominant players. And you have to start from zero, and then you have to dominate. So congratulations, you're market leader today. But it's a tough uphill task. What is the pitch that finally worked?
I think what we truly believed is if we are able to provide a platform that is so flexible that anybody who has an intent to earn money and a bike, he is able to participate irrespective of his lifestyle, then we could create a supply that is unmatched. So Rapido today is actually known for its fulfillment or its ability to get you a ride when no one else can't. Rapido is the largest gig employer in the entire country. Over the last 10 years, we have employed more than 90 lakh people, and every month 20 lakh people actively earn income from our platform, which puts us literally in the top gig employer in the country.
Yeah, that's amazing. That's amazing. But just, coming back to how you managed to convince someone to take a bet on you, and it was Hero.
Yeah.
Yeah? Tell us that story. Tell us about that meeting and how that went.
So we were in Delhi. Obviously, Mr. Pawan Munjal, he's been a stalwart in the auto industry, right? We were in Delhi and we were meeting the Hero's office, their family office, and what impressed Mr. Pawan Munjal is our idea of serving not just the tier 1 markets but also the tier 2 and tier 3 markets, right? If you see, Hero is a champion in the smaller towns. They are the brand for the smaller towns also. So I think we kind of aligned on our vision, and fortunately Mr. Pawan Munjal in his personal capacity got interested and said that he would want to support us. Yes.
So, and what was the harshest rejection you faced out of the 75? You don't have to take names, but tell us that one sort of rejection which really got you down and you wondered, can I go on with this? Of course, you and your co-founders.
Yeah, so while we made friends with rejection, I really think every rejection actually hurts. So it's like, how do you say? There is no memorable breakup. I think there's no memorable rejection, or every alternatively, I think we remember every rejection.
Yeah.
We actually remember every rejection. But at the same time, definitely, some of the rejections we believe were also valid, and we learned from it. We tried to change things from the way that we were doing our business. We tried to be even more frugal, even more faster, even more innovative. Which is why if you see right now Rapido, the kind of features that they come up with, or even our latest business model change to becoming completely a SaaS player from the traditionally existing commission model. Like this became a DNA because we heard a lot of rejection saying, how can you do this? So then we decided we need to keep consistently push ourselves. So we said, let's keep changing. Recently, we have changed our commission model to a SaaS model.
Explain to me the difference between the two compared to your peers.
Yeah, so a simple commission model is, as a user and as a captain, I'll both get you on my platform, but I control everything. I control everything and try to complete your ride. Versus being a SaaS player means I give the technology, the tools that as a platform we develop to the captain and to the user, and we just connect them. Like in terms of pricing, Rapido does not determine the pricing. Because we are a technology provider, we have zero commission. So we don't charge per ride basis, commission and everything. What we do is, hey, you can use our platform for a day, for a week, for a month. Just pay us X amount. Whether you are earning 1,000 rupees or 5,000 rupees or 10,000 rupees using our tools, it's up to you. And that is truly promoting an Indian entrepreneur, micro entrepreneur. And that is exactly what we did. What that has helped us, recently in the three-wheeler category, which we have entered in 2020, we are currently already the market leader in that category. We have entered cab in 2023, late 2023. Just within an year, Rapido does almost 500,000 rides every single day, and we are actually a market leaders in few key cities already.
In few keys, yeah, because cab ride is the holy grail, no, in that sense that you have to top.
A cab ride is the holy grail in terms of revenue, but in terms of users, in terms of rides, we definitely do believe that two-wheelers are going to be the bigger market.
But then you have some markets which have now said no more bike taxis.
I think over the course...
Was that a big setback? You know, your sector is also one which is very vulnerable to policy shifts.
Yeah.
Plus, market to market policy shifts.
Yes.
You can exist in some markets, you can not exist in some. You will face pushback, maybe not just from others in your space, but local cab drivers, local rules, etc. How do you navigate that? And when the whole bike taxi issue broke out, how did you deal with that?
Yeah. So if you see back in 2015 when we started, only Goa had the necessary regulation and framework. However, over the last 10 years, a lot of state governments and definitely the central government, both of them have recognized the power of bike taxi, both in offering a commute solution that is accessible to a common man, but the most importantly, the power of employment that it has. Like I've just mentioned, Rapido bike taxi. Rapido as a company, we are one of the largest gig employers in the country. But bike taxi as an industry in itself, because all you need is a bike and the skill to drive, which is a kind of a life skill. That enables to create employment at almost zero cost. So right now, 10 states have already come up with a necessary framework and regulations to support this. We believe that the rest of the states, it's more a matter of time. And there are a lot of states that are progressively taking steps towards building regulations. But like you have said, if it is truly a disruption, I don't think disruption is ever created in a day.
Yeah. No, that's
disruption
fair
and
enough.
history, they don't get created in a day. They get created if you're at it continuously, in this case for more than a decade, and that's what we hope to do.
So how long have you given yourself before you dominate the cab segment?
For us, more than dominating and market share, like I've mentioned, we are already the market leaders. Our sincere missions have been, there are almost 20 lakh autos on the road every day running. Okay, there are 25 lakh cabs every day running. But if you see the online penetration of in both these categories, it is hardly less than 10%. So we are now trying to see how can we enable them, which is why our recent innovation of SaaS is also revolutionary like that, because it is not just for us a growth model, it is a way for a lot of people, a lot of cab captains who have not participated earlier to participate here.
But in the middle of all of this, and this sounds great, you know, making women feel safe, disrupting, providing employment. What about making profits?
So simple. I think as a mindset, all three founders and definitely a lot of the people that we hired also, we are all from middle class. We have this frugality mindset actually ingrained. And if you see, we started our business with two-wheelers, bike taxi, and we knew the amount of profit that we make per ride, in each ride. It would be a couple of pennies itself. So we built our cost structures, our entire team, our technology, our operations, everything, our entire cost structures, assuming that we would have to survive with this couple of pennies as your net revenue. Everything, auto and cabs, everything that you do, for you it's additional. So I would be happy to also tell you that we have achieved a PAT profitability last year.
A PAT profitability?
Yes.
Okay. But what is the path to profitability looking like in terms of your aim? Where do you hope to get when you start now looking at metrics that matter to your key investors?
Yeah. So I think we are definitely we are not operationally burning. We are completely operationally profitable, and like I've said, last year we have achieved PAT profitability.
And now you've entered a space which is all about, cash up in flames. You want to get into delivery and quick commerce.
So for us, entry into this was more a strategic move. We have been doing delivery for almost 6-7 years. We are partnered with the existing food delivery platforms. And for us, our simple motto is this: how can I ensure that this captain who's coming on my platform earn more? So in the mornings and evenings, obviously there are a lot of people traveling, but in the afternoons and late nights, people are not traveling as much. So how do you still enable him earnings? We said, why don't we partner and deliver their food? So logistics for us is an arm that we see it as an enhancer to the captain's earnings. Yes.
So in one go, let me get this. In one go, Rapido is taking on Ola, Uber, now Swiggy, Zomato, Zepto. So your list of competition is getting longer and longer.
Maybe I'll clarify. We deliver for them.
Yeah. Okay.
So as a logistics player, we deliver for them.
Correct.
So we are competing definitely with the existing players in ride sharing.
Yes.
But like I have said, our bigger competition has always been the offline industry than the players.
Correct.
In terms of Swiggy, in terms of food tech or quick commerce, they are our partners. They are more than competitors.
You are a service provider.
We are a logistics service provider.
You don't want to get into quick commerce whole hog as a platform at any point.
I think there's definitely a lot of work to be done in ride sharing. Just to give you a perspective, we are currently doing 3.5 million rides, 35 lakh rides a day. But a player in our neighboring country with almost similar population does 30 million, 3 crore rides. Just if you look at the scale, you would immediately realize that you have not even scratched the surface. And that is exactly what we believe.
So focused on ride sharing?
Yes.
Focused on, you're already a unicorn, focused on growing bigger and bigger.
Yes.
What's the target revenue number you have in your mind?
I think we'll be growing healthily at a 50% year on year consistently. And we are just hoping, along with the growth, we are able to come up with very unique and innovative solutions, both for the top tier markets as well as the tier 2, tier 3, the deeper heartland towns and cities of the country also. Just not bike, auto, car, which we are not too far. But any other mode that a user is already using, how can we enable it, make it more accessible, more affordable, more convenient for the user to use? We'll be more focused on that.
Okay, so exciting times ahead. 8th time lucky, I would say.
Oh, yes.
after sector after sector.
Yes.
And also a little birdie tells me that you even ended up learning Korean.
Oh, yes.
As part of your job in Samsung?
Yeah.
Yeah? How do you use those skills now?
I think so. If we just get back, step back a bit on my entrepreneurship journey, I have actually quit my job while I was on a business trip in Korea. Korea as a country inspires me to have better infrastructure. I've seen the transportation infrastructure over there, and that actually did have an impact on me. That maybe I should come back and do more for my own country, so that it can develop faster. So that way Korea is a bit closer to my heart, and hence Korean.
Yeah, how did you say I quit in Korean? I quit and I'm on to my own journey now. Say something in Korean for us.
Na kumandaseo, na kumandagu, kumandaseo, kumandaseo.
That means I quit.
I quit.
Okay.
I quit.
No. Now you have moved on to another plane and platform. Thank you so much, Pawan. This was an absolute pleasure.
Thank you.
Great to hear your story. I'm sure inspiring to so many out there.
Yeah.
Started at 22, multiple failures and rejections, but that never say no attitude showing today in the rise of Rapido.
Yeah.
Thank you for your
Thank
time.
you so much, Tamanna. It's a pleasure being here. I've enjoyed our chat.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered.
Thanks for staying with NDTV. You're watching the Friday edition of the World Report. I'm Arjun Samar Mahendra, and let's take a look at what's making headlines around the world. Defence Minister Rajnath Singh has asked the International Monetary Fund, or the IMF, to reconsider its $2.1 billion bailout to debt-ridden Pakistan, as it allows terrorists to in fact use its soil for launching state-sponsored attacks against Indian citizens. Now, a day after he visited Jammu and Kashmir, a defence minister is at the Bhuj Air Base in Gujarat. Remember, viewers, that in the midst of the recent military tensions, the Pakistani army attempted and failed miserably to target India's Bhuj using drones. The Bhuj Air Base was one of the installations targeted by the Pakistan military last week. Now, here's what the defence minister said in Bhuj.
निश्चित रूप से इंटरनेशनल मॉनेटरी फंड से आने वाले $1 बिलियन के बड़े हिस्से को टेरर इंफ्रास्ट्रक्चर को फंड करने में इस्तेमाल होगा, ऐसा मेरा मानना है। क्या यह इंटरनेशनल मॉनेटरी फंड IMF द्वारा, जो कि एक इंटरनेशनल ऑर्गेनाइजेशन है, उसके द्वारा इनडायरेक्ट फंडिंग इसे नहीं माना जाएगा? मैं दुनिया के लोगों के सामने यह सवाल रखना चाहता हूं। इसलिए मैं मानता हूं कि आज के समय में पाकिस्तान को किसी भी तरह की आर्थिक सहायता टेरर फंडिंग से कम नहीं है। भारत यही चाहेगा कि IMF पाकिस्तान को अपनी $1 बिलियन की असिस्टेंस पर वह पुनर्विचार करे और आगे भी किसी भी तरह की सहायता देने से IMF परहेज करे।
And for our viewers just joining in, Defence Minister Rajnath Singh has asked the International Monetary Fund or the IMF to in fact reconsider its $2.1 billion bailout to debt-ridden Pakistan. Now this comes as the country allows terrorists to use its toiled sill for launching state-sponsored attacks against Indian citizens. Now a day after he visited Jammu and Kashmir, Defence Minister Rajnath Singh is at the Bhuj Air Base in Gujarat. You must remember that in the midst of the recent military tensions, the Pak Army attempted to target India's Bhuj using drones. The Bhuj Air Base was in fact one of the key installations targeted by the Pakistani military last week. And once again, here's what the Defence Minister had to say at Bhuj.
Після того, як ми зрозуміли рівень російської делегації, ми бачимо, що вони, на жаль, дуже несерйозно ставляться до реальних перемовин. Ну, поки що ми не бачимо серед присутніх ті, хто дійсно ухвалює рішення, хоча це була, хочу нагадати, пропозиція русських до прямих перемовин, підтримка президента Трампа особисто, що лідери повинні зустрітися, але тим не менш.
He wasn't going to go. He was going to go, but he thought I was going to go. He wasn't going if I wasn't there. And I don't believe anything's going to happen, whether you like it or not, until he and I get together. But we're going to have to get it solved because too many people are dying. Thank you. You're going to land right now. Thank you.
Thank you, sir.
India-US trade talks are progressing well, Commerce Ministry says. Now this as a team from India, in fact, led by Commerce and Industries Minister Piyush Goyal will be going to Washington for further discussions. Here's what the Foreign Minister Jaishankar had to say, in fact. Listen in.
What we've heard on this particular visit by Minister Goyal is the fact that he's scheduled to meet two very important US figures of this Trump administration. Number one being the US Trade Representative Jamieson Greer. Number two being his Goyal's counterpart in the US Commerce Secretary Howard Lutnick. Very interestingly, two very important contextual points under which Goyal's visit comes. Number one is the easing of the US-China trade ties. We've seen that tension go down. We've seen we've seen both the countries slash each other's tariffs, and that sort of is a dent to India's pitch as an alternative to China as a global manufacturing hub. Secondly, what's also interesting is India's WTO retaliation that happened a few days back. That could also be somewhat of a factor in this trade talks that are scheduled to begin from May 17th to May 20th. What's also interesting is the fact that one cannot rule out the fact that a mini trade deal or the first tranche of this India-US bilateral trade agreement could be done before July 8th. None of my top sources have ever ruled out that that is a possibility, that within that 90-day tariff pause window that India and the US have, that there could be a trade deal. Also, what's interesting is that the last time Minister Goyal visited the UK, within 2 days, there was an FTA announcement. We heard that joint FTA announcement come out by the Prime Minister Narendra Modi as well as the UK Prime Minister Keir Starmer. So nothing can be ruled out. In fact, a mini trade deal could very well be on the cards post this visit by Minister Goyal.
The fresh bail petition filed by fugitive diamond trader Nirav Deepak Modi has been rejected by the High Court of Justice, the King's Bench Division in London. Now, this is the 10th bail petition, viewers, since his detention in the UK, which was successfully defended by the CBI through Crown Prosecution Services in London. The bail arguments were strongly opposed by the Crown Prosecution Service advocate, who was ably assisted by a strong Central Bureau of Investigation team consisting of investigating and law officers who in fact travelled all the way to London for this sole purpose. The CBI successfully defended the arguments, which resulted in the rejection of the bail for the 10th time. Fugitive businessman Nirav Modi's bail plea has been rejected. President Donald Trump has pledged to strengthen US ties to the UAE and announced deals with the Gulf state totaling over $200 billion. In fact, and the two countries also agreed to deepen cooperation in artificial intelligence or AI. Now, after Trump's meeting with UAE's President Sheikh Mohammed bin Zayed Al Nahyan, the White House has said he announced deals that include a $14.5 billion commitment from Etihad Airways to invest in 28 Boeing 787s and 777X aircraft powered by engines made by America's GE Aerospace. Listen in.
I have absolutely no doubt that the relationship will only get bigger and better. Your relationship and mine can't get better, so I can't say it's going to get better because it's at the highest level it can be. But our countries will work together. We've become a very hot country. We were not such a hot country 6 months ago. And now I think we're the hottest country, if you want to know the truth.
And Donald Trump says Iran has sort of agreed to the terms of a deal on the future terms of its nuclear program. In fact, on a visit to Doha, the US president said, and I'm quoting here, "I want them to succeed. I want to end up being a great country, but they can't have a nuclear weapon. It is very simple, really. It's not like I need to give you 30 pages worth of details. It's only one sentence. They cannot have a nuclear weapon." Listen in.
And you probably read today the story about Iran has sort of agreed to the terms. They're not going to make, I call it in a friendly way, nuclear dust. We're not going to be making any nuclear dust in Iran. And we've been strong. I want them to succeed. I want them to end up being a great country, frankly, but they can't have a nuclear weapon. That's the only thing. It's very simple. It's not like I have to give you 30 pages worth of details. There's only one sentence. They can't have a nuclear weapon.
Amid the backlash in India over Turkey's support for Pakistan in the India-Pakistan conflict, India's civil security regulator, the Bureau of Civil Aviation Security, or the BCAS, on Thursday, in fact, revoked the security clearance of an Indian arm, Celebi Airport Services India of Turkey headquartered airport ground handling major Celebi aviation holdings in the interests of national security with immediate effect. Scripting a new chapter in regional dynamics, External Affairs Minister S. Jaishankar has spoken with Taliban's acting Foreign Minister Amir Khan Muttaqi over an official phone call. Now, this call, viewers, assumes significance as it is the first ministerial level outreach by India to Afghanistan's Taliban administration. Dr. Jaishankar, in fact, called Mr. Muttaqi comes days after Afghanistan's Taliban regime, which New Delhi is yet to officially recognize, just by the way, condemned the Pahalgam terror attack. The Department of Homeland Security and Secret Service are investigating a social media post by former FBI Director James Comey that several US officials are interpreting as calling for the assassination of President Donald Trump, the US Homeland Security Secretary has said. My colleague Vishal joins me for more on this story. Vishal, seashells and a number, a ciphered number at that. What do you make of this?
So what the authorities and the Republican Party and its supporters are saying is that the numbers 8647 actually denote the fact that it's a threat on Trump's life. 86 is a number widely used by mafia in the US to say that someone needs to be executed, and 47 is the number, the 47th president of the US, which is Donald Trump. So if you combine the two, it is a direct threat on Trump's life. But so far there is no concrete proof to ascertain that James Comey has given this threat to Trump, but authorities nonetheless are investigating because there have been, as you and I and the viewers know, that there have been repeated attempts on Donald Trump's life, particularly in the year 2024 when there were 2 attempts on his life. And also the fact that there has to be some connection between the past, because Trump and Comey both have they share some kind of history, because back in 2016 when the poll campaign was going on, there was a big case spearheaded by FBI that involved a connection between Trump campaign and Russia. and that was when Comey was fired by Trump. There was another investigation in which Hillary Clinton was involved. So all of that led to James Comey's firing, and so there has been a history between both the leaders, and since then Comey has been quite critical of Donald Trump. So all of that could be considered by the authorities when they start this investigation, when they escalate this investigation. The investigation has already started.
And this controversy, of course, will only explode after this. But for the time being, thank you for getting us and our viewers the latest. Now, moving on and staying with the US, the Supreme Court justices have in fact expressed concerns about allowing President Donald Trump's radical reinterpretation of the Constitution's guarantee of birthright citizenship to in fact go into effect while litigation still continues. In an unusual move, the court heard oral arguments on a series of Trump administration emergency requests seeking to limit the scope of nationwide injunctions that blocked the plan almost as soon as it was announced in January this year. The World Health Organization, or the WHO, has issued a warning, in fact, about the slowing pace of global health progress in its World Health Statistics Report 2025, which was released earlier this week. The report highlighted that by the end of 2024, about 1.4 billion more people were living healthier lives, surpassing the target of 1 billion. Now, this is thanks to initiatives such as smoking control, improved air quality, and better basic health conditions. However, viewers, the data also revealed a concerning drop in global average life expectancy, which decreased by 1.8 years only between 2019 and 2021, a 3-year period, in fact, marking the largest decline in modern history. Dozens of farmers and activists gathered outside the Executive Yuan building in Taipei on Friday to protest against the Taiwanese government's plan to pursue a zero-tariff import policy with Washington, fearing its impact on the agricultural sector. Now, chanting slogans and holding banners reading oppose zero-tariff negotiations, viewers, as you see on your screens right now, the demonstrators voice strong opposition, in fact, to what they see as a threat to farmers' livelihoods. Here's more.
让美方知道呢，我们台湾的人民对这件事情上面的一个不同意，那这样也可以呢维持住，就说台湾的这个粮食自主权以外呢，也可以保障农民他们的这个生活跟工作呢能够持续。
The construction magnate and several builders, designers and engineers surrendered to police Friday on criminal negligence charges for the deadly collapse of a Bangkok high-rise on the 28th of March during the earthquake that in fact hit Myanmar as well. Premachai Karnasuta, the president of Italian Thai Development Company, on your screens right now, the main Thai contractor in fact for the building project, was among the 17 people charged with the felony of professional negligence causing death, Bangkok police have said. They added that those who met police on Friday formally denied the charges. Meanwhile, several previously issued public denials in response to allegations in the media. Now, 92 people were confirmed dead in the rubble of the building that had in fact been under construction, and a small number of other people remain unaccounted for still as we speak. Here's more.
เพราะฉะนั้นแล้วผมก็ต้องรอให้รอบด้านทุกมิติให้ครอบคลุมนะครับก็ขอยืนยันว่าเราจะดำเนินการอย่างตรงไปตรงมานะครับและดำเนินคดีผู้เกี่ยวข้องทั้งหมดทุกคนนะครับ
On to some business news now. The world economic growth is projected to slow down to 2.4% in 2025. It's down from 2.9% in 2024. Now, this is due to heightened trade tensions and policy uncertainty, according to a mid-year update of the 2025 World Economic Situation and Prospects Report of the United Nations, in fact, which was released on Thursday. That's yesterday. The latest global economy forecast is 0.4 percentage points below the January forecast. In fact, the global economic outlook has deteriorated significantly since the January 2025 forecast. Sweeping United States tariff announcements and counter-announcements, along with heightened political uncertainty, have further eroded global growth prospects, underlined this UN report. On to a Reuters report now, which claims Alphabet's Google One subscription service, which charges consumers for cloud storage and artificial intelligence features, recently crossed 150 million subscribers. That's correct. It represents a 50% increase since February 2024, when Google One crossed 100 million subscribers nearly 6 years after this service launched. Now, the same month, Google introduced a $19.99 a month plan with access to AI capabilities unavailable for free users. The company further continues to offer Google One subscription tiers for file storage, but without most AI features at lower prices. Facebook's parent company Meta Platforms has asked a federal U.S. judge to throw out the U.S. Federal Trade Commission's case accusing it of an illegal social media monopoly, saying the agency failed to prove its case at a high-stakes antitrust trial. Now, at this trial, viewers, which began on the 14th of April in Washington to be precise, the FTC has sought to show that Meta illegally dominated the market for social media platforms used to share updates with friends and family through its acquisitions of Instagram and WhatsApp. The FTC is now seeking to unwind those details which occurred more than a decade ago. Barclays no longer expects the US economy to slip into a recession later this year and has in fact revised up its growth forecast. Now this comes in fact amid signs of a de-escalation in US-China trade tensions, the bank said in a note release Thursday. Barclays said it now expects the US economy to grow 0.5% this year and 1.6% next year, up from previous forecasts of minus 0.3% and 1.5% respectively. Reduced uncertainty and improved economic backdrop also led Barclays to lift its Euro-era growth expectations. It now forecasts flat economic growth this year compared to a 0.2 contraction in the previous year. United Health Group shares plunged nearly 13% on Thursday after a Wall Street Journal report that the US Department of Justice had in fact begun a criminal investigation into the company for potential Medicare fraud. If that's correct, the report probe adds to a string of recent setbacks for the healthcare conglomerate that has erased more than half, or over $300 billion from its market value since only November of last year, when shares were trading at record highs. In the world of sports, India's javelin star Neeraj Chopra has arrived in Qatar. You see the visuals on your screen. He's set to compete, in fact, in the Doha Diamond League, launching his 2025 campaign. Meanwhile, opponent and friend Olympic champion Arshad Nadeem from Pakistan will not take part in this league. When asked about his friendship with Olympic champion Arshad Nadeem from Pakistan, the athlete said that things will not be the same after the recent Indo-Pak conflict. From javelin to football now, where Cristiano Ronaldo has topped Forbes' list of the world's highest paid athletes for the third consecutive year, in fact, and the fifth time in his career. Following his move to Saudi Arabian club Al Nassr, Ronaldo's estimated total earnings are around $275 million a year. The Portuguese forward increased his income by $15 million through off-field endorsements as well as lucrative sports deals backed by his large social media followers, 939 million in total to be precise as of May 2025. Well, that's all we have for you this Friday. Have a lovely weekend and I'll see you again on Monday.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Hello and welcome to NDTV Profit. You're watching IPO Adda, and the company in focus today is Bell Rice Industries. It's an auto component maker with a large portion of revenue contributing from the two-wheeler segment. The company's IPO is opening on May 21st and closes on May 23rd. Price between 85 to 90 rupees per share. It has a fresh issue of 2,150 crores. That gives a company a value of little over 8,000 crores at the upper end of the price band. And joining me today is Mr. Shrikant Shankar Bhadwe. He's the Managing Director, and Swasith Bhadwe, who is the Chief of Staff at MD Office. Gentlemen, thank you very much for joining us today. Beginning with Mr. Shrikant. Sir, give us a sense of the space you are in and the amount that you are raising, 2,150 crores. How is it going to be used?
So we are into automotive components. We supply parts for two-wheeler, three-wheeler, four-wheeler, passenger car and commercial vehicle also. We are raising 2,150 crores. Out of that, 75% will go for the debt repayment and 10-25% will remain for general corporate purpose.
Swastit, can you come in here? You are one of the leading suppliers to the two-wheeler industry. One of the biggest issue with the two-wheeler industry is the kind of slowdown which we are seeing. We are not still pre-COVID level in terms of sales. So how do you see this industry and how you have been growing for the past couple of years?
So firstly, on the industry, we're very optimistic on the industry. I think you're correct that we've still not reached the FY19 peak volumes that had been attained. But we feel that in the coming years, the two-wheeler will be a very fast-growing vehicle class. Based on various industry reports and news channels, we expect to grow at higher than 8% CAGR going forward. So we expect this to be a high-growth industry. Our growth has been very much in line with the two-wheeler industry. If I also just give you a statistic, over the past 8 years, we've grown at an 11.5% CAGR, while at the same time, the two-wheeler industry in terms of volumes has grown at 1.4%. So that's been an area of outperformance for us historically. And as the two-wheeler industry grows in the future, we'll also make a best end of it to move along with it and faster than it.
Mr. Shrikant, if you can come in here and give us a perspective on how you've been able to diversify yourself within the industry from being one of the largest chassis supplier to various other components and products that you're offering to both two-wheelers and four-wheelers?
So we are supplying components for two-wheelers. So we make side stand, main stand, chassis, brake pedal, gear change lever, swing arm. So whatever you see into a scooter or motorcycle, whatever in the sheet metal, I think we are doing major of the parts, and we have the strength of that experience for the last so many years. And we do make plastic parts also. So we do plastic molding, we do plastic painting, and followed by some assembly work also. So typically the value addition is very important, and we started with a small press components, then press components plus manual welding, then press components plus manual welding plus robotic welding. So that is the way we got into entrenched in the value addition, and then subsequently we went for the ED coating,
powder coating, assembly work, and that is the way I think is the right way to grow.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Hello and welcome. Good evening. You're watching Ask Profit only on NDTV Profit, and I'm your host Mallika Mishra.
And I'm your host Himakshi Bahugna, and together we'll be taking up all your stock-related queries. So don't forget to WhatsApp us or call us directly. Viewers, both the numbers are flashing on your screens right now. And on the show, we are joined by Prashant Tapse, Senior VP Research Analyst, Mehta Equities on the fundamentals, and Virat, Senior Technical Analyst, Bonanza Portfolio on the technicals. Welcome to the show, gentlemen.
Very good evening to all.
Good evening. Now let's get started with the show's first query that is written to us from Chennai. Venkateswar Lu purchased 10 BSE shares at 4,644 rupees, and he's looking for a long-term outlook on it. He's asking whether he can hold the counter for 2 to 3 years. So Prashant, directing this question to you, what's your outlook on BSE?
Fundamentally, obviously, the outlook could be very much optimistic. It's a proxy play for investing in Indian capital markets or Indian economical growth. So I think in terms of valuation also, I think with respect to the earnings which they are presenting right now in the Q4, those are presenting a long-term, good growth. So I think my advice would be, hold for long-term, at least with a target of, almost 8,000, 8,500 from the current level for next 12 months. So overall, I think even the NSE is going to list very soon in a year or so. So there will be good comparison between NSE and BSE, and that would have a very long-term growth prospect.
Okay, got it. And now let's go across to our next WhatsApp query. Ulhash has written to us from Nashik. He currently holds 200 shares of Ion Exchange at 760 rupees a piece, and he is seeking a long-term advice on this particular investment. Now, Ion Exchange shares are trading around 557 levels, so that means it has significantly dropped from the price our viewer bought them at. Prashant, getting your fundamental perspective on this one, and then I'll also take a technical reading of this. But how does an Ion Exchange look on the charts, and do you see a recovery happen anytime soon?
See, if you see fundamentally, the stock is into a great sector, which is into water management and wastewater treatment, recycling, and all. I think that sector is a very fastest growing sector. A lot of stocks are now getting listed, and they are doing very well. Ion Exchange, again, I think with respect to valuations, I'm still not comfortable to have a very positive outlook from the current levels. But again, I think with respect to the numbers and ratios, I think they are presenting very well. I think even one should wait for the Q4 earnings. Still, they have not been presented. Once the numbers are out, I think we can have a very clear picture of the long term. So I think currently my recommended would be hold, and if there are some additional capital, he can average the stock at current levels.
Understood. Thanks for that view, Prashant. With that, we have another WhatsApp query. Rahul from Hyderabad holds 100 shares of Power Grid. He purchased it at 299 a piece. So he's looking for, he hasn't mentioned the time horizon. So what's your sense on Power Grid for long term, Prashant?
With respect to power as a sector, I am very much bullish, and Power Grid is a proxy play for investing into power story in India. If he has a view of 5-10 years, I think this stock would give him a very decent return of 12 to 15% CAGR from the current level also. With respect to valuations also, I am very much comfortable trading at 15 P and price to book value of almost 3x. So very comfortable to have fresh position as well as recommending hold from the current levels.
Okay, got it. And now we're being joined by Sumit on the phone line from Qatar, our first international caller of this evening. Hi Sumit, good evening.
Good evening, ma'am. Thank you for taking my call.
Most welcome. Please go ahead with your question.
Can I buy MCX for the next 2 years? MCX.
Okay, and why are you interested in MCX, Sumit?
Because I can see now the movement started earlier, it was going down. So I thought the market is stable now. Can I enter for 2 years?
Okay. Let's see what Prashant has to say about it. Prashant, Sumit from Qatar is interested in knowing your perspective on Multi-Commodity Exchange of India. How does it look like to you? Being an exchange for commodities, do you think it is, an interesting time to also diversify your portfolio and go into equities as well as commodities? And from that perspective, how does MCX look?
You rightly pointed out, see, one should have a diversified portfolio. BSE is again a exclusive for equity, and we don't have NSE listed yet. So if you want to invest in the commodity, as because of the volatility we have seen from last 2-3 years, I think the exchanges will have a lot of business growth going with respect to the volatility. Again, valuation wise, again, very much similar to BSE, and the growth is also similar to BSE. I think they have done very well in terms of their Q4 earnings. So for me, again, for a long term, every dip has to be bought. This price would not be a right price to have a full investment right now. I think a technical colleague can help him to get a right level. But for me, I think 5,800, 6,000 can be a good level to start accumulating for long term.
Okay. And Virat, welcome back. Are you here with us?
Yes. I can hear you now.
Amazing. Viewers, Virat is joining us for the first time, and I'd like to very warmly welcome you. Thank you so much for giving us your time. Let's talk about MCX. We were actually talking about the fundamental story of it. If you have any kind of coverage, or have you been tracking MCX at all, if you could give us your view and sense of whether this is the right level to enter the stock or not.
So yeah, technically speaking, the stock is broken out above its a key resistance level, which is 6,300 with this very strong volume. That's a classical bullish signal. Buyers are showing interest, and the price is staying above the breakout zone. I see good opportunity to buy at the current level for the short term, or you can consider for a medium term. Stop loss could be work as a 6,200. 6,200 could work as a strong support for the same, and upside can be seen near 7,000, 7,100. So it's a very right time to buy MCX.
Understood. Thanks for that view, Virat. With that, we are joined by a caller from Bengaluru. Hi, Raju. Good evening.
Hi, ma'am. Good evening.
Yeah, how can I help you on the show today, Raju?
Ma'am, Varun Beverages 600 quantity.
Okay.
Average price 550.
Okay.
2 months back buy, ma'am. Profit loss, ma'am. Consolidate, ma'am. Technical analysis, ma'am. The extra share add, more add, ma'am.
Do you want to add more is what you're saying, Raju? Do you want to accumulate more?
500 quantity extra.
Okay, so you already hold 600 shares and you wish to add 500 more shares to Varun Beverages and you're looking for a short-term view on the counter, am I correct?
Yes, ma'am, 9 months.
Okay, understood. So, so Virat, on the technical front, what's your sense on Varun Beverages? How is it faring on the charts? And for somebody who wants to accumulate more, like 500 shares into the counter, so is it advisable to enter at these levels?
So the stock Varun Beverages is the trading in the sideways range with the no clear direction. It's a stuck between 560 to 470. So till the time you can wait, either you can accumulate somewhere near 470 or once it took a breakout from 560. So for the current price movement, you can hold.
Okay, understood. And now we have Sudesh calling us from Kerala. Hi, Sudesh.
Hi.
Please go ahead with your question.
I bought NMDC shares at 68. The quantity is 22,000. Can I hold? I brought it 2 days before. Can I hold or exit now? I am with a profit of 44,000. Can I hold or exit?
Okay, understood. Virat, I'll take this one to you. Sudesh from Kerala currently holds 22,000 shares of National Mineral Development Corporation at 68 rupees a piece. He's sitting on a profit of about 2 rupees per share, thereby making it an aggregate to 50,000. He's asking whether or not he can book his profits. How do you see the momentum of the chart moving? Because it has seen cuts of about 5% in the last 6 months.
So if we talk about NMDC, we have observed a strong hurdle somewhere near 70, 50. It's been a third time where we observed a rejection from the same area. So if it is unable to sustain above 70, 50, then you can sell the stock. Otherwise, you can hold this. Your next target would be 77.50, where your stop loss can be 67.5 could work as a strong support for the same. So you can maintain stop loss of 67.50 if it is sustaining above 70.50.
Understood. Thanks for that view, Virat. And with that, we are joined by a caller from Noida. Hi, Anmol. Good evening.
Hi, good evening.
Good evening. How can I help you today on the show, Anmol?
Yeah, actually I bought 100 shares of Amar Raja Battery and Mobility. And buying price is 1,450 rupees.
Understood.
So, and the stock was in correction for a few months.
Yeah.
And now it is gaining some momentum from last 2-3 sessions. So I just want to know whether it will achieve my old price in this current rally.
Understood. And for how long are you planning to hold these shares, Amol?
Yeah, a few months, like short term, 1 or 2 months.
Okay. So, our viewers are welcoming.
I will exit the moment I get the price, right?
Understood. Understood. So our viewers seem to be welcoming Virat. A lot of short-term queries on the show today. Virat, he's sitting on a loss of over 41,000 there, and so he bought it at 1450 levels. Currently, it's trading at 1,036. So, do you see any sort of uptick in the counter and reaching these levels anytime soon?
So after approaching 1700 level, we are observing a straight drop till below 900, and it is trading in the bearish chart setup where we are observing lower high, lower low formation. So if you are observing any sort of opportunity to get exit, it's my recommendation to get exit in the same stock, because it seems very it's a trading in a very start setup, and we might see further downside till 900 or maybe below 900. So if you are finding any opportunity, then you can exit whenever you get the opportunity.
Understood. And Prashant, talking about the fundamental aspect of it, is it advisable for viewers to hold this counter for long term?
I think one should understand there are two big leaders in the battery business. One is Amar Raja and second is Exide. And the difference between two valuations are very wide. Almost like Exide is trading at 40p and Amar Raja is trading at 20p. So that means there is some kind of issue with the business model in the near term as well as the historical numbers. So, but the numbers are showing very much decent with respect to their quarter-on-quarter earnings. But I think near term there will be volatility and pressure going on. I see again some kind of valuation pressure coming here because margins are not sustainable again, and there is a huge competition from the other unbranded